It's not going to hurt them. They're not going to take as much of a hit as they thought back in May. Things have changed. The thinking has changed by around 100 million euros. So that's a positive for Philips. And Stellantis in focus, expecting to take around 1.2 billion euros hit from tariffs in the second half of this year, Guy.
Yeah, what is the tariff hit? That's what effectively is being priced in this morning. Okay, here we go. Market open this Tuesday morning. Yesterday was fascinating. What are we going to get today? Initially, we are expecting some kind of a pop to come through broadly across Europe. Keep an eye on what's happening in the currency markets. Keep an eye on what is happening in the fixed income trade as well, because it's all kind of fitting together in a really interesting pattern right now. But the FTSE 100 is struggling to gain some headway as we speak. The Stock 600 is up by 0.1%. The DAX is barely budging to the upside as well. This on the back of what was a negative day yesterday. This doesn't feel like it's a kind of reassessment of the situation. This doesn't feel like we are taking a different view of what that trade deal is ultimately going to look like. The DAX is up a little bit more, got battered yesterday. The auto sector is going to be interesting. What's happening in banks right now is interesting as well. The FTSE's got Barclays in the mix too. But the DAX acted quite quickly this morning in terms of its numbers, which means it doesn't feel like there's a narrative shift, maybe just in terms of the timing of how quickly things have changed. We'll wait and see what happens with the CAC. We're going to get some luxury names a little later on today, which is going to be interesting as well. But at the moment, we are a little higher in Europe. This doesn't feel like a particularly convincing turnaround. Kriti, sectors.
It does feel like a little bit of a, maybe not turnaround from an index perspective, but certainly a bit of a rotation when we're looking at it from a sector perspective as well, because yesterday's losers are today's winners. And right off the bat, I'm looking at the pharmaceuticals. I'm looking at some of the defense names. Those were two places where we did see a little bit of weakness and kind of lagging the broader risk-on sentiment, at least where we started in yesterday's trade, at least 24 hours ago. So this, I think, is really crucial here, that some of your biggest decliners are actually going to be, besides Novo Nordisk, we'll put that to the side, but some of your luxury names, a lot of the French market taking a hit. But to me, what immediately catches my eye is the pain we're seeing in some of these earnings stories. Stellantis, for example, down 2%, almost 2%, and falling on those earnings numbers.
Yeah, interesting to see how we're getting this, this granularity, this reassessment from each of the businesses. What had you previously assumed? What do we know now? What does that mean for your previous assumptions? And in the case of Stellantis, they've had to take another hit. It's interesting because I got this Auto's note from UBS earlier saying Stellantis it's not really about the transatlantic trade for Stellantis. That's not where the area, the damage is being done. It's more about their US businesses and the North American trade conversation. And that's something we're focused on. But that's not the only corporate earnings story we've had out this morning, although Stellantis is, as you say, Kriti, one of the early fallers, so down by 2.8% or so. Philips, that one's halted, so we don't know where that one is. But there is the other side of the narrative, perhaps, where they previously had made some pretty aggressive negative assumptions about what this was going to do, and that things look a little brighter now, net, and so they're able to upgrade their guidance. So it's halted now in Amsterdam, but Philips, when it opens, might be something that bounces this morning.
Amundi's down really sharply, which the headline certainly first thing this morning, Amundi posts surprise inflow into Europe's biggest as Europeans bring home funds. That's not being rewarded in the way that you would have anticipated. So we'll come back to that one and figure out what is happening there. Inchcape in the UK down really sharply. I'm not seeing a clear kind of narrative evolving here in terms of kind of winners and losers. It's reasonably balanced. There's 339 up, 220 odd down. So it's a reasonably balanced market from a breadth point of view. There are some clear sort of single stock stories. But what I'm not seeing here is a market that is bouncing back sharply after kind of what happened yesterday. This doesn't feel like there's been a change in narrative. This is a tough deal for Europe. This is a tough deal for Europe's corporates. And there's been no obvious reassessment of that in the market this morning. Euro dollar is still kind of under a little bit of pressure. That's still the overriding narrative, and that hasn't changed. 115 handle on euro dollar.
I wonder if moving forward, resilience is a key kind of in terms of gaining. And I think AstraZeneca is a great case study for that, because you see those markets higher, or that stock, higher by about 0.8% this morning, despite those earnings not beating by a massive margin. They were just showing that they can keep things as it is, and that is enough.
Pharma looks like the big winner out of this.
Yeah.
There was an expectation, and we talked about this yesterday, there was an expectation that maybe pharma would get
a bigger hit.
A much bigger hit.
Yeah.
And that has not turned out to be the case.
Still planning some sectoral tariffs. I know that won't apply on every geography, but he's still planning. He said just last night, I think, that tariffs on pharma will be coming soon. So we'll wait and see what that means for the wider sector.
Let's see how that shows up and how you trade these markets. We've got the perfect guest for that. Maria Minucci, fund manager at M&G Investments, joins us around the table this morning. Maria, I'll put that question to you. How do you trade these markets? What's that next catalyst in terms of interpreting what trade means for European corporates?
Well, I think what we're observing right now is the market really trying to come to terms with this latest piece of information. The truth is that we will not know for quite some time, not only what the details around this trade deal are, but also how the different players will be affected from this. Are the exporter going to get hit more on selling price and volumes? Are the importer going to get squeezed on the margins? Or is actually the final consumer that is going to bear most of the costs of these through increase in prices? So it's still very much to see how the impact of this new tariff will play out on the economy. And unfortunately, it's not that immediate. I think there is, like for monetary policy for some extent, a sort of long and variable lags on how the impact of tariffs can be then expressed in the economics of it. However, what we are observing is that from a market perspective, there is potentially a bit of a crisis fatigue. So we have been a few years into an environment where we have been crying wolves quite a few times, first with interest rates, then with geopolitics, now with tariffs but the market has become a little bit desensitized from these worries and has been focusing more on the actual earnings delivery, and that has been, so far pretty good, and that has led, risk assets to continue to perform pretty well until now. However, it's important to be cautious at this time and being fully aware of what these developments might bring over the medium to long term.
It's a fascinating one as well. And Maria, just one quick moment while I mentioned the Philips move. It is officially trading now higher by 13, almost 14% this morning. They, of course, have lifted their profitability outlook. A lot of that coming on that clarity, and that's a conversation we had with the CEO, Roy Jacobs, in the last hour as well. But Maria, that brings back the question of clarity, of resilience, these words that we're hearing from the leadership of really corporates around the world. Do you really feel like we have clarity? Does 15% offer that clarity when, perhaps, as Anna mentioned, we have sectoral tariffs coming down the pike, we have geopolitical volatility still very much in the mix? Is 15% clarity?
I think there is no clarity at the moment, not on the specific 15% for Europe versus US, but also in general on the tariff deals that we're seeing across the globe. There is still a lot to be worked out. And as I said, not just on the characteristic of the trade deals, but also on how this then will affect the broader economy. It's really very much wait and see. And I think this is where we're seeing central banks at the moment as well. They're very much waiting for the dust to settle and trying to understand what the effect will be on macro data in order to then adjust the monetary policy response to that.
And you talk about crisis fatigue, Maria, which we can all see in markets, and yet, and that crisis fatigue means that we keep hitting records on US stocks. Is that something that ends? Are there any cracks? I mean, maybe credit markets. Do they tell us anything interesting about where cracks might appear?
Indeed. So I think you can see that quite clearly on risk appetite, which remains elevated. You're seeing in flows in US markets, you see equity market reaching all-time high. You're seeing it in credit spreads, as you mentioned, credit market trading at very tight spreads on a long-term period and continue to deliver good returns other than, the volatility phase that we've seen in April. And also another interesting indicator is the equity risk premium that we're seeing across markets, really. And that really tells us that there is risk appetite present in the market, that risk aversion is not really featuring very strongly. And another feature of that or characteristic of it is how investors are thinking about government bonds. First of all, there is the behavior of government bonds that has not been particularly satisfactory and has continued to be volatile. But there is a real, distaste for government bonds as a source of diversification, even potential diversification over the medium to long term.
Yeah, and with what we've learned about tariffs this week. Are you still happy with an underweight approach to US stocks and an overweight approach to Europe? Guys asking this morning about whether anything has changed in our thinking around Europe and the Europe trade, which has been so strong in recent months. But then we get this trade deal and markets aren't sure it's all brilliant. So does anything change in your thinking, or are you happy with that overweight and underweight positioning?
Well, I think the overweight Europe and underweight US has served us very well from the beginning of the year. We were getting some very strong signal at the end of last year on this divergence in terms of valuation and sentiment. However, we have come quite a long way now, and although we remain relatively neutrally positioned in equity markets, we're very keen on exploiting some of the opportunities that exist within different regional and sectorial markets within equities. And in particular, we are looking for opportunities in cheaper, more idiosyncratic and diversified markets. Europe has been one of these. I think now the opportunities might lie a little bit more in emerging markets, Asia, Japan, which are areas that we're looking at quite closely from an equity perspective, and where we still see quite a lot of opportunities. For example, recently we have been switching a little bit of our UK equity exposure after a strong performance into Japanese equities just before the trade deal was agreed.
To a past peak Europe,
Well, I think over the medium to long term, you still have opportunities in Europe because your valuation is still relatively on your side relatively to other markets. You have the potential of fiscal spending coming from Germany, which is seen as a positive. But potentially in the short term, you are seeing some slightly less appealing opportunities because not only of the trade deal that we're seeing now, but because the market has been performing pretty well. You are seeing valuations that are not expensive, but relatively to its own short-term history are relatively.
But if I see more opportunities in emerging markets, do I take money out of my US bucket to put into those emerging market opportunities, or do I take money out of my Europe bucket to put in to those US opportunities?
That is your starting point, considering that we are starting from a very, very underweight US equities. Probably European equities where we have been overweight will be the place where to look. But if you are running very overweight US equities, I still think that as an overall market, you are seeing some high valuations. There are pockets of opportunities. There are some very strong growth areas in the US. But overall, when you apply a tariff to US importer, potentially this is where you have to look for most of the damage to be done. But as I said, this remains to be seen in the coming weeks and months.
We will watch
something to keep an eye on.
Tune in. We'll be talking about it every morning. Maria, nice to see you. Thank you very much indeed. Maria Manucci, fund manager at M&G Investments, joining us on where we stand post this trade deal. Let's take a look at the call 6 this morning, figure out exactly what is happening at the centre of gravity of Europe. As you can see, plenty of stocks still in negative territory. Look, we're going to start to get luxury names out a little later on today. Kering's going to be posted numbers. LVMH is down by 1.25% this morning. Pharma's weakening up as well. Novo's a little softer, but we do have numbers out from Astra. ASML is up. Schneider is up. The tech trade still works, believe you me. And you can certainly see that this morning in a number of different businesses. But Nestle's softer. Look at that. The food story is coming down as well. But we are thick into the earnings season now. There's plenty of moves that we need to be watching. Chloe Melly is here with some details.
Good morning, Guy. Let's start with really good news from Philips this morning over in the Netherlands. We are up 10.5%. So Philips raised its profitability outlook after cutting it just a couple of months ago in May. It said that now it considers that the tariff impact really is not as bad as it originally feared, and it raised its outlook as a result. And we are up almost 11% this morning off the back of that. Moving on to Amundi, the French asset manager. So I had expected this to go a little bit differently for Amundi. It had reported net inflows compared to expectations of outflows. But crucially, this morning it is down. It is down almost 5%. It might be on the back of adjusted net income that actually missed expectations. So it's not getting rewarded for those net inflows, but is instead taking a little bit of a beating off the back of that miss. Moving on, we have got EssilorLuxottica, which is the world's biggest eyewear maker. The shares are up 5.2% this morning. It reported better than expected sales. That's thanks to really strong results in Europe and also really strong sales of its smart glasses. That's a segment that it has been really focusing on, and it seems to be rewarded for that. And then finally, let's end on Stellantis. So Stellantis is expecting a 1.2 billion euro hit from tariffs in the second half. It is down 2.8% this morning. It had obviously reported its preliminary earnings last week, and now the full set of earnings is not reassuring investors much. So we are down at 2.8% this morning off the back of that.
Chloe, thank you very much. Chloe Nelly from our equities team. Thank you very much. It's not a very convincing picture in either direction, is it, today? There's a sector breakdown, 50-50, stocks going, sectors going higher, sectors going lower. And maybe that speaks to the point that Maria was telling us earlier, that it's going to take a long time, it can take quite a long time to work out, well, firstly, the details of this trade deal across the Atlantic. We don't have any of those details. Yep. You work those out, you get them approved, and then businesses can see what this is really going to do and decide where this hits on their margins, pricing to consumers. We just don't know yet.
But yes, I hear what you're saying, but actually some companies are coming through and being quite granular in quantifying what they think the story is going to be. Philips is one of them. Volkswagen did it on Friday, really quite clear in terms of the narrative. Stellantis is out with some quite specific guidance this morning in terms of the hit that it feels it's going to be taking as well. Some companies, they've done the maths. And I remember sitting down and having dinner with the CFO at Airbus, and he was like, yeah, I can quantify everything in terms of the trade impacts. I can tell you contract by contract kind of what the drop down is and how it all feeds through. So I think some companies do have maybe some granularity that they can work with quite quickly in terms of understanding and therefore updating investors on it. I think the macro picture, I think at a sort of bottom-up corporate by corporate story, maybe you could do it quite quickly. I think at the macro level, I think it could be harder.
But I think the point of the granularity comes more in the industrial base. If you're a company like SAP, for example, can you do that math as easily when more of it is driven by the consumer story rather than your supply chain?
Secondary effects, right?
Exactly.
If you're a services business,
Exactly.
So I think the services which haven't been more directly affected, I think if you're in a manufacturing company, you probably know input cost this, output cost this. This is kind of we can do the maths on this quite easily. I say easily. I'm sure there's some pretty complicated models out there, but nevertheless, they probably know at this point what the hit is likely to look like.
Okay, talking of one of the companies that has given us some of that granularity today, Stellantis stalls. The car maker sees a 1.2 billion euro hit from tariffs in the second half of this year. More details next. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Broadly, M&A will increase as there is more stability in the macro environment. Of course, each company, each bank, each situation is very different. But I think there are rewards to scale. I think those rewards to scale will be realized. We are happy to have many, many businesses at scale, and we know how important it is to protect and to grow that scale. And new technology will only facilitate that and, in fact, increase the returns to scale. So I think that's what companies will be looking at.
That was the Barclays CEO, CS Venkatakrishnan Venkat, speaking to us a little earlier after the company reported second quarter results this morning. We got the results from Barclays, we got a buyback from Barclays, and the stock up by 0.1% this morning. Let us bring in Bloomberg's Sam Unsted, though, who has found plenty of detail to get excited about, more detail perhaps than the stock has got excited about this morning. Sure. But the investment banking side of things, the revenues on FIC trading and equities trading, all of that coming in better than anticipated, Sam.
Yeah, really good. I mean, there's much better than expected. I think, though, that you've got a clear situation where it's been priced in already. You know, already the US investment banks are very strong, the European investment banks as well. So I think that side of the story has already been priced. The share buyback is positive, no question. You know, that is sort of the main piece of attention I think they'll get today. But on the other side of that, the two-pronged kind of strategy at Barclays is also in the UK, and they've been doubling down on the UK in the last couple of years, and the trends there not quite so strong. So the income there, the lending margins, not quite as good, and certainly didn't look quite as good as you saw from particularly NatWest and also from Lloyds.
Yeah, because that's interesting, following on from Lloyds and NatWest and the strength we saw there.
Talk to us a little bit about Wise this morning. What should our global audience know there?
Wise, so with Wise, this company is one of the many, and unfortunately, that has decided to leave the UK, moving their listing across the pond. There was a bit of controversy over it. There was some shareholders pushing back against Wise doing this. They have got it through. It has been passed through. It's quite an interesting one for the London market because Wise, unlike, say, Flutter, for example, that did a similar thing, Ashtead, which is doing a similar thing, doesn't make most of its money in the US. So they are really doing this almost purely from a valuation perspective. So this going through, particularly with the fintech, you know, from a London market that's struggling to keep any kind of tech, fin or not, it is not a good sign. However, there is a potential listing as well. This morning, Shawbrook, which was listed here previously, is lining up more and more banks. That does look like it will now happen in the second half of this year. Not big enough to replace Wise, and the narrative remains quite negative for the London market. But overall, a minor positive.
So the joke, is it a wise move? Have all listings that have gone to the States generally worked? Is this something that you can kind of bank on?
So this is going to be an interesting test of that because so let's take Flutter, for example. Flutter, they own Paddy Power for years and years, most of their money coming from the UK. As the US gambling market has opened up, that is now their major growth driver. Yeah. Their comparable valuation is clearly against something like DraftKings, which they were trading at a discount to previously. That has worked for them, so they are doing very well. Wise have got certainly comparable companies over there, but they don't make most of their money in the US. That's still not their key market. May well be their key growth market in a few years' time, but at the moment it's not. So this will be an interesting test of whether that just pure valuation story actually works for a company changing its listing.
Yeah, the biggest irony of all of this is the London Stock Exchange to me. The London Stock Exchange Group, whose biggest comparables are over in the States. You wonder whether it would trade on a slightly better multiple if it listed over in the States with all its data management businesses. Sam, great stuff. Thank you very much indeed. Just worth noting that the euro is being pushed lower, has been pushed lower over the last 20 minutes or so, down towards the bottom of the session. Let's talk a little bit about what is happening in the car sector this morning. So we've seen a number of car makers reporting numbers over the last few days. We've still got more to come. Stellantis is the name that we're focusing on this morning. It basically saying this morning it expects to take around a 1.2 billion euro hit from the tariffs. That's going to come in the second half of the year. Bloomberg's Global Autos editor Craig Trudell joining us around the table. It's got a bleak outlook from Stellantis. Is it all down to tariffs?
I think tariffs are certainly not helping, and that level of impact in the second half, I mean, that's roughly 3 times what hit them in the first half. This is a company that pre-release last week said roughly 300 million euro impact of tariffs. But a lot of this is also self-inflicted, and you know, that is evidenced by the fact that, you know, we do have a new CEO of this company who's taking over, having to make some difficult decisions of how do you rationalize this company that you know, ironically both had an issue of its previous CEO maybe cutting too deep in certain respects, and yet it's also probably a manufacturer that needs to rationalize even more. It probably has too many plants, too many brands, and Antonio Filosa is going to need to make some difficult decisions in the coming months.
It has a lot of brands, doesn't it, Craig? Yes. Many, in many parts of the world. And actually, I was reading a note from UBS this morning talking about how, in terms of what's really important to Stellantis, it isn't necessarily the transatlantic deal, because they don't send that many. They have lots of brands on both sides of the Atlantic, but they don't really cross over very much. But then it's the North American trade agreements and what happens with Canada and crucially with Mexico, and that is the real area of pressure for this business.
That's the hugely important one, where you know, it was taken as a given for decades that you know, when the U.S. calculated domestic content in the auto industry, they counted cars and parts made in Canada as domestic, and that is decidedly not the case anymore under the second you know, Trump administration, where you know, now the plant where they make you know, minivans in Windsor, for example, what do you do with that factory when suddenly, you know, the tariff impact of trying to send those over the border is so substantial, but also manufacturing down in Mexico, and you know, is there some ability for them to make some adjustments to scale up some of the plants that they do have in the U.S.? I think they are positioned in you know, maybe to an advantage to some manufacturers where they have some slack in the system in the U.S. that they can flex up, but that's going to take some time and require some investment and some costs, and it's not going to be cheap for anybody. I think that's the short of it for this industry, that this is going to be very costly.
Okay, thank you very much. Thanks to Craig. Bloomberg's Global Autos editor, Craig Trudell, with the latest on Stellantis, just one of the businesses that has been telling us about the tariff impact this morning. That stock down by 4%. We saw weakness in the auto space yesterday, and Stellantis continues to show us some weakness after some positivity of last week, of course, for the sector. Coming up on the programme, we're back out to Aberdeen, where Donald Trump continues his very eventful trip to the UK. He was being asked, of course, as is the norm in these gatherings with media, about a host of subjects yesterday, and so he addressed them. We've got a live image coming to us from Aberdeen, from the course that President Trump has been opening up there. We will talk perhaps less about golf and more about the global political agenda, though, when we come back. This is Bloomberg.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we? We don't want to lose you, Emily, in all of this.
Stargate. Put that name down in your books. What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real. How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Well, 30 minutes of the equity market session. Generally, equities are bouncing back a little bit today. I have to say the euro's not, though, which I think is interesting. There's some single stock names which are certainly driving stocks higher in Europe, which is certainly helping the overall narrative. Philips is one that really stands out. But the euro is near session lows. About half an hour ago, it took a big hit lower and has basically stayed there. And you do wonder whether or not we hang on to 115 today, Kriti, in terms of the overall performance that we are seeing.
I think the currency component is so crucial in terms of correlation you're starting to see with the tick-by-tick index moves as well. That's starting to show up in a way that I feel like I haven't seen for a couple of months there.
Yeah, with industrials and goods, and industrials as the best performing sector, these are companies that might benefit from a euro that isn't quite so punchy as it has been.
Yeah, we'll see if that swing back actually benefits it. All of it really comes down to, of course, the trade deal, though, and not just a trade deal in terms of the United States and Europe, but of course the United States and China as well. U.S. Commerce Secretary Howard Lutnick saying President Trump will decide if Washington and Beijing will extend their trade truce by 90 days. Now, Lutnick told Fox News more deals are likely with other countries in coming days.
And the president's going to decide, look, this is how I want to play it. He may entertain a few more deals, or he may decide, you know what, I'm just going to set the policy going forward. But by the end of this week, they will all be set, they will all be in stone, and they will be written, and we will start collecting those additional monies. Right now, we're collecting 10% from everybody in the world, and of course, a higher rate from China. But come next week, off we go.
Let's bring in Bloomberg's Oliver Crook, who, of course, is on the ground for us in Stockholm. Ollie, just walk us through what we know here. It feels like an extension, at least 24 hours ago, was the best case scenario out of these talks. Is that still true?
Yeah, the prize here for U.S. representatives and Chinese representatives having discussions in the building behind me, which is the Swedish Prime Minister's office, is an extension, a 90-day extension of that truce between China and the United States that saw tariffs between the United States and China come down from 125% down to 30%. That is supposed to expire on August the 12th. That is what these people are here to discuss over the next day in order to try to get more runway to have a more broad and more meaningful conversation about the trade arrangement between the two biggest economies in the world going forward. So we are still awaiting now Scott Bessent, the U.S. Secretary, Treasury Secretary, and Mr. Greer, the U.S. Trade Representative, who have not yet arrived yet. The Chinese delegation that is led by the Chinese Vice Premier has also not yet arrived. We understand the U.S. delegation is currently having a breakfast with the Swedish Prime Minister, having a bilateral meeting there. But that's where these conversations are going to go for the rest of this day. What we hope to get is potentially a press conference, a briefing from the United States and China. We'd like to hear kind of the outcomes of these talks. But the prize here today in terms of what the step forward will will be concretely will be an extension of that truce for another 90 days in order to create more runway to have more meaningful discussions about what the trade arrangement looks like in the future.
Where does this all go, though, Ollie? Is the status quo as we have it at the moment actually good enough, and just pushing the story down the road a little bit further is enough? Is that really actually what we should expect now going forward? Just extension after extension after extension. Why actually do we need to get a deal here if the extensions keep working?
Well, we know how Trump tries to sort of run the politics within the United States and his administration. It's a very sort of impressionistic, a bit sort of improvisational. So there may come a time in the future where it will serve the interests of the United States to have a big win in a trade arrangement with China. They've got these sort of wins over the last couple of days with other trading partners, including the European Union. So potentially there is not a great deal of urgency to do that right now. What the Trump administration would like to see, however, is a rebalancing of the trade arrangement with China. That would mean that they would like to see the Chinese committing to buying more American goods, potentially in agriculture. That is something that would be a phase one part of a deal. That is something that we saw in the first Trump administration. There is, of course, the issue of fentanyl precursors. This is something that the Trump administration has talked a lot about in the past, but there are also a number of other issues. There is the sale of TikTok, which the Chinese still need to okay. The Trump administration says that there is a buyer in the United States. And of course, there are these sort of small areas in which they are completely dependent on one another, China and the United States. That is rare earth metal refinement and those rare earth magnets, and of course those advanced AI chips. So there is a need to work together to a certain point. Do they need to go all the way to strike that trade deal? I think the difficulty here, Guy, and that what you will see between China and the United States is that the European Union, for example, is willing to indulge Trump, is willing to sort of bow to some of the theater. The Chinese are not willing to do that. That is what we saw in the trade war that went on a couple of months ago, where we saw tariffs ratchet up to 125%. The Chinese for decades have been sort of cementing their status on the global stage politically and economically, and they are not going to go for a pragmatic theatrical bow in order to appease the Trump administration, which is why these conversations are going to be a lot more difficult to crack.
Yeah, it's interesting. I've seen a few people making the link between the Europeans' reliance on the United States to provide defence and the willingness of Europe to accept what was on the table from the Trump administration, or at least to take some of it. So interesting to make that comparison then with China, and things look very different. Oliver, thank you very much. Bloomberg's Oliver Crook with the latest on the China-US conversation. Meanwhile, President Trump says the United States would work on a new effort to provide food aid to alleviate starvation in Gaza, along with other governments and organisations, including the UK and the European Union. Trump laid out his proposal during a meeting with UK Prime Minister Keir Starmer at his golf club in Turnberry in Scotland.
Hamas has become very difficult to deal with in the last couple of days. I'm speaking to Bibi Netanyahu, and we are coming up with various plans. We're going to say it's a very difficult situation.
President Trump is today at his new golf course in Aberdeen, which is where our UK correspondent Lizzie Burden is now, following Trump from Turnberry to Aberdeen then, Lizzie. So what else came out of President Trump's meetings with Keir Starmer this week, and what's on the agenda for today?
Well, the two leaders flew from Turnberry to Aberdeen on Air Force One last night, and we're going to be hearing from the president in just about an hour and a half's time when he opens this new course. But that meeting went on for about an hour, the press conference. Pretty painful at times for the Prime Minister. The president having lots of advice when it comes to UK politics, that Starmer needs to cut taxes, cut immigration, cut crime, if he wants to defeat Nigel Farage, his friend, of course, at the next election, because of course Farage's Reform Party has been leading the polls here in the UK. But there was relief for Starmer in terms of Trump praising his leadership, and of course that warm relationship is what put the UK at the front of the queue when it came to the UK's trade deal. Also, as you mentioned, on Gaza, the president for the first time acknowledging the starvation that is happening there. We're going to have an emergency cabinet meeting in the UK on Keir Starmer's intervention there. And then when it came to Russia, relief perhaps that the president is willing to turn the screws on Vladimir Putin, saying that 50-day ceasefire, 50-day deadline for a Ukraine peace plan needs to be now 10 to 12 days, and we're expecting news on that in the next day.
Lizzie, what else is on the docket here? When it comes to the trade conversation, what else needs to be resolved?
Well, for Keir Starmer, of course, there's plenty when it comes to tariffs that he still wants to get resolved. Yes, he managed to get a 10% deal compared to Brussels' 15%. It would be even more of a victory if he manages to swing 0% tariffs when it comes to steel, when Brussels has got 50%. He also wants a carve-out when it comes to pharma, a huge question mark when it comes to pharma levies. And indeed, we're going to see that sectoral picture play out. When it comes to the Brussels deal, we are still waiting for anything to be on paper. As you know, it takes a long time to get thousands of pages of trade deals put together, and so we await those details. But the disappointment in what Ursula von der Leyen was able to achieve, just creeping through yesterday, leaking out from industry leaders to individual countries across the EU, should they have retaliated harder, is the question. Back in April, just as you saw from Canada and China when it was initially Liberation Day.
Lizzie, thank you very much indeed. Lizzie Burden joining us from Scotland as we wrap up the Trump trip to Scotland. Obviously, he's heading back a little bit later on to the United States. We'll carry on the conversation, figure out exactly what this all means for markets. I'll tell you one thing it means this morning, a weaker euro. The euro now trading 115.36. This is Bloomberg.
break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that three-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
This provides certainty, and actually that's something that we value because we can plan on certainty. That's important for any business. We said at the beginning of the year that actually the most important that we focus on is providing access to patient care and actually innovate behind patient care. And any barriers that are put in that way, of course, we prefer not to be there. And also, therefore, we have been arguing for exemption of the medtech sector out of any trade barriers, because there's already enough pressure on the hospitals, on doctors, on the nurses, and patients already waiting for care as we speak.
Philips CEO Roy Jacobs speaking to us earlier, really highlighting the fact that any sort of clarity, this 15%, just getting a number is a positive thing. You can see that show up in the likes of their stock this morning, higher by about 10%. It was higher by almost 14% earlier in the session. The idea that there's clarity on their profitability outlook, and they boosted it. That's a rarity in this market.
Well, a few weeks ago, they were saying it's going to cost us this if we have the current level. This morning, we get a slightly better level. They can understand it. They can figure out exactly what they're working with. So therefore, actually, maybe they can boost their margin guidance. So the clarity is there. It's interesting. A number of CEOs, a number of CFOs are able to provide a certain amount of clarity. Now they know what the number is. They can do the spreadsheet. They can figure out what Excel spits out. It's not Excel anymore, I'm sure, but whatever else they're working with.
What the AI tells them.
What the AI tells them, and they can go from there. So
yeah, and I'm sure different businesses will have entirely different thinking about the value they attach to certainty, won't they? Depending on their exposure to this whole trade. These trade lines. If you're very exposed to the United States, maybe you hold out for something, you would have wanted something better, or maybe you're so exposed you just take the certainty. But different businesses, I'm sure, will come out with different assessments.
So what is the economic effect? The value.
What does it add up to?
What is the economic value of certainty? Well, let's try and answer that question now. Isabel Mateos-Ilago, Chief Economist at BNP Paribas, joins us to try and figure it all out. Good morning.
Good morning to you.
I'm sure we've moved on from Excel. Let's talk. How do I quantify all of this? Is the deal that we've now got better than the deal we had before? How do I price in certainty? What is the economic effect of all of this going to be? The euro got tanked yesterday by the market on the assumption that actually this is probably a negative for Europe economically.
Right. So let me unpack this, because there's quite a few points. So you say, is this better than the deal we had before? If by that you mean the roughly 1.5% tariff that prevailed at the start of the year, it's definitely worse than that. Okay, so we can agree on this. If you're saying, is it better than a protracted period of trade war, escalation, continued uncertainty? No, of course it's 100% times better. So, you know, realistically, the U.S. has made clear, and this is something that has become clear over the course of time, that this was not a trade negotiation like the world was used to having them in previous decades, where everybody agrees on the objective of trading more and opening trade. No, this was the U.S. deciding to replace a big chunk of domestic taxes by taxes on imports. And so there was going to be a high minimum level of tariffs, and that's what the EU and everybody else discovered in the course of the negotiations. And once you've realized that, you try and minimize the damage. And I think the EU, the European Commission, who was negotiating, did a good job of that in two ways. One, bringing this to closure within the period that was given, and ahead of a number of other partners, or at least not later. And two, by keeping the tariff at what I think we're going to discover is pretty much the rock bottom level, at least for countries that have a surplus compared to the US. But also, really importantly, and that didn't get much attention, getting clarity on the sectoral tariffs, which nobody else has. You know, the semiconductors, the list of goods like semi-equipment, the pharmaceuticals. Pharmaceuticals are huge for a number of countries.
I think we have clarity. I've not seen anything written down yet, so we'll kind of...
Nothing's written down, but it looks like at least there's an agreement in principle for these sectors, whereas all the other countries are waiting to find out what's going to be the rate that applies to them for these products.
What happens to GDP? Does GDP go down on the back of this number? What happens to that trade surplus with the United States on goods? What does this mean?
What does it mean? So, and back to your question on the cost of uncertainty, when you look at pretty much all the macro modeling of the impacts of a tariff shock, the vast majority of the impact comes from uncertainty. So resolving that uncertainty is huge. It doesn't wipe out the negative from the tariff, but it's a huge positive. And then Secondly, this is not happening in a vacuum. This is happening in a context where Europe has been taking a lot of steps to boost its own economy. You've got the German public spending. You've got now private investment in Germany that looks like it's also being juiced up by some of the tax measures and a rekindling of animal spirits. And so you look at economic indicators across Europe, you look at the data we've had on the first and second quarters, we actually think we remain confident in our growth acceleration thesis and remain quite positive for the growth outlook for Europe on the back of this trade deal.
Does this provide another incentive for Europe, Isabel, to keep pushing up its defence spending to be able to fund its own defence? And as an economist, are you factoring that in? I'm asking this partly because some people are drawing a link between the deal that Europe has accepted here and the fact that it's not balanced, tariffs will not be the same in either direction, and a mismatch in terms of who pays for security for Europe and the United States. Is there a link between the two? Will Europe see this as another incentive to keep spending more on defence to enable it to then have more independence in other fields of operation?
Yes, so I think that's right, and I think it goes beyond defence. In a way, you know, it was interesting to see the deluge of reactions yesterday, which expressed some disappointment that it wasn't a negotiation of equals. Right. You know, big surprise. Yeah. Well, it shouldn't have come as a surprise, but it should come as a wake-up call that Europe really needs to invest a lot more in its economic sovereignty. And it means, yes, more in defense, but it also means more into its own growth potential. And that's the whole innovation agenda, that's the investing in infrastructure, investing in, you know, deepening the single market. That takes us back to the whole Draghi agenda, and hopefully those who were disappointed by the terms of the deal reached yesterday will take this as another wake-up call that Europe needs to really double down on these efforts.
And what difference does I mean, the euro has been weaker for 2 days, but it was stronger for quite a long time. So I don't want to make too much of it, but it was a big move in a short space of time, and that will have an impact on the underlying economy. But people were worrying about it getting too strong until last week.
Exactly.
So I wonder how you view 115 on euro dollar and whether that worries people.
Well, first of all, I wouldn't, you know, make too much of a 2-day move, but it's true that you had been hearing a lot of concern from both policymakers and industrials that, this sharp appreciation in the euro is going to be a problem if it goes too far. So if this takes a bit of a pause, honestly, I think it helps digest the impact of the tariffs. That being said, our long-term view of the euro-dollar remains one of euro appreciation. But if it takes a bit of a pause and gives industries more space to adjust to the tariffs, so much the better.
How much cushion, how much insulation is there, not only from corporates, but from consumers on both sides of the Atlantic? There's a narrative here that ultimately, even with a higher tariff rate, 15% or higher, the consumer can digest it. They can absorb that cost. How much kind of insulation is there to do that?
So that's going to be one of the really interesting questions to look at in the coming months, is who pays the price of these higher tariffs? Is it the consumer? Is it the corporates? Is it the exporters? Probably the burden is going to be shared, but the consumer, certainly in the U.S., is pretty strong. Balance sheets are strong. The labor market is well, I don't want to say rock solid. I don't want to overstate it, but the labor market is strong. Unemployment is at still a historically very low level. So it looks like the consumer can absorb some of the impact for sure. But depending on sector by sector, the pricing power of companies will differ, and I'm sure companies are intending to pass through as much of the extra cost as they can, but some will, and some will be less successful.
But is there I guess what I'm trying to the point I'm trying to get to here is that there seems to be that post-COVID, the absorption, the savings amounts have come up so much that perhaps you can actually eat some of those costs, as opposed to margin compression that you're seeing on the corporate side. And I'm curious just where that starts to dissipate at a time when personal savings, for example, at least in the States, are dwindling in a fairly big way. Is there still that kind of wealth effect or that ability in people's minds to perhaps even rely on?
So I think there's going to be a question of distribution here, of the savings and of the impact of tariffs. When you look at the analysis done by the Yale Budget Lab or others, the impact of tariffs is going to be felt disproportionately by the least well-off parts of society. And unfortunately, this is also the parts of the income distribution where the savings have pretty much vanished. This is where you see the most, in fact, you're beginning to see some financial distress. So that's what's going to be interesting. But certainly those importers that have been relying on cheap imports from China and other parts of the world are likely to be more constrained in passing through the extra cost than, the luxury goods importers.
Christine Lagarde said she wanted clarity on the tariff front.
Right.
She's got it now. Yeah. So what does she do? Are we done? Should be cutting more now that she knows what number that she can plug in? You're sort of smirking because it's kind of this has been the narrative for the last few months. What do we do? Are we done? Is the ECB kind of, is this enough information to make a decision on whether or not the cycle is over?
So look, September feels like a long time away, given the pace at which news has been coming. But certainly, this puts the ECB in an even better position to wait and see what happens. So at this stage, we don't see a September cut as likely. What happens next, we'll have to see. The Q2 GDP.
Why should they wait and see? They know what the numbers look like.
Well, what do you want them to do? If they think that inflation, as far as they see, is more or less at target, and the growth outlook. I mean, this doesn't change the balance of risks, frankly, very much compared to the situation they faced at their June meeting. Yeah. And so for them, this is...
But there's a value in certainty, isn't there? They now have the certainty. At the last few press conferences, it's been an exercise in trying to say as little as humanly possible because she didn't know what the trade tariff story looks like. She knows what that number is now.
Well, so yes and no. We know what the trade tariff is for Europe. And that's very important. But remember, the EU exports to the entire world, so equally important. Well, also important is the tariff on the rest of the planet, because that's going to have an impact on demand for EU exports. They're also going to watch very closely what happens to the euro. If we were to see another leg of strong appreciation, that's a different story than if we see further weakening. And then energy prices are going to be very important. So there's a lot of moving parts.
But that feels like a more normal world to me.
But it feels like a normalizing world, let's put it that way. And in that world, if you look at the June projections, and I think we're more or less on track with those, then they don't really have a reason to cut in September. Given the projections they have, and they don't seem too worried about seeing inflation dip below 2% in 2026. But we'll get a new round of projections in September. A lot more data will have come through. Okay. And, whether there's one more cut or not before the end of the year, I think you can't rule it out. But September seems like a good time to wait.
September does feel like a long way away. We've got the whole summer to get through.
It's just a month. It's just a month.
I know.
Then we get to September.
I know. And then the kids will go back to school. Sorry,
You're getting ahead of yourself.
Yeah, this is okay. Isabel Mateos, the Lago chief economist at BNP Paribas, we thank you so much joining the program. She said, look, there's plenty to get between now and September, plenty to get us out through the next 24 hours as well. Lots of data, ECB inflation expectations, jolts, consumer confidence. But I'm going to go out there and say I feel like earnings might be the most interesting one in the next 24 hours. I'm curious to hear what L'Oreal and Kering have to say when it comes to that tariff impact. Do they share Roy Jacobs' optimism?
Yeah, we get a bit of everything, won't we? We'll get that luxury earnings story, but we'll also get a take on the US consumer. Our ongoing questions will no doubt continue about where the pain of the tariffs is going to fall. Is it going to be on the US consumer, or is it going to be on the earnings that these companies report? And we will have to wait and see, no doubt, for the answer to that.
I'm genuinely curious to see what the JOLTS number looks like a little bit later.
Does it matter? Does it matter before payrolls?
Yeah, no, I think the tone will start to be set towards payroll, and I think people are going to look for different angles on that story around what is happening with hiring in the States. JOLTS isn't important as it once was, but I think the labour market still, I think we're going to come back to it being more important. Anyway, the Pulse is up next. We'll work you through the rest of the morning. Hope you enjoyed the show. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
The euro slumps and tariff optimism fades as critics speak out against the US-EU trade deal amid uncertainty on the details. Trade talks between the world's two biggest economies roll into their second day in Stockholm. The US Commerce Secretary says a 90-day extension of the trade truce with China is a likely outcome. Plus, traders boost earnings at Barclays, while Stellantis warns of a €1.2 billion tariff hit in the second half. We will dig into those corporate results. So lots of corporate earnings to talk about. Let's have a quick look at some data, though, or some assets that are on the move this morning. S&P futures up by 0.2%. Yesterday, we saw European stocks on the back foot. It looks as if things are a little different today. The European story, you'll see in a moment, is a little more positive, and US futures also a little more positive. We've seen days of touching new all-time highs on US stocks. The US 10-year yield 4.41. The euro continues to retreat, though, which is interesting, down by 0.3%. And Brent crude 69.94. There's been news on President Trump's stance with regards to Vladimir Putin. We'll get to that later on in the program, no doubt. European stocks show some positivity. Let's have a look at the European map. We do see a bit of a rebound from yesterday's weakness. Is euro weakness part of the story? Are we on the day making a link between a little bit of weakness in the single currency and what we can achieve for European corporates? Because some of those industrials that were much beaten up yesterday in Germany, in France, bouncing back a little today, were up by around 0.9% on both of those markets. We will get into all of these conversations through the Pulse. Let's get things started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Anna Edwards in for Francine Lacqua this morning here in London. Now, President Trump says reports he's seeking a summit with China's President Xi are not correct. In a post on Truth Social, President Trump said, "I may go to China, but it would only be at the invitation of Xi." The comments came as American and Chinese officials met in Stockholm to discuss trade. U.S. Commerce Secretary Howard Lutnick says President Trump will decide if Washington and Beijing will extend their trade truce by 90 days. Lutnick told Fox News more deals are likely with other countries in coming days.
And the president's going to decide, look, this is how I want to play it. He may entertain a few more deals, or he may decide, you know what, I'm just going to set the policy going forward. But by the end of this week, they will all be set, they will all be in stone, and they will be written, and we will start collecting those additional monies. Right now, we're collecting 10% from everybody in the world, and of course, a higher rate from China. But come next week, off we go.
So there are a lot of trade angles in the mix today. There's the US-China conversation, the Europe-US conversation. There's all the deals that have yet to be done. Maybe they will be done. We'll cover all of these with our correspondents in a moment. We'll talk to Lizzie Burden about the EU's trade deal and President Trump's visit to Scotland. But first to Stockholm, where Bloomberg's Oliver Crook is tracking the talks between the US and China. And we understand that the Treasury Secretary has just arrived for those conversations in Stockholm, then getting quite a lot of air miles involved in these trade conversations then, Ollie. What can we expect from these talks?
Yeah, so Anna, we have right now the Prime Minister's office of Sweden there that's hosting these talks between the Chinese and the United States. We have the American flag, the Chinese flag, and the Swedish flag flying out this morning. And we've just had the U.S. Treasury Secretary walk through the doors. He was also flanked by Jameson Greer, the U.S. Trade Representative, and this is the second day of the talks between the Chinese and the United States. The expectation here, Anna, is that we're not going to get any sort of final framework or anything comprehensive like we got from the European Union between the United States, but we will get, hopefully, an extension of the truce in the trade war that had been going on between China and the United States, where we saw tariffs shoot up to 125%. They came back down to 30%, and the deadline for those is August the 12th. What they are hoping to achieve in that room today is an extension, another extension of 90 days to continue the negotiations between China and the United States to get eventually on the footing where you could have potentially a comprehensive trade deal between the two biggest economies in the world.
And President Trump has been saying that he's not seeking a summit with China's President Xi, Ollie. It seems he doesn't like the way that this potential meeting has been cast by many media outlets. He's not saying he's not going to talk to President Xi. He's not saying he won't go to China, but there was something about the wording he didn't like.
So I think that this speaks at the heart of the difficulty that you have between China and the United States, where we have seen the Europeans, the Japanese, and many other nations, whether it's the UK, there is a willingness by these countries in a sort of effort of pragmatism to get things done, to sort of genuflect and sort of theatrically give things to the United States. That is something that the Chinese have been categorically unwilling to do. That is why we saw that trade war really escalate up to 125% tariffs between the two sides, which basically precluded trade between the two blocs. For the Chinese, who have been spending the last several decades building up their economy, building up their status on the global stage, to bow to the Trump administration in a sort of theatrical fashion, even if some of these pledges of hundreds of billions of dollars don't ever materialize, is just not something they're going to do. From the Trump side of things, he has made it his pledge to basically right the wrongs of the Chinese sort of trading system across the world. That is something that he campaigned on. So he himself will also be making that clear. This is why, Anna, we are seeing with all of these air miles, these conversations happening in neutral places, whether it's the United Kingdom, whether it's Switzerland, whether it's Stockholm, because both the Chinese and the United States want to be seen as coming to these talks as relatively as equals. And that is going to be the difficulty that the Trump administration has in cracking this nut, while other sort of allies of the United States have been more willing to give, at least in the sort of theatrical and kind of in a sort of maybe superficial way. The Chinese are categorically unwilling to do that.
Oliver, thank you. Oliver Crook joining us there from Stockholm with the latest on China-US trade. There are plenty of other trade angles and conversations with the Trump administration taking place, and a lot of that conversation happening in Aberdeen in Scotland, because that's where President Trump is now. Let's go to Lizzie Burden, who has followed him from one golf course to another. Let's stick on the subject of trade, because that theme has followed him wherever he goes, Lizzie. The trade deal struck between the European Union and the US is facing some criticism from within Europe, and even the Germans, who were initially quite pragmatic about the outcome here, are now referencing some of the uncertainty created.
Yeah, I would just add to Ollie's point and say that part of the reason that the UK hosted those US-China talks and this weekend hosted those US-EU talks is because it is so crucial to the UK economy that they all go well. We're stuck in the crosshairs here. But when you look at the US-EU deal, you saw that market reaction yesterday. The euro tumbling against the dollar, its worst day in over 2 months, and the misery continuing today. You've heard from various EU industry leaders wishing that Ursula von der Leyen, the European Commission President, had been tougher. But there was this fear from the Commission that if they annoyed Donald Trump, that it could spill into other areas of policy as well. And the European Union, of course, very much divided on how to respond. France wanting to use that anti-coercion instrument, others not so keen on the ACI. Some officials, in hindsight, saying that they'd have liked Brussels to respond more like Canada and China in the aftermath of Liberation Day. Others wanting to play it more softly. We await details on that deal, but if you look at how Keir Starmer, the UK Prime Minister, has handled President Trump, that softly approach that we saw yesterday in Turnberry, it has been widely mocked, it has to be said, but look what it has achieved. Starmer was the front of the queue to get a trade deal of 10% compared to Brussels' 15%. And if he can negotiate 0% tariffs when it comes to steel, that would be a huge advantage for the UK compared to the rest of the world, including the EU. And then he wants this carve-out on pharma levies. So we'll wait to see what Starmer can achieve. Many, many details, as you say, Anna, yet to be ironed out.
Yes, and President Trump did meet with the UK Prime Minister Keir Starmer on Monday. So just yesterday, Lizzie, what were the conclusions from that meeting?
Well, aside from trade, Anna, there was a focus on Gaza and a win for Keir Starmer, perhaps, in that President Trump acknowledged, and he used the word, that there is starvation happening in Gaza. Keir Starmer is going to host an emergency cabinet meeting on this, on what to do next, later today in the afternoon. There was also a win for Starmer when it came to Ukraine, and the president really turning the screws when it comes to Putin. No more is the deadline 50 days for peace. It's 10 to 12 days for a peace plan. So we're waiting for more news on that front as well today, Anna.
Lizzie, thank you very much. Lizzie Burden from Scotland with the latest on President Trump's what was supposed to be a sort of private visit but has turned into a host of meetings and encounters with the global media, as you would expect. Let's talk about where we are on markets. How do markets put all of this trade news flow together? We're joined now by Ursula Marchioni, who's EMEA Head of Investment and Portfolio Solutions at BlackRock. Ursula, very nice to have you with us.
Good morning.
So where do we look in markets for an accurate response to the trade deal between the US and Europe, or is it too soon to find one? I'm asking this because we've had 2 days of negativity on the euro. Yesterday, European stocks went down. Today, they bounced some way back to where they started. So is there a way in markets to get a sense of how good or bad this deal is for Europe?
Yeah, it's a very good question. So obviously it is early days, to your point, but I agree that this is a key question before we wrap for a couple of weeks of summertime and prepare for deployment and investments coming back into September. And I say that because taking a step back, this year has been a huge theme for global investors has been around repatriation. And so we've seen a lot of European equities purchases from European investors, a lot of APAC domicile investors going back into their markets. And so to your point, what's coming through now, it's extremely important to see the longevity of that trade as we return. So I would say, taking a step back and wrapping up on trade, it seems to me that a soft landing scenario somehow is emerging. We have a deal with the UK, obviously last week Japan, and now entering into this week the big mighty one with the EU. And it's certainly a significantly worse position vis-a-vis where we were at the end of last year, but it is a better position vis-a-vis where we could have been as per Liberation Day. And so taking a step back, I think at least there's an element of certainty that investors can take into the summer as they reflect into September. There's two more elements, and I think that need to be coupled with that, though. One is the earnings season that is unfolding, and then the other one is obviously the tourbillon of data that is coming out this week. So I think these three components will be crucial as we think about investment directions.
Yes. So as we regroup for the rest of the year then, Ursula, I mean, what do we take from the earnings season so far? It seems as if some corporates came in with very conservative expectations about what tariffs would do to the business, and then there's even some upside from there now. Others came in with less conservative expectations, and now there's some downside, given what we know about tariffs. So what are you taking away on the tariff conversation from the earnings story?
Definitely, and yeah, there's a lot of, last 24 hours from FX perspective, looking at luxury, there's like so much coming through. But again, trying to take a step back, if I look at the US, we've seen about 35% firms reporting, 60% of them have reported a beat in EPS growth vis-a-vis a bar, which was allegedly quite low, 4%, but there's good news coming there. And similarly in Europe, we had a very low bar at 2% in terms of earning year-on-year growth, and we're tracking at 8%, although we're 1/3 in. Big week this week, 37% of the S&P 500 reporting, with 4 of the Max 7. But I think broadly speaking, it's been a benign environment, which tells us that throughout Q2, the tariff pass-through hasn't quite played out. And so I think, to your point, we now have more clarity on tariffs. My key question is, would we see a scenario whereby, at the back of greater clarity, corporates start to pass on more of this to the consumers? It's a clearer picture, and you could argue that that would be a potential scenario that unfolds. And in that case, and that's where I come to the third leg of this triangle, what happens to data? Because we're going to start to see inflation passing through. This week will be super important in terms of, inflation data, non-farm payrolls on Friday, Q2 Eurozone and US GDP. Again, unlikely to see the full transmit of the tariffs because they were still in the making. And so I think that it will be interesting to see early signs of that, but those 3 components will be the key foundation.
Does it feel as if we're going to have to wait a lot longer than we perhaps initially thought, Ursula, for that pass-through of tariffs to show up, either in corporate margins or in inflation data, depending on who's going to be paying for this? Because it's not coming through very quickly. That seems to be the case.
That's fair, but I wouldn't bet on that. So I think that, fine, this week will be an important piece of the jigsaw puzzle, but I think that clarity that we now have on the scenario for a lot of the trade deals, and yes, of course, China, Canada are still in motion, but we have quite a lot in the bag now, might trigger a transmit mechanism there. And so again, as I think about coming back from the summer, there's 2 big areas that are top of my list. One is diversification, and the second one is what happens to that repatriation trade. So maybe I'll start with this. European investors have bought into European equities with vigor. We've seen 5 times the flows into European equities from European investors that we saw last year at this point in time. And a lot of the trade is funded out of US. I think you've seen a lot of diversification elements coming through in terms of emerging markets, both in fixed income and in equities, where we're seeing strong buying, and certainly dollar weakness is a catalyst. But I think there's a broader theme at portfolio level in terms of trying to diversify away from the US. So the key question is, going into September, what happens to that? My sense, speaking with a lot of clients, is that appetite continues, but it will be important to be differentiated. One thing that caught my eye is, if you look at European equities and decouple 2 baskets of names, domestically focused and internationally focused, year to date, there's a 20% performance differential. And that tells you how important selectivity will be. And so for Europe, still an area to watch, but again, selectivity either through active strategies or through sector plays. We saw industrials being beaten up over the last 24 hours, but taking a step back, that is a sector that tends to be more domestically focused and so can be more insulated going forward. Similarly for financials and banks.
Okay, so that's the European and the appetite from international investors for European assets. Let me ask you about CapEx, because when there's so much uncertainty around headlines around tariffs, you wonder whether corporates are going to feel confident enough to enact their capital expenditure plans. And this matters for those businesses, but it also matters for the AI trend. And I wonder what we're seeing there about whether businesses do have that confidence to spend, and if they're spending, is it all on data centers and AI?
I agree. I think this has been a core point in terms also of forward guidance with respect to CapEx and how that plays out. And it does closely connect with the US trade. We remain positive on the US because, again, that AI industrial transformation for us continues to play out. But again, moving into September, and I think one key element that I'm hearing investors continuing to be super focused on is what do we do with FX. And so historically, a equity benchmark for the portfolio sleeve, for the equity sleeve of the portfolio, MSCI World with 73% exposure to the US wouldn't have been hedged back. And yet, if you look at a German investor year to date, their experience will have been over 20% in euro terms in the DAX and minus 3% in euro terms in the US. And so that differential, again, is extremely large at portfolio level. What to do going forward? I think US continues to be, including because to your point of the AI trade continuing to unfold, and we'll see this week more information coming, but continues to be a big, big transformative force. Yet the attention that we are seeing towards FX hedging, share classes in funds, to me, is definitely going to be a theme that we're going to carry through September.
Ursula, thank you very much. Thanks for joining us. Ursula Marchioni, EMEA head, of Investment and Portfolio Solutions at BlackRock. Coming up on the programme, Stellantis warns it will see a €1.2 billion hit from tariffs as it reinstates financial guidance. We'll bring you details next. This is Bloomberg.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome back. This is The Pulse, live from London. Stellantis expects to take a hit of around €1.2 billion from tariffs in the second half of this year. The maker of Jeep sports utility vehicles and Fiat cars has restated financial guidance following the European Union's trade deal with the United States. Let's bring in Patrick Hummel, who's head of European Autos Research at UBS. Patrick, thanks so much for joining us. So let's start with Stellantis, and then we'll look ahead to some of the other corporates that are reporting this week. The timing leads you to think that this is all about the EU-US trade deal, but actually, is this more about Mexico? What's your takeaway from the Stellantis guidance that we've had reintroduced today?
Thanks for having me, Anna. Look, I think it's a quite disappointing guidance overall for the second half, especially on the cash flow side. That's the number one topic that our clients are picking up this morning. They're not ruling out a cash burn in the second half either, after burning $3 billion of cash in the first half. And the balance sheet, I wouldn't say it's a red flag at this point, but it's truly not in the comfort zone either. So this is a key area of focus.
That's a key area of focus. And what is it that really matters to a business like Stellantis, Patrick, when it comes to these trade conversations? Is this very much about Mexico and the relationship between the United States and Mexico?
Yeah, I think for Stellantis, the USMCA framework is way more important than the deal between the EU and the US. So in that sense, we wouldn't be surprised to see the Detroit 3 trying to renegotiate a little bit on the USMCA tariff framework, because after EU and Japan got a better deal, there is also some pressure now on the Detroit 3 again. Needless to say that Stellantis is in a very specific turnaround situation after losing a lot of market share in the US. The market share dropped over the last couple of years from 11 to 7%, and the new products that are now being launched have to resonate well with consumers at the right price points, and only then they can successfully master the turnaround and stop the cash burn.
And talk to me about broadly what the deal between the US and Europe means for automakers then, Patrick, because from your research, it seems that, they all have very different geographies, which will mean a different reaction to this news flow. And some of them had made very conservative assumptions ahead of this. Others had made less conservative assumptions. So it could mean very different things for different auto companies, it seems.
Yeah, that's true. I mean, of course, for the German OEMs, the EU-US deal was the most important one. And the burden versus a pre-tariff world has now shrunk. We calculate on a fully annualized basis between 10 and 15% impact on group operating profit for the German OEMs. That remains. That's a sticky part. It's clearly less disruptive than a 27.5% tariff. It's manageable, but nonetheless, it's a burden. And therefore, some OEMs will have to revise guidance downwards. We think Porsche and Mercedes will have to revise their guide downwards by 100, 200 basis points on the margin level. As a reminder, their guide, the old guide, is still on a pre-tariff basis, so that needs to be adjusted for. On the positive end, we think BMW on Thursday can just reiterate the guidance corridor because they had a better than expected second half. That's already based on the information that they disclosed. And with that, I think we see them well on track to meet the 5 to 7% margin corridor for the full year.
Okay, so taking them in turn, so Mercedes, you say they look as if they're going to have to revise down their guidance, Patrick. That's your view, and we're waiting for numbers from them tomorrow. What else are we going to be watching for? What's the detail that matters around Mercedes?
Well, for Mercedes, they already disclosed some information in their pre-close call that was wide open to sell and buy side, so this has been well digested, but it was a second quarter at the very low end of expectations, even on a pre-tariff basis, and we need to understand what drove that. Also, the divergence to BMW, which had a much better second quarter, was remarkable. So this is the color we hope to get tomorrow. And then, of course, an updated guide, including the margins and the free cash flow. We think cash flow is a key item for Mercedes because they committed to return 100% of their free cash flow to shareholders in the form of dividends and share buyback. So we would expect a new free cash flow guide, to still be at least around 5 billion euros, which gives you a 10% cash return, dividend and share buyback combined.
Yeah, Patrick, for these German car companies, how much are we seeing? Is this a very niche story, or is it widespread that German car companies can or might find they want to increasingly make cars in the United States and send them to Europe based on the mismatch of the tariffs that now exist across the Atlantic? Is that something that they're doing at scale, or is this always just going to be small?
Well, it's certainly not a theme for additional investment at this point. Things might change, right? But it's certainly an asset for BMW and Mercedes to have large manufacturing hubs in the US. Both companies export their large SUVs from the US also back to Europe. And now the tariff has gone down from 10% to 2.5%. So this is clearly a tailwind, which, by the way, I had not included when I talked about the 10 to 15% operating profit impact of the new EU-US tariff deal. That other side of the trade is another few €100 million of upside to the EBIT of BMW and Mercedes.
Okay, so an extra positive there. And just briefly, we get numbers from Renault and Pirelli as well, Patrick. What else are you watching for this week?
Well, Renault has a little bit the fallen star status now. After a few years of great execution under the old management team, there has been a profit warning a couple of weeks back. So we need to better understand, what the drivers behind that were. Also, of course,
we will look for that.
Absolutely, and people need to get to know the new management.
Thank you very much. I'm sorry to interrupt. We're just up against a break. Patrick Hummel joining us there from UBS. This is Bloomberg.
Bloomberg launches our inaugural 25 African Startups to Watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We're integrated in every refrigerator, a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning and welcome to The Pulse. I'm Anna Edwards in London, in for Francine Lacroix this morning. Here are your top stories. The euro slumps and tariff optimism fades as critics speak out against the US-EU trade deal amidst uncertainty on some of the details. Trade talks between the world's 2 biggest economies roll into their second day in Stockholm. The US Commerce Secretary says a 90-day extension of the trade truce with China is a likely outcome. Plus, traders boost earnings at Barclays while Stellantis warns of a €1.2 billion tariff hit in the second half of the year. Welcome back to the program. Now, President Trump says he will shorten his timeline for Russian leader Vladimir Putin to reach a truce with Ukraine or face potential economic penalties.
I'm going to make a new deadline of about 10 or 12 days from today. There's no reason in waiting. There's no reason in waiting. It's 50 days. I want to be generous, but we just don't see any progress being made.
Joining us now, Bloomberg's Russia government and economy editor, Greg Sullivan. Greg, so why has President Trump then shortened this deadline? I remember when we first got news of the longer deadline, markets responded with, well, oil. We certainly saw oil prices react, giving us the message that this was a very long time that was being given here. So why the shorter duration now?
That's right. Just 2 weeks ago, we heard President Trump give Vladimir Putin a 50-day deadline, and now he's shortening it. It's clear that Trump has been expressing more frustration with Putin over the pace of the negotiations. As his push for a ceasefire has largely met with intransigence from the Kremlin. Moscow has responded with mostly just maximalist demands that Ukraine will not accept. We've also seen an uptick in missile and drone barrages against Kyiv and other Ukrainian cities. Those are growing increasingly deadly, and all are fueling President Trump's frustration. It's worth noting that so far the Kremlin has been silent on this latest threat from Trump, and many analysts don't expect Trump's latest position to actually change President Putin's approach to the ceasefire.
Yes, and what is President Trump threatening then against Russia if there is no ceasefire in Ukraine within this new deadline then of 12 days, Greg? There's been a lot of talk in the United States about some kind of secondary tariffs on Russian energy products, for example.
That's right. So a few things from President Trump. One are these so-called secondary sanctions. He said that he would put secondary sanctions on countries that are buying Russian products. That's probably mostly energy products like gas and oil, which is why we've seen a response in the crude price. There's some worry out there that this could disrupt crude flows. Russia's a massive oil producer. So that is the most serious threat. But a lot of people don't actually expect Trump to follow through. There are serious questions here. Is President Trump willing to impose sanctions on China China and India amid complex trade negotiations? Is he willing to disrupt the flow of crude? What mechanism could he use to impose these sanctions? So many questions still remain. It's also worth noting that in the past, Trump has threatened economic penalties against Russia and has not followed through, opting for room for negotiations. But there was a change of tone on Monday from President Trump as he said he's no longer that interested in talking to President Putin.
Greg, thank you very much. Bloomberg's Greg Sullivan on the relationship there between the United States and Russia. Now, moving on to other news flow this morning. A gunman has killed at least 4 people and himself in a shooting in New York City. It happened at a tower in Manhattan, which houses the global headquarters of Blackstone. Bloomberg's Shaquille Omari was at the scene.
This all unfolded around 6 Monday evening, where I saw a lot of police officers running in different directions, helicopters swarming the area for at least 3 hours. Now, on the ground, fire and EMS crews flooded the scene with a lot of bystanders asking a lot of questions. Now, there were police in tactical gear entering the building, and there were employees exiting the building with their hands above their heads in shock. Employees who were on the 32nd floor of the building say they pushed furniture in front of the doors to barricade themselves from the attack. Now, Blackstone is one of the largest asset management companies and employed almost 5,000 people at the end of 2024. Now, this is an ongoing investigation with so many questions remain as to what led up to this shooting. For now, in Midtown Manhattan, Shaquille Omari, Bloomberg News.
Now, the New York Mayor Eric Adams has described the shooting as senseless and unimaginable.
The horrific crime reminds us all how easy it is to gain access to a gun. Gun violence has scarred so many neighbors and ripped apart too many families across this entire country. And we will continue the fight to do all we can to protect our city.
On to corporate news flow, and the oil giant Vitol delivered a record $10.6 billion to its executives and senior staff last year through share buybacks, the biggest payout in the industry's history. The energy trader's 2024 profit hit $8.7 billion, which is more than its 4 biggest rivals combined. Vitol has now paid over $31 billion to its partners in the past decade, even as profits begin to cool. In other news, new data suggests India has overtaken China to become the top source of smartphones sold in the United States. According to Canalys, in the quarter to June, India accounted for 44% of the market. Vietnam, home to much of Samsung's production, came in second. China fell from more than 60% of all estimated shipments a year ago to just 25%. Let's stick with the emerging market theme. The global trade war that President Trump unleashed in April shook investor confidence in the United States, in the U.S. economy, so much that it sparked a stampede out of the dollar. Today's Bloomberg Big Take examines how much of that money has washed up in emerging markets. You can find that story on the terminal and Bloomberg.com. For a deep dive into the topic, I'm joined now by Vivian Lynn Thurston, Portfolio Manager at William Blair Investment Management. Vivian, nice to speak to you. So good to have a chance to talk about emerging markets then in the context of the trade narrative, what we've seen in the dollar. And maybe let's start with the big picture dollar impact. So real dollar weakness as a result of some of President Trump's trade policies. What has that meant overall for emerging markets?
Yeah. Historically, there's an almost perfect inverse correlation between the dollar's strength versus the emerging markets' local currency returns and also dollar-denominated return. So that means that weakened dollar tend to support the emerging markets equity in a very favorable way. This both due to the translation effect and also transactional effect. So when you have weak dollars tend to mean the local currency becomes stronger, that tend to lead to lower inflation, and that gave also the central banks of those countries the ability to lower their interest rate, and that helped both households and also corporate spending.
Okay, so there's the translation and the transaction effect that you described there, Vivian. And has that happened in this case? And if so, which are the emerging markets that have really been able to benefit?
Yeah, so far we've seen that Latin America, for example, whether Brazil and Mexico, we see their local currency really appreciates quite substantially. Broadly speaking, I would say that Asian equities also tend to do better, given that a lot of those countries rely on exports, and also domestic economy can be impacted by how the currency movement happen in their country. Yeah, so we tend to look at more domestic-driven kind of idiosyncratic opportunities from bottom-up perspective, given that uncertainty of the trade continue to weigh on the sentiment and the volatility of the market.
Yes, and we can't talk about emerging markets without talking about China. Things look very different if you include or exclude an economy the size of China. So what is your view on China right now? It seems earlier on in the year we were talking about some of the tariff impact, maybe providing more of a catalyst for the government and other actors to try and do something for the Chinese economy. What's your thinking?
Yeah. I think China facing both internal and external pressure from the economic perspective. Externally, we know the trade discussion definitely continue to put more uncertainty and complexity of how they're going to continue to work on the export side. But internally, China has been grappling with this deflation pressure for a few years already. That's even right before the COVID reopening. China continued to see this pressure of the property market reduce to consumer confidence. So you can see that PPI or PMI continue to be this weak territory for more than 3 years. So I think that is a key issue that I think Chinese government need to figure out how they can regentrify consumer confidence and the SMEs or small economies and enterprises' ability to reinvest. Having said that, we do see some industry within China start to show very strong improvement in terms of corporate fundamentals. So whether it's online gaming, some e-commerce players, or some new consumption themes, the self-indulgent kind of a consumption themes very popular among the Gen Zs in China.
Okay, and is that enough? Is it, some self-indulgent spending by Gen Zs, is that enough, Vivian, to boost the Chinese economy?
I think it's not enough. Yeah, because not very broad-based. But from investment opportunity perspective, it does provide that attractive underlying investment opportunities. But you're absolutely right. In order for the broader economy and consumer to really see that recovery and rebound, we do need to see the stabilization of the property market and the consumer confidence and the youth employment. So overall, I do think Chinese government need to figure out the fiscal support more effectively to stimulate the private sectors and also the consumer confidence.
Yes, and so whilst they're doing all of that, how much or how crucial is it that we continue to see this truce between China and the United States on trade then for your China narrative?
Yeah, I would say the U.S.-China relations is entering this strategic competitors face, and that's been going on for a few years already. And this is structural. This is not going to change. So whether it's a trade conversation, whether it's some national security-led sanction or restriction kind of conversation, I think we will see this coming through from time to time. And that's why the risk premium on Chinese equities has structurally risen. But for trade conversation, as long as we come to the final kind of deal, I think it will be great for the market. Because the uncertainty is the worst for stock market. When you come to the final conclusion, the market can deal with it, the industry can manage it over time. So I think I'm hopeful that in the next couple of weeks or even a couple of months, we can see the final conclusion of the U.S.-China trade conversation.
How enthusiastic has U.S. money or global money been to head towards China at this point? I mean, we talked about how money was coming out of the dollar and investors were increasingly questioning whether they wanted to be all in on the United States, looking for global opportunities.
Right.
Has that included China? Have we seen that in flows?
Yeah, I do think especially Hong Kong listed companies in the Chinese company has seen a lot of inflows year to date, reflecting a very strong performance of MSCI China, which is primarily Hong Kong listed. And that's also coincide with a very strong IPO pipeline, including those new consumption themes and also some biotech kind of themes in China. So we do think this trend may continue as long as dollar weakness remains and also U.S. trade policy remain uncertain. So it's a good news for emerging markets overall and good news for Chinese equities.
Yes, and investing in Chinese tech, is that as much of an exciting theme as it was at the beginning of the year?
I do think you need to see the corporate fundamentals to continue come through in order for that sector to be favored by investors. And you're right that a lot of stocks in that space has rallied quite a bit, so not as cheap as before. So we need the earnings to come through.
Yeah, and in terms of other emerging markets then, Vivian, which do you think we've talked a lot about China. Where is there a very interesting story that doesn't get talked about so much in the media?
The other very important thing of emerging markets investing is AI semiconductor supply chain. and that means the Taiwan semiconductor or Korean semiconductor companies. So as you know, that the AI spending on the global level continue to accelerate by the hyperscalers and all the major players. That actually means the demand for all the supplies throughout the entire semiconductor and hardware supply chain will remain very robust. So that's why we see the opportunity among the Taiwan tech and some of the Korean tech. So that's one, I think, very interesting investment theme in the near term. The other one I want to talk about is Korea. Korea has this value up initiatives, and that could be also very interesting, given that this country has been in a very challenging corporate governance kind of state for some period of time. And as they start to put more effort about increase the corporate shareholders' return and the margins and returns, and we will see that equity continue to re-rate and with a better and improved earnings outlook.
Vivian, thank you very much. Thank you for coming in today to talk to us. Vivian Lynn Thurston, Portfolio Manager at William Blair Investment Management. To the UK now, the rising price of products such as tea and meat pushed food inflation to its highest level in 17 months. The British Retail Consortium said food bills climbed 4% in July compared with a year earlier, the fastest increase since February 2024. The data confirmed that a period of falling prices in shops has come to an end, in part due to the government's hike in the minimum wage and its efforts to raise revenue through higher payroll taxes. Shareholders in Wise have approved a proposal to shift its primary listing out of London, a move that will also allow the fintech's chief executive to keep his so-called golden shares for many more years. Wise has argued that moving its listing to the US will ultimately open up its shares to legions of retail and institutional investors, giving it more liquidity and presumably boosting its valuation. Coming up on the programme, sticking with the UK, Barclays plans to buy back £1 billion worth of shares after its traders turn in a better-than-expected quarter. More from our exclusive interview with the CEO. That's next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Tomorrow, the Fed decides.
It's not just about the economics, it's about the politics.
The Fed is in policy purgatory.
It's going to press on the dual mandate. If the Fed wants to maintain its credibility, I think it makes sense to stay where they are right now.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
He's under fire. They're coming out of the trenches after him.
How do they justify how this is not political?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Welcome back. This is The Pulse. Now, Philips increased its profitability outlook as the impact of the trade war was not as severe as the company had initially feared. The Dutch medical technology firm now expects its full-year adjusted operating earnings margin to be between 11.3 and 11.8%. Philips is asking for tariff exemptions for the healthcare sector. CEO Roy Jacobs telling Bloomberg that the company is expanding its presence in the US. EssilorLuxottica has posted better than expected revenue in the second quarter, showing strong gains in Europe as it pressed ahead with its smart glasses initiative. Revenue at the world's biggest eyewear maker increased 7.3% at constant exchange rates, ahead of the 5.9% expected on average by analysts. Sales of Ray-Ban Meta smart glasses more than tripled in the first half. And on to banking, Barclays is buying back a further £1 billion worth of shares after its traders turned in a better-than-expected quarter. The British lender's CEO, CS Venkatakrishnan, spoke exclusively to Bloomberg about the outlook for the UK economy.
I think the macroeconomic circumstances in the UK are poised to get better. There is a affinity to the financial sector now that's being expressed, the realization of our importance for the economy, and an impetus towards better, more sensible regulation overall. I think that will help banks. I think it will help international banks like us. And I think we've had macroeconomic stability in interest rates, in employment, and growth, while it is slow, is still reasonable. I think in the UK it's around 1%, and we hope it can be higher. But all the circumstances are coalescing. There's a constellation of ideas and energy and activity which will help spur growth.
CS Venkatakrishnan also gave the bank's outlook for M&A, saying there will be more opportunity as the economy settles.
Broadly, M&A will increase as there is more stability in the macro environment. Of course, each company, each bank, each situation is very different. But I think there are rewards to scale. I think those rewards to scale will be realized. We are happy to have many, many businesses at scale, and we know how important it is to protect and to grow that scale. And new technology will only facilitate that and, in fact, increase the returns to scale. So I think that's what companies will be looking at.
Barclays CEO there, speaking to Bloomberg Television a little bit earlier on today. Now, joining us to talk about the banking sector, Anke Reingen, co-head of Global Financials Research at RBC Capital Markets. Anke, thank you for joining us. So we'll take a broad view of the banking sector, and one of the big themes came out in the Barclays earnings, but seemed to be evident in the earnings of other businesses as well, and that was that volatility can be a good thing when you're trading in these markets, and both in the first quarter and certainly in the second quarter, we've seen that from European banks, haven't we?
Yeah, I mean, everyone reported so far, US, European bank, you could see really the market's performance was really quite strong, benefiting from volatility. And I guess that's especially at the start of the quarter, across equities as well as fixed income, and it ebbed down towards the end of the quarter. And then you could see some of the origination and advisory fees picking up, which have been relatively weak in the second quarter, with some green spots. So I think what we now need to see across the overall business mix, markets has been the highlight. But I think what we need to see now going into second half of the year, will the investment banking fees pick up? And what level of volatility are we going to continue to see? Because if we look at the business mix of the investment banks, the trading is or markets, I should probably say, rather than trading, is a larger part than investment banking fees. So we need a decent level of volatility to sustain that market's momentum, as well as the volatility to come down enough for origination and advisory to continue to pick up.
Yes, absolutely, because what can be positive for one part of the business, so trading and markets, might be negative for another part of the business, which is M&A. And when we spoke to Venkat earlier on, he was suggesting that we were seeing that pivot a little bit. He was suggesting that we would see a pickup in investment banking activity, M&A, for example, and other things, as we just get more accustomed, I suppose, to the types of headlines that we're going to see under this current US administration. Do you share that sense that maybe things get better for investment banking fees?
I guess it's like the environment is so volatile and there's so many geopolitical headlines. So I think it's certainly probably a period of stability is needed, and visibility for corporates on what comes next to really execute it on their pipeline. I mean, clearly it seems to be building across different products, ECM, M&A, But at the same time, visibility is needed for corporates and market really to execute. I guess it depends when we come back in September. September is usually a very strong month, and to see activity picking up. Clearly, I hope, but at the same time, a certain level of volatility is needed to sustain the market's revenues. And why they're not totally just a function of volatility, because we've seen banks have a financing business and have put capital into their part that should sustain part of the market's business. It does need some volatility.
So it needs some volatility because it's is it difficult to think that the third quarter will be as volatile as the second, given what we saw around April? I mean, none of us know.
No.
We don't have a crystal ball and we don't know which headlines will be coming our way. But it's interesting that you point out that it isn't only volatility that drives the successes that we've seen in those markets businesses in the second quarter.
Yeah, no, exactly. You can see some capital allocation and you can see some market share gains. So certainly a combination of various factors to support the performance.
What have been the other themes, some of the more domestic themes? I mean, always interested when we speak to these different banks, their level of responsiveness or the reaction function that they demonstrate in their earnings to lower interest rates can be quite varied depending on, you know, the French banks have one type of response. In the UK, we talk about some hedging that means that there isn't quite the response that you'd expect from lower interest rates. I mean, typically, a period where rates are coming down, you would think might not be great for banks, but they've done well.
Yeah,
despite that.
Yeah, I mean, you're right. I mean, it's like the bank stocks. I mean, the sector has done so well. So what we need to see with results now is really some earnings upgrades to live up to those valuations. And you can see stocks that didn't meet or beat expectations that have performed relatively poorly. So it's all about the expectation of economic growth picking up, of yield curve steepening, and also, I guess, the regulation, as mentioned before in the previous comment, is a large driver. So we do need, if we look at net interest income, it's really quite diverse. We have some countries see mortgage growth because rates have coming down. But I guess the one area we're looking for is the corporates to pick up activity, because that's going to be stimulating, and that's what's driven the share prices as well, economic activity picking up. And that's what we really need to see. I mean, it's small signs, but really need to see more of this economic activity picking up into the second half.
And I know we're looking at UBS reporting this week, tomorrow, in fact. What are we going to be watching out for then, Anka?
Yeah, so I guess this is the first time UBS is talking in a wider forum after the too big to fail proposal. I expect they won't avoid to comment on it because certainly there will be questions. But at the same time, I don't think UBS will put all cards on the table because clearly that wouldn't probably be supportive for his position. But I think given in the meantime, it's all about capital generation. So earnings do matter because I guess the best defense for any regulation coming their way is capital generation and earnings. So I think that's going to be quite supportive. I mean, if we look at peers, they should report a good set of results given they're quite geared to volatility. But you never quite know. There might be something I didn't quite expect. But
yes. And I know you don't cover Italian banks. I'm not going to ask you specifically about Italian banks, but it does put the M&A theme in my head. Is that something that more widely across Europe we're watching out for? Or do you just think the barriers to that, certainly cross-border or even domestically sometimes, just so many challenges to getting those kind of deals done?
Yeah, I guess the execution risk of those deals has come down because the banks have cleaned up to some extent. Acquisition currencies have been stronger, but it just seems to be political as well as companies don't want to be acquired. So there seem to be so many hurdles as one might have expected.
Okay, Anka, thank you very much. Thanks for joining us. Anka Reingen, co-head of Global Financials Research at RBC Capital Markets. That is it for the Pulse. European equity markets then up by around 0.6% today. We're seeing a bit of a bounce back across European stocks after yesterday's selling. What does that mean for the US futures picture? It's flat to positive. Nasdaq futures up by 0.4%. E-minis up by 0.2%. So perhaps a positive day in store. The euro continues to be on the back foot, but is off earlier lows, down by 0.2%, 115.68. Up next, Bloomberg Brief. This is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Tuesday. An evening of fear. A shooting in a Midtown Manhattan office building kills 5, including the gunman. Locking it in, the U.S. and EU rush to finalize details of their trade deal. Talks with China still ongoing. And investors await the latest JOLTS job data as the Fed kicks off its 2-day meeting. 6 consecutive trading days where we had 6 records, but we just barely got there. 0.02% was the gain on the S&P 500 to take you to an all-time record yesterday. We're gaining again this morning, up 0.2, 0.4 just thereabout for the NASDAQ 100. It's a busy day. We're going to have some of the big tech earnings kick off tomorrow. 20% of the S&P 500 will be reporting this week. For the bond market, it is also very steady. We're going to get a Fed decision tomorrow, so not a lot of change this morning, actually unchanged across the board. Perhaps the real drama, it's what's happening in the euro. The euro falling for a second consecutive day, weaker by the dollar by more than 1.4% over those 2 days. Some real questions about what Europe has conceded in order to get a trade deal done. This is the biggest 2-day decline since April. Let's get you some stocks under the surface this morning. With that is Valerie Teitel. Morning, Val.
Good morning, Danny. Let's start with some M&A speculation. The FT reporting that Baker Hughes, the oil and gas supplier, is looking out to buy Chart Industries at a 22% premium to its equity value. Those shares are up 17% so far in pre-market trade. Let's move on to some maybe more sour news coming out for VeriSign. This is an internet domain supplier similar to that of GoDaddy. Danny, is falling due to some news that Berkshire Hathaway is looking to sell a third of its stake in the company, so that stock down 6.2% in pre-market. Lastly, let's check on a stock over in Europe. I want to talk about Philips. This is the Dutch medical technology supplier. Those shares are up near 10%. Its best performing stock across Europe today. The CEO out with margin guidance, boosting their margin guidance for the full year, and the CEO also saying, Danny, that 15% tariffs is something they can deal with. Danny.
Valerie, thank you so much for that update. We'll catch up with you later in the hour. Also in this hour, we'll be speaking to Marvin Barth of Thematic Markets on U.S. growth. Kayla Cedar of State Street also joins us as we count down to the Fed decision tomorrow. Let's get the latest on trade negotiations first, though. The EU and U.S. are looking to finalize a deal that has drawn criticism from the bloc. At the same time, the third round of talks between the U.S. and China are underway in Stockholm. For more, we are joined by Bloomberg's Oliver Crook in Stockholm. Oliver, the first day of discussions wrapping up. Has anything been achieved so far?
Not that we know of yet, Danny. There were about 5 hours of talks yesterday in two delegations, one led by the U.S. Treasury Secretary Scott Bessent, flanked by Jameson Greer, the U.S. Trade Representative, and the other by the Chinese Vice Premier He Lifeng, who met for about 5 hours yesterday, beginning in the afternoon, stretching into the evening. And this morning, outside of the Swedish Prime Minister's office, you have the Chinese flag, the American flag, the Swedish flag, and we've just had the full delegations of both sides walk in about 30 minutes ago. So we expect those talks to go for several hours today into the afternoon. We would hope to hear from both of the sides in terms of getting a readout from how those conversations went. And a reminder for everybody, really the deliverable here is going to be an extension of that trade truce that we have currently holding between the United States and China. Remember that trade war escalated where we saw 125% tariffs, basically precluding any kind of trade between China and the United States. That has come down, at least on the U.S. side, to 30%. That is supposed to expire, Danny, on August the 12th. That is what they would like to extend here. They would like to extend that for potentially another 90 days to try to deal with some of the other thorny issues between that relationship. All of that being said, longer term, Danny, we'd like to see, the United States would like to see, China would like to see a framework that works for both sides. But in the world where we have the United States trying to right all of these sort of global trade imbalances that they're seeing with the Chinese are going to be much less willing to give some of the concessions that we've seen. For example, on the European side, the Europeans much more favoring pragmatism. The Chinese are much more concerned with the pride of the situation. They've been building up their economy, their status on the global stage for decades. They do not want to be seen bowing even theatrically to Donald Trump.
Well, speaking of Europe, I want to bring Lizzie Burden into the conversation, who's in Scotland, who's been tracking the EU deal with the U.S. Lizzie, some real questions emerging about just what the EU has sacrificed in order to get a deal done.
Yeah, the price of that pragmatism very evident in the euro, Danny. You've seen it dropping against the dollar yesterday, its biggest drop in over 2 months, and the misery continuing today. You've had industry leaders saying that Ursula von der Leyen, the European Commission president, should have been tougher, that maybe they should have used that anti-coercion instrument that France had suggested. But look, you had division across the EU in terms of how it should be responding, and fear at the Commission, frankly, that there would be a confrontation with Trump that could spill into other areas. So we've heard from EU leaders like the trade chief, Maroš Šefčovič, insisting that this was the very best they could do. Frankly, Keir Starmer has been widely mocked for his softly approach to Donald Trump, Danny. But if anything, this weekend showed its value. He, of course, got 10% tariffs against Brussels' 15%. And if Starmer, while he's talking to Donald Trump here in Scotland, succeeds in securing 0 tariffs for steel, compared to the 50% tariffs that Brussels and the rest of the world are facing, maybe you would see that as a win. Starmer wants to carve out for pharma, another area where we're hoping that we get some news in the coming days.
Well, to that point, Lizzie, there had been a lot of celebration, especially after the EU got 15% tariffs, that Keir Starmer got 10%. In that meeting with Trump and the UK Prime Minister, what was the readout on it? How successful is that relationship?
Well, many Trump touting that as a Brexit dividend, but mocking Keir Starmer, as I say, for the way that he has had to handle Donald Trump in these meetings. That press conference absolutely dominated by the president, and the president somewhat patronizing the Prime Minister in terms of advice on UK politics, saying that you've got to cut immigration, you've got to cut crime, you've got to cut taxes if you want to beat my friend Nigel Farage, the populist leader of Reform, who, of course, is beating the other parties in the UK polls right now. Nonetheless, there were some wins, Danny, when it came to Keir Starmer. He was praised for his leadership by the president on Gaza. The president finally used the word starvation to describe the situation happening there. And he turned the screws on Vladimir Putin, saying that 50-day deadline for a ceasefire, for a peace deal in Ukraine, now drops down to 10 to 12 days, another area where we're expecting news today. But as things stand, it's all about golf. We've got the president opening his new golf course here in Aberdeen. They came on Air Force One from the west to the east coast last night, and he's teeing off as we speak.
All right, Lizzie, Oliver, thank you so much for your excellent reporting this morning. Bloomberg's Oliver Crook and Lizzie Burden. Let's turn to the view of Wall Street this morning. Marvin Barth of Thematic Markets writes, quote, U.S. growth will continue to outpace consensus expectations. The combination of the One Big Beautiful Bill Act and tariffs provide modest stimulus to the economy, even if some fiscal consolidation from tariff revenue this year. Marvin joins us now. He's founder of Thematic Markets and former chief economist for international affairs at the U.S. Treasury. Marvin, so wonderful to see you this morning. And look, given the EU deal on hand, it looks like we'll have something like a 15% tariff, at least on goods coming into the U.S., not to speak of commodity tariffs, which are higher. U.S. markets, both stocks and bonds, are sanguine about it, should they be?
Yeah, I think this is overall a positive thing for the U.S., right? The U.S. is getting a winning position across the board. They effectively cut income taxes and raise revenue elsewhere. And while I know that a lot of people get very disturbed by tariffs, from the applying country in this perspective, they're less negative for growth than income taxes. The math of that, the economic theory of that is all actually very straightforward. And so this is effectively a positive for the U.S. economy. It's not necessarily a positive for Europe, which is why we're seeing this reaction in the euro dollar exchange rate.
Can you get more into that, Marvin? Because the Philips CEO is speaking to Bloomberg earlier this morning saying, hey, we can handle a 15% tariff. We'll be okay with that. Can companies in Europe, can the economy handle a 15% tariff, Marvin?
Oh, yeah, I think most of them can, right? Like, remember that margins are typically higher than that in most advanced companies. You know, for commodities, things like that, obviously that's not the case, but those aren't the things that the U.S. is buying from Europe. Actually, that trade tends to go the other way. So, yeah, they can handle it. And remember, the reason why the U.S. is able to do this with country after country after country is that the U.S., at the end of the day, is responsible for 25% of global demand. And so you kind of have to participate in that market.
Marvin, does that mean when we think about long-term consequences, that there is not a risk that trading partners, that EU, that Japan, that the UK start to move away from the U.S. as both a trading and investment partner?
Well, I think that what you're trying to see, or what you're seeing the Trump administration try to do, rather, is to actually pull those things closer together. So they do see a set of imbalances here, and it's not just the trade imbalances, it is really the set of rules. So, you know, there was a lot of talk about tariffs, but, you know, let's remember the U.S. or the EU has a lot of standards that block all sorts of U.S. imports. That's effectively like a tariff, only it's a 100% tariff. So this does go both ways, and I know that right now the EU is smarting, as are a lot of other U.S. trading partners, but I think as time goes on, these will be seen more in the light of actually this is just a leveling up of the imbalance in trade that the U.S. was facing before in terms of its terms of trade with its trading partners.
Marvin, can you just translate all of this into assets? Does that mean risk on can continue at some pace? Does that mean the threat of inflation or a Fed that's unable to cut, that is somewhat relieved as well?
Yeah, I think all of these things, look, as long as we have a continued growth impulse here, and the U.S. has been the leading economy, so keeping that going has been an important point and is going to keep a positive trend in asset markets. From the inflation perspective, so far, we continue to see that inflation is not coming down below the Fed's target, and inflation expectations are elevated. So they're going to be on the sideline. But I think one of the points that we've talked about many times before, Danny, is that I think that they have the wrong view of where neutral rates are. Neutral rates are actually much higher, which is why the U.S. economy continues to do quite well throughout all of this.
Marvin, I want to talk about one of the risks that you have flagged, and that is stable coins. You're concerned that it will raise the risk of an unstable monetary regime. What do you mean by that? What is the risk?
Well, actually, it's more about the risk two unstable monetary regimes. So if you have a country like, say, Nigeria, where you have rampant inflation and a lack of faith in the monetary authorities, you have the potential to see stable coins that are now validated by the U.S. government and anybody can use on their phone effectively turn into an alternative source of money, and those existing currency regimes collapse. Where that, that's not just an emerging market issue. Imagine if we had stable coins as they exist now back in 2011 or 2012 during the EMU crisis. You wouldn't have had Spaniards and Italians switching their accounts to Deutsche Bank. You would have had them switching it to US dollars on their phone, and that would have been a very different outcome for that crisis.
All right, Marvin, we're going to have to leave it there. Just a taste of some of your take on stablecoin, and excellent research note you have on that. We'll have to get more into it next time. Marvin Barth of Thematic Markets. Let's now get you some other top stories that are trending on the terminal this morning. Vitol has handed a record $10.6 billion to its executives and senior staff through share buybacks last year. The fallout of the energy crisis continued to deliver extraordinary returns to the privately held oil giant. The share repurchase is likely the highest payout in the industry's history. The Financial Times reporting that Baker Hughes is nearing a $13.6 billion cash deal to buy Chart Industries. The deal gives Chart an equity value of about $10 billion. The agreement will likely be announced in the coming days. Baker Hughes declined to comment to the FT. And Barclays traders have delivered their best second quarter in 3 years thanks to volatility from President Trump's trade war. The fixed income business brought in close to $2 billion. That's a 26% increase from a year ago. However, the bank didn't change its guidance for the year after upgrading figures in April. Coming up, we get back to our top story, a deadly shooting in New York City. We'll bring you the details next. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The shooter is believed to be Shane Tamura, a 27-year-old male with a Las Vegas address. Mr. Tamura has a documented mental health history. His motives are still under investigation, and we are working to understand why he targeted this particular location.
That was New York Police Department Commissioner Jessica Tisch speaking at a news conference last night. A gunman has killed at least 4 people and himself at an office tower in Midtown Manhattan. Joining us now is Bloomberg's Miles Miller. Miles, thank you so much for joining us. And you've been working tirelessly reporting on this story. Just bring us the latest and what we understand about the motive of this individual.
Right. So this suspect drives cross country, starting in Nevada, what stops through Colorado, New Jersey yesterday, parks his car right outside of this building, 345 Park Avenue, and gets out in the middle of rush hour traffic with an M4 rifle. He goes into this building, which is owned by Rudin, a large property management company here in the city, and the first person he encounters is an off-duty police officer who's working what's called a paid detail, so an officer in a uniform, but not working at a precinct, and shoots him in the back. And he continues shooting in that lobby. He shoots a security guard. He goes into an elevator bank destined for the NFL headquarters, which is on the 5th floor. But because this is an elevator bank that the buttons are on the outside, he didn't push any buttons, he winds up going to the 33rd floor, which is the headquarters of Rudin Management. And when he's in that part of the building, shoots another person who is an employee of Rudin, and then ultimately turns the gun on himself. He's in reporting that we've gotten overnight is that he had a letter, handwritten letter in his pocket, in which he says this is all about CTE, which is a chronic condition that football players get, and you can only really study it after they die. You have to search, go through their brain, and you see the signs of it. And he believes that he was hit so hard during his time playing high school football that that's what led him to come to NFL headquarters and sort of try to enact revenge against the NFL. He said they haven't done enough on CTE.
This is a large office building, and anyone that has to go through these buildings knows that there's often robust security, that there are multiple points of checks to make sure that the people who are in the building are supposed to be there. You mentioned in broad daylight, this man walks in with a rifle. Is there a question to how this was even able to happen, that he wasn't stopped earlier?
Right, it's sort of a difficult position. You walk, this guy walks in off of traffic on Park Avenue. The offices are still bustling with people. Unless there are police officers with long guns outside of all of the, finance firms and the firms on Park Avenue, it's really difficult to stop the threat, especially when he winds up shooting an officer in the back. Now, there were 2 police officers on site. It's just unclear how he didn't encounter one of the other officers.
And obviously a huge tragedy, Miles. What do we understand this moment about the victims?
Yeah, one victim we know is a Blackstone employee. Another victim, the first victim, an officer, 37 years old, expecting his child, his next child, in about 4 weeks' time, was killed working his off-duty employment with Rudin, trying to make ends meet for his family. You have a security guard shot as well. You've got a Rudin employee shot as well. It's going to be a very difficult day over there. How do you return to an office that was a scene of so much carnage? And if you work at any of the firms in that neighborhood, whether it's Jeffries or Citadel, obviously JP Morgan down the street, what do you tell your employees about their safety as they go into these firms this morning?
Miles, thank you so much for bringing us this and all of your reporting throughout the night. We really appreciate it. An absolute tragedy. That is Miles Miller, and you are watching Bloomberg TV.
indications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
You're watching Bloomberg Brief. I'm Danny Berger in New York. Time for your front page news in the front of many papers this morning. And the New York Times leading with the shooting in Midtown Manhattan. The 27-year-old from Las Vegas walked into a Manhattan office building that houses Blackstone, the NFL, among others. Bloomberg reporting now suggesting that the gunman had a manifesto claiming he had CTE and was specifically targeting the NFL offices. Next, the Financial Times this morning reporting that staff at the ECB have accused President Christine Lagarde of running an unaccountable legal fortress. The central bank has been called anti-democratic in a letter to Lagarde as seen by the FT. And on the Washington Post, a new whistleblower coming forward to challenge the federal nomination of Emil Bove, a top DOJ official who used to be President Trump's attorney. The Post claims to have reviewed evidence brought forward by the anonymous whistleblower. Bove was nominated in June. All right, a quick check on the euro this morning because it continues to fall for a second consecutive day, lower by 0.1%. It is trading at 115, the weakest two-day run since April of this year, shortly after Liberation Day. A real question being asked now, does the EU have standing after this deal? In other words, did they concede too much? You can see it in the reaction from the European car makers that initially rallied after the announcement of a 15% tariff, but then began to reverse. Coming up, it is a whole lot of earnings, a whole lot of data. We're going to get both JOLTS and consumer confidence data. That's coming up later this morning. Equity markets, little changed alongside bond markets ahead of that data. Will we get any sort of reaction? We're going to push ahead with Kayla Cedar of State Street. That's coming up next on your Bloomberg Brief.
there is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Tuesday. An evening of fear. A shooting in a Midtown Manhattan office building kills 5, including the gunman. Locking it in, the U.S. and EU rush to finalize details of their trade deal. Talks with China are still ongoing. And investors await the latest JOLTS jobs data as the Fed kicks off its 2 days of meetings. A 6th record in 6 days, but a very quiet record. We got there yesterday with 0.02% of a gain on the S&P 500. Breath was not so good, but all the indices rallying in the pre-market future session this morning, up 0.2 for the S&P. NASDAQ goes up 0.4%. The bond market basically unchanged everywhere you look this morning. There's a pretty soft 5-year auction yesterday that moved yields higher, and they stayed higher post that auction. Perhaps some of the real drama in the euro this morning, weakening for a 2nd consecutive day. Some real questions about what Europe sacrificed to get a trade deal done. The euro falling in its biggest 2-day slump since April. Steve Englander of Standard Chartered writing that for $100 worth of goods that Europe used to sell, it now needs to sell it at $123 to achieve the same revenue, and that is a significant competitive shock. Let's get some moves underneath the surface this morning in the pre-market. With that is Valerie Teitel. Hey, Val.
Good morning, Danny. Let's start with some speculation of M&A. The FT reporting that the oil and gas supplier Baker Hughes is out with a bid for Chart Industries, a $13.5 billion bid for the company that values Chart Industries 22% above its market value, with Chart Industries rising nearly 14% in pre-market. Investors are cheering this M&A speculation. Let's move on to the auto industry. We got an update from one of the big 3, Stellantis. Those shares are falling 3.5% in the pre-market, with their warning that the company could take a 1.2 billion euro hit from tariffs in the second half. Also guided for margins to be in the low single digit. Lastly, let's end on some good news on tariffs, and that is in the healthcare space over in Europe. Philips, the best performing stock in the Eurostock 600 this morning. This Dutch medical equipment manufacturer, giving a boost to its year-end guidance. Also, the CEO saying, Danny, that 15% tariffs are something the company can deal with. Danny.
Valerie, thank you so much for that and for your work this morning. Now, after inflation expectations initially crashed post-Liberation Day, they've been creeping higher. Now, 10-year break-evens, which you can see there, sit just short of the highest level since the Fed ended its rate hike campaign. Kayla Cedar of State Street says she's watching the measure, writing, quote, "They are still within the higher end of year-to-date ranges, but should the direction of travel continue, it will make the Fed's justification to cut rates more complicated." I'm pleased to say Kayla joins us now. She is macro multi-asset strategist at State Street. Kayla, does that mean we're maybe even having a premature conversation talking about when the Fed is going to be cutting this year?
Hi, Danny. Thanks so much for having me. You know, I do think when we look at the data, both on the inflation side and on the labor market side, you know, it looks like the economy doesn't really need to be stimulated right now. The economy really isn't saying overall we need rate cuts right now. And when we look at those break evens and we look at those inflation expectations, you know, it does look like the direction of travel, it is moving higher. And so that does make it harder to justify a cut, certainly in July, but even in September.
The problem is, Kayla, there is likely to be dissent, maybe even two, in the Fed decision this week. The first time that's happened since the 70s, since the 80s, when it was more common then. If this is pressure on Jerome Powell to cut from various Fed members and the White House too, how do you expect him to handle that pressure if, as you say, there is a risk of inflation expectations moving even higher than they are right now?
Yeah, you know, I think Chairman Powell has certainly been steadfast in his messaging. He's really said, you know, we're data dependent. And then when we look at the most recent FOMC presser, what we see is that, you know, the Fed views the labor market as solid, and there still are upside risks to inflation. And so I think the message that we'll get from Powell is that, you know, it's really the data that matters, because that's been the consistent message throughout this entire cutting cycle so far.
So, Kayla, if we don't get the cuts, are they necessary to continue this bull market in equities, to continue the all-time highs? Or if it is a continued Fed that pauses, does the rally take a breather?
I think the rally can continue for two reasons. First is that when we do look at appetite for credit has started to improve really since the first cut last September. And so that tells me that there is stimulus in this economy. The second is that when we look at what's been driving the rally, we have seen, you know, a lot of that still comes from tech, and a lot of that still comes from parts of the equity market that have proven they can still outperform even with rates sitting where they are. And of course, we'll get tech earnings this week. And, you know, the outlook is that they still have to beat a pretty low bar. And so, you know, I still think that can drive this equity rally higher for now.
Kayla, it is a pretty crazy week. You've just reminded me there with tech earnings coming up tomorrow, but we're also going to get jobs data. We have that Fed decision. We also have the deadline of reciprocal tariffs on August 1st. What to you is going to be the biggest driver this week? What is most important that you're watching out for?
I do think the labor market data is going to be the most important data this week. You know, even if we do see a slight uptick in unemployment, or even if we see slightly lower NFP gains than we had the prior month, the expectations right now still indicate a healthy labor market. If that starts to shift, if there are big surprises, you know, I think that will end up being reflected in expectations for the Fed moving forward. But if we do see the data come in as expected, you know, I still think that means we could push out expectations of a cut beyond September.
Well, heading into that, Julian Emanuel of Evercore calling markets right now a frothy macro brew in front of a moment of truth with the earnings week in hand too, Kayla. You said earnings, rather this market can continue at pace with the gains. Could anything disrupt it this week?
Certainly. You know, if labor market data does come in weaker than expected, that could be problematic, as well as, you know, if there is continued trade, if we see signs that trade negotiations for some reason cannot continue, if deadlines are passed and not extended, I think that could certainly, you know, put some trepidation in the market. But for now, fundamentals still remain strong, and so what that would ultimately mean is that I do think we could see a buy the dip opportunity overall if we do see some trepidation this week.
In the deals we've seen so far, Kayla, just this week with the EU, it does seem that Trump was able to, let's say, strong arm the EU, that the U.S. didn't make many concessions in order to get a deal done. Kayla, is what we've seen a 15% tariff on the EU with commitments for investments into the U.S., does it change at all your point of view when it comes to European assets?
We've had a very, pessimistic view on European assets, an underweight view on European assets for a while now, and this certainly supports that. I would say, when we look at what drove the rally in European assets earlier this year, it was very concentrated. And then additionally, when we think about European fundamentals, they have been consistently weaker than U.S. assets. And so, this trade deal also is a headwind to European assets, and that kind of just bolsters this view we've had since the start of the year.
Kayla, we're going to have to leave it there. It is always a pleasure to speak with you. Thank you so much for joining. Kayla Cedar of State Street. Now let's get back to our top story this morning. There's a deadly shooting that unfolded yesterday in New York City.
The shooter is believed to be Shane Tamora, a 27-year-old male with a Las Vegas address. Mr. Tamora has a documented mental health history. His motives are still under investigation, and we are working to understand why he targeted this particular location.
Joining us now is Bloomberg's Miles Miller, who has been up all night reporting on this story. Miles, thank you so much for joining us. What do we understand about this moment as to what unfolded yesterday and what was behind the gunman's motive?
Right. This is a 27-year-old suspect who traveled cross-country, aimed with a motive to go after the NFL. It goes to 345 Park Avenue, 51st Street and Park Avenue here in Manhattan, parks his car in the middle of busy Park Avenue and pulls out an M4 rifle in the middle of rush hour and goes into this building. The first person he encounters is an NYPD officer who didn't even have a chance. He was ambushed, shot in the back, and he continued shooting in the lobby before he made his way to the elevator bank. And when he did, he encountered a woman he decided not to shoot, but gets in that elevator. He rides all the way up to the 31st floor and then past there to the 33rd floor, which is occupied by Rudin Management. He was looking for the NFL, but instead he found a property management company, shooting in the hallway, shot one employee, and then ultimately shot himself.
You said he was looking for the NFL. Do we understand why?
Yes, he believes that he is a person who has CTE, which is a chronic brain condition that happens to a lot of people who play contact sports, mainly people who play football. We know he played football in high school, and he believes that he had been hit so many times that he was suffering from the effects of CTE. Now, the one thing about this condition is that it is only able to be studied once someone dies. And so in his pocket was a handwritten note that said, to please study his brain, and that was the reason why he carried out this attack.
This attack also happens months after an executive was also gunned down in the early morning hours in New York City. With this incident as well, is there a rethink going on right now in terms of security of New York?
Certainly, office security is something that is going to be looked at again, right? Here you have an incident where, with the United Healthcare shooting, that was something happening at Investor Day, right? The suspect in that incident, Luigi Mangione, didn't go to Minnesota to carry that out. He came here to New York. You have another incident where there's a young man who feels that he's been slighted by, a company or by an organization who also has chronic pain and is trying to enact revenge against something that he says they're not taking seriously. He said the NFL wasn't taking this seriously, and he could not fight the NFL. We know that corporations, writ large, have been asking for more security. The NYPD has a SHIELD program where they work with private industry to make sure that they have paid detail officers and have visits by counterterrorism. But that posture is certainly going to change. You're talking about an NYPD commissioner in Jessica Tisch, whose family runs the Lowe's Corporation. So she understands that how important it is to have increased security at your corporation.
Miles, thank you so much for your reporting this morning. I know you also have a busy morning ahead of you, so we'll let you go. Miles Miller, thank you so much. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing.
Yep, now we're playing.
First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
He's going to consider a few deals. Of course he will. But basically what he's going to do is he's going to set the tariff rate for everybody and do that by the end of the week.
U.S. Commerce Secretary Howard Lutnick there speaking to Fox News yesterday evening. Let's get to the latest on the trade negotiations where the EU has drawn criticism over its deal with the U.S. Both sides are still racing to finalize the details. Meanwhile, the third rounds of talks between the U.S. and China are underway in Stockholm. For more, we're joined by Bloomberg's Brendan Murray, who heads global trade coverage for us. And Brendan, initially a 15% deal from the EU. Assets rejoiced. You saw the car makers rally. The euro did better. That started to reverse. Is there a real question now as to what the EU conceded in order to get a deal done?
Yeah, exactly. I don't think there's anybody in any European capital today that's happy about the deal that they signed. There seems to be a sense of resignation that this was the least bad deal that they could get. But there are still a lot of details yet to sort out. The numbers didn't come in as high. The tariff levels didn't come in as high as a lot of people might have expected, given the threats from President Trump. The 30% reciprocal rate was 15%. So there was a bit of relief, but there's a lot of details that they still need to sort out, not least of which are these pledges of energy purchases from the U.S. and just the overall $600 billion in investment that the EU was going to make on top of what it already invests. So I think there's a lot of head scratching going on, asking themselves, what exactly did we get ourselves into here? And there'll be more talks in the weeks ahead to try to nail down some of this fine print.
Right, and even to Politico, some EU officials admitted whether they would actually be able to spend the $600 billion that was agreed upon. Brendan, it's not just the EU deal that was achieved in Scotland. There are also talks underway, as I mentioned, in Stockholm. Between the U.S. and China, day one of talks have wrapped up. What are we looking out for there?
So those talks just got underway again for day two about an hour or so ago, and we expect them to hash out issues on export controls. Remember, the U.S. and China are trying to de-risk from each other rather than decouple, as U.S. officials would say. So they're trying to find that area where they can trade on one side and they're going to restrict trade on the other, and they're trying to find out where that line is between what they're willing to trade and what they aren't anymore, given the rare earths that China controls and the critical technology that the U.S. controls. So they're going to try to figure out where the line is between what they're willing to trade and what they're not.
And meanwhile, Brendan, in the background, there's still other deals that need to be hammered out, be it Canada or be it elsewhere, ahead of a Friday deadline. How are other things moving along?
Yeah, there was word that the South Koreans flew to Scotland to meet with Trump officials over the past 24 hours. There are the expectations that we could get something from Switzerland and some other countries that are sort of were close to the finish line. Although U.S. Trade Representative Jamieson Greer said that India, one of the bigger deals, needed some more time. So it's unclear whether they're going to get that one over the finish line by August 1st. On Friday, or give that an extension.
Brendan, thank you so much for your reporting. That is Bloomberg's Brendan Murray. And by the way, President Trump still in Scotland at his golf course doing a ribbon cutting there, thanking the Scottish Prime Minister. I believe we do have some live pictures of that. But yes, thanking his son as well, saying that my son Eric has worked so hard on that. We'll bring you any updates as they might come if he talks about anything other than his golf course. Let's, though, turn to one of the biggest corporate stories this morning in the energy sector. The world's largest commodity trading house, Vitol, gave out a record $10.6 billion to its executives and senior staff through share buybacks last year. That's according to the firm's annual accounts as seen by Bloomberg. Joining us now is Bloomberg's Julian Lee. Julian, what drove these record buybacks?
Well, Danny, I think it's two things. As the chart you just put up shows, Vitol has had another very profitable year. In 2024, not quite as good as the previous two, but net profits were still sort of 3 times what they were 5 years ago, and that is a big part of what's going on. Commodity traders, Vitol in particular, has done hugely well out of the uncertainty and the market gyrations that we've seen since Russia invaded Ukraine in 2022. They've made huge profits on the back of that. But the other thing that's happened, I think, is we're starting to see a generational shift within the company. The company is owned by between about 450 and 500 of its employees. And as those employees retire, the company buys back their shares. And so what we're seeing is several very senior executives have announced their retirements recently. And I think we're seeing some pretty big shareholdings being bought back by the company. So the share buybacks have outstripped their profits for 2024.
Meanwhile, in the energy space, Julian, there's this FT report yesterday that Baker Hughes is nearing a deal to buy Chart Industries. What does this say about the current state of American LNG that Baker Hughes would be looking at expanding?
Well, I think this is a really interesting deal for Baker Hughes. I mean, Chart is a specialist in cryogenic equipment. This is sort of stuff to keep things cool and cool things down, if you like. A very big player, therefore, in liquefied natural gas, but also in the massive cooling requirements for things like data centers and nuclear energy. And I think that for Baker Hughes, this positions it for these sort of big growth areas. We're seeing huge growth in data centers as a result of the developments of artificial intelligence. We're seeing large increases in the amount of U.S. liquefied natural gas at a time perhaps when the Baker Hughes' more traditional industry of oil and gas exploration, it's not going into reverse, but the growth is certainly slowing. In the U.S. it may even peak, and so I think this is the steps it's taking to secure its future in the new wave of energy investments going forwards.
Julian, thank you so much for that. That is Bloomberg's Julian Lee on the latest in the energy sector. Coming up, we're going to get you set up for your trading day. There's plenty of earnings to watch out for. That includes Boeing's second quarter results. We'll break down your trading diary next on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Let's get you set up for your trading day on this Tuesday. First up, Boeing, PayPal, United Health, and UPS are all among the companies reporting before the bell this morning. Then after the market opened, 10 a.m., we'll get JOLTS data and Conference Board consumer confidence. Then finally, after the market close, we will see more earnings. This time they will come from Starbucks and Visa. Now, some individual movers in the pre-market this morning. Stellantis, that is extending its post-earnings decline down 3.2%, seeing a $1.4 billion hit from tariffs in the second half of 2025. Baker Hughes, we're just speaking about this with Julian Lee. It's nearing a $13.6 billion to buy Chart Industries. Again, the FT reporting that Chart Industries gaining some 16% this morning. Finally, VeriSign, those shares declining 6.2%. Berkshire Hathaway is seeking more than $1 billion for its stake in the company, so those shares moving lower. Just want to leave you with a picture of what the euro is doing this morning because it is declining for a second consecutive day. Steve Englander at Standard Charter pointing out that with the new tariffs, $100 worth of goods sold by Europe now needs to go for $123 in order to get the same amount. By the way, United Health second quarter earnings just out. Looks like second quarter revenue just barely beating. We'll break through some of those numbers in the coming hours, but for now, that is it for Bloomberg Brief. Surveillance will take things from here. You're watching Bloomberg.
Single best investment opportunity you see in the world, regardless of industry or geography. Why? And again, how are you making it available to your clients?
I think there's no question AI is going to impact everything we do. The opportunity to take great companies and use AI is going to transform. Also, the issue of jobs. What do we do with jobs? Because there's no question, you look at things that are customer service oriented, and the AI is so much more efficient. As we look at across all these different opportunities, what we really like is data centers in the U.S. And, you know, the one thing that we know is that AI is just going to create this enormous demand for data and this even growing opportunity for cloud computing. So for us, you know, owning data centers for 20, 30, 50 years, we're going to have a limitation on power in the U.S. There's no question over the next 20 years, the technology will change for chips. It'll become more competitive, and NVIDIA may not be the only major provider. So I think you're going to have a big technology refresh over the next 20 years. But the one thing we know is you're going to need data centers, you're going to need power, you're going to need cooling to support all this growth in the cloud. So we look at them as long-term bonds.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
There's just a lot going on, I think, in a positive way.
A lot of the uncertainty that was prevalent earlier in the year is really being washed out of the system right now.
Yes, you might see a slowdown in economic growth, but you're still seeing really resilient results from companies.
The AI theme has kicked back in.
The market's just in a particularly joyous place right now, going into August.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, the records keep coming. 6 consecutive days of all-time highs for the U.S. equity market as Fed Chair Jay Powell begins a 2-day meeting with some clarity on trade. The backlash against the EU's agreement is beginning to brew across the continent. The euro weakness continues.
So it's exactly what you were saying yesterday. Let's see how long it takes before European leaders start to push back against this trade agreement that was, at least in principle, agreed upon yesterday between Ursula von der Leyen and Donald Trump. German Chancellor Friedrich Merz came out. He originally hailed the deal as something that was a success in avoiding a trade war. He said the German economy will suffer significant damage from these tariffs. The euro weakening yesterday, the biggest one-day weakening since May, with people assessing how much this reduces growth.
The French Prime Minister called it a submission. So there was a backlash in the FX market and a backlash in European capitals, but most people assume still that European member states will sign up to this. Can they follow through? Been crunching the numbers here at Bloomberg. The EU's aiming for $250 billion of US energy imports every single year for the next 3 years. Last year, that number was 80 billion.
Yeah, a lot of people are raising questions not only from the energy component, but also how feasible it is to invest $600 billion in the United States, let alone exactly what the details of this type of arrangement look like. So, as you were saying before, how binding is that, given the fact that this does seem to be one of the key components of this deal?
We've got a lot to work through this morning. Equity futures positive by 0.3%. Coming up this hour, we'll catch up with Peter Chia of Academy Securities on why it's too early to declare victory on tariffs. Jeanette Lowe strategist on what's next for US trade talks, and Al Salinas of RBC on the dollar heading towards its first monthly gain this year. We begin this hour with our top story. A city in shock. A gunman taking 4 lives in a shooting at an office tower in Midtown Manhattan.
5 innocent people shot tonight. We lost 4 souls to another senseless act of gun violence, including a member of the New York City Police Department, Officer Islam. No words can describe this act of evil, a man who takes the life of others who are innocent. It's unimaginable to experience a loss of this magnitude.
Joining us now at the scene is Bloomberg's Miles Miller. Miles, welcome to the program, sir. What's the latest this morning?
What we know this morning is that the suspect left a note in his pocket, and he said that he was targeting the NFL. This is a 27-year-old suspect, Shane Tamura, who drove cross-country from Nevada right here to Park Avenue, parked his car in the middle of Park Avenue, opened his trunk, and pulled out an M4 rifle. He walked right into this building and was intent on going to NFL headquarters to enact revenge against what he says is CTE. He says he played football, and because of his time playing football, he believes he has that chronic condition that is only really detected after people are dead and they can study their brain. He walked in this building yesterday and immediately shot an NYPD officer in the back and continued shooting until he got up to the 33rd floor. That's the headquarters of Rudin Management, a major property management company here in Manhattan. He shot an employee and then eventually turned the gun on himself.
Miles, there will be an obvious question this morning. How? How did this individual make his way to the 33rd floor of a Midtown Manhattan office building without the elevator being shut down?
Yeah, you know, one of the things in this investigation that we've learned is that a security guard behind the desk took cover. He was trying to take cover to prevent himself from being shot, and it's at that moment that he was killed by this suspect. A number of these buildings here in Midtown Manhattan have an elevator kill switch that can shut the elevators down so that no one can make it upstairs. But when you have that volley of shots in the lobby of this building and all the chaos, it's very difficult to operate in a situation like this. We also know that there were 2 NYPD officers in the building, one who was shot yesterday, and then another who was also working that detail, looking to determine whether that other officer was involved and engaged in this suspect. But what we do know is that this is something that's been on top of the minds of CEOs across the country, and specifically here in New York. It was just last year, Luigi Mangione coming here to Manhattan, shooting the head of United Healthcare's insurance group, the CEO, and it had everybody on notice because we knew that corporate security was going to be a major topic and that they would need to bolster security. They tried doing that here with that officer in the lobby, but what can you do when this officer is shot in the back?
A tragic loss of life. Miles Miller, thank you, sir. Miles, we'll catch up with you a little bit later this morning. Let's bring in the former FBI agent, Michael Harrigan, who joins us now for more. Michael, welcome to the program. As our colleague Miles Miller was just discussing there, the second incident in 12 months in this city targeting corporations and representatives of those corporations. Do we need to rethink security for these organizations?
You know, absolutely. I think corporate security, I look at the work I've been doing with the PAX Group since the Mangione case in New York last year, is that corporate security nationally has done a lot of assessment of the measures they take to secure their workplaces, their people, and their executives. And in this instance, we have to look at this, and I'm sure there'll be a very close look at the security layout here, is how an individual with a rifle walking in plain sight could get into the lobby, then get into the elevator and get off at a floor and continue shooting. So they'll be looking very closely at a badging system. Why was there not a badging system in place for that, for the employees there in some type of controlled entry?
At a certain point, there's also a question about motivation and whether this was some sort of copycat measure. Is there something about the psychology that could breed further lone wolf attacks in a similar manner?
You know, absolutely. You know, disturbed individuals who either have mental illness or other gripes or grievances sometimes look to lash out in highly public areas and to attack companies of note. And here, what they're going to have to do is try to find out what this individual's motivation was. Look back in Las Vegas, they'll be looking extensively at his conversations with family and friends, internet connections, social media posts, because everybody wants to know the why. And the why here is good for the public to know, but it's also good for companies to know as they look to reassess their own security postures.
At a certain point, there's also this question about, this does come just months after Luigi Mangione killed an executive from United Health, just 5 blocks away from where this incident occurred. What are corporate executives getting wrong about what had to happen to their security and what needs to happen going forward to prevent someone from coming in, shooting all the people, the attendants in the lobby, and just carrying on their way?
Well, it's natural in society and among businesses, too, to get lax in security over time. And it takes a concerted effort by company executives to put in place security measures. Security assessments have to be done regularly. Threats have to be looked at. Companies have to examine the intelligence that's out there. Are people, out there on the internet making threats or innuendos against their company? It's really a complete package that has to be put in place. And as we saw from the Mangione case, corporate executives have to take it seriously, their own personal protection, both at home and while they're on the road doing business. But really, the ultimate thing here is for Americans to feel secure in their workplaces, because when Americans don't feel secure in their workplaces, productivity suffers. So that's one of the biggest reasons to do corporate security and to take reasonable measures here is stop these attacks and help employees feel secure at work.
I'm sure many of those employees don't feel safe this morning, Michael, and that's the problem. And you and I are talking about the private sector response to this. What about the public sector response to this? What should the police commissioner, Jessica Tisch, be thinking about this morning?
Well, I think the big thing for her is to have a good information flow. She has to have good information flow to the media. The public needs to know what happened here, and they need to know the why behind it. And the more transparent the police can be in these instances, the better off it is, because always when you have a mass shooting or an active shooter, there's a lot of conspiracy theories out there, and people are worried. They're worried about whether there could be other individuals out there. Are there other businesses that could be targeted? So the police need to be transparent, and they have to be visible too. So I expect in that part of town today, you're going to see a lot of uniformed presence on the streets, and not just there, across the country. Law enforcement agencies have to be engaged with the community, and they have to foster good information sharing. Individuals have to feel comfortable going to the police and giving them information about individuals who are troubled out there, because that's where it starts. But we can't discount also the responsibility of every citizen when they have somebody who's suffering, a family member, a friend, or an associate, to step up, offer a helping hand, and also be a conduit to either work HR departments or to law enforcement to share their concerns so that these issues can be interdicted before they get to a violent end.
Michael, appreciate your input this morning. Thank you, sir. The former FBI agent, Michael Harrigan. Tragic events yesterday evening.
It really shatters the idea of safety. Once again, in the idea of a lone wolf potentially targeting a corporate workplace because of a grievance that's personal and that doesn't have to do with these specific individuals. I just wonder what has to be reassessed to make people feel safe again.
If you are just joining us, welcome to the program. Plenty of updates throughout this morning on this program on the tragic events unfolding yesterday evening. This morning, if you're looking at equity markets doing okay. Futures positive by 0.25%. For our top stories worldwide, with our Bloomberg Brief, let's cross over to Yahara Anand. Hey, Yahara.
Hi, John. As you guys were discussing, a gunman went on a rampage in a Manhattan office tower housing the NFL and Blackstone yesterday, killing 4 people before then killing himself. The gunman was targeting the NFL headquarters, but as Miles said, ended up on the wrong floor. Police say the suspect had a history of mental illness and believe he had driven cross-country to New York. Meanwhile, on the trade front, U.S. Commerce Secretary Howard Lutnick says a 90-day extension of a trade truce with China is likely. Negotiations between the two countries are still underway in Stockholm, with Treasury Secretary Scott Bessent leading talks for the U.S. Key sticking points include fentanyl trafficking and concerns around China purchasing sanctioned Russian and Iranian oil. And Stellantis shares are falling 3.5% in the pre-market. The automaker shared it expects to take a $1.4 billion hit from tariffs in the second half of this year. This coming after Stellantis recorded in the first half of the year a near $350 million impact from tariffs and lost production. Shares, as you can see, are down more than 25% this year. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, more trade deals on the way.
The president's going to decide, look, this is how I want to play it. He may entertain a few more deals, or he may decide, you know what, I'm just going to set the policy going forward. But by the end of this week, they will all be set, they will all be in stone, and they will be written.
Up next, Peter Chair of Academy Securities, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Got a ton of data this week, including lots of labour market data. It starts this morning at 10 a.m. Eastern Time when you get JOLTS job openings. Look out for that. Of course, it concludes on Friday with payrolls Friday, and sandwiched in between tomorrow, a Federal Reserve interest rate decision. If you are just joining us, welcome to the program. Equity futures look like this morning. We are positive by 0.3%, on the Nasdaq up by 0.4. Under surveillance this morning, more trade deals on the way.
The president's going to decide, look, this is how I want to play it. He may entertain a few more deals, or he may decide, you know what, I'm just going to set the policy going forward. But by the end of this week, they will all be set, they will all be in stone, and they will be written, and we will start collecting those additional monies. Right now, we're collecting 10% from everybody in the world, and of course, a higher rate from China. But come next week, off we go.
Here's the latest this morning. Commerce Secretary Howard Lutnick saying a 90-day extension of a truce with China is likely, with President Trump's Friday deadline for other countries fast approaching. Our team coverage starts right now with Bloomberg's Tyler Kendall in Washington and Ollie Crook in Stockholm. Tyler, just to come to you first, set the stage for us for the next few days.
Yeah, hey, John, good morning. Well, the White House is trying to get some additional details done and out when it comes to these trade frameworks. But at the same time, you heard the Commerce Secretary Howard Lutnick there say that they're not interested in extending that August 1st deadline. And he essentially laid out two options for our trading partners. One, President Trump may entertain some more announcements, or he's just going to set the rate. And that's raising some serious questions for some of our trading partners that are steeped in the negotiations and have long been prioritized in the talks, but haven't yet emerged with some sort of framework announcement. That includes South Korea, for example. We heard Howard Lutnick say in that interview that the South Koreans actually flew to Scotland yesterday to meet with him and the USTR Jamieson Greer. And also big questions around India, another trading partner that we know has long been prioritized in these talks, but has seemed to sort of harden its stance during these negotiations, including when it comes to market access for U.S. industrial and agricultural products. Some other key trading partners that we're waiting to see if their rates get lowered include Canada and Mexico as well, John. Of course, these two countries were tariffed totally separately, not on Liberation Day, yet they have also found themselves up against that August 1st deadline.
Ollie, we've had lots of clarity in the past few weeks. I think investors just hoping now we kick the can with regards to China. Can we just kick the can and extend this another 90 days?
I think that's the base case, Jonathan. The expectation after 5 hours of talks between the U.S. Treasury Secretary Scott Bessent, Jamieson Greer, and the Vice Premier of China yesterday. They spoke for about 5 hours in Sweden, in Sweden's Prime Minister's office. They just walked in about an hour and a half ago to extend those conversations, and we're hoping to have an outcome some point in the afternoon, hopefully here from both sides. The expectation, Jonathan, as you say, is to get another extension to that trade truce that will leave the tariff level at 30% from the U.S. side onto China, down from that 125% level that we had at the sort of height of the trade war between the two sides, because the deadline right now is August the 12th. They're hoping to extend that. In terms of a longer framework, in terms of an actual agreement between China and the United States, I mean, you guys know how difficult and how elusive that conversation is going to be. I'll just say that it really is interesting to see what we've seen between the European Union and the United States and China and the United States, and the contrast there. The Europeans went on the side of pragmatism. Not everybody is happy about it, but there's the issue of pride, and pride is a much more active ingredient in the conversations with China and the United States. China has been building itself up economically, geopolitically across the world for the last several decades. They do not want to be seen to giving more to the United States than they have to, whereas the Europeans, in contrast, sort of want to appear to be giving more than they actually are. And that is really going to be the sticking point here as we we know that Trump himself says he does not want to go to China just because he wants to go to. He's going there by invitation. So pride is a very sort of active role in these discussions. Hopefully we'll get something from the U.S. Treasury Secretary in a couple of hours' time.
Ollie, appreciate the update. Stay close. Ollie Crook there, alongside Tyler Kendall. Peter Chair of Academy Securities with us around the table this morning. Good morning, Pete.
Morning, John.
Good to see you, sir. Tariff revenue, how large and how bond positive is it going to be?
So I think that's the one thing we're missing. So the last 2 months, we've generated about 20 billion extra. So for the last 5 years, we ran between 8 and 9 billion a month in tariff revenue. That's popped to 28 billion. It probably goes down a little bit, then some sort of steady pace, probably around that 30 billion. That will offset a lot of the deficit. I think that's a good part. But now it also explains why we haven't seen tariffs hit the economy at all, right? Only 50 billion, 60 billion so far. It's a tiny drop in the bucket of this economy. If you think about a company, even if they turn their inventory over twice a year, it's going to take 6 months or so before they have all their inventory affected by tariffs. So I think the inflation pressures from tariffs, the earning pressure from tariffs are down the road. And the other problem that we're seeing, I think, a little bit, it's hard to decipher, is it seems like it's hitting small and mid-sized companies much harder than large corporations, right? Large cap companies had the working capital, they had the ability to move their shipments around. It hasn't happened about the small and mid-sized companies, and I think that's taking time to leak into the data.
So you can push through that idea into the bond market, as John was sort of hinting, and both of these would be supportive for the bond market. They might question the stock market a little bit more in terms of any kind of pressures to growth. Is that your thesis here?
Yeah, I think we're back at 440 on 10s. This is sort of level I start liking them again. I think we should be much closer to 4%. I think Powell's going to have to cut a little bit, and I think all the fears about the deficit, while real, they're missing some of this trade, tariff revenue, and I think we got to be really, cautious, or think about it this way, right? President Trump, Howard Lutnick, right now they are seeing all the benefits of tariffs, this additional revenue. They're not yet seeing the downside, so I think they're going to continue to push on that, and they're going to wait to see if there are problems. That might be when they back off or change their tune, but right now they'll drive those revenues, they'll try and get the deficit down, and I think the bond market's kind of missing that whole story.
This is bond positive in terms of lowering the deficit as well as potentially slowing growth. It doesn't sound particularly positive for stocks. We just had their 6th straight record close. If they're seeing a 7th today, that would be the first time going back to November of 2021. And stocks haven't moved more than 1% in a month. Is this a shock-proof economy, as Rick Rieder is saying, or is this something that maybe is just in denial?
So I think the tariff is actually pushing down on stocks. On the other side, what you've got, I think, is this. We've been calling it Academy Securities national production for national security, right? We have to produce and make things that are good for national security. So 2 weeks ago, the Department of Defense invested $400 million in MP. They got $1.1 billion of debt. Bessent, I think last week when he was on with Anne Marie, basically almost said those exact words of national production for national security. And then President Trump went on about data and AI and how important it is, how we're going to make sure we have the electricity for AI to run. So I think there's a lot of support for that. And I think that's actually what's propelling the market. It's also why it's very concentrated in a handful of sectors.
I'm pleased Lisa mentioned Rick Rieder. It's a fantastic piece of the Financial Times if you happen to read it. There's a quote in front of me. Markets are not ignoring risk. They're pricing a system built to absorb it. A service-oriented economy, fortress balance sheets, and a liquidity-rich investor base deliver a 2-for-1. Resilient growth and elevated fixed income yields. That's the power of U.S. financial markets. How does the rest of the world compete with it?
Well, weirdly, they're doing pretty well. Especially, the one thing I think we're missing right now is part of what's driven, I think, the U.S. stock market return is the weakness in the dollar, right? DXY is down significantly. All of a sudden, you're seeing DXY creep back higher, right? And I think the lower dollar has been a big benefit. You look at European, stock markets. For a U.S. dollar investor, they're up significantly more because of that. So I think the weak dollar, if that starts reversing, that will actually put some pressure on U.S. stocks. I do think we're resilient. I think it's about the growth story. And the one thing, that really ties in nicely to this whole, national production for national security is the accelerated depreciation and a couple other things in the big, beautiful bill. If we can just jumpstart that, there is that opportunity. So I think there is a growth element with this tariff, and those are kind of balancing out. I think right now the growth story makes sense.
Correlations were really messy in April. Have we re-established more intuitive correlations between risk, between equities, bonds, and foreign exchange for that matter?
I think they're normalizing a little bit. And again, it's, we talk about some of these negative trade deals for Europe and other places. Their stock markets continue to do well. If you look at FXI as, an ETF on China, it's actually way outperformed the U.S. So, yes, we've been successful, but other countries seem to be doing well. And I think when I look at these tariff deals, I think what you had is a situation where countries that all of a sudden in shock. You can't just say, whoa, I'm walking away from the U.S. we will see what the world economy looks like 6 months or a year down the road, right? Everyone's going to come to the table. Everyone's going to say some sort of deal. But then what do they really try and do? Are they content to try and work with the U.S., or are they going to try and figure out alternatives? You know, at one time, the EU was starting a trade deal with Canada. That kind of died. Do things like that get resurrected? And the other thing is, I think we're seeing tariff mitigation strategies across the board. Canada, Mexico, USMCA compliant goods, they're getting approval for those things. So it's not as bad as it looks either.
Earlier this year, you were concerned about the tainting of the American brand and how there'd be a boycott internationally. You sound a lot more positive now. Why?
So I'm still worried about where we're seeing that. I think you're seeing it in tourism. You've seen it in certain car companies. I feel like they're not getting the sales globally. So I think that will all take time. I think we've changed the tone from less punishment to, okay, let's try and make deals. And it seems like the president has softened. I think we've also had some big successes. I'll go back, and a lot of it changed for me when we attacked, Iran's nuclear facilities. All of a sudden, it was the U.S., acting as the global superpower, really doing something incredibly impressive. And I think that was a big win and sent a message to the rest of the world. Okay, the U.S. hasn't gone back and gone completely isolationist. They are still doing there. So to me, that would also really help change the narrative, I think, globally. What is the U.S.? So I think that was one of the most, instrumental things that the administration has done, is that attack on Iran.
There was a worry also that August 1st would just become the new July 9th, and this would continue, the new April 2nd, and this would continue through the next, 12 months.
Yeah, and so you get some certainty. Maybe Thursday, of course, we have a potential court ruling that could upend some of that certainty, but at least there is a path of travel that people can understand for now in terms of what at least the ceiling could be and what the floor is.
We'll talk about that court ruling in just a moment. Peter Chair of Academy, it's good to see you, sir. Pete, thank you. Up next on the programme, Jeanette Lowe of Strategas as backlash brews in the EU over the US trade deal. Plus, Danny Berger with your morning movers. UPS falling after pulling its full-year guidance. That stock is down by 3%. From New York, you're watching Bloomberg TV.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I asked whole corporations study how will you bring generative AI to their job.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Massive week for earnings, $11 trillion of tech earnings coming up, 20% of the S&P 500 across just 4 names. Those 4 names start to report tomorrow afternoon. Equity futures add some weight to the rally, up by 0.3% on the S&P, up by 0.4 on the Nasdaq 100, 6 consecutive days of all-time highs on the S&P. With 3 hours until the opening bell with your morning movers, let's cross over to Danny Berger. Hey, Danny.
Hey, John, some earnings to work through this morning. About half an hour ago, we got United Health Group, and they had pulled their 2025 guidance. They reinstated it, and it was a disappointment. $16 is where they see their earnings for the year. The estimate was $20.40. It's a group that's been hit with issue after issue, with higher medical costs, reports of regulators, investigation. They really needed to restore confidence. This certainly will not help, with shares down 3.3%. We also heard from UPS this morning. For them, it is a cut, or rather a non-issuance of their guidance, pulling their year forecast down 2.5%. They are citing macro uncertainty, saying that it is a very complex environment for them as they try to retool their network. Finally, we also had Whirlpool earnings as well. Now, this is an appliance maker that makes most of their things in the U.S. It was supposed to be a beneficiary of tariffs abroad, but instead the company says that its rivals, specifically those in Asia, pulled forward everything, shipped in to beat the tariffs, so they didn't get that boost. It also doesn't help that the macro environment isn't great for them either. They blame slowing home sales, so those shares down 16% with a miss and a cut to their outlook, John.
Danny, appreciate it. Thank you. Danny's going to keep working through the earnings throughout this morning. Just to pick up on UPS briefly, the obvious response to a report like that, is that a UPS problem, or have we got a problem with this economy?
That was exactly what I was thinking. UPS is trying to rejigger its structure for quite a while, in part because of a strike from the union, as well as some of the competition that you're seeing from the likes of Amazon. That said, this used to be a bellwether for consumer demand and for package volume. How much is that also a part of it, as we do hear more warnings on how much the tariffs are going to hit?
The stock is down by 2.6% in early trading. On our radar this morning, our top story, a gunman fatally shooting 4 people in a Midtown Manhattan office building on Monday evening. The NYPD identifying the alleged shooter as a 27-year-old man who drove to New York from Nevada.
There are so many parts of the story. From a corporate security standpoint, there's a question of whether this is an increasing trend with respect to corporations being targeted by people with specific grievances, regardless of where they're coming from in the country. The fact that this happened 5 blocks away from where the United Health shooting happened, really notable. There's also a question about why someone with mental health issues had a license to have a concealed military-grade weapon at any point, who could just walk in plain sight into a building and then engage in this type of violence.
That's what's concerning. You want to give the NYPD the space to continue the investigation, and of course everyone is going to do that, and we'll get you updates throughout this morning. But a lot of people will be very anxious about returning to work this morning, particularly in Midtown Manhattan, given the ease at which this took place yesterday evening.
And so what kind of assurance can there be that there is enough oversight, and how difficult is it? This is something that we need to keep exploring. How difficult is it when you do have a lone wolf attack, when there isn't necessarily the telltale signs that people can track at any given point?
We'll catch up with the team at the scene at about 30 minutes from now. For an update on trade talks between the US and China, they enter a second day in Stockholm. The Commerce Secretary, Howard Lutnick, saying another 90-day extension of a trade truce with China is the likely outcome. And I have to say, for many investors, that's the desired outcome as well.
If you just keep kicking the can, it's probably easier than trying to come up with something in a pretty fraught relationship. You wonder what's involved in the ongoing prolonging of this deadline. It's not just the trade aspects. The Taiwanese president was going to make a stop in the United States on his way to a host of American countries, and President Trump didn't let him stop in New York City. And there are rumors that maybe he called off his trip, that maybe President Trump is reconsidering, but you wonder why. And there was some speculation that this was part of the negotiations to try to pave the pathway for a better conversation with the Chinese counterparts in Stockholm. Again, what are the geopolitical elements of some of these trade deals? You can point to Russia and Ukraine and all of these other things, but that's really where I'm focused.
Chinese officials are very good at dragging this out, and dragging this out. And I think US officials, particularly these negotiators, are well aware of that the Chinese are always looking to buy time, because they understand the political cycle and things move on. And I understand that the Treasury Secretary, Scott Bessent, will have that in mind as he pushes them aggressively to rebalance their economy. This is something we've talked about for years, something that's good for them, good for the global economy, something they've been reluctant to do. Can they finally get it done? Now there's a better agreement with the EU, at least for the US side of things, in the past few days.
You raise a great point. If they'll have a tendency to prolong and prolong and prolong from the Chinese side, how much leverage does the United States have to really push back against that, given the fact that the rare earths metals are instrumental in the cars, the phones, everything that we use on a day-to-day basis in the United States? And that is the rub that we experienced after April 2nd.
This conversation has big consequences for the following company. Apple reports later this week they're set to close a retail store in China for the first time ever. The decision following Apple's ongoing sales struggles in the country as local competition continues to gain ground. That stock is unchanged this morning. It is down by double digits on the year so far, and it has been a tricky year so far.
Especially when it comes to their China strategy. Just to give you a sense of what kind of footprint it has, the greater China region has about 56 stores that are from Apple in the entire region. That's about 10% of its footprint. This goes to a global story, though, for Apple, which is they were in expansion mode until the pandemic. And then since the pandemic, they've really slowed in terms of how many stores they've been opening. And there's been this feeling that maybe they're reaching a saturation point. So for Apple, how do they give a sense that they're going to hit some sort of growth cycle, given the fact that you're not seeing the upgrades, that there's a question around technological prowess and how much of an advancement they have, and then there are all these extra costs from tariffs and geopolitical risk, and that, I think, is really going to be in focus for Apple on Thursday.
There's no growth.
Yeah.
There's next to no growth for the king of hardware, which is Apple, and they've been a king of hardware for a long, long time, a luxury item that everyone wanted. And now, to your point, the technological progress of the last 12 months or so, and they just don't seem to be in the lead in any way, shape or form. And Meta has been going after them big time, after their talent.
Yeah, and this is the reason why the shares are down some 15% this year. It's notable that yesterday we saw the Magnificent Seven reach its first record high so far this year, even though you see Apple down 15% so far this year. Even though Tesla's down 19%, it raises a question of whether they belong in the same kind of rubric as these others, because they don't have that growth that really was underpinning some of the gains that we saw in the stocks earlier.
Apple reports in 2 days' time. Let's turn back to trade. Negotiations between the US and China are concluding in Stockholm today. The Commerce Secretary, Howard Lutnick, expecting a 90-day extension of the current trade truce. Jeanette Lowe of Strategas writes, assuming there is a 90-day extension of the current tariffs on China, we are only waiting for clarity on the rates for 40% of the remaining goods that will be subject to reciprocal tariffs. Jeanette, I'm pleased to say, joins us now for more. Jeanette, I want to start the conversation where Lisa was leading us to about 10 minutes ago, which is whether these tariffs will actually survive the legal process in this country. What are you telling clients about that?
Yeah, so I think this is a big week, obviously, for the the legal argument with regard to the IEEPA tariffs, or the International Emergency Economic Powers Act tariff. And so that is going to happen on Thursday. We're just going to get oral arguments. We may not have a decision before August, potentially even later into the year. And this is also likely going to go to the Supreme Court. I think for some points, the president probably wants to get these trade deals in place before there could be some decision that might provide more uncertainty for the market about whether or not these tariffs can be put into place under that legal authority. But one of the things that we try to remind our clients is that even if these tariffs are overturned ultimately by the Supreme Court, they can be reimposed under other methods. They wouldn't be necessarily as efficient, but the president can still use Section 122 authority to put tariffs in immediately immediately. He can also use Section 301 investigations to go after unfair trade practices. So even if they get overturned, it will create uncertainty, but wouldn't necessarily be the end of the tariff story.
Which really raises the question about where we are in the 232, the Section 232 tariff investigations, and this idea of some of these parallel tariff methods that are being explored in other avenues, just in case there is this type of outcome. How close are we to seeing tariffs signed off on from those other provisions that could really bypass some of the legal scrutiny?
Right, and so this is really important because obviously the Section 232 tariffs are not being challenged legally under this court case, and this is what is going after critical areas that the president would also like to see more domestic manufacturing. So semiconductors, pharmaceuticals, critical minerals, auto tariffs, the steel and aluminum, all of those would remain in place. We do continue to hear from the president and the White House that they are going to announce at least the report on the investigation into pharmaceutical imports and semiconductor imports, but the president has also promised to give a one-year delay on the pharmaceutical tariffs. So that's something that we're going to be watching for, especially as we go into Friday. And then also what happens with semiconductors. Do we announce them and have the tariffs go into effect relatively soon, or does that also get a delay like pharmaceutical tariffs? I think that'll be quite important because the tariff story is not quite done even with this August 1st deadline.
Jeanette, I was very excited to think that we were getting some greater degree of certainty when it came to the framework of trade going forward, and that seems to be what the market's been cheering over the past few days. Are you telling clients don't get so secure in that idea, because ultimately we could see some pretty dramatic changes to this framework, whether from legal or whether it's from adjusting just what provisions these tariffs come from?
Well, I think what we've noticed is that, especially once the tax bill came into effect, I think a lot of investors were a little bit less worried about the impact of the tariffs because the tax bill does offset and provide some relief for consumers and businesses and helps to offset the impact of the tariffs. And then there was a lot of focus on getting more certainty about the trade deals, knowing what the rate would be and having that certainty to be able to move forward and make decisions. But we do kind of continue to point out that this isn't necessarily over. We will probably have some trade deals, but again, these sectoral tariffs continue to play a role. There are also other investigations that are currently in place. So you still have lumber, critical minerals. They're looking at aircraft. So there's a whole host of other things where you can't necessarily be complacent that the tariff fight is over. And then I do think whatever happens with the courts will potentially add some uncertainty that investors do need to be aware of.
Jeanette, we've got some experience with purchase agreements. We have that experience in the president's first term. And at the time, you'll remember, we all had a similar conversation. What is the enforcement mechanism? How binding are these agreements? And I think those conversations have started again, not just with the EU, but with Japan as well. Just how binding are these agreements between these countries?
Yeah, I mean, you had the conversation where Trump actually asked the EU at the meeting on Sunday and said, how do we know that you're actually going to follow through with these investments? And they, had the idea to list off which investments various companies were planning to do in the United States. But of course, that is a question, whether or not it is enforceable and how. The big point is that this is still a framework. We still have a lot of details that still need to be worked out. The EU continues to kind of imply that there could be new developments to this deal. Could there actually be a quota system for the steel and aluminum tariffs? So then how do we see what that framework looks like for the investments from the European side, from the Japanese side? If there's another deal to be announced in the coming days, how does all of that work? So I think that that is still an open question because, of course, I think the president is also thinking about his deal with China back in 2018 and whether or not China actually followed through with its purchase agreements and how does that play going forward. And I think he'll continue to use tariffs to hold a threat over if he doesn't feel like those investments are happening.
Jeanette, appreciate the reaction from you. Jeanette Lowe there, Strategas, and right on cue, this headline crosses the Bloomberg terminal just moments ago. The EU intends to purchase 40 billion euros worth of AI chips in a trade pact with the US.
So I'm just Just throwing this out there, how much of that purchasing power was already planned to try to get some chips on board at a time when that is the future for so many different corporations? It just raises a question. Is this just codifying the investments that companies were already making in the United States, putting them on a nice list, packaging them and saying you can go and you can celebrate this in a Rose Garden ceremony and say that you've got to win? Or is this actual new investment that's coming in from government sources?
I think when it comes to energy, and we can talk about energy specifically, it's redirected the spending that was going towards Russia to the United States. And I remember when Will Kennedy, who led our energy coverage months and months ago, said that to get to an agreement here is like pushing on an open door. The EU wants to buy that energy, that LNG from the United States, and the US wants to sell it. Now, the Biden White House had other ideas, but this White House wants to make that happen. So I think that is something that we can make happen in the years to come.
And I wonder how much that was part of the announcement after yesterday's trade deal was announced between the U.S. and Europe, that President Trump said he is going to shrink the amount of time that Vladimir Putin had to really respond to the demand for a ceasefire with Ukraine to 10 to 11 days rather than 40, saying, all right, let's get a deal. I wonder how much that was part of this discussion with the Europeans.
Can we get to 250 billion every single year? I don't know. Question. Can we get above 80? Yep. Sure. There's no reason why we can't. Let's give you an update on stories elsewhere this morning. With your Bloomberg Brief, let's cross over to Yahira. Hey, Yahira.
Hi, John. We start with yesterday's tragic shooting. A gunman opened fire inside a Manhattan office tower housing the NFL in Blackstone, killing 4 people before killing himself. Authorities say he intended to target the NFL, but ended up on the wrong floor. A manifesto found on him and social media posts reveal an obsession with CTE and anger toward the NFL over how it handles head injuries. Meanwhile, as countries race to secure trade deals with the U.S., talks with India are coming up short. U.S. Trade Representative Jameson Greer shared more negotiations will be needed to secure a deal ahead of President Trump's August 1st deadline. Greer highlighted India's historic policy towards protecting its market, but said they are having constructive discussions. And Taiwanese President Lai Ching-te appeared to call off a U.S. trip planned for next week after the Trump administration failed to greenlight his U.S. stopover amid concerns it could derail trade talks with China. Lai had planned to stop in New York and Dallas, but officials could not get U.S. counterparts to approve that visit. That's your Bloomberg Brief. John?
Yahira, thank you. Thanks for the update. Up next on the program, backlash brews in Europe.
We have a trade deal between the 2 largest economies in the world. It's a huge deal with tough negotiations. I knew it at the beginning, and it was indeed very tough.
And the pushback begins. We'll catch up with Al Salinios of RBC up next.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
On Stock in Focus this morning, this in Europe, Stellantis down by 1.98%, down yesterday by 2.7% on the back of the trade deal with the United States. This morning, Europe and European companies putting a price on it.
Yeah, in particular car companies that have already been struggling. Stellantis reintroduced some guidance, although Jefferies called it vague, and it included a 1.2 billion euro hit in the second half of this year tied to tariffs, at a time where they already are dealing with an overhaul of their different auto chains and falling sales. It just goes to show you're punished if you withdraw guidance, as we've seen from UPS, and you're punished if you issue out vague guidance that doesn't show a pathway to growth, as we're seeing with Stellantis.
Confident optimism.
Exactly.
Seems to be what's needed. That's what you're getting from US markets at the moment. 6 consecutive days of all-time highs. Futures positive by 0.3%. Under surveillance this morning, backlash brews in Europe.
We have a trade deal between the two largest economies in the world. And it's a big deal, and it will bring stability. It's 15% tariffs across the board, all inclusive. The European market is open. It's 450 million people. It's a huge deal. Yeah. It was tough negotiations. I knew it at the beginning, and it was indeed very tough, but we came to a good conclusion for both sides.
Here's the latest this morning. The euro falling to its weakest level against the dollar in 5 weeks as European leaders push back against the EU's trade deal with the US. The French Prime Minister saying, quote, "It is a dark day when an alliance of free peoples gathered to affirm their values and defend their interests resolves to submit." Elsa Linos of RBC joins us now for more. Elsa, that's the rhetoric coming out of Europe this morning. I just wonder how empty it is. Are they pushing back because they're not going to sign up to this, or ultimately is that the direction of travel?
And there is a challenge here, and Ursula von der Leyen admitted it herself, that any legal trade deal has to get through member state approval. But at the moment, what we have is a non-legally binding agreement lacking on specifics. And we haven't even reached the stage yet where we're going to get a little bit more of the specific detail coming out. We've just had the fact sheet from the US side, some details coming out from the European side, not always perfect alignment either between the two.
It looks like a very one-sided deal in the US's favour, that's for sure. That's the view of lots of people. So I just wonder what that means for a currency pair that's been moving in the other direction pretty aggressively over the past few months.
It's a great question, because I think the deal, as you say, pretty one-sided, undermines two key tenets of the dollar bearishness, euro bullishness that has held year to date. And the first is that there was big expectation of rotation out of US assets and into European assets. And we saw yesterday and today, European equities not loving this, European defense stocks coming under pressure because, of course, the flow is going to be more directed towards US defense stocks. But on top of that, it is likely to be inflationary for the US. And so that calls into question the ability of the Fed to cut rates aggressively, which again is a key tenet of the euro dollar bearish outlook. all of that said, the longer term direction of travel for many people is still higher, ourselves included, because we do think the Fed is going to be cutting rates, albeit perhaps with a later start. And so as you get into 2026, there will be longer term investors who are under-hedged, who are still looking for levels to get into those long euro-dollar positions. And this pullback is a gift to them.
So just to put a bow on that, is this essentially a buying opportunity for you for the euro?
Yeah, I mean, I think you already saw that a little bit this morning where, we were trading around 115.80, had that quick dip down to 115.30, and it was fairly quickly erased. And I think people will be looking to layer into hedges, and 115 is not a bad level if you've got a 1 to 2-year outlook. There is the negative carry, but, from a long run perspective, euro-dollar does remain cheap at current valuations.
Given the fact that there's a lot of concern about what this means for European growth, you have Deutsche Bank analysts coming out this morning and said that they're reducing their European GDP expectation by 0.5% as a result of these tariffs. Does that influence your bullish call on the euro at all, or is that sort of just something that you had expected?
Well, it's already factored in. I mean, up until not so long ago, I was being questioned on why my call on the euro was not more bullish. So we had 117 for the end of this quarter, heading up to 124 by the end of next year. And, part of the reason it wasn't more bullish was precisely, as you say, the European growth outlook, it's decent, but it's not spectacular. The ECB appears to be done, but rates are still significantly lower than they are in the US. So a lot of that is already factored into, why we're not calling for euro-dollar to stay at 135 or 140. The flip side, though, is that as the Fed cuts rates, and unless, you really have a view that the Fed is not going to be cutting any time in the next 18 months, the reality is that yield differential is going to compress at the front end, and that should lead to a lot more in the way of hedging flow.
So just to finish on rate differentials, for anyone introduced to foreign exchange 101, it's rate differentials. But I just wonder how relevant they've been in this market regime over the past 12 months, because this euro has rallied through an easing cycle at the ECB that the Federal Reserve so far this year hasn't participated in. How relevant are rate differentials?
Exactly. It's a great question. I think this highlights how much of this rally has been investors anticipating what's to come rather than trading on what's right in front of them here and now. So there's been a broad expectation that the Fed is going to be cutting rates, that the ECB is pretty much done with easing, and therefore that you are going to get this switch into euro-dollar hedges, and at the same time a broad expectation that you're going to get rotation out of US assets into European assets. And sometimes when it's speculative positioning ahead of the actual reality coming to fruition, you can get these positioning-led pullbacks like the one we're seeing at the moment.
Elsa, appreciate the reaction. Thanks for the input. Elsa Linios there of RBC on the FX markets. And welcome news for those of you with an August vacation booked. Euro-dollar 115.75.
Yeah, maybe not such great news, though, for companies, because this is one of the bull cases for corporate America,
Big
given
tailwind.
the fact it's a huge tailwind when you have a competitive advantage in the form of a weaker dollar. So let's see how far this can go based on just how lopsided positioning had gotten heading into this.
This morning is like the calm before the financial market storm over the next 2 days. In many ways, the week begins tomorrow, right? Earnings, Federal Reserve, then we make our way towards payrolls on Friday.
And it's not just a number of actions that we're going to get tomorrow and on Thursday. It is a series of blockbuster releases that could define the remaining half of this year. And so, yes, I would argue maybe we've been seeing the calm before the storm for the past, 6 months.
In the meantime, the grind higher continues, up by 0.3% on the S&P. Up next, we'll catch up with the former FBI Executive Officer Michael King. Mike Wilson of Morgan Stanley will speak to the former U.S. Trade Representative Susan Schopp and Dominic Rizzo of T. Rowe Price. From New York City, good morning. The second hour of Bloomberg Surveillance. Up next.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is As more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
I think you can't say that this labor market's not in transition.
The labor market is okay now, but the risks are rising.
We do think we'll see a cut in September and in December, and there's a possibility of even more cuts next year.
I don't think anyone's debating right now whether or not the Fed's going to hike. It's just a matter of when they cut.
The question is not simply, is the Fed cutting rates, but by how much?
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The grind higher continues. The second hour of Bloomberg Surveillance starts right now. 6 days of gains on the S&P 500, 6 consecutive all-time highs. Can we make it day 7 up by 0.3% on the S&P, and the Nasdaq 100 up by 0.5. As we said a little bit earlier this morning, it's the calm potentially before the financial market storm. Earnings coming up this week. Tomorrow, Meta, Microsoft. Thursday, Apple, Amazon, and then the data. The data starts this morning. 10 a.m. Eastern Time with the JOLTS number, and then it picks up through the week and concludes with payrolls on Friday.
And all of this is going to set the tone at a time where we haven't seen the S&P move more than 1% in a month. Just to give you a sense of how, yes, this has been a grind higher, but it's been a grind. To put some numbers on that earnings flood, as you were talking about, we're getting $3.2 trillion of earnings of the S&P today. We're getting $7.6 trillion worth of market cap tomorrow and $8.8 trillion on Thursday. At the same time, that potentially we get some guidance from the Fed about how they're looking at the record highs and the strength in corporate America and how they're going to use that and still justify cutting rates later in the fall.
Just how extended is this rally? This came from Jonathan Krinsky of BTIG. It's the S&P's longest streak above its 20-day moving average since 1997. He concludes the clock is ticking for a shakeout.
Yeah, but if you call it a bubble, you're going to start triggering people, in particular Max Kettner over at HSBC. And part of the reason why is there is an argument that multiples should be higher if companies can be much more efficient and are going to grow significantly more because of some of the technological advancements that are underpinning this. And that's the reason why this week is so important with what we get from Apple and Amazon and Meta and Microsoft, given the fact that they are driving a lot of the adaption and the agents and all of the AI innovation that we're seeing throughout corporate America.
You're on team tech, not team data, aren't you?
100%, because I think that has been driving a lot of the optimism. Team data has been just basically a lost cause trying to interpret. You can interpret however you want, and I will say that you're probably right if you look at it that way, and you could look at it a different way, but it has been a Rorschach test.
The gains continue this morning, up by 0.3% on the S&P. In just a moment, we'll catch up with Mike Wilson of Morgan Stanley following a fresh record high. Mike Wilson leaning into the bull case over at Morgan Stanley. More from him in about 10 minutes' time. We'll also speak to the former trade representative, Susan Schwab. Look out for that on what's next for U.S. trade talks. And Dominic Rizzo of T. Rowe Price ahead of Max 7 earnings through this week. We begin this hour with our top story. A city in shock. A gunman taking 4 lives in a shooting at an office tower in Midtown Manhattan.
5 innocent people shot tonight. We lost 4 souls to another senseless act of gun violence, including a member of the New York City Police Department, Officer Islam. No words can describe this act of evil. A man who takes the life of others who are innocent. It's unimaginable to experience a loss of this magnitude.
Joining us now at the scene is Bloomberg's Miles Miller. Miles, thank you for making time for us this morning. I know you've been tracking this story all night, piecing together just what happened. What's the latest?
Yeah, what we are learning this morning is that the suspect was targeting the NFL. It is headquartered here on the 5th floor of this building, 345 Park Avenue, that also happens to house Blackstone, as you can see behind me, and KPMG, as well as some other firms. What we know yesterday is that around 6:28, this man pulls up outside this building with an M4 rifle, a long gun, and immediately starts firing into this building. Behind me, there is a glass panel that is completely shot out here, and it's got the webbing and all of that shows you just how serious this situation was. He fires into the building, immediately strikes an NYPD officer that's doing a paid detail unit, basically an officer off duty, but wearing a security vest and his uniform. What we know this morning is that his motive appears to be targeted at the NFL. He says that he played football in high school and later on, and that he has what is known as CTE. It's a chronic condition, a brain condition that is only really realized after someone dies, when they pull their brain out and really examine it. It is something that has caused and led to a number of deaths of football players. And he says that the NFL had not done anything to do more about awareness about that. We heard from the NFL commissioner this morning by statement. He said that one of the NFL employees was one of the victims in this, is at the hospital now, was shot and was critically injured, but is expected to survive. He also said they're going to be adding more security here at 345 Park Avenue to keep their staff safe, and he's also keeping the staff home today.
Miles, there's a real question about how somebody could be walking in plain daylight with a massive rifle and not be noticed or stopped. What are you hearing about from law enforcement in terms of how long he was tracked walking in the open during the day with a massive weapon?
You know, driving to the scene this morning, I passed by a precinct that's only 2 blocks away, but there's very little you can do to stop someone with a long rifle, an M4, an AK, any of those kind of things, if you just have a handgun. And the cop who was in this building, along with the other cop, all they were armed with were handguns. So there is going to be a call for the NYPD to start re-employing those specialized units, Strategic Response Group, Critical Response Command, 2 anti-terrorism groups that travel around the city to high target areas to make sure that everything is okay. You know, this really came to the forefront after the shooting death of Brian Thompson, and that happened, of course, just 5 blocks away from here in December. Head of United Healthcare's insurance group shot in the middle of Midtown Manhattan early in the morning, and that is what caused a lot of folks in the corporate world to start bolstering their security, and then you see what happened here yesterday.
Miles Miller with the latest at the scene. Miles, thank you, sir. Let's extend the conversation with the former FBI Executive Officer Michael King, who joins us now for more. Michael, welcome to the program, sir. You've got 2 decades plus experience with the NYPD. For those not familiar with the process, can you describe the process for us, what took place overnight, what the NYPD will be doing right now?
So thank you for having me, and my condolences to the families of all involved. Right now, the investigation should involve trying to nail down exactly where this shooter came from, his motives. Does he have a manifesto? They have to now do video canvases to go backwards, trying to find out what direction he came from. I heard he drove in from Vegas, which is about 2,500 miles, about a 40-hour drive. So this is a very dedicated person in what he wanted to do. They have to go into his life, dig deep into his life. They have to go into his social media, his friends. I was told a vehicle that he drove here has been commandeered by the NYPD. That vehicle has to be forensically evaluated. They have to take that vehicle and search it for evidence, of course, look for any documents that he left in there, any notes, anything he wrote down regarding what had happened. Another thing that would be great would be to do fingerprints and DNA swabs inside that vehicle, trying to find out who else was in this vehicle with him, because we still have to nail down, is this a one-off, this is a random event, is this one person doing this by himself, or are there other people involved? So you really have to now dig deep into his life, because you can't interview him, you can't interrogate him. You now have to go into all his phones, his computers, anything that he has that's digital. You have to try to find out, do phone forensics, computer forensics, trying to find out what information you can find on this person.
Michael, one theme we've been exploring throughout this morning is the shifting nature of threats. In your extensive terrorism attack response experience, can you talk to us about how the nature of threats is developing, particularly over the last 12 months, with grievances going to corporations and the individuals that represent them, and unfortunately, tragically, having deadly consequences? Michael, what can we do? What do we need to rethink to protect these corporations and the securities and the people that ultimately are employed by them?
So that's a great question. Someone like this who we believe to be a lone wolf, this is your greatest threat. This is someone who's sitting in a basement somewhere. He's off the radar. There's no chatter about him. Law enforcement does not know about him. When you look at his background, you see that he has very minimal. There's not much, no arrests, nothing. Someone like this, to protect against someone like this is very, very difficult. Corporations, companies, what they have to do is double down on not only their physical security, but their cyber security as well. They have to have their buildings protected, increase the amount of staff they have in security. Because again, when you have someone who's plotting online, they're talking to other people, they're talking to friends, family, maybe mental health issues. Someone makes a phone call to 911 saying, hey, you got to look at this guy. When you have someone sitting in the basement, quietly plotting, they're not online, they're not speaking to anyone, this is your greatest lone wolf threat.
Michael, there's a question about the terrorist threat changing from some sort of group activity to the lone wolf. But to build on what John was asking, there's also this idea of mass casualty events in public gatherings versus targeting specific corporations with specific grievances. How much are you seeing that becoming a trend, or are we just taking it a step too far after 2 incidents?
So you have 2 incidents, and I think what we have here is not something that's systemic. Right now, you have the 2 incidents with the CEO killing, and now this. And these are people who have specific grievances regarding specific companies, not something that is more generalized to say, well, we have someone going out randomly choosing whatever company they find. They just step out of their vehicle with a gun and just randomly start shooting. These are people who have specific grievances. So I think when you look at it that way, the threat is minimalized, it's contained to just someone who has that particular grievance, and not say someone who's radicalized, someone who's acting or inspired by a group like ISIS or Al-Qaeda, going out there just trying to shoot and stab or run amok within Times Square. When you look at the weapon that he had, he could have gone to any high traffic location in New York and started shooting. He was 42nd Street, Union Square, a lot of victims. A gun like that can kill a lot of people in a few seconds. This was something very specific, something very targeted.
Why did this person have access to a gun like that, especially given the fact that he had a mental health history and was even, I believe, accused in one particular crime a while back? I mean, how come somebody can legally have access to a weapon of this power?
Now, that's a great question. Someone with a mental health history. Now, the thing is, do we know that his mental health history was pronounced, in that it was something that was known, or was it something that he was diagnosed, but it was not made aware to law enforcement? To my understanding, he had a gun permit issued by Las Vegas PD. So in issuing a gun permit, you would do a background check on someone that would include, is this person a criminal? Does this person have a mental health issue? For some reason, this man fell through the cracks. His background did not show any red flags. And in a state where you're able to purchase a weapon of this capacity without any problems, any issues, very, very easily, therein lies the problem. Access to weapons of mass destruction like this, a weapon like this that is used in war, is used by the military, should not be given or sold to civilians, because again, the only reason you could have a weapon like this is to kill people.
Michael King, appreciate your time, sir. The former FBI executive officer Michael King there. Every single organization in Midtown Manhattan and around this country needs to completely rethink security protocol.
Especially if people have access to military-grade weapons and potentially could come in. How do you protect against that with a traditional kind of handgun and screening system where people badge in and have some sort of semblance of civilization?
We'll have updates for you throughout this morning right here on Bloomberg TV, with an update on stories worldwide this morning, including our top story. With your Bloomberg Brief, here's Yahira. Hey, Yahira.
Exactly, John. A gunman went on a rampage in a Manhattan office tower housing the NFL and Blackstone on Monday, killing 4 people before killing himself. The gunman was targeting the NFL headquarters, but ended up on the wrong floor. Police say the suspect had a history of mental illness and believed he had driven cross-country to New York. Meanwhile, UPS shares are falling 4.25% in the pre-market after it pulled its guidance, citing macroeconomic uncertainty. This after the company reported mixed results in its last quarter, with its EPS narrowly missing Wall Street estimates, but its package revenue was better than expected. The company is focusing on shipping fewer high-margin packages and cutting back on less profitable deliveries. And Waymo is partnering with Avis to launch a robo-taxi service in Dallas next year. Customers will be able to order rides on Waymo's app, while Avis will provide car management services like infrastructure and maintenance. Waymo has been aggressively expanding, more than doubling its service area in Austin, Texas, as it faces competition from Tesla. That's your Bloomberg Brief. John?
Yahira, thank you. More from Yahira in about 30 minutes. I'm next on the program, extending talks with China.
The president's going to decide, look, this is how I want to play it. He may entertain a few more deals, or he may decide, you know what, I'm just going to set the policy going forward. But by the end of this week, they will all be set, they will all be in stone, and they will be written.
We've got some clarity, and a lot of people are getting a lot more bullish. Mike Wilton of Morgan Stanley up next.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today. and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Live from New York City, welcome back to the program. The gains continue, up another 0.25% on the S&P 500. 6 consecutive days of gains, another all-time high. On the Nasdaq, up by 0.5. Under surveillance this morning, extending talks with China.
The president's going to decide, look, this is how I want to play it. He may entertain a few more deals, or he may decide, you know what, I'm just going to set the policy going forward. But by the end of this week, they will all be set. They will all be in stone, and they will be written, and we will start collecting those additional monies. Right now, we're collecting 10% from everybody in the world, and, of course, a higher rate from China. But come next week, off we go.
Here's the latest this morning. Trade talks between the U.S. and China stretching into a second day as President Trump's Friday deadline approaches. The Commerce Secretary, Howard Lutnick, saying a 90-day truce extension with China is likely. Mike Wilson of Morgan Stanley is bullish, writing, we're bullish into 26. Through the near term, setup is not without risk. These include tariff-related inflation. Mike joins us now for more. Mike, good morning. Good to see you. You list a lot of reasons to be constructive here. Just go through those reasons for us this morning.
Yeah, I mean, the reasons really haven't changed. I mean, we've been very constructive since May when we did our mid-year update. And I think the main thing to take away from our outlook that's maybe different than others, I think we came into the year feeling the first half would be tricky, second half would be better. And that was all a function of the sequencing of the policy, right? So the policy sequencing was what we said. It's a kitchen sink the first quarter. They did the growth negative stuff first, and then it flipped very quickly in April. So the main reason we're bullish, okay, is that the earnings revision breadth, and we show this every week in our note, and it goes up every week, has exploded higher off of what was, a deep cyclical low that basically priced in a recession for the most part. So that revision breadth is guiding us to the performance that we've seen. This is, just to put it in context, okay, this increase or V-shaped recovery in earnings revision breadth is as significant as we've seen since COVID, the COVID recovery. And that was the last time that we were this far out of consensus being bullish, and it was right because of it's the data. We're data dependent, so that's the main reason. So this is not just me saying, oh, momentum in stocks and price momentum, et cetera. That's part of it too. So what's driving that earnings revision breadth? Well, first, it's the reflexivity just on people getting too bearish on the growth negative stuff. And let's not forget the AI CapEx cycle, which we came into the year feeling negative about, also bottomed in April. Okay, so those are two big drivers. The second one is the weaker dollar. Okay, weaker dollar is a big tailwind for multinational companies. Okay, and the third one now is we're starting to see operating leverage in more companies across the S&P 500. And this is a very unique view that we've had. So you know the rolling recession call that we've kind of been talking about. Well, now it looks to us like we're having a rolling recovery, okay? And that will be further spurred by the Fed cutting rates at some point in the next year. Now, we don't know exactly when they're going to start, but I think it's fair to say that they're not going to be raising rates. So this 3-year, what I would call soft recession that we've been living through now, we're sort of coming through that. And we're getting more visibility on that. That's why we're more constructive on the next year. Now, in the next 3 months, I do think that some of the things that people have been worried about could start to play through earnings. For example, we could see cost of goods sold increase because of the tariff. The inventory now is flowing through the cost of goods sold. We could see the back end of the Treasury market start to back up again because of the supply that we know is coming. And then, of course, we still have to deal with just the sort of concern around inflation and how does that play through and how does the Fed respond to that. So there are risks out there. We're not saying there's no risks. And remember, the market trades 6 months in advance. So that's what's happened. The market has figured this out. It's gotten ahead of it, and we've priced a lot of good news.
How much is this entirely tech-driven versus a broad-based kind of revisions, increase, and recovery, given some of the mixed guidance that we're getting this morning from a number of companies, particularly those that are consumer-facing?
That's right. Well, it still remains mixed because we're still in this rolling recovery, right? So it's not everything at once. Tech and the Mag 7 are leading, but we're seeing also other groups, industrials, financials, okay, software, which has been in a soft recession for the last couple of years. We are seeing a broadening out for the Mag 7. So it's not where we need to be to say, oh, we're going to move into small cap stocks, we're going to move into the low quality parts of the market. We're still staying up that curve, However, it's starting to progress, just like the rolling recession saw a degradation that was kind of not all at once, but kind of more piecemeal.
So during the rolling recession, we saw gains of about 20% on the S&P 500 for a couple consecutive years. Could you see gains of 20% or more during a rolling recovery? Does it matter if you're in a rolling recession or rolling recovery in terms of the returns?
What I would hope is that we would see areas that have been lagging start to participate more, and that's sort of our view on 26, right? And that's sort of starting to happen now. I mean, industrials has been the best performing sector year to date. It's been our top pick for the right reasons, for the reasons that we've been citing, which is earnings there are starting to look better. Now, let's not forget the tax bill, which I didn't even mention earlier. This is a massive, tailwind for cash earnings for U.S. companies. I mean, to the tune of 5 to 10% increase. So that's real money going into the pockets of companies. They're now allocating capital, not the government, and I think everybody would agree that that's probably a better outcome.
Do you think U.S. exceptionalism is back? Is everyone else signing up to that?
Well, what I would say is that maybe U.S. exceptionalism has been missing, So now, I mean, no one wants to admit this, but the direction we're going in now, it looks like we are going to see better participation across the economy. We've been waiting for this. We've been waiting for this for 2 or 3 years. You know, we've been kind of back and forth, sometimes bullish, sometimes bearish, trying to pick stocks. And this is the first time I can say that I can now see the path of this transition where we're actually starting to rotate into more of an early cycle recovery.
Let me give you some more space to do this because it's important. The strategy of the White House and the rebalancing that you envision a year out, 2 years out, 3 years out, what is it you see?
Well, the rebalancing is both global and domestic. So the global rebalancing is obvious. They're trying to reduce our current account deficit, get the trade negotiations are along those lines. And I think that's right. I think that's a good strategy, getting more manufacturing potentially in-house or domestically. In the domestic rebalancing, it's really, instead of just having the 1%, right, it's, Main Street over Wall Street. I mean, people say, well, that doesn't sound like that's working right now. But the idea here is you get lending through the regional banking sector. You get lending, smaller banks, lending to small businesses, to individuals, get rates down at the back end. Okay, that will liberate actually the domestic, the sort of the middle part of the economy.
Where do you then place this idea that tariffs are pretty regressive? This idea that lower income individuals bear the brunt of it because it's essentially a sales tax on them, and you're already seeing companies really grapple with what that means for demand, particularly in the travel and leisure space. How do you square that with the sort of broad-based dynamism that you're talking about?
So I think it's very simple in the sense that you have to think, okay, what do you have to think about? What are the tariffs trying to achieve? My view has always been that this is going to end up being an import tax. Now, I would have said, 2 weeks ago, this is a 10%, it's going to end up at 10% import tax that's going to be shared between exporter, importer, and consumer. And the market will determine, who can absorb those tariffs. Exporter will decide, hey, we got a discount because we're going to lose volume. Importer will say, we can't pass it on, we're going to eat some of that. And the companies that have pricing power will pass it through. Okay, now we believe that the consumer areas have less pricing power. So I would argue that the pricing power is going to be more probably in the industrial space, probably more in the, sort of the value-added supply chain. So then what do they do on the other side? Oh, they do a tax cut for the companies. So it's just basically saying we're going to tax this chain here, which is going to be a shared tax, but then we're going to actually give that away to corporations who can then reinvest and actually get the economy moving. It is a capitalist type of approach. Now, I don't know if it's going to work perfectly, but I like the direction of it. From an investor standpoint, I love this, okay? Now, I'm not here to make judgments about who gets hurt the most or whatever, and I don't really know, but I can see the path and why we're more constructive, why we've been more constructive on the 12-month view. I think, remember last year you said, Mike, this is the first time I've heard you sound a little more constructive, because I had that vision.
It's overwhelming this morning, Mike. I've got to get to a break. We all need a break. Mike Wilson of Morgan Stanley. Mike, appreciate it. Thank you, sir. It's good to see you. Up next, the trade conversation continues.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Mike Wilson of Morgan Stanley on with us just moments ago, leaning into the bull case 7,200 on the S&P 500 over the next 12 months. He's not alone. The gains continue. Equity futures up this morning by 0.25% on the S&P, following 6 days of gains and looking for day 7. On the Nasdaq 100, higher by 0.4. We're 2 hours away from the cash open. Let's get you some morning movers. Here's Danny Berger with more. Hey, Danny.
Hey, John, some more earnings over the past hour. The big one out of Europe. I have the U.S. ADRs up, but it is Novo Nordisk. You'll see something similar in the European trade, too. Down 16.8%, nearing 17% this morning. It has cut its sales guidance, a surprise to this market. Now, Novo Nordisk has been struggling. A lot of competition for its weight loss drugs. Wegovy sales have been weaker than expected. It hasn't ousted its CEO, so the troubles continue there. We also had some more earnings this morning, this time coming from another drug company, that is Merck. An issue there, narrowing their full year guidance to. The problem for them is that their key drug, Keytruda, is going to be coming up for generic soon. So they need a rush and train strategy. So they're cutting about $3 billion worth of costs. They're going to be firing employees. They're going to be reducing their real estate. They say they're going to reinvest that into looking for new drugs. Also an issue with Gardasil sales in China. So those shares falling 3.5% to the upside this morning, though. We also heard from JetBlue. The loss was lower than expected. They say demand is coming back. Their strategy of reworking things, cutting unprofitable routes, that it is paying off for them. They're also saying they're seeing a lot of demand about 2 weeks out from when people are flying. The president of JetBlue is saying that they are confident demand will continue at pace into the second half of the year. Those shares up 1.8%, John.
Danny, thank you. Appreciate the update. Thank you very much. Boeing just crossing just moments ago. We'll come to that in just a moment. We'll catch up with Brooke Sutherland in a couple of moments' time. Just want to get you an update on our top stories worldwide. On our radar this morning, a gunman fatally shooting 4 people in a Midtown Manhattan office building on Monday evening. NYPD identifying the shooter as a 27-year-old man who drove to New York from Nevada. Elsewhere, the European Union's trade deal with the US is facing backlash from European leaders. The French Prime Minister calling it a dark day, and the French Minister for European Affairs saying the deal cannot be sustainable.
At a time when this is what you were expecting yesterday, and you raised this point, this is what you have when you get a European Union that's trying to collectively decide exactly what a trade agreement is going to look like at a time where there aren't a lot of good options. With President Trump, we said yesterday that the currency market was making the argument for us that the U.S. got the better deal, and now there are a number of different sectors as well as leaders who are kind of waking up to the at least popular realization that that's what.
2 weeks ago, we were surprised they'd accept 10%. 2 weeks later, they've accepted 15% and said thank you afterwards. It's kind of shocking what took place over the weekend.
And it's pretty shocking that initially a couple of the European auto manufacturers saw their share prices pop, and then they fell dramatically as people started to think about what this could mean for them in terms of reduced income. So again, people trying to figure out who got the better end of the deal and what this actually means for trade.
You're thinking of Stellantis, so let's talk about Stellantis, revealing it expects to take a $1.7 billion hit from tariffs this year. The new CEO sharing the automaker will, quote, continue making the tough decisions needed to re-establish profitable growth. That stock, as you said, is down this morning by close to 4%.
Yeah, and Jeffries was saying that their guidance that they did reinstate State was incredibly vague. And one of the key vague points was not necessarily the Europeans and the U.S., even though it's a European company. It was Mexico. And this idea that we're not done. We have a lot more in terms of tariff negotiations that are coming down the pike, including Mexico, which has been one of the main manufacturing hubs and backdoors into the United States from other countries, from China to the Europeans. And it remains to be seen what that looks like.
Totally with you. I think most of us would argue they're the two biggest pieces of the puzzle. The US, Mexico, Canada, and renegotiating USMCA over the next 12 months. That is going to be a huge effort to undertake.
Especially given how much supply chains have rejiggered since some of the tensions between China and the U.S. to Mexico in particular. You have to also wonder if President Trump is going to renegotiate USMCA, which he negotiated to the first place during his first term. It also raises a question, as you were saying earlier, how binding are some of these agreements?
Big questions for the future of trade. Big questions for the future of Boeing as well. Let's turn to those earnings I mentioned just moments ago. Joining us now is Bloomberg's Brooke Sutherland with more. That stock is up by 2%. Brooke, what's the latest?
I think that this was a really strong quarter for Boeing, and one of the strongest that they've had for quite some time, just given all of the challenges that this company has. You saw a really positive surprise on cash flow, which just reflects the pace of deliveries that the company was able to pull off this past quarter. Production on the 737 is finally at that key 38 per month rate. That is the limit that the FAA had set in terms of how many planes Boeing could put out a month until the FAA was satisfied with its factory processes. And so now sort of the key thing to watch is going to be, does the FAA lift that limit and allow Boeing to ramp up deliveries further and improve that cash flow number even more?
Do we have a sense, Brooke, of how much this is stemming from some of the trade agreements that we've seen internationally, where Boeing seems to be part and parcel of them in terms of purchases of airplanes from the United States rather than, say, a European competitor that rhymes with Wairbus?
That is definitely a big thing here. And, it's funny because in the first trade war, Boeing was really complained about being a pawn between the U.S. and China, because you saw China halt deliveries as a way of, increasing its leverage over the U.S. And now you've really seen the reverse, where so many different countries are looking to Boeing jets as a way of sort of reducing that trade deficit, improving that trade relationship with the U.S. This is one of our highest value exports. And I think countries are cognizant of that, you buy a couple of planes, rack up a couple $100 million, that goes a long way, especially in the mind of President Trump when he's negotiating these trade deals.
Brooke, appreciate your time. Stock is higher by 2.5%. Who were you thinking about?
That rhymes with Wairbus.
Wairbus.
It was really bad rhyme. Sorry, I apologize.
Let's keep it on trade. The backlash against Europe's trade agreement brewing across the continent after striking a trade deal with the United States. Joining us now, someone with extensive experience of all of this, the former Bush trade representative, Susan Schwab. Susan, good morning. It's good to see you.
Good to be here.
Let's talk about how much things have changed over the past few decades. How surprised are you about where we are compared to where we were?
Well, it has been a dramatic change. Obviously, it started during the first Trump administration and continued through the Biden administration, because that was sort of a moribund trade policy. Nothing happened, really, for all intents and purposes. And then the second Trump term is very different from the first Trump term. I mean, including what appears to be a potentially dramatic change in the USMCA, terms of the USMCA, which is going to have a major impact in a lot of how the supply chains are designed. In fact, a lot of companies took their leads in terms of where they were producing, where they were sourcing from in their supply chains from the first Trump term, and the focus and the target of China. So production moved to Vietnam, moved to Malaysia, moved to other countries, and now the focus is on bilateral trade deficits, bilateral trade deficits, bilateral trade deficits, and that's changed the focus. I focus more on the trade plus the macro side. This administration is less concerned about, or seems less focused on, the macro side, the deficit, like the macro deficit, as distinct from the trade deficit. But that's their focus. And
hold on a second. Sorry to interrupt, but this is actually something that a lot of people have brought up, including Mike Wilson and Peter Scheer, saying that actually these revenues coming from the tariffs do offset the trade deficit. And from the macro perspective, what you're seeing the stock market say is that companies can adapt and adjust to a lot of these tariffs and pass it along, or else absorb it on their bottom line. What are you seeing that makes you question that?
Oh, I think that these are attacks. Definitely, these are attacks, and the tax is going to go into the coffers of the Treasury. Question is, who's paying the tax? Most of that tax ultimately is going to be paid by the consumer. And how much tax is being collected? And the answer is a fraction of what we're running up in the way of the federal debt and what we have in place in the federal debt and deficit. So if you think about the most dramatic estimates that are out there, let's say you're looking at the $300 billion a year number, that is a drop in the bucket compared to what we're spending annually and what the projection is. So yes, it is a contribution. And how are you making up that contribution? You're taxing your citizens.
A lot of people have looked at this as, in some ways, a win for President Trump, given particularly how high of a rate the U.S. secured with Europe after talking previously about a 10% rate. What are you seeing in the negotiations and the terms that we're hearing, albeit somewhat rough, that gives you a sense of whether there is a winner, whether there is a loser, or what your questions are going forward?
Well, the winner and loser question is a really great question. I think that the winner-loser is uneven, first of all, and you can't totally assess it because, as you implied, there's going to be a change in exchange rates that will adjust somewhat that 15%. Then you're going to have the tariff, the tax, split between the exporter, the importer, the ultimate consumer. I mean, we know more than a third of what we import goes to an intermediate consumer, right? So it's a manufacturer that is importing steel, aluminum. They're paying 50% more than what they were paying before. And under the radar, something that a lot of people aren't looking at are the 232, quote, derivatives, right? So derivatives, hundreds. At the moment, they're pending 945 product requests to raise tariffs by 25% on steel and aluminum derivatives. We know that, cans with beer in them are already there, but cans that have aerosol, anything that comes in an aerosol can, that's on the table potentially for tariff increases. That did not exist in the first Trump administration. The derivatives of all of these, copper, aluminum, steel, and then you've got all of the other Section 232 cases coming down the pike, auto parts, and so on. So you've got autos, auto parts, you've got pharmaceuticals coming down the pike, and so on. So that will impact consumers who clearly are losers, right? If you're buying a car, if you're building a house, if you're trying to outfit a house, if you are, right now, consumer goods, getting your kid ready for school this fall, those are very, very specific examples. In terms of, quote, inflation, the overall, calculation, because that's a technical calculation, that may or may not show up in the near term. It's starting to show up a little bit. I don't think, given the volatility, I think retailers are doing everything they can not to push that through to consumers. At some point, they won't be able to hold off anymore. Let's say, I don't know, third quarter, I'm not sure. It depends on the retailer, or it shows up in earnings.
That's why the core of the Federal Reserve is in wait-and-see mode, and we're about to hear the same thing again tomorrow afternoon.
Because ultimately, we don't know how much there is going to be some sort of inflationary impact, and right now, we're not seeing a real reason for them to cut rates in terms of the labor market, so that's their justification, even despite the fact that we heard from President Trump yesterday. Well, they're going to cut rates, they should.
Eventually, maybe, at some point, but we don't know. Susan, can I finish with you just on China and your experience of dealing with China? And the push at the moment to get them to rebalance is not new. This has been going on for decades. Why are we finding it so difficult when most people assume also they agree it's good for them? Why don't they seem to get it? Why is this becoming such a big challenge?
It's always been a big challenge. I think we needed to take a hard line with China earlier on than we did. We needed to force them to play by the rules earlier than we did. I think this administration has underestimated or overestimated, let's say, put it that way, the leverage that the U.S. market represented in their negotiations. And the Chinese they have their own politics. They have their internal politics, and it's hard making tough decisions. And their tough decisions in terms of generating more domestic demand are harder than stimulating exports. And their overcapacity problem, quite frankly, is an economic mistake. And they are year in and year out exporting their economic mistakes, and the rest of us are paying for it. And so one of the interesting things in the negotiations that the administration is doing with other countries, that we don't know any details of these deals, right? There's only one that's been signed. We've got some social media posts. We've got some White House announcements. One of the interesting things that pops up is how some of our key trading partners are going to treat their imports of overcapacity products from countries, unnamed countries. That will be very interesting. Obviously, we want to prevent transshipment. That is the key in terms of the negotiation with Mexico.
Yep.
So I think that's a very, very, potentially very important element of what the administration is trying to do. But in the meantime, China plays hardball with everybody, and they're clearly playing hardball with us, and I'm not sure we're taking as hard a line with them as we could.
Interesting. Susan, got to leave it there. It's good to see you. Thanks for dropping by. Thank you very much. Susan Schwab there, a former Bush Trade representative, with an update on stories elsewhere this morning with some of our top stories worldwide with our Bloomberg Brief. Here is Yahara Arnott. Hey, Yahara.
Hi, John. A gunman opened fire inside a Manhattan office tower housing the NFL and Blackstone, killing 4 people before killing himself. Authorities say he intended to target the NFL, but ended up on the wrong floor. A manifesto found on him and social media posts reveal an obsession with CTE and anger toward the NFL over how it handles head injuries. Meanwhile, Boeing shares are rising 2.5% in the pre-market after the plane maker beat estimates on revenue and reported smaller than expected losses for the second quarter. The U.S. jet maker also won more orders so far this year than rival Airbus, its European rival, delivering 280 aircraft in the first half, the most in that time frame since 2018. Boeing showing signs of stabilization, but you can't say the same for Novo Nordisk. Those shares are plunging, down 26% after it lowered its financial forecast in an unscheduled update. The drug maker slashed its sales and profit outlook, blaming slower demand for its key weight loss drug, Wegovy. While Novo did say a new contract with CVS would help drive volume starting July 1st, it's still facing pressure from Eli Lilly's rival drug, Zepbound. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for the update. Up next on the program, the big question for big tech.
It is about tech, and I think it's something to keep an eye on. The question of whether, the CapEx spend, whether that goes into earnings and ROE, right? And that's the big question out there. That's what's been driving the markets really for the last decade, the last 15 years.
Up next, Dominic Rizzo of T. Rowe Price from New York City. You're watching Bloomberg TV.
Applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Up in about a few hours away. Equity futures doing okay, positive by 0.2% on the S&P, on the Nasdaq 100 up by 0.4. Under surveillance this morning, the big question for big tech.
It is about tech, and I think it's something to keep an eye on. The question of whether, the CapEx spend, whether that goes into earnings and ROE, right? And that's the big question out there. I think for the market, that question must be answered in the positive. Otherwise, there is risk in the S&P here. That's what's been driving the markets really for the last decade, the last 15 years.
It's the latest this morning. Investors looking for returns on big tech spending on AI. Meta and Microsoft reporting tomorrow. Apple, Amazon on Thursday. Dominic Rizzo of T. Rowe Price writing, the White House AI action plan and the big beautiful bill is going to supercharge the spending environment. Expect big CapEx numbers out of Microsoft, Amazon, and Meta. Dominic joins us now for more. Dominic, welcome to the program. Can we put some numbers on big? Just how big and how tolerant are investors going to be of those investments?
First off, great to see you guys. Thanks for having me. Look, let's take a look at what's happening in technology so far this earnings season. It's really a tale of two cities, right? If you're tied to AI, everything has been incredibly strong. If you've been tied to anything else, smartphone, PCs, auto, industrial, frankly, it's been quite tepid. And I think Google's a really good example of what we may see in the Microsoft and the Amazon and Meta prints. Let's look at those Google numbers. Google Cloud grew 32% year over year in the quarter. Google Cloud Platform probably grew closer to 37 or 38%. And they took their CapEx numbers up $10 billion from $75 billion to $85 billion. That represents 65% year over year growth. And despite all this, they're still going to generate $70 billion of free cash flow. So when I look at what's probably going to happen out of the likes of Meta, Amazon, and Microsoft this quarter, I think we're going to see some pretty big CapEx numbers. I think we're on a path to $100 billion at Microsoft. I think we're on a path to over $100 billion at Amazon. We're probably on a path to $80 billion at Meta. And I do think that these companies are getting high ROE on this spend.
Dominic, do you think shareholders will reward this type of spending plan, or do you think that they're going to penalize it as they did a couple of months ago?
Well, I think it really comes down to, are you seeing the revenue growth that goes with that CapEx growth, right? And so, like I said, at Google, we definitely saw that in those Google Cloud numbers. At Meta, I mean, the question is, are we going to see 18% top-line growth? That definitely justifies this level of CapEx spend. At Azure, at Microsoft, are we going to see closer to 36, 37% growth or 33? My gut is we're going to be north of 35% on Azure. And at AWS, are we going to see 18, 19% growth or 16? And I think we're going to be closer to 18, 19. So you put it all together, I think investors will reward it. But frankly speaking, who's the winner in all of this, right? It's the chip companies. It's the NVIDIAs, AMDs, and Broadcoms of the world.
Dominic, at what point do the weaker hands get that much weaker as the stronger hands invest more and more? And I'm thinking, for example, of Apple, not to mention Tesla, some of the biggest losers when it comes to share price so far this year. How much does that just get exacerbated by the ability and willingness to spend on the part of the really stronger hands?
Well, I actually think those are two pretty different stories. So Apple is tied to smartphones, right? And upgrade rates on smartphones are at record lows. What we've seen at the likes of T-Mobile, Verizon, AT&T last quarter is, frankly speaking, people are just not upgrading their phones. And why would they, right? There's really no reason to right now because Apple Intelligence is not adding any dramatic more value in your day-to-day life. So I expect tepid growth on the smartphone side out of Apple. Let's see if they can make a big capital allocation decision that can get them out of this problem. Let's not forget, this is still one of the companies with one of the largest cash flow balances in the whole world, and they can use that cash to go do something productive, like maybe partner with Anthropic and pay up to have a nice large language model behind Siri, or buy someone like a Perplexity. So let's see what ends up happening there. At Tesla, I think it's actually quite a different story. What's happening with Tesla right now is there's just a lot of uncertainty around big purchases, and interest rates are relatively high. So I actually think Tesla is quite ahead in the AI race, whether it comes to full autonomous driving or whether it comes to partnerships with things like Elon's Grok, which has a very, very strong large language model. So I think that's a little bit different than the Apple story, but I think you're hitting on a very important point, which is the AI strategy at all of these companies is the most important thing for all of these management teams.
Dom, just a final question on Apple. You said wait and see. Do you want to hold a stock in a portfolio if your view at the moment is wait and see?
Well, what I'm trying to do across all my strategies is create an all-weather technology strategy, right? Trying to capture the upside and blunt the downside of, frankly speaking, what could end up becoming quite a speculative market, right? I think AI has the potential to be the biggest productivity enhancer for the global economy since electricity. Productivity-enhancing technologies come with speculative bubbles. How do you navigate those responsibly, right? And so if you look how I try to do it with Apple, I'm underweighted in the strategy, but it is also quite a durable name. It has quite good upside-downside capture. So you have to think about how underweight you actually want to go.
Dom Rizzo, appreciate the input. Thank you, sir. Dominic Rizzo there of T. Rowe Price, looking ahead to some big earnings still to come over the next few days.
Yeah, the tale of two cities has been reflected very much in just share performance so far this year. I am curious about how much you are going to see a reversal of some of the concepts that people were talking about, where spending is a good thing, and it's rewarded by the market, at least plans for CapEx from the likes of Amazon and Microsoft.
Depends who you are, right?
Exactly.
Meta, apparently, it's great. Hundreds and hundreds of millions of dollars on employment contracts.
Yeah, but that's exactly the point. How much do they get that much stronger? Because they have that kind of money that they can invest in talent and take that talent from the weaker hands, i.e. Apple. And how much of an upper hand does that give them when it comes to the next leg of AI?
They are behaving like they're facing an existential risk. We'll talk more about that in the next hour. Coming up, Kevin Gordon of Charles Schwab, Zach Waring of CFRA, Stephen Stanley of Santander, looking for zero on payrolls Friday. Don't miss that. And the new biggest bull on Wall Street, John Stolfus of Oppenheimer. He joins us next.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's gonna be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
There's just a lot going on, I think, in a positive way. And a lot of the uncertainty that was prevalent earlier in the year is really being washed out of the system right now.
Yes, you might see a slowdown in economic growth, but you're still seeing really resilient results from companies.
The AI theme has kicked back in.
The market's just in a particularly joyous place right now, going into August.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The opening bound 90 minutes away. Equity futures positive by 0.25% on the S&P. On the Nasdaq 100 up by 0.5. All-time highs coming into Tuesday as the Fed's two-day meeting begins. Concludes tomorrow on Wednesday. Data on Friday. Payrolls just around the corner. And in between, lots of earnings. Through Wednesday and Thursday, 4 of the biggest names in tech. You'll hear from Meta, Microsoft, Apple, and Amazon.
You said earlier the calm before the storm, because we do get so much data and so many earnings for such a huge proportion of the overall U.S. index, but it certainly has been calm and it could continue to be. We've seen a move of less than 1% for more than a month in the U.S. equity indexes, and it raises the question, is it just a sort of melt up driven by a couple of names, and you have a really bifurcated market that's coming to the fore in all sorts of other places as well? It's a very interesting moment to be really looking at this.
How relevant is tomorrow's meeting for the Federal Reserve and Chairman Powell? Relevant to the White House, I get that, and relevant to all the economists tracking this story. But for equity market participants right now, bullish this market, how relevant is this meeting?
The one relevant aspect is going to be the jockeying for the position for Fed chair next year. Do we have a sense of who is on the slate of potential candidates and what they're willing to say to potentially get the ear of the president? In other words, how politicized will the Fed be, and what kind of rate-cutting path are they going to be on in 2026?
Fed Chair Jay Powell coming up tomorrow afternoon. Look out for that news conference and decision and special coverage right here on Bloomberg TV. Equity futures at the moment positive by 0.25% on the S&P 500. Coming up this hour, we'll catch up with Kevin Gordon of Charles Schwab with stocks at all-time highs. Stephen Stanley of Santander looking for zero payrolls coming up on Friday, apparently, according to Stephen. Plus, we'll catch up with John Stolfus of Oppenheimer with the most bullish forecast on the street for the S&P 500. We begin this hour, though, with our top story. A city in shock. A gunman taking 4 lives in a shooting at an office tower in Midtown Manhattan. Joining us now is Bloomberg's Miles Miller, who has more. Miles, breaking news just moments ago.
And that's right. We just have confirmed the death of a Blackstone executive. Her name is Wesley LaPotner, and well known in corporate circles and also philanthropy. Here at Blackstone, she ran their real estate investment trust and was a part of the executive committee as it relates to investments. Outside of here, had done so much work in the community, on the board of the Met, on the board of the Heschel School, a Jewish day school here in the city, on the board of the UJA Federation, doing so much that she could in the community to make New York a better place. And it is here where she was leaving work when she was shot and killed yesterday. Let's set the scene again. 6:30 about yesterday, guy pulls up in a BMW, pulls out an M4 rifle and starts firing into the headquarters of Blackstone, the headquarters of the NFL and KPMG. He thinks he's making his way upstairs to the NFL offices because he had an axe to grind with the NFL because he said he had CTE. Meanwhile, he never played for the NFL. He made his way up to the Rooted Management Group, which is a REIT here in Manhattan, and that is where he opened fire, shooting another person and then ultimately killing himself. He killed an NYPD officer and shot an NFL employee. We know that Blackstone and the NFL have their employees working from home today, and they are really issuing their condolences in relation to the people who have been killed here, including that Blackstone executive.
Miles Miller with the latest on the scene. Miles, thank you, sir. Just absolutely tragic. It goes without saying that our thoughts are with her family and everyone at Blackstone this morning.
This is an incredibly difficult thing to cover, and I will say that everyone is just hoping, A, for some solace for those families that were affected, but B, for some comfort that this isn't going to happen again, with some questions swirling about why an individual with a history of mental illness had this type of weapon and how we can continue with the security that this will not happen at in any other place.
In just a moment, we'll cross over to Yahara Anand and get you an update on what's happening on the ground, and any more headlines in between, we'll bring them to you. If you are interested in what's happening with financial markets right now, futures are just about positive by 0.25%, with stocks looking for a 7th all-time high. Kevin Gordon of Charles Schwab has a view. In arguably the biggest economic data week of the year, it all comes down to labor. Solid labor data will matter most for markets. Kevin joins us now for more. Kevin, good morning. It's good to see you.
Nice to see you.
Difficult morning?
Yeah.
Without a doubt. But we'll make some space to talk about financial markets. Let's talk about why the data for you is so important this week when we've got so many earnings elsewhere.
Yeah, well, I think I would wrap earnings in with the broader economic data, especially on the labor front, because the real mechanism that we're looking for and trying to see and assess with trade and tariffs is if any of that starts to take a big bite out of hiring. When you think about companies' largest costs being labor, if that's where they turn to, if they face a significant increase in costs, and if that's ultimately what brings the broader labor market to a weaker spot. So far, not the case. And I think even with the June jobs report, even if you get a reversal in some of those, I'll call them blips that were in there in terms of what accounted for most of the hiring at the state and local level, at the education level, the fact that the unemployment rate went down because you had this significant drop in the labor force, even if some of that unwinds a little bit, you can still be in a pretty solid spot for July. So really it turns to that back half of the year where you start to see, if at all, if there are impacts from tariffs, if they're going to start biting, that's where you really start to see it.
One of the reasons why I've been more excited for earnings than I have been for the economic data is because every time an economic data point comes out, I get 15 different interpretations and people point to different aspects of the numbers to justify why they have those opinions. Why do you feel like we're getting better data from the overall government-issued numbers rather than Merck laying off workers today because of efficiencies, a number of big corporations not hiring entry-level staff because they can just get AI to do it?
Well, it's interesting. In some ways, we've sort of seen this movie before, where at least in the post-pandemic cycle, and I was thinking back to, the conversation you guys had with Mike Wilson on the last hour, talking about how, we had the same view around rolling recessions, being in certain pockets of the economy, especially manufacturing versus services over the past several years. Embedded in that were a lot of these sort of idiosyncratic company-specific stories where there were significant layoffs or there were significant cuts to guidance, but that didn't filter through to the broader economy. It didn't really rise up. So to some extent, you're seeing that again now. And I would argue, actually, one of the reasons that we've seen such a sort of incredible recovery in the market is because what's been leading have been industries, not necessarily at the 11 sector level. If you look at the 25 industry level, industries with the strongest margins have have been leading. So those are the ones that can probably withstand that tariff shock a lot more, or they're further away from the epicenter of the tariffs. So you think the banks are almost the perfect example of that. And this earnings season, I would almost put the banks and the autos on opposite sides of the spectrum, looking at where the tariff pressure has shown up. You're not really seeing it at all in financials, because you probably won't, given its services dominated, but you're definitely seeing it in an area like autos, but that's a small share of the market.
You sound a lot more skeptical than Mike Wilson of Morgan Stanley, who came on and said we had been dealing with a rolling recession for 3 years, and now we seem to be dealing with a rolling recovery, a rolling bull market. Why? Why are you not convinced?
Well, it's not as much that I'm not convinced. I just think that when you listen to what companies have been saying around pricing and what their response is going to be to tariffs in particular and the CapEx slowdown that we have seen, at least in CapEx intentions, even though some of the regional Fed surveys, which is sort of the best gauge that we have right now in terms of where confidence, can be turning on a dime because they come out before the ISM, headline indexes have been improving, but those underlying CapEx components haven't been improving as sharply, and in some cases they've actually been turning lower. And in some ways, this all really comes down to what happens at in the business investment channel, because that tends to drive employment gains, which tends to drive consumer spending, that drives overall productivity. So that's really what we've become most focused on. So it's not that I think that the recovery is completely stunted, because our view from a tariff standpoint, and we have to remember that pre-April 2nd, we were not in a zero tariff world. I mean, the market was still digesting that we were gonna get tariffs going up relatively, significantly. So if we're gonna go into a tariff world, and what we've been hearing from our clients who are facing this in terms of having small businesses, is just tell us what the rate is and don't change it. Tell us what the rules of the game are, and then we'll be able to play. So if you can get past that, which arguably we're coming to that point, whether it's this Friday or not, or August 12th or not, you're getting closer to that point, which I think is a pretty important needle mover for the market and for the economy.
We're in the middle of that process right now. What started before April 2nd, though, was this allocation abroad to international equities. Is that just a moment in time or an ongoing story? How do you feel about European stocks right now following the agreement over the weekend?
I mean, we're relatively constructive because I think, well, first of all, from our perspective from our clients, nearly 40 million people who for many, many years have become very accustomed to just the U.S. dominant trend, really being the ruling trend, for good reason. But I think that when the international versus U.S. or, U.S. versus ex-U.S. argument is often talked about or discussed, it's framed in this context of all or nothing. And it's, just dump U.S. at the expense of everything else. And of course, that's never how this works for any kind of balanced portfolio. So it's really a matter of looking at what has become maybe a little bit of an improved opportunity set relative to what was. So if you're just looking at Europe, for example, relative to what was, yeah, clearly things have improved. Even the internals of the DAX, those have been much stronger this year relative to the S&P. At one point, you got to almost a third of members in that index making a new 52-week high. We have not gotten there on the S&P 500. So there are still relatively healthy internals when you compare it to the U.S., but I wouldn't look at it at all as some sort of all or nothing trade.
To be fair to people who have been long exclusive with the U.S. for the last decade, there have been many, many good reasons to have that trade on. I think they still face the same question. When I buy America, I know what I'm buying. When I buy Europe, what do I own? What am I buying?
Well, yeah, the sector bias, I think, is really important there. Because, yeah, when you're in the U.S., I mean, the tech-centric nature of this market now, not just tech, the sector, but tech and tech-adjacent parts of it. I mean, you're getting to half, and in some cases more than half of the index. Plus, tech has become more of this cyclical beast, in addition to being a growth beast as well. So I think that that's a really important, certainly has been an important driver of outperformance over the past several years. But when you compare that to Europe, if it's a little bit more financial centric in certain countries, or if it's a little bit more, auto and manufacturing centric, if you don't get that important cyclical upswing, then it's going to be really tough to outperform.
What is it you always say?
Luxury and weight loss.
That's right.
And right now, weight loss is kind of, on the back foot, evidently, with Novo. So
luxury too.
Exactly. So there you go. Yeah. Although it's different between Hermes and LVMH. It seems like a totally different situation.
What's gone wrong with luxury?
Yeah, you would know.
Well, it is bifurcated. I mean, I'm not a luxury analyst, but it's
in a way.
Yeah, I think that maybe I'll just leave it at that.
Okay.
I don't know.
Sensible. All right. Keep you out of trouble. Kevin, thank you. Good to see you. Thank you, sir. Kevin Gordon there of Charles Schwab. Let's give you an update on stories worldwide with our Bloomberg Brief. Here's Yahara Arnott. Hey, Yahara.
Hi, John. Blackstone confirmed one of its employees was among the victims of yesterday's deadly shooting in a Manhattan office tower. A gunman opened fire inside, killing 4 people before taking his own life. Authorities say he intended to target the NFL's headquarters, also in the building, but ended up on the wrong floor. Meanwhile, U.S. Commerce Secretary Howard Lutnick says a 90-day extension of a trade truce with China is likely. Negotiations between the two countries are still underway in Stockholm, with Treasury Secretary Scott Bessent leading talks for the U.S. Key sticking points include fentanyl trafficking and concerns around China purchasing sanctioned oil from Russia and Iran. Meanwhile, take a look at Stellantis shares. They are falling 3.5% in early trading. The automaker shared it expects to take a $1.4 billion hit from tariffs in the second half of this year. This after Stellantis recorded a near $350 million impact from tariffs and lost production in the first half. Shares have been struggling, down over 25% this year. That's your Bloomberg Brief. John?
Yahara, thank you. Thank you very much. More from Yahara in about 30 minutes' time. Up next, the Morning Calls Plus. Zach Waring of CFRA saying retailers will have to share the cost of tariffs with the consumer. That conversation up next.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market. The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
One thing I think we're missing right now is part of what's driven, I think, this U.S. stock market return is the weakness in the dollar, right? DXY is down significantly. You look at European, stock markets, for a U.S. dollar investor, they're up significantly more because of that. So I think the weak dollar, if that starts reversing, that will actually put some pressure on U.S. stocks. I do think we're resilient. I think it's about the growth story.
Peter Schiff of Academy Securities, slightly constructive on a range of issues, but he thinks it's too soon to tell the impact of higher tariffs, and he's not alone. We'll have that conversation in just a moment. Equity futures positive by 0.2% on the S&P. On the Nasdaq 100 up by 0.45. That's the price action. Your morning calls look like this. First up, Bank of America raising its price target on AMD to 200, saying it has a comfortable average selling price premium over Intel. Next up, CFRA upgrading Alaska Air to buy, seeing upside potential in its 3-year strategic plan. And finally, RBC raising its price target on Tesla to 325, citing a better than expected robo-taxi launch. That's the latest on Tesla. That stock is up by, or rather down by 0.3%. Elsewhere, we turn to another read on the consumer on deck for 10 a.m. Eastern Time. Bloomberg's Michael McKee joins us now for more. Good morning, Mike.
Good morning, John. Well, you take a look at that chart you just showed, and you can see that consumer confidence has been falling. The question is, what does that really tell us? We tend to watch what consumers do, not what they say. That's the old Alan Greenspan line. because there isn't a huge correlation between the two. Confidence and spending data only modestly correlated. The fundamentals will tell you pretty much the same thing as the data. The correlation has also weakened since the pandemic. If you're a statistics nerd, basically the R-squared is around 0.3 at this point. So there is some statistical validity, but not a whole lot of predicted power there. People thinking it is easy to get a job has been falling, and that's what really drives the conference board numbers. We'll see what that comes out with today. The problem, of course, is that the jobs report is on Friday, so these numbers come out a little too early for that. But the conference board does track buying intentions, and they have been very mixed. There's been little change in intentions to buy cars, but there are fewer people who say they want to buy homes, and more people who say they want to buy appliances. Kind of the interesting question for the numbers that come out today is last month, fewer people said they wanted to buy air conditioners after the heat wave we've seen. That may change in the numbers at 10 o'clock this morning.
Mike, before you go, and it's great to see a summary of what we're expecting, can you give us a sense of the quality of the data and the survey responses and how much there is an increasing estimation of what the numbers should be rather than actual measurement in the U.S. economy?
Well, the Conference Board, obviously, as is the University of Michigan, are private surveys, but in terms of the actual data we're getting these days, we're having more estimation, particularly for consumer prices, where the Bureau of Labor Statistics has to estimate prices in some categories because they don't have enough people now to do the actual surveys. The accuracy is still very strong, but it's not what it was, and they do their best to statistically adjust the numbers. It's just one more problem that the Fed and others face in trying to figure out what's going on with the economy.
Michael McKee, thank you, sir. We'll come back to you a little bit later. Mike, thank you. Let's stick with the consumer. Zach Waring of CFRA writing, the consumer is holding in as long as employment remains stable. Retail hasn't seen the full impact of tariffs yet. Zach joins us now for more. Zach, welcome to the program. Are you suggesting the tariff test is still ahead of us?
Yeah, thanks for having me. Yeah, we do see, you know, kind of coming into results, creeping into results in the second half of the year. And you really haven't had any trade deals yet. So you really aren't sure what that, you know, kind of final rate is going to be. You've got a couple of deals on the table, but nothing's really signed in stone yet. So, you know, we really think you're going to start to see it at the end, in the second half and into 2026.
How much, Zach, do you think that companies are prepared for this and have the pricing power to actually respond to this versus taking it on the margins like we're seeing in some places, particularly in travel, particularly with Procter & Gamble, with an increased estimate for what kind of tariff hit they were going to take this morning?
Yeah, I think it's going to be company by company based. You know, I think companies that have strong brands that are performing well right now can pass on some of those costs to consumers. And then you have other brands that aren't doing so well, and the, you know, lower end consumer is not holding up as great. And those companies will probably have to eat some or most of those costs. You know, it's not as simple as just, you know, it's a 20% tariff coming out of this country. We're going to have to mark our products up 20%. You know, that's not how the consumer operates. And, you know, economics is a little more, you know, complicated than that.
How much are, Zach, how much are retail companies moving production back to the United States or moving production at all in response to some of these threats, given it's not clear what the rate is going to settle out at any given place in the world?
Yeah, I mean, you're not seeing it very often. I mean, you have companies that have manufacturing in the U.S. already that are, you know, kind of reinvesting and, you know, maybe bringing some more supply online here. But you're not seeing, like, you know, for instance, apparel and footwear manufacturers haven't just picked up their manufacturing and moved it back to the U.S. And I don't think you'll see that, at least not in the near future. I think as soon as automation kind of catches up and companies are able to, you know, bring production here at the same cost as they do in Asia, then, you know, you might see more manufacturing come to the United States. But you're just not seeing it for, you know, companies that have no exposure to the U.S.
Zach, some companies are better at managing inventory than others. And I'm thinking about some landmines that we've hit over the past few years, and Target comes up repeatedly. As we work our way through earnings season, are there a few companies that you've got your eye on that you're a little bit worried about?
Yeah, you know, I think a lot of these companies have done well in recent years. Obviously, there are some that, you know, have kind of blown up on themselves in recent years. But, I think overall, the retail industry has really done a good job of coming back from the COVID chaos and inventory there. We really think that, companies are going to probably bring a lot of inventory in quicker. So you might see some inventory issues creep in after the holidays. But I think, and that would just be from over ordering, to kind of beat some of the tariffs, potentially. But, currently I don't see a lot of issues in the inventory situation.
Zach, are there some business models that just don't make sense anymore? And I'm thinking of some of these producers that were just relying on cheap labor abroad to make apparel and bring it over to the United States. And in my mind, I'm not sure that's a sustainable business model anymore.
No, you're right. I agree. It's going to be difficult now with the new tariff rates. You're just not going to have, I think it's really going to hurt the really low cost items. I think of some of the Chinese, $1, $5 brands that, have really come up in recent years. I think they're going to struggle because, 30% there makes a really big difference. Obviously, we don't know the rates out of China yet, but I think they'll probably be impacted the most.
Zach, who do you think the big winners are?
So we really like big, large global players. I think they have the ability to, they generate a lot of their revenues outside of the U.S. So, even if there is a big tariff impact, it'll be just on a small portion of their revenues. We like players that have negotiating power. So the larger players, again, have more negotiating power with suppliers. And then obviously the brands that have momentum. I kind of think of Hoka, On, some of those brands that have really done well in recent years. They have the ability to raise prices on consumers.
Over the past couple of years, there's been a theme where the strong keep on getting stronger, the big keep on getting bigger, and I'm talking about corporate America. I'm also talking about consumer balance sheets. Do you expect that to only continue and then some based on what an upper hand some of these bigger multinationals have?
Yes, we do. And retail, especially because of their negotiating power compared to, small businesses from the U.S., someone who buys, 100,000 of a certain item have much less purchasing power than a Nike, who, buys millions and millions of, certain items and goods. So, we think this is going to make it worse.
Hey, Zach, appreciate the input. Thank you, sir. Zach Waring there of CFRA. The tariff test is still ahead of us, and there's going to be some losers. Some major losers, that's for sure.
And we're already seeing that on a stock-by-stock basis. Some companies coming out, giving forecasts, getting rewarded for it. Others, not so much. I'm thinking of Stellantis. Others withdrawing entirely. UPS, how much is this because it's a company that has a restructured business model versus the overall backdrop? But this is going to be an ongoing process of assessment, and people have different opinions about how great that will be.
Equities positive this morning. The opening bell about 65 minutes away. In just a moment, we'll get you some trade data. Mike McKee's going to break that down. Plus, we'll catch up with Stephen Stanley of Santander. Stephen Stanley is looking for zero on Friday. Payroll's Friday, and Stephen is looking for zero. We'll get into the wire in just a moment. From New York, you're watching Bloomberg.
the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
60 minutes away from the opening bell, equity futures positive by 0.2% on the S&P 500, up by 0.4 on the Nasdaq 100. In the bond market, 2-year, 10-year and 30-year yields are lower this morning, down by 2 or 3 basis points at the long end of the curve. On a 10-year, 438.39, on 30s, 492.45. A week full of bond auctions for Lisa, and economic data as well. So let's get you some economic data now with Mike McKee. Good morning, Mike.
Good morning, John. Well, we've got the trade balance narrower than anticipated. $86 billion is the total. That's down from $96.4 billion revised from the prior month. Imports fell by 4.2%, and exports also fell by 0.6%. These numbers basically telling us what we already knew, and I know you'll talk about this with Steve. It's going to be a little harder to untangle GDP tomorrow because of the trade impacts. We had a big pull forward in imports in the first quarter. Second quarter looks like definitely now a real rebound in that area, but that's not what is really going to be telling us what's going on in the economy. So the Fed's going to have to untangle it, as are we.
Are we getting more of a sense, though, Mike, of just what the ramifications from some of the tariffs and the trade tensions are how they're manifesting themselves in the economy?
Well, it's going to be interesting, Lisa. We get jolts today, the job openings numbers, and we have seen them hold steady, which has been kind of unusual. Quits rate actually went down or went up a little bit the last month, and we get consumer confidence that we just talked about. But the thing that probably makes the most sense is the Fed looking past some of this data to the earnings numbers we're getting now. The P&G number out today, the idea that they're just giving you a broad guidance, and their chief financial officer says consumers are under stress. That's going to register with the Fed. And then UPS pulling its guidance for the year. They're all in the same position that the Fed is. And if the companies don't know what they're going to be doing, then the Fed is going to be sitting by and waiting to see what happens, especially once we get to tariff day on Friday.
Mike McKee, thank you, sir. With the latest, looking ahead to that Fed decision, that economic data just moments ago, the trade balance narrowing. At the end of March, that was negative 162 billion. We've basically halved that over the past few months. A lot of that was front-loading going into the second quarter, and now we're starting to unwind a whole bunch of it.
Yeah, which goes to the question of how much does a trade deficit end up really getting shrunk as a result of some of the tariffs? When do we get a sense of what the full read is on the new tariff regime at a time when a lot of people say we really haven't seen the ramifications?
We get some more data through the week. The big one on Friday, payrolls Friday, just around the corner. Check this out. It's not a typo. This is what the graphic is meant to look like. Stephen Stanley of Santander, with a bearish forecast for Friday, he is looking for 0 jobs to be added, citing a quote, a reversal of the outside increase in government education jobs in June, as well as tariff-related uncertainty and a soft market for college graduates and students. Stephen joins us now for more. Stephen, good morning.
Good morning.
If you could flip this week, and payrolls Friday was Wednesday and the Fed was Friday, if they had that information and it was 0, would they be cutting?
Probably not this week, but I think it would certainly nudge them in that direction. As I mentioned, the biggest piece of the weakness for me is in the government sector, and I think that's something the Fed would probably want to look through. I mean, remember, government employment was up over 70,000 in June, so this is just kind of a reversal of that. But private sector, we were in the 70s in June. I have it at 55 in July. If you go back to last year, we had 14 consecutive months of payrolls being up at least 118,000 through May, and then June, July, and August were all double digits. And I think part of what's going on there is we have a very soft job market for college grads and college students looking for summer jobs. The seasonals assume a certain amount of hiring in the summer, and we're getting less. And so I think we're likely to see a repeat of that this year, with a little bit of weakness on the private side in the summer and then hopefully normalizing again in the fall.
Can we just stay on government jobs? If we're supposedly meant to look through the weakness in government jobs, shouldn't we have looked through the strength as well?
Well, that's a good point. And I would say that definitely wouldn't.
The reason I bring that up for obvious reasons, as you know.
Government employment was very strong for a long time. And then if you remember early this year, everybody was getting very upset about the possibility of huge layoffs in federal government jobs, which, have kind of, we've had negative numbers there, but it hasn't been enough to really move the needle a lot. At the end of the day, I think, the Fed is not ignoring the government sector when it comes to jobs, but it certainly gets a lesser weight than the private sector.
There's nothing inflationary in your projection. It doesn't feel like this labor market is predictive of some sort of inflationary spiral on the heels of tariffs. So why shouldn't the Fed be cutting to potentially provide a little bit more support, especially for entry-level students?
Yeah, well, I mean, the inflation concern has nothing to do with labor costs, for once, right? This is all about the possibility, from the Fed's perspective, that you get a one-off increase in prices from tariffs, and then that somehow morphs into a more sustained increase in prices. I understand the Fed's reticence to accept the textbook view that tariffs are a one-off, right? Because we had 2021, they said transitory, and it wasn't. And you can understand they're once burned, twice shy on that. But I think this is an unusual instance in which labor costs are really not a big factor in the inflation story.
Just to build on that, there is a theory that you can't get some sort of inflationary spiral unless consumers have the ability to pay for it. Unless they can absorb prices continuing to go up, you are going to see a one-time price shock. Is that transmission mechanism broken this time?
Well, I think that's the biggest difference between 2021 and 2025. I mean, in 2021, households were flush from all the money that had been distributed by the government during COVID. And I think that helped to kind of perpetuate that inflationary cycle. We don't have that this time around. A tariff increase, to the extent that it gets passed through to consumer prices, is a loss of purchasing power for households. So I do think we'll see relatively soft consumer spending as those price increases filter through.
What do you expect to hear from Chairman Powell tomorrow?
Well, I think it's a really interesting juncture for the Fed, because I think early in the year, the tariff thing hit, and the story at the Fed was, we're going to sit back and let's watch this play out. We're not going to do anything. We're not going to engage. The problem is that this was certainly my original thought, that the price increases and the economic impacts would cycle through within 3 or 4 months, and the Fed would be able to reengage. Now it looks like it's going to drag on for a long time. You've got Bostic and others at the Fed now saying these price increases aren't going to be fully in place until sometime next year. So the game plan is changing. And I think I'm very interested to hear exactly what the Fed is thinking in terms of what do they need to see. Because if they're just waiting for the tariff effects to be totally through, they're going to be sitting on their hands for a year. They can't do that, right? So I think it'll be, even though they're not going to move tomorrow, it's going to be a very interesting meeting.
How divided is this FOMC going to be by the time we get to September?
It could be very divided. I mean, look at the June dots. We had 9 FOMC participants who wanted to go twice this year, and 7 who wanted to go not at all, and a few, kind of in the middle. So that's pretty divided.
It's going to get messier too, because by the time we get to September, we might have a decent idea of who the Fed chair is going to be as well. So you face this odd situation where you have division on the committee, and maybe the forward guidance that Chairman Powell starts to offer for 2026 kind of becomes irrelevant because you start focusing on a different character. What does that mean for market pricing, and who to listen to, who to ignore, and how we're going to be guided into 26?
Well, it's just, as you say, it's just a lot of uncertainty, right? So the longer the process drags out, and the closer we get to May of next year, I suspect, to the extent that we don't know who the next Fed chair is going to be, the markets are going to be speculating and going back and forth depending on who, the latest leak of who's in the running or whatever. If we get a name early, and the markets conclude, okay, this person is going to get passed through the Senate and everything, this is going to be the person, then it does create a little bit of uncertainty around, as you say, does forward guidance from the current FOMC matter? I mean, you've got 19 people on the committee. You're only talking about necessarily replacing one. So maybe the committee, the nature of the debate changes. Maybe it doesn't.
Just before you go, how much pushback have you had over the zero?
A lot of curiosity. I don't know that I would say there's been a lot of pushback, but as you can imagine, a lot of clients are very interested in getting some idea of the reasoning.
When that number drops at 8:30 on Friday, I think we'll all be thinking of you. Stephen Stanley.
Well, my fingers crossed.
We hope you're right. We'll see. For your sake. I hope the economy's better than that, for our sake,
exactly.
For the labor market.
Yeah, although how do we interpret this if it's just government jobs that are overstated and then understated? How good is 100K and how bad is 0K? It's really going to be the market kind of parsing through this, and that's the reason why people are so focused on the unemployment rate.
This might be the last time we have a Fed meeting without knowing who the next Fed chair is going to be. Now, this, of course, would mean they'd have to have a pretty accelerated interview process through the summer and into the September meeting. But when we go into the next Fed meeting knowing who the next Fed chair is going to be, or at least having a better idea of who it's going to be, things would be a whole lot messier.
Well, in the meantime, it's going to be he's running or she's running, and we're going to look at any kind of potential dissents, the first since 1993, and say, well, that's the audition slip.
That basically describes tomorrow afternoon. Okay, before we get there, let's give you an update on stories worldwide with some of our top stories. Here's our Bloomberg brief with Yahara. Hey, Yahara.
Hi, John. Blackstone confirmed one of its employees was among the victims of yesterday's deadly shooting in a Manhattan office tower. A gunman opened fire inside, killing 4 people before taking his own life. Authorities say he intended to target the NFL's headquarters, also in the building, but ended up on the wrong floor. Meanwhile, Union Pacific has agreed to purchase Norfolk Southern in an $85 billion cash and stock transaction. It's the largest deal to ever take place in the rail industry. The tie-up is poised to transform the North American rail market, uniting Union Pacific's network across the western U.S. with Norfolk's East Coast routes, of course, pending regulatory approval. And Novo Nordisk's shares are down nearly 20% after it lowered its financial forecast in an unscheduled update. The drug maker blaming slower demand for its key weight loss drug, Wegovy. Novo also gave another update saying its head of international operations, Maziar Mike Dutstar, will become its new CEO. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next on the program, we'll set you up for the day ahead. Plus, we'll catch up with John Stolfus of Oppenheimer, boosting his S&P 500 year-end target to a street high. That conversation up next.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I ask whole corporations study how will you bring generative AI to their job.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The main reason we're bullish, okay, is that the earnings revision breadth has exploded higher off of what was, a deep cyclical low that basically priced in a recession for the most part. So that revision breadth is guiding us to the performance that we've seen. You know the rolling recession call that we've kind of been talking about. Well, now it looks to us like we're having a rolling recovery, okay? And that will be further spurred by the Fed cutting rates at some point in the next year.
Mike Wilson of Morgan Stanley leaning into the bull case. In just a moment, we'll catch up with the biggest bull on Wall Street, John Stolfus. Look out for that conversation in a few minutes' time. As we count you down to the opening bell, let's get you some movers, your morning movers with Danny Berger. Hey, Danny.
Hey, John. A little over an hour ago, we had earnings from Boeing, a lot of earnings to sort through this morning, I should say. Better than expected. The cash outflow was just $200 million. The expectation was that it would be over $1 billion. It shows that Kelly Ortberg has been working on this turnaround. It's taking fruition. It also helps that a lot of the trade deals the U.S. has reached has involved Boeing orders, so those shares up 1.4%. We also heard from Royal Caribbean. Those shares are falling this morning 6.6%. A miss on their earnings. The issue for them were costs. Specifically, they have a new fancy cruise line that's supposed to be luxury, and it's going to be more expensive. The incremental cost that it's going to be to operate it daily is more than the additional yield that they will get from it. But the CEO saying that demand is still very strong for the cruises, so it does bode well for some of the other cruise operators. Finally, rounding things out this morning, we have Stellantis updating what they say is their hit to tariffs, $1.7 billion. Most of that is going to be coming in the second half of the year, so those shares falling 2.6%. Bernstein writing that, yes, they did give a full-year guidance finally, but it was more qualitative than quantitative, and that lack of precision is disappointing, John.
Danny, thank you. Thanks for the update. The opening bell, 43 minutes away as we count you down. Here's your trading diary for today and through the week. Today, US-China trade talks continue in Sweden at 10 a.m. JOLTS data and consumer confidence Wednesday. Fed rate decision, Chairman Powell news conference, plus earnings from Meta, Microsoft. Thursday, another round of jobless claims and results from Amazon and Apple on Friday, the payrolls report, and the president's self-imposed tariff deadline. Let's stick with trade. John Stolfus of Oppenheimer writing, we believe enough tariff hurdles have been overcome to reinstate our original price target for the S&P 500 to 7,100 by year end. He is the most bullish on the street, and John joins us now for more. John, good morning.
Good morning, John.
How well received has that forecast been?
Remarkably well received, for all that many still consider this one of the most hated bull markets of all time. At least I would say it's one of the most doubted and has most skeptics. But when it comes to it, there is a contingency that is appreciating what's going on, and I think it's intermediate to longer-term investors who are supporting this.
Is it on the edge of speculative or not?
I don't think it's on the edge of speculative. I think the memes are the speculative area, and I would still think that, you know, around all the many cryptocurrencies and all, I don't get a warm feeling when I look at that.
When we look at an anatomy of the John Stoltzfus call, you had 7,100 earlier this year. You withdrew it after the April 2nd announcement, and now you're reinstating it. What's giving you that clarity? Is it just the deals that have gotten announced so far?
It was in particular, it was Japan last week, over the weekend, the EU deal. And basically, we're not big fans of tariffs, Lisa, you know. But what we do recognize is it certainly is a way to get everybody's attention into creating a new world order in terms of trade, which allows more favorable terms for the U.S. And we think that's a positive thing. And it has to do with, I think the reason why it's a powerful call is for decades now, the whole world has been building capacity in manufacturing while we've been exporting our services and we export our innovation, but we have reduced our capacity in terms of manufacturing. The U.S., we believe, is the best customer around. We think whether it's China, whether it's Europe or Japan or other countries, they can look for other people to replace the consumer of the U.S. or business. But our per capita income and the strength of our economy makes us a customer that's willing to pay better prices, whether it's for a lunchbox or a pencil sharpener or whether it's for an automobile.
You know, Lori Calvasino of RBC Capital has pointed to this pulling forward of expectations that's on a scale she's never seen before. The idea that so many different investors are looking at 2026 beyond 2025 before we even get the second half. Have we just brought forward the strength from next year and price that in? So after we get this third year of 20+% gains in the S&P, we're not going to get more years like that in your estimation.
I wouldn't venture to guess that yet at this point. I think I'm going to wait closer to December before, as I usually do. I'm very disciplined about that, and then I'll take a look because we've still got almost 6 months. You know, it's 5 months left on this thing. We're rolling, and there's a lot that can happen
as we work our way through Q3. How forgiving are investors going to be of potentially weaker earnings and weaker data on the prospect of better earnings and better data in the future?
I think it's the quality of weaker data or what's behind it.
What do you mean by that? Explain that, John.
Well, exactly. If weaker data is shown to be something that is idiosyncratic related to a particular company, they'll be looking at what's the quality of management, what's the current, in this cycle, where do they stand? I'm thinking of a big tech company, for example.
Are there some landmines that you're anticipating in a few months? Are there any landmines that you're anticipating over the next few months?
Right now, no, but I'm always aware that a landmine can appear, so we want to be sure to take the minesweeper out. And here's the bearish call, how strong is it, and also look at the bullish call and consider, is it too overly enthusiastic? You know, values right now are not cheap, but we would have to say, you know, it's for the boomer generation. I think traditionally stocks are cheap at a 16 forward multiple, at a 22.5 or 23 around where we are right now. It looks high, but the composition of the investor today is decidedly different. We think a lot of that has to do, it's generationally, from boomers to much younger generations, and the reality that Social Security will not be the same percentage of income in retirement for many people. And if people start early, or if they continue in retirement, to invest suitably with exposure to equities, they may be able to retain the quality and standard of living that they have.
A year ago, investors were talking about the equal weight rather than the S&P market cap weight, simply because they wanted more exposure to the rest of the index. They were anticipating the broadening out. Where are we in terms of that? Because so far we've seen big tech leading the charge up and not showing any signs of stopping.
It is, but you know, one thing that's often forgotten, and it's when you look at the sectors, it's industrials are leading, and industrials are leading in 2 out of the 3 ways that we look at it. We look at year to date, we look at from the peak, and we also look at from the lows. And only from the lows, I think, does industrials fail to be number one. I think it's number two in there. But I think that is essentially is a clue to the fact that this market is certainly broadened since last year, and we were predicting that. We were the few who thought that it was going to happen. But we said it's not just about tech, because tech today, so deeply embedded in the lives of both business and consumer, helps both groups create greater efficiencies in negotiating with each other through all kinds of things. So I think I think AI is a watershed event on the timeline of technology. Sure. And we believe that this flows through all 11 sectors, from tech and communications themselves, over the tech is situated, but industrials, materials, energy, healthcare, financials, consumer discretionary. Everybody's on the upgrade cycle, whether we like it or not.
John, appreciate your time. Thank you, sir. The most bullish on the street, John Stolfus of Oppenheimer. Just got a statement from the President of the United States. I wanted to share that with you. I've been briefed on the tragic shooting that took place in Manhattan, a place that I know and love. I trust our law enforcement agencies to get to the bottom of why this crazed lunatic committed such a senseless act of violence. My heart is with the families of the 4 people who were killed, including the NYPD officer who made the ultimate sacrifice. God bless the New York Police Department, and God bless New York. At the scene of the tragic shooting yesterday evening, our colleague Bloomberg's Miles Miller joins us now for more. Miles, good morning. Share with us the latest, if you have it, please.
Yeah, that's right. We are, of course, learning the identity of one of those victims, of course, Wesley LePanter, who worked here at Blackstone. And what we know about her is that she ran the firm's $53 billion real estate fund. She was one of several people who were shot yesterday. This is we're learning more about the suspect as well. Just got some information in from federal sources who say that this suspect had been previously arrested twice in the past. One of those arrests, we are told, happened in California for trespassing. The next arrest happened for throwing a substance at a vehicle with intent to cause good bodily harm. We know that the investigation is going to continue this morning, and the mayor saying the suspect intentionally killed himself in the way he did so that his brain could be studied for CTE.
Miles Miller, thank you, sir. Plenty of updates throughout this morning from Miles. To close out the show, I think offering our thoughts to all of the loved ones of those lost and to the whole team over at Blackstone. From New York City this morning, good morning.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
We could be in for a 7th consecutive record high on the S&P 500. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, earnings show a clearer picture for some industries, but uncertainty remains as President Trump's tariff deadline nears. A surprise move at Novo Nordisk. The pharma giant picks an insider to help reverse its Wegovy slump. And the biggest rail deal ever. Union Pacific buys Norfolk Southern for $85 billion. Katie, what are you watching?
I'm watching shares of those companies. That is a deal that we have known is coming, and maybe we're seeing a little bit of sell on the news because shares of both companies lower right now. But to talk about this tie-up, it's poised to transform the North American rail market, marrying together Union Pacific's network across the western U.S. with Norfolk's East Coast routes. But of course, regulatory approval remains a hurdle, Matt Miller.
All right, we're going to talk to Lee Klaskow about that in just a little bit. Right now, I'm watching shares of Novo Nordisk plunging, losing more than a fifth of its value today after the company unexpectedly cut its full-year guidance. Wegovy sales continue to struggle. That news also dragging down rival Eli Lilly. You can see Lilly off in the pre-market, 3.7%. And, of course, we have some C-suite changes at Novo as well, Katie.
Let's talk about it all with Bloomberg Health reporter Damien Garde, who joins us at the desk. So let's talk about some numbers here when it comes to that slashed forecast for Novo. They see that this year's sales will grow 8% to 14%. Operating profit expands 10% to 16%. That compares to previous forecasts of 21% and 24%. So the new CEO that they just announced today, certainly a big job ahead of him.
Absolutely. And, you know, as you mentioned, they basically are slashing in half their expected revenue growth for the year, which feels like a little bit pulling the Band-Aid off. We kind of knew where Wegovy, their banner GLP-1 product, was trending with respect to competition with Eli Lilly, but also there had been some concern about whether the ambitions the market had for the ultimate growth of those products was maybe a little overcooked. And we might be getting some confirmation of that now, which is probably why Lilly is trending down. But to your point, the new CEO has big shoes to fill in the form of his predecessor, who was forced out of the company just in May. But also, Novo is in a moment where they need to demonstrate to investors and to, frankly, like the nation of Denmark, where they are a banner company, that they can withstand these challenges and return to the kind of growth that they had previously forecast. I thought it was interesting. There was some analyst, I think, disappointment that Novo appointed an insider versus bringing someone from the outside, which I do understand where that comes from, but is maybe misunderstanding Novo as an organization, which is a very insular might be too strong a term, but this is what they do.
Yeah, yeah. I mean, you think about the profile of the CEO who was forced out, Lars Frogard Jorgensen. He had been at Novo for decades, too, I believe. Remember, he was forced out in May, and they pointed to the stock price declining 50% in a certain period in 12 months. But you take a look at shares this morning, down 21%. That looks even more dramatic.
Yeah, I mean, the stock rose exponentially under Lars Frogard Jorgensen.
There you go.
We had to figure out a new name. Now, it's interesting that GLP-1s are kind of the problem for Novo Nordisk. Obviously, they were, also the savior of that company. But they're a problem as well for United Health. I see they say that GLP-1s are a $160 million headwind for the pharmacy unit. Overall, United Health declines to affirm long-term guidance. That's rough.
It's not what you want to see. I mean, speaking of ripping the Band-Aid off, United Health, in arguably a similar situation to Novo Nordisk, albeit at a greater scale, they today announced a long-term guidance that was below, or rather a full-year guidance that was below analyst expectations. And this is after they pulled their prior guidance, which was unprecedented for the company. And there's just been a series of superlative headlines in the negative direction for them all year long. What's interesting with United Health is that we're watching apparently this contagion spread across America's insurers, and that they are not alone. Their major peer companies have all similarly pulled guidance in recent years, citing basically changes to the Affordable Care Act, a crackdown in Medicaid spending, and just basically patients are demanding more care than they had previously anticipated, which is kind of an existential threat for these companies in that as insurers, they are supposed to see around corners and accurately price risk. That's literally their entire job. And we're finding out that time and again, they have failed to do so with these things that are driving them down.
Yeah, we've been devoting a lot of airtime to Centene and insurers in general.
True.
Damien Garde, great roundup. That, of course, is our Bloomberg News health reporter. And there are a lot of health headlines out today. You also have Merck making billions of dollars in cost cuts as it braces for competition from the loss of its Keytruda patent. Keytruda, remember, is the best-selling medicine in the world. The FDA says that patients who can walk are also allowed to take Sarepta's gene therapy. That's after the FDA requested that the company pause all shipments of the drug after 3 deaths. We've been following this story. Remember, shares of Sarepta plunged 36% on the 18th of July, and you can see they're up by that amount right now on that news.
Yeah, we'll continue to follow that for you, but I want to get to the big acquisition. Union Pacific is going to buy Norfolk Southern in a cash and stock transaction valued at $85 billion. That transforms the North American rail market. Bloomberg Intelligence senior logistics analyst Lee Klaskow joins us now. And Lee, this is just a huge deal. We saw it coming, didn't know all the details, and it isn't expected to close even until 2027, right? But what do we know so far?
Yeah, what we know so far is that Union Pacific and Norfolk Southern agreed on a transaction. The deal represents about a 25% premium over what the stock was trading at, Norfolk Southern was trading at. It's going to create the first single-line transcontinental network in the United States. This will bring with it a lot of operational benefits, and there's no doubt that a single-line transcontinental network would be good not only for the railroad itself, but also probably good for shippers. But they have to prove their case to the regulators, the Surface Transportation Board, that this is in the public interest. And there are very high hurdles for large Class 1 railroad mergers to be approved, and the process is very, very timely for both rails. So that's why they're expecting this deal to close maybe early 2027, assuming they get that regulatory approval by the STB and other regulators.
Yeah, it'll be interesting to see if they get that blessing from regulators. Of course, that has ramifications for other railroad M&A we could see as well. But Lee, I want to get your thoughts on UPS. Shares down about 3% pre-market. They reported this morning, didn't give a forecast, and it seems like they're being punished for that.
Yeah, I mean, the economic uncertainty, that's nothing new, right? We've been talking about economic uncertainty since the tariffs started coming about, and that's really impacting, their business, and not only their business, but their ability to kind of predict where things are going to go. The reduction or the removal of the de minimis exemption also has negatively impacted the company. I guess the good news is that the company is doing what it can. They're continuing to restructure its network to deal with really the realities of its business, which is growth is going to come from e-commerce and business to consumer. Volumes tend to be lower margin business. So they really need to take costs out, realign their network, and that's kind of what they're doing. And then the slight miss this morning on their second quarter earnings was kind of driven by their domestic business, and that was slightly lower yields and slightly higher costs, and that kind of drove the miss this morning.
All right, great context as always, Lee. That is our Lee Klasko from Bloomberg Intelligence. Let's get to an up arrow story. Another earnings story we're keeping an eye on this morning is JetBlue. Shares rising by about 4% before the bell. That's after the company said that it sees improving demand through the end of the year. For more, we're joined by Bloomberg's global aviation correspondent, Sid Phillip. And Sid, so it was still an adjusted loss, 16 cents a share, but that compares to a 33% average loss that was expected. And what's interesting is you think about the cadence of the second quarter, it got better as it went on.
It did, and so JetBlue is obviously scaled back. They sort of focused on their core markets of the Northeast and also the East Coast down to Florida, and that's what they sort of announced when they were strategically restructuring their business and focusing on just the profitable routes, and that's what they've been focusing on, and that's actually helped them reduce those losses and potentially get in a place where they're much more comfortable. And they've talked about how demand now is looking more bullish in the last 2 weeks. So they're talking about how things could actually be turning around there for them.
All right, speaking of turnarounds, Boeing's cash burn was exponentially better than had been anticipated, right? We were thinking they would lose multiples more than they did in terms of their cash burn.
Yeah, Boeing's actually a success story. I mean, they've actually managed to turn around in terms of just their deliveries. They managed to put a pin on their sort of losses that they'd been experiencing. They've been burning through lots of cash. I mean, they were expected to burn 1.8 billion. They only burned 200 million. And in terms of operating cash flow, they've actually made money. So, I mean, for Boeing, Kelly Ortberg, the new CEO, is sort of putting them through the sort of turnaround process, and they're trying to get them across the line in terms of ramping up deliveries and making sure quality is on track. And that's what Boeing's really been focused on. And so far, that's been paying off. And especially with President Donald Trump using aircraft sales as a pitch for trade deals, that's actually working in favor of Boeing at the moment.
All right, Sid, thanks very much. Sid Phillip there covering airlines for us. Now, the IMF's new global economic projections are out, and the organization is forecasting 3% global growth in 2025 and 3.1% in 2026. That's a bump higher compared to the report that it put out after Liberation Day.
Right.
It's actually down if you look at it compared to the expectation from before those Trump tariffs initially hit.
It's interesting to see this forecast from the IMF because it kind of mirrors what we're seeing from corporate America. You have some companies coming out with new guidance that's lower than their previous guidance, but they had previously pulled guidance. So it's higher than it was, but still lower than maybe we started the year with.
Yeah, absolutely. We're going to break that all down with the chief economist of the IMF, an interview you don't want to miss with Pierre-Olivier Gorinchas, and that is at 10:40 New York time, so just about an hour and a half from now.
Yeah, looking forward to that conversation. But let's take a quick look at the setup. We are less than 20 minutes away from that opening bell, on track for what could be a 7th record high. The S&P 500 up about 0.2%. You can see it's big tech that's leading the way. The NASDAQ 100 up by about 0.4%. It's the small caps that are in charge right now, though, Matt Miller. The Russell 2000 higher by about 0.6%.
All right, coming up, U.S. and Chinese officials are starting a second day of talks aimed at extending their tariff truce. We'll head to Sweden for the latest next. This is Open Interest.
morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing. Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5. Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Blackstone executive Wesley LePatner was killed yesterday in the shootings at the firm's Manhattan headquarters. The gunman killed himself and 4 people in a shooting spree at 345 Park Avenue here in Manhattan. Let's go now live to the scene with Bloomberg's Miles Miller, who's been covering the story for us. Miles?
Yeah, and as you mentioned, Wesley was a rising star in real estate. She had spent quite a lot of time in that space, and here particularly at Blackstone, what we know is that she ran the REIT, the fund for wealthy investors and focused on real estate. It appears as though she was shot as she was leaving the building here yesterday. We know that suspect rushed into the building after he parked his car in the middle of Park Avenue, pulled out an M4 rifle and walked right into that building. He shot a cop in the lobby, he shot a security guard, shot Wesley, and another individual up on the floor where Rudin Management has an office. We are told that this all stems from his belief that he has CTE, which is degenerative disorder that a lot of football players have with close contact. He was actually targeting the NFL, but because there are multiple elevator banks here, he got on the wrong elevator. The NFL telling us this morning that one of their employees is among the people who were injured, but he's expected to survive.
All right, Miles, appreciate your reporting. That is Bloomberg's Miles Miller on the scene of yesterday's shooting. We will continue to follow that story throughout the day. But let's turn now to the trade talks underway in Stockholm. The U.S. and China are in their 3rd round of talks, with the 2 countries looking to extend the 90-day tariff truce that expires in 2 weeks. Joining us now from Stockholm is Bloomberg's Oliver Crook. So this is the 2nd day of the 3rd round of negotiations. We know that neither side spoke to reporters after the first day concluded yesterday, Ollie. So what do we know about what's on the agenda of today's talks?
Yeah, so we know that they spoke for about 5 hours yesterday. This is a delegation led on the U.S. side by Treasury Secretary Scott Bessent, flanked by also Jameson Greer, the U.S. Trade Representative. And on the Chinese side, the Vice Premier, who have been speaking yesterday for 5 hours, as I mentioned. They're entering now hour 5 of discussions today. What we know is on the agenda is the potential to extend that trade truce that is currently holding between the United States and China. Remember, that trade war escalated to a point where both sides had tariffs of 125% on either side. That has come down from the U.S. side, now only has 30% tariffs on China. And what they need to do is potentially extend that another 90 days, because as you say, it's going to expire on October the 12th if they do not get to a conclusion, in order to hammer out some of the bigger issues that they have between the U.S. and China. These are a great litany of different trade issues, whether it's the trade balance. Obviously, this has been a centerpiece of the Trump administration's election campaign to right the world of trade, and certainly with China as sort of enemy number one on the question of trade. There's also the question of fentanyl, but there are a great many other issues. The fact that China still buys a lot of crude oil, natural gas from Russia, from Iran, the fact that, TikTok is still for sale in the United States. Trump says there's a buyer. They need a nod from Beijing. So these are going to be some of the conversations that they're going to be having and laying the groundwork for ultimately a framework for a full trade deal with the United States and China. That being said, this is likely going to be a meeting where they kick the can down the road, and that could be still a very long road going forward, because many of these issues are going to be very difficult to negotiate, particularly at a time when you contrast what we saw with the European Union and the United States. The Europeans really want to be seen to be giving Trump more than they're giving. The Chinese are the opposite. They want to be seen to be giving less than they are, so those conversations will likely be going on for some time now.
All right, Oliver, thanks very much. Bloomberg's Oliver Crook reporting live from Stockholm. Let's get to high interest now. A look at what else is making headlines around the world. Baker Hughes is betting big on data center demand. It's agreeing to buy Chart Industries for about $9.6 billion in cash, further solidifying its position in U.S. LNG services. The sector is set to boom, with exports of the fuel potentially doubling this decade. PayPal is boosting its earnings guidance for the year, but Wall Street analysts are disappointed with the company's slower payment volume and softer full-year outlook. TD Cowen says the results are healthy, but show limited upside. And Spotify swung to a loss in the second quarter, missing analysts' estimates after the music streaming service recorded higher than expected expenses related to employee compensation. Spotify is trying to compete more directly with YouTube by including videos on the service.
And coming up, investors have a high bar for earnings this quarter, with some companies that beat estimates and raising guidance still falling in the stock market. Could that happen to the Mag 7 stocks this week? We'll discuss next. This is Open Interest.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power. This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
it's possible that this quarter, Meta may have spent as much on talent as it did on chips. Between the investments to hire Alexander Wang and the couple of folks out of SSRI, they may have spent close to $20 billion this quarter, which will be probably right around where they'd spend on CapEx.
That was Gil Loria on the show yesterday ahead of Meta and Microsoft earnings tomorrow. Let's bring in Bloomberg Tech co-host Caroline Hyde. And it's not just Meta and Microsoft this week. We also have Amazon and Apple. We were discussing this with our own Ryan Vlastelica, who was telling us, when you take a look at the outlook, the M's look good, but it's a mixed picture when it comes to the A's.
It is, and even though, look, put it into context, Amazon is likely to post $160 billion worth of revenue in one quarter alone. The fact that we're expecting a 10% growth rate on that sort of sheer scale of revenue does show that tariff headwinds perhaps haven't hit them as hard as expected, given that many people flock to Amazon because they're deemed still a cheaper alternative. AWS is going to be front and center. Can they rinse out once again about 16% growth for cloud? How are they investing? And I think that's going to be the question for the other M's as well. Microsoft and Meta, yes. Are they upping the ante in terms of CapEx? You saw Alphabet up by $10 billion. What will Meta be spending? They're churning about $40 billion in terms of revenue for the quarter. That's a growth rate of about 14%. Microsoft's about 14% as well, and they're putting in about $72 billion of revenue. But both of them are now basically focused on hyperscaling. And what are we going to hear from Azure growth? Is that going to be 34, 35% growth? Is that cloud really offsetting what has been really a scramble to win the generative AI prize, it feels like?
I mean, I was struck by Gil Luria's point, which again bears repeating, right? Facebook is going to spend $20 billion just to hire AI talent. Those are just that's just the human capital. So are we going to see the revenues match up to those kind of CapEx expenditures now, or is that expected to come later?
Well, this is the Superintelligence Lab's bet that they need to win at superintelligence. Why? Why does Meta need to see its advertising business model be enhanced by generative AI and win that race? Well, because they think in the context of the next few years, when generative AI takes over our landscape of content creation, you and I are going to need more connection. It might be with the generative AI avatar, or it might be with each other, but they need to see the underlying model be theirs, so it accentuates their own business proposal. And actually, Meta have done a great job at showing how Gen AI does drive their advertising business right now, does increase their revenues, and people have given them that winning formula, and therefore we've actually seen the shares outperform. Both Meta and Microsoft have basically been the two key contributors to the S&P other than NVIDIA this year. People have loved it. Can they continue to win on that? But I think Apple's going to be the key one that you have to worry about. Look, they still bring in $90 billion worth of revenue per quarter, but their growth rate is about 4%. We're worried about what the pull forward means for the next fiscal quarter and where sales are going to be going in China in particular. Remember, they're closing one of their retail outlets there.
Yeah, Apple, one of the big problem childs when it comes to the Magnificent Seven. Caroline, great to preview it with you. That is Bloomberg Tech's Caroline Hyde. You can catch her at 11 a.m., but don't go anywhere because we have the opening bell just 4 minutes away. You can see we have green on the screen. We'll begin the trading day with Katerina Simonetti of Morgan Stanley next. This is Open Interest.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like
years.
hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading, and we could see a 7th consecutive record high on the S&P. Welcome back to Open Interest. I'm Matt Miller. You can see futures pointing higher on the S&P, the NASDAQ, and the Russell. You're about to hear and see the opening bell at the New York Stock Exchange. Evolent ringing the bell. The stock actually down about 15% over the past 5 years because it came crashing down at the end of 2024. But their ticker is EVH, which is very cool. At the NASDAQ, you see Salmon's Retirement Solutions ringing the opening bell. They have some kind of annuity that's brought them into some kind of index. I'm not really clear on that. But Katie, you're watching a shortage or a lack of orders at Wegovy pulling down Novo Nordisk.
Yeah, absolutely. I have my eyes trained on what's going on in Novo Nordisk right now, unexpectedly cutting its full-year guidance as Wegovy sales struggle. It wasn't supposed to report earnings until next week, but we got the numbers today. It also announced a new CEO from within the organization. We were talking about this with Damien Garde, that maybe there's some disappointment that it was an insider CEO rather than someone external. But in any case, you wrap it all together. Shares down 21% at the opening bell, Matt Miller. Through yesterday's close, Novo shares were down about 43% year to date. So, boy, just a wipeout underway.
Yeah, absolutely dramatic in terms of the reduction in market cap, losing 1/5 in one day. Union Pacific is going to buy Norfolk Southern in what stands to be a dramatic deal for the rail industry. Its largest ever, $72 billion in cash and stock to buy that. It is, of course, subject to regulatory approval. They don't expect the deal to close until 2027, but just a huge reshaping of U.S. transit in terms of ownership. Also, Morgan Stanley's Mike Wilson is, as we told you yesterday, leaning towards the bullish side of his call for the S&P 500. His team believes the S&P will hit 7,200 by mid-2026. He explained it this morning on Bloomberg Surveillance.
The main reason we're bullish, okay, is that the earnings revision breadth has exploded higher off of what was, a deep cyclical low that basically priced in a recession for the most part. So that revision breadth is guiding us to the performance that we've seen. You know the rolling recession call that we've kind of been talking about. Well, now it looks to us like we're having a rolling recovery, okay? And that will be further spurred by the Fed cutting rates at some point in the next year.
Morgan Stanley Private Wealth Advisor and Senior Portfolio Manager Caterina Simonetti joins us now. And Caterina, it doesn't appear that Mike Wilson and his team are at all deterred by an uncertainty of the Trump tariffs. In fact, maybe they're sort of consoled by the fact that that uncertainty is dissipating. Is that how you see it?
Well, Matt and Katie, thank you for having me on the show. It certainly is a good sound for Mike, that it tends to be more bearish, but they're seeing a lot of positives in the market, and belief, of course, seems to be that the tariff policy is going to be resolved. But I would say that the better way to describe this stance as cautiously optimistic, as we definitely see some positive tailwinds that are helping the economy. And the fact is that the economy has proven to be significantly more resilient than previously expected. With that said, there are certainly a lot of there are a lot of uncertainties still on the table, and the tariff policy is unresolved. So it is a bit preemptive to declare a victory, but we do think that we're going to get some clarity on it, and economy is positioned for growth, specifically for 2026.
I hear what you're saying, Katerina, that the economy has been resilient so far, certainly at the index level on the S&P 500 hitting all-time high after all-time high. You're seeing that strength there, but then you take a look at some of the headlines that we're getting out of this earnings season. Just from today, UPS pulling its guidance, Whirlpool cutting its guidance, and then you have Stellantis also warning about that 1.5 billion euro toll that it's going to take. It seems like, okay, the index level, smooth sailing, but you look under the surface, you look at these individual names, it's a much different story.
It is a much different story, and the earnings revisions are certainly not broad, but this presents unique buying opportunities for investors. Market is hitting new highs, and investors are starting to worry whether they should worry about tariffs or missing the market growth. We think the actual growth is on the stock level, where we're looking for companies that are positioned for growth, where earnings are actually positive versus the ones that are not, that are showing competitive advantage, and in the areas like financials, like industrials, and infrastructure, and of course tech.
What are the sectors that you don't like right now, Katerina? Which ones are losing out?
Matt, we're certainly very cautious of healthcare right now, as they're subject to policy uncertainty. And this is not to say that there are not great buying opportunities in healthcare. Investors just need to give themselves a longer time horizon for things to play out. But this is where, once again, it's a stock picker's market, and we tell investors to be cautious. We're also expecting that there is a very strong potential that there might be a market pullback in the third quarter, which is natural after the gains in the rally that we're seeing right now. So buying opportunities are there, but as Katie said, we're seeing the appreciation and growth on the index level more so than on the individual level right now.
I want to talk about healthcare a little bit more, because as a sector, that's down 3% year to date. That is the worst performing sector of 11 on the S&P 500. We know that the insurers are a basket of snakes right now, and even the bright spots of the health industry, you think about the GLP-1 makers, also running into a wall here. Katerina, you mentioned you have a long timeline. You have to have a long timeline to be bullish on healthcare. It sounds like it's too long for you. How long is that timeline, though, if you're someone who is interested in healthcare?
Well, this is where it is important to be selective, and there is a difference between healthcare stocks like hospitals versus insurance providers versus the big pharma, and we have to focus on individual companies and make sure that we're making appropriate selections. When it comes to a time horizon, of course, we are so spoiled by the need to receive the returns within months. The horizon used to be in years, and now we're looking at 3 months, 6 months out. But I would say 12 months plus would be a reasonable expectation, for something that has a longer time horizon for sure.
Instant gratification. That's what I'm in the market for.
Yeah, me too.
Yeah, all right. That's why we're in live television.
Morgan Stanley Private Wealth Advisor and Senior Portfolio Manager, Katerina Simonetti.
Let's talk about the index level. As we were saying with Katerina, it's been very resilient, and you can see that resilience today. The S&P 500 higher by about 0.2%. If that holds, that'll be the 7th straight day of record gains for this index, so keep your eyes trained there. We take a look at the setup right now, the breakdown of the individual names, and breadth looks pretty good at the moment. More than 300 names in the green, and it's the names that you need. NVIDIA leading the way here, higher by about 1.3%. You also have Microsoft higher ahead of its earnings, Broadcom higher as well. Then you take a look at the downside, and it gets very interesting. It's healthcare. We were just picking on the healthcare sector, and for good reason. Eli Lilly leading losses on the S&P 500 right now, falling in sympathy with Novo Nordisk. Of course, that is a Danish company. It's not in the S&P 500, but some worries there when it comes to GLP-1s. And that's what you're going to see on the sector breakdown as well. Pretty good breadth, not as strong as you might expect looking at the individual breakdown, but tech in charge, that sector up by more than 1%. You go down to the bottom, consumer discretionary, materials, and healthcare leading the way lower, down about 1.4% as a sector, Matt.
All right, very interesting moves in this market, and if it holds, of course, these gains will be a 7th consecutive record high for the S&P 500. Coming up, Boeing almost halted its cash burn in the second quarter, a signal its turnaround is paying off. We'll speak with Ron Epstein, B of A aerospace and defense analyst, about that next. This is Open Interest.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we don't want to lose you, Emily, in all of this?
Stargate, put that name down in your books. What we're undergoing right now is sort of the largest infrastructure bill in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Welcome back to Open Interest. It's time now for top calls. Some of the analyst action in focus this morning. And first up, RBC Capital downgrading Domino's Pizza, saying it's at risk for slowing sales next year. Shares down a bit on that call. Next up, Sarepta, though, getting raised to a buy over at Oppenheimer. The biotech notching a major win yesterday after the FDA reversed course and recommended that some patients can resume taking the company's gene therapy. Remember that 2 weeks ago, regulators requested that the company pause all shipments of its drug after 3 deaths were linked to that treatment. Shares up 21% at the moment. And finally, we have Whirlpool getting cut to a sell over at Bank of America. The appliance maker slashed its full-year earnings forecast. Shares down about 9%. Meanwhile, let's turn our attention to the sky because Boeing reported negative free cash flow of $200 million. That is far better than the expected $1.8 billion. Let's discuss with Bank of America's senior aerospace and defense analyst, Ron Epstein. He has a buy rating on Boeing with a $260 price target. And Ron, we have to start with the cash burn because I think that was one of the big surprises from that earnings report, that it was so much less than expected.
Yeah, good morning, and thank you for having me. Boeing's cash burn was far less than we were expecting, and I think the consensus was expecting. Minus $200 million is almost break even in the quarter, and as you mentioned, the street was expecting minus almost $2 billion, right? So we were looking for about negative $1.5 billion. So the cash burn was great. Because it was almost negligible. It was driven by inventories coming down and some accounts payable. So, the working capital management seems to be going in the right direction. I think it is evidence that, the company is beginning to turn the corner. I do appreciate that the company has come out and said, hey, you know what? This is just a first step in a process. We got a ways to go. So, they're not taking a big victory lap here. They're doing the right thing and saying, hey, we got a lot to do. There was other really good highlights in the quarter. If you look at 737, they've suggested that they're going to work with the FAA this upcoming quarter to try to get approval to go to 42 per month. They're currently capped at 38 per month. They have certain metrics that they have to share with the FAA, and once the FAA is comfortable with that, they'll go to 42 per month. That's a step in the right direction. Ultimately, we're expecting them to be in the high 40s by the end of next year, and then ultimately get into somewhere in the mid 50s. Maybe 2 years down the road. It's going in the right direction. 787 deliveries in the quarter were good. They're saying 787 production rates are at almost 7 per month now. That's a great place to be. We're expecting that to get to 10, by sometime late next year. So the commercial business does seem to be tracking in the right direction. I mean, the only really negative thing that kind of came out was, Kelly Ortberg, told the folks that, the certification of the 737-7 and the -10, there are 2 variants that are kind of tied up in some engine icing certification issues that might slip into next year. I would imagine on their earnings call, they'll probably talk a little bit more about that, but that does seem manageable. And then even on the defense business, things seem to be tracking okay. And in their services business, things seem to be tracking okay. So, this is probably one of the best quarters Boeing's had in a long time. But like I said, the company doesn't seem to be taking a victory lap. It's just a step, in the right direction, and they have more steps to take.
It's a tough company to analyze, I guess, a stock especially, right, Ron? Because if they have an issue with the 737 or if they have an issue, God forbid, with the 787, that's not anything that Kelly Ortberg has done now. That typically comes from, could be years in the past, and that will crater the stock. How do you deal with that kind of uncertainty?
Well, I mean, it's a very good question. We deal with that all the time. As an example, what happened with Air India, I mean, there was a lot of fear that, maybe there was something wrong with the 78. Turns out, at least the preliminary investigation suggests that there's not. But that is one of the risks that you deal with a company like Boeing. Not specific to Boeing, but, they have, a couple products that are pretty high profile. However, We are confident, and we're seeing it, that the culture in the company is changing. We've written a lot about the culture of Boeing and how it needed to change, and it does seem they're taking steps in the right direction there. And if the culture moves in the right direction, everything else will follow. You know, if you asked me 15 years ago about this sort of stuff, I'd probably just be looking at the financials, but the culture matters so much, and the culture's going the right way.
Well, Ron, to that point on culture, let's talk about the workforce a little bit, because Boeing is facing another strike potentially next week. Remember, members of its Central U.S. Workers Union actually rejected a contract offer this past Sunday. How are you thinking about that as you read through these numbers?
Yeah, so, I mean, clearly it's a setback for their defense business. So it's the union in St. Louis and St. Charles, Missouri. Those are the machinists that work on, you know, largely fighter aircraft, tactical aircraft. There's about 3,000 members in that union. The commercial strike that happened earlier in the year, that was, actually last year, that was 30,000. So it's, it's an order of magnitude smaller. I do expect that it will get resolved. And I don't see it as a big setback. However, they do have to work through it. I would imagine it gets resolved in, a matter of weeks, not months. But we'll see, right? So it's something that has to get resolved. But I would imagine it would.
All right, Ron, really appreciate it. Ron Epstein there, Bank of America, senior aerospace and defense analyst, talking to us about Boeing with the $260 price target.
Yeah.
33%.
Boeing's shares up 33% year to date. It's actually one of this year's winners, which is amazing. You think about what a rough stretch they had in 2024, falling about 32% last year. But if these gains hold through the end of the year, they'll end out just about even.
All right. Cutting away all the losses. That's great. Coming up, Stellantis feels the tariff squeeze. It already had a rough first half, and it's predicting more than $1 billion in losses due to tariffs in the second half. That's next. This is Open Interest.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a check on what stocks are doing right now. We're still looking at gains, but they're slight on the S&P 500. 0.1% to 63.96, or just shy of 6,400. If we close higher today, it'll be the 7th consecutive day of record highs for the S&P 500. The NASDAQ gaining a little bit more here. We can see that NVIDIA is helping us out today, up more than 1% for a $4 trillion company. That really moves the needle. Meta is little changed, but down. We expect earnings from Meta, Microsoft, Amazon, and Apple all this week. UPS disappoints with a drop of 8%. Norfolk Southern making a deal for $72 billion, and investors don't like to see that kind of cash and equity spent necessarily. Boeing, we just talked about, actually down 2%, even though Ron Epstein is fairly positive on the stock. And then Stellantis, not moving by much, but the company warned that it expects the new higher tariff dynamic to hit it to the tune of $1.7 billion. That's in the second half after losing a couple billion in the first half. Let's get into the numbers right now with Bloomberg's autos reporter, Gabriella Coppola. Gabby, great to have you on the program. What do we know about this new tariff regime? Because on the one hand, it's going to hit them with 15% on everything they import to the U.S. from Europe. On the other hand, they don't have to pay 50% steel and aluminum taxes on those cars or any kind of fentanyl taxes or USMCA issues. They just get to bring it in with a clean 15%.
Hey, Matt, I think, Stellantis is clearly still feeling a lot of tariff pain, and it is going to hurt them when they import cars from Europe. But also, they're not scot-free when it comes to Mexico and Canada. And I think a really critical example of that is the new Jeep Cherokee. This is a midsize SUV that has been out of the market for 2 years. When you want to understand why Stellantis is struggling to get its mojo back as much as it is, it's because there's so many product gaps in the lineup. The Jeep Cherokee, the previous CEO, Carlos Tavares, decided to move it from Illinois to Mexico. Then Trump got elected and he slapped a big tariff on Mexico. So the new CEO, Antonio Filosa, this was his debut kind of appearance on Wall Street talking to investors. He was asked specifically, how are you going to make money on the Jeep Cherokee when you're facing these tariffs in Mexico? And he said, we are working on the platform, trying to find new ways to take out costs so that we can launch this vehicle. And I cannot stress how critical this vehicle is for them getting back to growth in the U.S., which is their most important market.
Yeah, it's interesting. Last year or the year before even, they killed the Hemi, which is like the most Mopar thing that you could possibly ever buy. There were no more Chryslers for sale, like at all, after the 300 was done, right? And when Tavares left, they took forever to replace the CEO. Why did they take so long in doing all of this stuff and bringing back the 6.4 liter V8?
Yeah, I think, I think that Wall Street and perhaps the public have underestimated the damage that Tavares did. I mean, he just produced these boffo profits for so long, and Wall Street thought he was a genius. Meanwhile, he was doing lots of short-term things that long-term hurt the company. And when you retire the Hemi engine, you don't just flip a switch tomorrow and bring it back. I mean, Tim Kuniskis, who had left the company briefly, he's back. He was the head of Ram. Now he's head of all brands in the U.S. So they're working very hard to bring back some of the stuff that their core American consumers love, bringing back the Hemi engine in the Ram truck. They had retired gas-powered Dodge muscle cars, the Dodge Charger and Challenger. Those are halo vehicles that just really define the brand. They have an electric one right now that's made in Canada that's selling, it's tough. EVs say it's expensive. EVs are not selling great. So it's just taking a long time for them to get these products back in the market. I do think that Trump's agenda in Washington of zeroing out fines for fuel economy, they talked about that. They do have more flexibility now to sell the cars that they make money on. But basically, it's very quick it's very fast. You can destroy your market share pretty quickly, and then it takes a long time to crawl back and get it back. And they're crawling, and I don't think people appreciate how long that takes.
Well, hopefully they get up and walk again soon. Gabriella Coppola talking about Stellantis. Thanks very much. We come back, the CEO of CalPERS, the largest public pension fund in the country, joins the show.
break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. CBS News has learned about a motive in last night's mass shooting at a New York City office building. Correspondent Michael Wallace.
New York City Mayor Eric Adams told CBS Mornings Shane Tamura of Las Vegas killed 3 people in the lobby of 345 Park Avenue and planned to go up to the NFL's corporate offices.
He took the wrong elevator bank.
He wound up on the 33rd floor office of Rudin Management, where he killed another person before taking his own life. Tamura had a note on him saying he suffered from CTE.
He appeared to have blamed the NFL for his injury.
Tamura never played in the NFL. He did play high school football. Michael Wallace, CBS News, New York.
Among his victims, a city police officer and a senior managing director at the financial firm Blackstone, who was also a mother of 2. The NFL says a league employee who was wounded is in stable condition. The mayor has ordered flags to fly at half staff at city buildings. A key player in the Jeffrey Epstein case is making a new bid to get out of prison. Correspondent Scott McFarlane has the details.
Jeffrey Epstein's co-conspirator, Ghislaine Maxwell, is urging the Supreme Court to step in and overturn her sex trafficking conviction on grounds she was unlawfully prosecuted.
Maxwell's attorney issued a statement calling President Trump a deal maker. He appealed to him to recognize that his client has been scapegoated for Epstein's crimes. Speaking in Scotland yesterday, the president once again called the controversy a hoax. The heat could set records in parts of the Northeast today. Meteorologist Craig Allen.
Temperatures are going to be 15 to 20 degrees above average for this time of year, and heat-related illnesses are going to increase significantly.
It's expected to hit 98 degrees in New York and Philly. It'll feel like 115 in some parts of the Mississippi Valley. The Pope has weighed in on artificial intelligence. Sabina Castelfranco reports from Rome.
At the Vatican's first Mass for Catholic influencers in St. Peter's Basilica this morning,
morning, Pope Leo called on the world to protect human dignity online as it faces the challenge of AI. The Pope told Catholic social media figures that nothing that comes from man and his creativity should be used to undermine the dignity of others.
Put some more pep in your step. It could do your entire body good. CBS's Michael George explains.
A study published in the American Journal of Preventive Medicine found that walking fast for just 15 minutes a day boosts heart efficiency, lowers body weight, and lowers your risk of death by 20%. Researchers say the benefits are even greater among low-income and black communities.
The Dow is down 44 points in early trading. This is CBS News. A new tally of the cost of natural disasters.
The LA wildfires and severe spring thunderstorms in the U.S. are just a few of the natural disasters that have contributed to the more than $131 billion in global losses for the first half of this year. That's according to a new report from the insurance company Munich Re, which says it's lower than last year at this time, but above long-term averages. The analysis indicates $80 billion of the loss total was covered by insurance. A Munich Re climate scientist says climate change plays an increasing role in natural disasters. Steve Kathan, CBS News.
An imprisoned music mogul also making a new bid for freedom. Lawyers for Sean Combs have asked a judge in New York to release him on $50 million bond while he awaits sentencing for this month's conviction on charges of transportation to engage in prostitution. He faces a maximum of 20 years sentencing October 3rd. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Live Radio, and that's where you'll find us. We have a lot of economic data coming out here. JOLTS numbers, consumer confidence. We're going to break it all down for you. Stephanie Gisha, senior economist at the Conference Board, to help us break down that consumer confidence data. Came in a little bit better than expected, which is good to see. We're also going to check out with Ira Jersey, Bloomberg Intelligence chief U.S. interest rate strategist, on some of this economic data and what he may hear from the Fed tomorrow when we get Fed Chairman Jay Powell speaking. And we're also going to get a sense from Lee Klaskow, Bloomberg Intelligence senior transport and logistics analyst, on this blockbuster deal in the world of the U.S. railroading business, Union Pacific, Norfolk Southern. That is big. Can it get approved? That's the big question. And we'll check in with Lee on that one. But right now, let's go to John Tucker and get a Bloomberg Business Flash. John.
All right, guys, the Bloomberg Business Flash being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. As you mentioned, Paul, the data, the June job openings, the hires and total separations, changing little from the month before. And then the consumer confidence as measured by the Conference Board, higher than expected. Of course, we're going to break those down a little more in just a few minutes. S&P 500 right now hovering around 6,400. Any push higher today in the close would result in yet another record. It would be the, let's see, sixth. It would be the seventh if we close higher. Novo Nordisk naming its head of international operations as the chief executive officer. This after the slumping weight loss drug sales led to a profit warning. That profit warning wiped $93 billion off the company's market cap. Right now, shares of Novo Nordisk, these are the ADRs, down 20%. And Sarepta Therapeutics shares rising sharply. U.S. regulators reversed course. They recommended that patients who can walk be allowed to take its gene therapy. Elevitas, once again, and shares of Sarepta Therapeutics, they're up close to 25%. United Health Group, that's one of the reasons why the Dow is down right now, tumbling after warning its annual profit would be hit harder than Wall Street was expecting. Shares right now of United Health Group, they are down just about 4%. And as you mentioned, shares of Norfolk Southern, they are lower. I'm not sure why. Union Pacific agreeing to acquire Norfolk Southern in a cash and stock transaction valued at $85 billion. It would be a rail giant, the industry's largest deal ever. And regulatory approval does remain a hurdle in any rail merger. Shares right now, Norfolk Southern, they are down 2.8%. Overall, the S&P 500 up 9, 63.99. The Dow Jones Industrial Average down 28 points, and the Nasdaq 100 79 points higher. That is up 0.3%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Isabel and Paul.
John Tucker, thank you so much. Isabel Lee joining us here on a busy, busy day. We've got news, we've got earnings, we've got big M&A deals, a lot going on in the marketplace, and plus economic data as well.
Definitely. It can set the tone for the rest of the year in terms of eco data and markets data. Tomorrow is going to be exciting. 4 of the 7, starting tomorrow, 4 of the 7 of the Magnificent 7 will start reporting.
Okay, all right, we'll pay attention to all that. We've got some economic data that came out today. Consumer confidence came in a little bit better than expected. Let's check in with Stephanie Gisha. She's a senior economist for the Conference Board. Stephanie, what did you make of the consumer confidence data that we saw today? I'm looking at the Consumer Confidence Board came in at 97.2. The consensus was 96, so a little bit better, and better than the revised 95.2 last month. So consumer confidence seems to be rebounding.
It's rebounded, but it's rebounded slightly. And to me, the main message is we have this kind of stabilization in consumer confidence after the roller coaster we saw in the past 9 months. So I think consumers are entering the summer on a kind of wait and mode, caution basis. And that, to me, that's the main message from these results.
Is there a certain level, like below 100 means something, above 100 means something? What's a normalized level for this consumer confidence data point?
No, so 100 doesn't mean anything. What we tend to focus are the changes, and also we compare to the past few years. So the current level at 97 is lower than what we've seen on average for the past 3 years. And so it's still kind of a solid confidence, but it's not as good as it was like a year ago or 2-3 years ago.
Which components of the report stood out to you? Like, how do you compare expectations and recent trends?
So expectation rebounded. So what it means is overall consumers are less pessimistic about the future. They are still in pessimism territory, but they are a bit less pessimistic. And this is true for the 3 components of the expectation index: income, jobs, and business condition. The assessment of the present situation was slightly down, and the component that is driving it down is the labor market differential. So, and this is something it's not new. We've seen this component declining for the past 7 months, and it means that, consumers are looking at what's happening on the labor market, and, if they know someone who's been looking for a job and they see it's more difficult, this is what is reflected in our index.
Stephanie, thanks so much for joining us. Appreciate your thoughts here. Stephanie Gisha, senior economist at the Conference Board, breaking down some of the consumer confidence data. Came in a little bit better than expected, but still, as Stephanie was mentioning, below where it's been over the last several years. So again, the market, consumers dealing with some of the uncertainties around some of this tariff information, which continues to unfold on a daily basis, it seems like. So we're looking at the markets here. We got red and green on the tape. Let's take a look at some of the stocks that are moving today. I'm Paul Sweeney along with Isabel Lee, and we're joined by Bloomberg's Nora Melinda. Nora, what are you looking at today?
Well, there's a few things I've got my eyes on. All of them are actually in the red today. I've got shares of Novo Nordisk, and of course, we're looking at the ADRs here. That's ticker NVO. We're seeing the company down as much as 22% today, and that is the most since 1987. So this is a really big slump here that we're seeing. But this is after the company slashed its financial forecast. Essentially, it's going to be predicting that this year's sales will grow 8 to 14%, and that was against what it had previously forecast of 21 and 24, excuse me, there. So that's definitely a big difference here, and you're starting to see the stock really taking a beating here in trading today and a few of its peers. But they also did name a new head of international operations as the CEO here. So that's also something that we already knew they were going to be naming a new CEO, but we're just finding out who it is today.
To see a company of this size have that kind of a change in forecast. I've been doing this for 35 years. You don't see that very often.
Absolutely.
So I guess that explains the big decline in the stock. Is that just a huge bad who's ever in charge of forecasting sales? I don't know. That's not a good one.
No, it seems like it was a bit far off here. So you're seeing the street really just trying to analyze what's going on here. But I'm also looking at another name that's in the healthcare space, and that's United Health Group. And we are looking at shares that are lower as well, falling as much as about 7% here. That's the most and lowest intraday performance since May. But we are seeing shares tumbling after the company warned its annual profit would be hit harder than Wall Street was expecting. This, of course, is the latest in a series of disappointments that we've been seeing from the insurer, which was once really renowned for its reliable growth and predictability. So lots going on here in the healthcare space.
I don't know. I mean, this is a big name, and it's down 46% this year. I mean, it just seems like every day this thing is weighing.
They're just getting hit and hit and hit. I mean, when you look at the performance here, it's just really interesting as we're thinking about right now. Everyone's really worried about forecasts right now. We're in a period of uncertainty. So when you see some big healthcare names like this is very alarming for a lot of investors here. But I did want to take a look at a name, Royal Caribbean here.
Good.
Had to keep it a little bit interesting. We're seeing shares down as well here. This is after the cruise operator forecast adjusted EPS for the third quarter that fell short of analyst estimates. We're hearing different people on the street, particularly Jeffrey, saying that they expect management to address the longer-term outlook for 2026 and beyond, but they see that this is more critical to the long-term earnings cadence here.
Have you ever been on a cruise, Isabel?
No, but that's been one of my goals. Have you been, Nora?
I'll actually be going on a Royal Caribbean cruise in December to the Bahamas. It'll be my second one. I only had done Carnival, but
are they different?
In terms of
just the experience,
the vibe. I've been told that Royal Caribbean, can be less children allegedly.
You can make a reporting trip out of it.
And what do you have against children?
No, yeah, right. Maybe I need to unpack that.
Yes, exactly.
No, but it should be good. But I think it's interesting because a lot of people think about these as being claustrophobic situations. So we'll just have to see how I fare for those few days.
So yeah, I don't know.
Well,
John, have you been?
Nora doesn't like children.
That's the takeaway. That's what we're taking from this.
We need Charlie Pellet. He's our cruise correspondent. All right, Nora, thank you so much. We appreciate that. Nora Melinda, covering all the equity markets and the cruise industry for Bloomberg. Get the latest news. I'm sorry, we can do that again. Coming up, we're going to have some more stuff coming up from Nora later on in the show. But we're just talking about these markets here, Isabel. A lot of tech earnings coming up here.
Definitely a lot of tech earnings. It's really going to be amazing. So this week, we're going to see $24 trillion of market cap reporting, 4 of 6 of the S&P 500 reporting, Microsoft, Apple, Amazon, Meta, and those companies alone contribute $11 trillion in market cap. And for context, last week, we saw overall $11 trillion in market cap reporting. But generally, these companies have been beating forecasts. Profits are up around 5.5%. 4.5% rather, from this time a year ago. So it's really going to be exciting to see. I feel like it's not enough to beat these days. You have to really impress and blow past expectations.
Yeah, and looking at a market that the S&P 500 index trading at about 22 times, maybe 22 and a half times, the earnings growth has to be there because I think the Federal Reserve, if you look at the work function, the market's only predicting maybe a couple of rate cuts this year. That's it.
Work function is the bane of my existence. I find it tough to read, but I feel like over the years I will get better. But speaking of the Fed, We also are going to see a lot of eco data, and now we see the S&P 500 eking out slight gains. And a fun fact, if we close higher today, this will be the longest stretch since at least 2021. So really, a lot of bulls out there, from UBS to other banks. They're just really maintaining their bullish outlook and saying if they see any pullback, it's a dip buying opportunity.
All right, so we heard from Norma Linda with the Stock Movers, and for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. S&P 500, as Norma was saying, just eking out a gain, up 8 points. The Dow's down 21. The Nasdaq's up 43 points. That's 0.2%. So a lot of red and green out there on the screen. Tom Keen's VIX solidly below 15. That is a quiescent reading of equity volatility expectations. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. We're being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. After setting an all-time high in 6 straight days, the S&P 500 may be on course for another record close. Right now, it is up 7 points. It's up 0.1%, 63.96. So we're hovering around 6,400 there. Anything in the green today would be a record close. Dow Jones Industrial Average, 34 points lower right now, and you can chalk that up in part to a United Health Group. The NASDAQ 100 is 62 points higher. That is up 0.3%. United Health Group dropping right now. Those shares down about 4% after reporting a profit for the spring that fell short of analyst expectations. They also had a forecast for profit over all of this year that investors did find disappointing. Consumer products giant Procter & Gamble offering an annual earnings outlook that's below analyst projections. They also said they're going to raise prices on about a quarter of its products in the U.S., in part because of higher costs from the tariffs. I'm trying to think of the number of P&G products in my house. It's just like everything.
I feel like we just don't know it, but it's definitely P&G.
In Union Pacific, of course, this is the big deal. This would be the biggest deal of the year so far, as well as certainly ever in the industry. Union Pacific wanting to buy Norfolk Southern in an $85 billion deal. Norfolk Southern, those shares are down 2.6%. You got to ask the question, what's going to happen with the other rail companies? So anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Paul.
Hi, John Tucker. Thank you so much. We appreciate that. Isabel Lee, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. So go to youtube.com and search Bloomberg Live Radio, and that's where you'll find us. Lots of eco data this week. ECO Go is the function on the Bloomberg terminal. It's just blowing up. There's so much stuff here. We had JOLTS numbers came in a little bit lower than expected. Consumer confidence a little bit better. But of course, the big ones I think are later on this week. We're going to get some inflation, core PCE. We're going to get how the change in non-farm payrolls and all that kind of stuff. How's the bond market reacting here? We got yields coming in a little bit today. Let's check in with Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. Ira, how are you kind of prioritizing the eco data that we have received and will continue to get this week from the U.S. government?
Yeah, it's interesting because the Federal Reserve meeting is, of course, tomorrow afternoon.
Yep.
We'll get the announcement. It started this morning. So I think the data later this week will kind of either confirm or suggest that there should have been a change in some of the in maybe the Fed's policies, right? If we get a very low and weak employment situation report on Friday, everyone's going to say, oh, the Fed should have cut already and get ready for a cut in September. I think in this situation, you know, the focus of the bond market right now is on tomorrow and what may happen tomorrow. And not only do we get the Fed tomorrow, we also get how the government is going to fund the $1 trillion of marketable borrowing that it said yesterday that it's going to need for the current quarter. So that comes out at 8:30 in the morning. So you weren't kidding. There's a lot of economic data, but there's also a lot of other potentially market-moving data for the bond market as well.
How do soft core inflation and strong jobs data affect the Fed's dual mandate? I'm thinking, like, could labor market resilience delay the cut even if inflation moderates?
Yeah, it is, and I think that's one of the big things that's keeping the Federal Reserve from being even more dovish. And you know, when you look at a lot of the data, yes, things are slowing down, but it's not terrible. But if we have plus 100,000 or 150,000 again payrolls, that has to give some comfort to the Federal Reserve that there's not an urgency to be cutting interest rates. The issue is that there is a bit of a difference, or has been in the spring, a bit of a difference between private and public payrolls, because you had private payrolls, for example, last month at only growing at 74,000. So if that continues to fall, I think that the FOMC members are going to suggest that, hey, local governments aren't going to be keeping up, and they shouldn't be the driver of growth and economic activity in the country. So if you have private payrolls continuing to moderate, then that will concern them. But it's also the wage side of things, right? When you look at wages and how wages are growing, those have slowed a bit, but have stabilized at reasonably decent levels, 4-ish% year on year in terms of wage growth. So as long as that wage growth number kind of hovers there, that's fine. But if that starts to moderate further too, that will concern the Fed. And we got the JOLTS data just earlier, just a couple of minutes ago. I was looking at that actually before we went on air. And one of the things that you look at in the JOLTS data is the quits rate. And the quits rate has continued to be pretty modest here compared to where it was a couple of months ago, in large part because people aren't getting wages for switching jobs. So that's a sign that the economy is not running as hot as it had been, a year or two ago, for sure.
So, Ira, 10-year Treasury, we're coming in about 5 basis points today, sitting here at 4.35%. Where do you think the 10-year ends this year?
Yeah, so we have the 10-year ending just a little tiny bit below 4%, basically a little bit of a rally, and because we do think that the economy is going to be slowing a little bit quicker toward the end of the year, and that the market is going to be pricing for, if not a recession, then certainly something similar to a recession in 2026, where the Federal Reserve will be cutting interest rates quite aggressively. So we have 2-year yields going down much faster than 10-year yields, but 10-year yields still rallying another 35-40 basis points from here.
All right, Ira, thank you so much. Appreciate that. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, safely ensconced down in our Princeton, New Jersey offices here. Looking at the markets, red and green on the screen here. There's certainly plenty of things for this market to digest in terms of the economic data we were just mentioning with Ira. Lots of earnings. We get some big tech numbers from some of the big tech companies coming up in the next several days. Certainly have an impact on this market. But let's see where we can get a reset here as we look forward to the end of this year. Olalu Aganga joins us, U.S. Chief Investment Officer for Mercer. Olalu, thanks so much for joining us here. Pretty solid first half of the year. Earnings seem to be, I guess, okay to good. How are you thinking about risk assets at this stage of the year?
So it's funny you said pretty solid start of the year, because just a few months ago, and I know we all remember this, when we had the drawdown, we had the VIX north of 50, and now it's 15. So as we think about the rest of the year, it's very much in line with how we started. We knew there was going to be a lot of noise. There was a lot of uncertainty around tariffs, and that uncertainty caused volatility in the markets. But for us, it didn't change the sense of direction. We'd always believed in diversification with regards to our equity holdings, so a lot more geographic exposure outside of the U.S. as well. So we have that. This morning, the IMF really raised the growth forecasts. So the impact of the tariffs that had been an overhang for some time has been dissipating with a lot of the trade deals coming into place. So it's actually very stable, and we're just really waiting to see how the Fed unfolds in these FOMC decisions.
When you say diversification, I'm curious where you see new havens today, and how is that different versus 5 years ago?
5 years ago, goodness, when were rates? The rate environment, exactly. The rate environment has swung so dramatically. On one hand, it's a little challenging if you think of rates as the bellwether clearly for mortgages, and where a lot of Americans have their assets is in their homes, for sure. So rates, 30-year mortgage rates north of 6 is pretty tough. However, with rates where they are, it really does bring fixed income and rate-like products back in effect. So yield, income, coupon, having the cash on hand has been incredibly appealing. So you don't need to take as much risk to be able to get the yield in portfolios. So the bonds are back today theme has really been key.
So stocks doing well, bonds doing fairly well. I can get my high yield indexes north of 5% year to date. How about alternatives, Olalu? How do you talk to your clients about alternatives? It seems like there's so many options for investors to get invested in alternative investment space, hedge funds, private equity, private credit. How do you think about that?
So when we start going through the alternative space, everything is around what role is it playing in the portfolio. So hedge funds, for example, we tend to talk to clients from the perspective of looking for uncorrelated assets. So if bonds go down, equities go down, and the correlation between equities and bonds, that diversification has been breaking down over time. So we've seen an increase in hedge fund allocations across the portfolio. I think some of the data has been supporting that as well. So uncorrelated assets has been playing a role, which is great. Steady risers. We tend to fund that from fixed income. And then as we think of either private equity or private credit, it really is the same type of risk underlying it. So it's the company, but what you do have is the illiquidity premium, maybe not as much transparency on the company data. So there is a lot more focus on the due diligence of those companies and making sure that those investments, and more importantly, the time horizon, because you need that for it to pay off, is suitable for the client. So balancing the time horizon, the illiquidity, and what role you want it to play in the portfolio.
Just got a red headline crossing the Bloomberg terminal. J.P. Morgan nears deal to take over Apple's credit card. That's according to the Wall Street Journal. We'll have more reporting on that coming up.
And Ulalo, you mentioned that it all depends on the Fed tomorrow. So how do you think the Fed will balance rising tariff-related inflation risks against really a weakening labor demand at the July FOMC meeting? Can they hold much longer, or will they be forced to act if trade-related inflation really creeps up?
Well, at Mercer, we have a view that we'll see maybe around we're in July, so 2 rate cuts this year. We do think the Fed will hold steady tomorrow. They have been very, very transparent in their signaling. We'd be surprised if they cut, maybe they will, but we actually think they'll hold steady tomorrow. But we think maybe in September, we will likely see a rate cut, given the fact that inflation has been moderated. The tariff announcement hasn't been as extreme as maybe some had thought originally. So it is holding steady. We do think there'll be a couple of rate cuts this year.
We got just about 30 seconds left, Alana. It looks like, Alana, we had the one big beautiful bill. Is that a net positive for this market, do you think?
The one big, beautiful bill has a lot of implications. Some are good with regards to tax cuts, and we see those tax cuts playing out this year. The spending cuts will be a little bit back-end loaded. However, there are some direct impacts to some of the clients, frankly, that we have, especially around cuts to Medicaid that affect healthcare systems and hospitals, which are clients that we have. So those types of aspects within the one big, beautiful bill could have an impact on uncompensated care for healthcare institutions, which means their costs could potentially rise. And the conversations that we're having with them is, if they have higher costs and operating needs, do they have to start looking at the investment portfolio? So there are positives around the tax cuts, which are front-end loaded, but then the spending cuts, we have to see how they play out. Net, though, the effect of the bill, we do think would add to the deficit. So that's one area that we are watching as well.
Okay, thank you so much, Olalu. We really appreciate getting some of your time. Olalu Aganga, she is the U.S. Chief Investment Officer for Mercer, joining us there. Coming up, we're going to check in with Lee Klaskow. He covers all the transport stocks, including the railroads, for Bloomberg Intelligence. Again, the blockbuster news in the world of U.S. and North American railroading. Union Pacific agreeing to buy Norfolk Southern, which would create the transatlantic railroad. We don't have a transatlantic railroad in this country. If this deal goes through, we will, but a lot of regulatory hurdles to overcome. We'll check in with Lee Klaskow coming up. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The S&P 500 poised to notch its 7th consecutive record, the longest such streak since 2021. It's paired some of the earlier gains. Right now up just 5 points, 63.95 on the index. Novo Nordisk falling by a record. The Danish drug maker named its head of international operations as the new CEO after slumping weight loss drug sales led to a profit warning. This is kind of a surprise choice for CEO, and it disappointed investors. They were looking for a high-profile outsider to lead a challenge to companies like Eli Lilly, which has been pulling ahead of Novo in the obesity drug market. And the ADRs of Novo Nordisk right now 21% lower. More on that story you mentioned before, Paul. JP Morgan Chase in advanced talk to take over Apple's credit card program. This according to the Wall Street Journal. They would replace Goldman Sachs as the card partner. The agreement, any agreement, would be one of the biggest credit card deals ever. Right now, again, the S&P 500 up 6 points. The Dow down 99 points. NASDAQ 100 78 points higher. That is up 0.3%. You know, both Isabel and I were reading this story at the same time, unbeknownst to each other. Private equity-owned companies driving an increase in defaults. According to Moody's ratings, in the 3 months through June 21st, companies defaulted on more than $27 billion of debt. And they say credit conditions deteriorated in the wake of the tariff announcements. So take that for what it's worth. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Isabel and Paul.
All right, John Tucker, thank you so much. We appreciate that. Isabel Lee, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. One of my very first jobs on Wall Street back in the late 80s, I was a research assistant in the equity research department of Payne Weber, covering the railroad and trucking industry. So I love the railroads, and today's a big, big deal. Union Pacific agrees to acquire Norfolk Southern for $72 billion. Now, the per share, it's cash and stock, works out to like $320. Yet Norfolk Southern is trading at a 13% discount, $279 is where it's trading today. It's actually down $7 today. I don't know what's going on out there. I'm not doing this stuff for a living anymore. But Lee Klaskow is. He's a senior transport, logistics, and shipping analyst for Bloomberg Intelligence. Lee, I look at the stock price of Norfolk Southern, and it tells me a hefty level of skepticism out there in the marketplace that this just mega deal can actually get done. How do you view it?
Yeah, I think the whole speculation before the deal was formally announced about a possible consolidation, really fueled shares of Norfolk Southern previously. And I think people are just trying to take maybe a breather right now because there are some execution risks, right? This deal is not going to close, if it does close, until early 2027. It needs regulatory approval, which is not an easy thing to do. There were certain rules that were created at the Surface Transportation Board to make it very difficult for large Class 1 rail mergers to happen. That was because at one time in the 80s and 90s, those sorts of deals resulted in terrible service. I think that the rails today were much more cognizant of service as it relates to integration. And I don't really think, either company, once assuming a merger does happen, are going scorched earth in terms of, what they're going to do to their networks. They mentioned on the call that they had earlier today that they're really not going to lay off any, frontline workers. Most of the probably layoffs are going to happen, in the offices. So, that would just mean that services would prevail. And one of the reasons why they are doing this, from an outsider looking in, it does make complete sense. You're going to reduce interchanges. They mentioned on their call this morning that between the two of them, they interchange around 1 million carloads a day. And if they're just able to, if that carload is able to be on the same network, it's not only going to improve network fluidity, it'll actually lower the railroads, their costs. Let's hope they pass on some of that cost savings to their shippers. I think that's what shippers might be concerned about. And it'll provide probably a better service product that they can go out and compete against other modes such as trucks. And that's also a good thing because from an environmental standpoint, railroads are less fuel efficient. Trucking kind of deals with turnover issues and trucker availability issues. Right now that's not an issue, but at times it can be. And so it is definitely a very interesting deal. It will create the first transcontinental railroad, but they do have their work cut out for them to get that regulatory approval.
So the deal is worth $85 billion. How do they plan to make money back? What are the financial wins, so to speak, to justify that hefty price tag?
Yeah, they laid out $2.75 billion in synergies. About 1.75 of that 2.75 is going to be from revenue. So what they're saying is that we can probably get more volume onto the network because it all of a sudden becomes a much more compelling service offering. And then about $1 billion in cost savings. And some of that, again, you don't need two CEOs, you don't need two CFOs, you don't need two corporate headquarters. They mentioned they are going to have their headquarters in Omaha, where Union Pacific is located, and keep I think they worded a major presence in Atlanta, where Norfolk is currently. But obviously they're not going to need as much space as they once have. And then there's technology benefits, so you're only investing, money in technology once, not twice, to get those productivity improvements. So I think those are the major aspects of it. And, they mentioned that, they could be, EPS accretive after year two.
Lee, he mentioned a lot of regulatory agencies are going to weigh in here on this deal. I also think President Trump is likely to weigh in. Do we know anything about how he might view this deal or just consolidation in general? What's the view as to the Trump administration?
I mean, we don't. The language that management noted on the call is like they wouldn't have moved forward with this transaction if they felt that it was impossible to get regulatory approval. So whether that means they were talking to the administration, whether that means they were talking to the STB or the DOJ or everybody in between, that's kind of, if you read between the lines, is what they were saying. The fact that they're not going to lay off any union folks is probably a net positive for President Donald Trump to say, this is okay with me. So there's a lot of unknowns still. And again, this is going to take a long time. So we have a deal. It has to get Surface Transportation Board approval, which won't happen at least for a year and a half.
Could this spark more railroad mergers in the U.S.? And if it goes through, what will shipping look like in 5 to 10 years? You said absolutely. Please elaborate.
Yeah. So the other railroads in the U.S. are Burlington Northern, which is owned by Berkshire Hathaway. They may make their own bid for Norfolk Southern or decide, we're just going to go after CSX. Because if they do not merge, then they're going to be at a competitive disadvantage. Why would you want to send your freight across two railroads when you can send it across one? So it just would make sense. And if there is regulatory appetite for this kind of a transaction, you could see a Berkshire Hathaway and CSX coming. And if their competitors were able to get a deal, there's no reason why you wouldn't get a deal done between the two. A lot of ifs and buts and candies and nuts, but we'll see what happens.
For an old real estate analyst like myself, today's a big day. I got to speak to two of my favorite railroad analysts on Wall Street. First, Tony Hatch this morning, and now Lee Klaskow, senior transport, logistics, and shipping analyst for Bloomberg Intelligence. Again, the big M&A trade of the year so far, and certainly the biggest one. Well, firstly, one I never thought I'd see. A transatlantic, a transcontinental railroad. Union Pacific agrees to acquire Norfolk Southern, $72 billion. That's about $320 a share. That's in cash and stock. Would create North America or the U.S.'s first transcontinental railroad. That's a pretty cool thing. Looking at the market here, we've kind of got a mixed screen. The S&P 500's unched. The Dow's down 135, and the NASDAQ is up 27 points, so not a lot of movement there. We got a lot of earnings this week.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Looking at Spotify here, Elizabeth, the stock's down almost 10% here, so some earnings were a little bit disappointing, I guess. I mean, holy cow, because this stock had been just ripping. Because that's how you kids consume music, right?
It is how I consume. I know some of my peers do Apple or some other, but I just go straight to Spotify. But they really saw a huge miss in estimates for the second quarter.
Stock down almost 10%. All right, let's check in with the expert here. I got a million media questions here. So we go to Geetha Raghunathan. She is a U.S. media analyst for Bloomberg Intelligence. Geetha, this stock, Spotify, that had been just a star performer. What happened here today?
Hey, Paul. So, yeah, they did miss on a few of the financial metrics today. So their subscriber growth actually was pretty strong. Their active account users were pretty strong. Really, the problem came in terms of both revenue, which, again, kind of expected, but I think the magnitude was a little bit more than what analysts were expecting. So this is, remember, Spotify is a company that reports in euros. And with the weakening US dollar, they had a lot of those FX related headwinds. And then you talked about the run up in their stock price. Unfortunately, they're a victim of their own success because, with share-based compensation, they had to pay higher payroll taxes because of that increase in their share price. And that is what actually weighed on their operating income. And so if you kind of look at it optically, it looks like a little bit of a disappointing quarter. But, if you just dig a little bit deeper, look at the fundamentals, they're stronger than ever, Paul.
Yeah, you wrote that disappointing financial results are short-term noise that shouldn't overshadow the tailwinds, like strong premium subscriber and monthly active user. I'm thinking, where does efficiency come from when scale is no longer the answer? Because you think about Spotify and Paramount Plus, they're just really massive companies now.
Oh, absolutely. And the thing with Spotify is they are very much like how Netflix has dominated the whole video streaming story. Spotify is the clear winner in audio streaming. So they have a 35% share of the market, both globally as well as, in the United States. And they have these stated goals. So right now they're at 700 active users, roughly 300 million subscribers. And you kind of look at the entire internet space. I would say that this is one of the stories that has the greatest user growth runway potential out there, because what we're kind of looking at ultimately in terms of a total addressable market for subscriptions is about 1 billion subscriptions. And again, Spotify has a long way to go. We're only at about 300 million. And then again, you're looking at active account users. We're looking at upwards of about 2 billion. So there's just a lot of upside, and scale will help them eventually when it comes to those efficiencies. We're already seeing that kind of play out with their gross margin story. Again, we're seeing a little bit of margin volatility right now, and I think that is kind of overshadowing their stronger fundamentals. But that's just because of, some investments that they're undertaking with their product. Again, we think that'll clear out over the next few quarters.
All right, Geetha, let's go back into my wheelhouse, some older media, if you will. Skydance finally got approval to buy Paramount, or as we referred to as Viacom back in the day. What is Skydance going to do here? What can they do? What do you think the future is of Paramount going forward?
I don't know, Paul. I think that's just the toughest question ever. Well, the one thing that we do know, however, is that the deal is definitely got all the okays after that settlement with President Trump. It's going to close on August 7th, but really the go-forward strategy, Paul, at this point is anybody's guess. So we know that they have a bunch of cable networks, think MTV or Comedy, Comedy Central, all of those, BET, which are really, really underperforming. It's more than 55 to 60% of Paramount's revenue comes in from the TV networks. We're seeing huge declines in advertising, or like 15% declines in advertising. We're seeing huge declines in affiliate revenue, something like 10, 11, 12%. So obviously this is very, very secularly challenged. So one of the things that, I think analysts and investors have kind of been thinking is, are they just going to get rid of the linear TV business altogether? Skydance, as you very well know, is really a film studio business. That is their bread and butter. I'm not so sure they want to keep holding on to the TV networks. But again, nothing is known at this point. So we really have to kind of wait and see what their go-forward strategy is.
All right. So we know some of the big media companies, and most notably, I guess, Comcast, talking about splitting up their companies. We've seen plans from a couple of those companies. Where are we in spinning out the cable networks or splitting up the companies and all that kind of stuff?
So Comcast's spin-off of its cable networks is happening a little bit later this year. They're calling it Versant. Yeah, again, that's supposed to close. Yeah, very catchy. Supposed to close by the end of 2025. The real big one that we're watching for, and I think that has really kind of piqued the whole media investor community interest, is the one from Warner Brothers Discovery. So you have the Global Networks business, which they, by the way, they just announced new names. They're calling that Discovery. They're calling the studio and streaming business Warner, and that's going to happen. Yeah, that's going to happen in the middle of 2026. And obviously, the big expectation is that there's going to be some, permutation and combination of all of these different cable networks with Versant or the Comcast spinoff, because of having the lowest debt, potentially becoming a consolidator. But again, it's playing out.
All right. So my generation, we put these companies together. Your generation, splitting them apart, and it just goes around, goes around. Geetha Raghunathan, thanks so much for joining us. Geetha, she is the media analyst for Bloomberg Intelligence, and she's one of the best on Wall Street, so we appreciate getting a few minutes of her time. Again, Spotify had some disappointing numbers, but she's saying, look through it. Look at the fundamentals, they're still pretty solid. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only digital audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence. Well, it starts right now.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a debt spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
A tough day in the healthcare world, and we're going to break it down with some smart folks here. We're going to start off Mikey Shaw. He's Bloomberg Intelligence Senior Pharma and Biotech Analyst. What's going on in Novo Nordisk? Stock down big. The Wegovy stuff, the obesity stuff, I guess it's not as strong as maybe investors had thought, so we'll get the latest there. Glenn Loso, Bloomberg Intelligence Senior Healthcare Analyst, can talk to us about United Healthcare. Another tough day for United Healthcare. That stock's down more than 40% this year alone. I don't understand that whole healthcare business, but maybe they can explain it to us. Ann Maletti, Head of Equity Investments and Chief Diversity Officer at Allspring Global Investments, one of the smartest investors out there. I've known her for 30 years. She's going to discuss her outlook on the market, and that's always fun. Brian Egger, Bloomberg Intelligence Senior Gaming and Lodging Analyst, talk about Royal Caribbean. They're launching ships. They got some cost issues, so a little bit of a noise in their earnings result. We'll talk about the cruise business. We'll get Charlie Pellet to weigh in as well. He is our go-to cruise director there. Speaking of Charlie Pellet, let's go get a Bloomberg Business Flash right now.
Thank you very much, and eagerly awaiting that conversation. We have got the Dow lower right now with the S&P, NASDAQ, both gaining. S&P, truth be told, fluctuating between gains and losses. We'll call it little change right now, holding it to 63.89. We've got the Dow down 133 now, drop there of 0.3%. NASDAQ also little changed on the day, up 11 right now, up by just under 0.1%. Bottom line here, traders are awaiting economic data and corporate earnings, and of course that Fed decision tomorrow, 2 p.m. Wall Street time. Yes, the news conference, Jay Powell's news conference. You'll be listening for every word right here on Bloomberg Radio. The 10-year ahead of all of this, 4.35%, but the 2-year, 3.89%. Gold is up $12 the ounce, 33.27, up now by about 0.4%. And we've got West Texas Intermediate crude up 1.3%, 67.54 right now on WTI. So Wall Street's divided attention definitely shifts to the Fed decision tomorrow afternoon. Nisha Patel is fixed income portfolio manager at Parametric Portfolio Associates, and she was a guest this morning on surveillance.
I think 2 cuts are still plausible, and I'm thinking, look, we can be in a scenario of where we were end of 23. So end of 23, we had a sharp rally at the end of the year. Yep. We had softening economic data. We had a Fed pivot. And so, look, no one's expecting the Fed to do anything tomorrow.
Okay.
But the main story being, we haven't given it enough time, right? We haven't maybe given it enough time for any of the cracks to possibly show up.
Nisha Patel of Parametric Portfolio Associates. The day's single biggest deal, Union Pacific agreeing to acquire Norfolk Southern. We did hear from Arlie Klasko on that. Right now, we have got shares of both companies right now. Shares of Norfolk Southern, they are down by 3.5%. Union Pacific down by 3.8%. Briefly, one other big deal today, Baker Hughes buying industrial equipment maker Chart Industries for about $9.6 billion in cash. Right now, Baker down 1.4%. Shares of Chart Industries, GTLS on the ticker, up 15.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. As Charlie was just mentioning, a little bit of a red on the screen here. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Isabel Lee, and we're joined by Bloomberg's Denitsa Sakova. Denitsa, what are you looking at today in the market?
Let's start with one of the big gainers. Sarepta is seeing a big spike today. Of course, this comes after U.S. regulators reversed course and recommended that patients who can walk will be allowed the gene therapy Elevidys. Sarepta shares are up about 25%. The ticker is CRPT. 10 days ago, the FDA requested the company to pause all shipments. Of course, there were 3 deaths that were linked to the gene therapy. The company initially refused, then paused the shipments. This caused a massive sell-off in the stock. The FDA move today comes after pressure from patient advocacy groups who argued that families deserve the treatment. That said, this is not necessarily green light going forward. RBC Capital Markets says the move takes the edge off solvency, but won't eliminate the challenges for the company. And if you look at the stock price, that's clearly reflected. The stock price is down more than 80% year to date.
All right.
What about UPS? That's also seeing in the red. I think shares are down almost 10%.
Yes, if you year to date, the company is down 24%. Today, another difficult day. The parcel carrier declined to provide full year revenue or operating profit guidance, and it's coming off macroeconomic uncertainty. The ticker is, of course, UPS. This underscores challenges for the courier's effort to reconfigure its network. We know it's been reducing headcounts. It's been kind of moving towards smaller volumes, closing, consolidating facilities. And all of that so far is not really working. There is, of course, consumer pressure. That's one thing the CEO said that consumers are trading down in the face of tariffs. They're also struggling to recapture that big volume they had during the pandemic. Obviously, everyone was home, everyone was shopping. It's no longer the same thing. So more pressure today after a pretty rough start of the year.
Whirlpool.
Another difficult one. We're talking about outlook. They slashed their 2025 outlook and the stock tumbled 11%. The ticker is WHR. The company is saying that the boost it expects from making the majority of its appliances in the US is yet to materialize. They said about 80% of their production is in the US, which obviously with the tariffs should favor the company, but we're not seeing that. The company is down more than 20% year to date. One factor is that in anticipation of the tariffs, a lot of Asian makers have increased their export in North America, and that's created a historic oversupply. So a lot of pressure on the company.
I mean, this is a company that I think, as I said, they should really benefit from the tariffs here.
They should.
God, you buy this thing on the weakness. That would be interesting. Were I a trader. All right, Denitsa, thanks so much for joining us. Denitsa Sakova, she does all the stocks for us. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's talk a little healthcare here for the next couple segments. We got 2 really good analysts to join us here. His friends call him Mikey, and I'm his friend. I'm calling him Mikey. Michael Shaw, senior pharma biotech analyst at Bloomberg Intelligence. He's based in London. Mikey, you got to talk to me about what's going on with Novo Nordisk. I thought these obesity drugs were the bomb here. What's going on with their guidance? That was a huge miss for them.
Yeah, 2 pieces of news today. First is the guidance cut, so the second guidance cut of the year. So reported guidance now is calling for 7% sales growth, 6% operating profit growth after adjusting for currency, and that compares to 14 and 15% respectively previously. Now, a lot of that is related to the US market. They're still seeing headwinds from compound and GLP-1, which seems to be the main driver that's affecting Wegovy growth. And there's a lack of visibility here. So all of that creates uncertainty for investors and also kind of questions around not only 2025 numbers, but the exit rate into 26. So there's concerns about, mid to long-term growth, given how concentrated or how reliant, Novo is on Wegovy for growth. The other headwind is competition to Ozempic. So that's the GLP-1 for diabetes, and that's another, key growth driver for the company. Second piece of news, new CEO appointment. So they went with an internal candidate. I think the market was perhaps expecting them to go for an external candidate. So, perhaps a bit of disappointment there. But that said, he's been at the company. So this is Mike Dudster. He's been at the company since '92. He's been heading up international operations since 2016. And over that time, we've seen international operations sales double to around $18 billion. So, he's an internal hire. He's familiar with the company culture. I think it's a bit too early to write him off before he's even started. Now, his focus is going to be on gaining ground to Lilly in the obesity space, maintaining leadership in the diabetes space, and then improving execution. And that's something that's going to be key ahead of the CagriSema launch, as well as the launch for its oral GLP-1 in obesity. Particularly given, CagriSema perhaps isn't as differentiated as we had hoped for, and then the oral GLP-1 profile perhaps trails that of Lilly's.
In a call with journalists, though, the new CEO said he's planning to review the company's cost base without setting specific targets and metrics. So could this indicate that Novo is preparing for a period of slower growth after the initial surge in demand of especially the blockbuster Wegovy drug?
I think it'll be hard to slash R&D, to be honest. And they would need to, continue marketing, continue to do DTC in order to, in order to compete with Lilly. They're obviously heavily investing into CapEx at the moment, but there is probably some operating leverage in there, to provide some sort of relief. I mean, the company's got a margin of about 45%, which is at the top end for large pharma.
Hey, Mikey, is there any reason to believe that maybe the marketplace has been overestimating the size of this obesity drug market?
I think there's always a risk with an indication this size. When you look at the market potential, in the US alone, it's 140 million patients, which is the target population.
I think that's one-third of our population, man.
Yeah, there is a risk that, perhaps consensus did get ahead of itself. But the difficulty here is, you have, huge runway of patients. There's obviously limited supply. So it's difficult to know kind of, how quickly that supply can come on board. Now, Novo gives guidance around, their growth prospects, where they think sales, et cetera, are going to go, but they keep, they don't necessarily quantify, the cadence of supply and how quickly that's going to come online. So that kind of makes forecasting quite difficult. And obviously they don't want to give that information because it's competitive information, and they don't want, Lilly to know about it either. So.
Boy, back in my analyst days, I would have slammed at this management team because that guidance was brutal. They were nowhere close to hitting it, and their big reduction in the guidance. And we see the stock down 22% today, down 37% year to date, 52-week low. So they're paying the price for it. Mikey Shah, folks, he's one of the best healthcare pharma analysts in the city of London. Every institutional investor wants to talk to him. We appreciate getting a few minutes of his time. Mikey Shah, senior pharma biotech analyst, Bloomberg Intelligence, over there in our London studios. Let's stay with healthcare because it's not a whole lot better with this big insurance company, United Healthcare. That's one of the big ones in the marketplace. They had some disappointing results, took their guidance down a little bit. The stock's down 4.7% today, but it's down 47% year to date. It just seems like every week there's something on United Healthcare. So let's check in with Glenn Losov. He covers the stock and the industry for Bloomberg Intelligence. Glenn, what's going on with United Health? They really just can't seem to get out of their own way.
Yeah, so it's just not just United Healthcare, it's mainly managed care companies overall. in 2Q and in the first half of the year. The biggest thing is basically that the companies are facing much higher medical costs, which were not correctly priced in going into the year. And this may continue probably until the end of the year. So the new catalyst and the near-term catalyst that we see is basically the 2026 earnings growth view that may change the sentiment for the United and for the rest of the group.
I mean, United Healthcare, Eden Prairie, Minnesota, 400,000 employees. I had no idea it was that big.
Yeah.
Incredible.
And covering 50 million, providing coverage for 50 million Americans.
Including yours truly. There you go.
So does United expect cost pressures, especially medical utilization, to ease this year or in 2025?
So it's very difficult to say. So the company and the rest of the sector projects that the medical costs will continue to be elevated. So the question is if they can correctly price the next year costs. And all of the health insurance companies, including United, are indicating that medical cost acceleration will continue next year.
So what did they get wrong, or what did the industry get wrong this year?
They basically mispriced the demand for care, acuity.
Isn't that their job?
It is, but listen, everyone makes mistakes. Okay. The issue is that the company like United, when they misprice, it's a shock because it's unusual for United to do so.
But I feel like, so the key problem facing United is that Americans are simply using more healthcare, but at the same time, we have government programs really clamping down on who's eligible for really subsidized coverage and changing payment formulas. How do you square the two then? It seems like one is the surplus and the other one is the clamping down.
Well, the thing that you refer to will be more of an issue or a question mark for 2026. Right now, the medical cost acceleration, care utilization, higher costs of drugs, for example, higher need for behavioral care is what's driving sort of pressures in 2025. Those pressures may continue in 2026 on top of the big, beautiful bill overhang.
So how is the Trump administration impacting your part of the healthcare world, the insurance side?
Well, with the looking at the 2026, beginning in 2026, there are two things that are coming up. First thing is the marketplace, which is ACA exchanges. Subsidies for those for that market side will so the subsidies will end at the end of 2025. So less people will enroll in the membership and in marketplace, and for marketplace or for any insurance company, size is key to sort of generate profit. So obviously there's going to be some pressure on that. Longer term, Trump care, let's call it, is pushing or will push for work requirements, which will pressure Medicaid membership. So all of these things are an overhang for health insurance companies like United.
You can't. I mean, our investors, what are they? They're just dumping these things, right? You can't.
Well, right now investors are washing their hands, but the companies, including United, are trading at below the 2 standard deviations over the 10-year average, which is becoming more appealing, right? So at one, assuming that these companies can price next year's benefit correctly, and combining that with the very discounted valuations right now, there could be an upside.
All right. I tell you, that's just one business. I have no idea how the economics work. I just keep making my payments every 2 weeks, and hopefully it all works out. That's how I do it. Glenn Losov, thank you so much. We appreciate that. Glenn Losov, he's the senior healthcare analyst for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Broker Studio. Again, a tough day. Novo Nordisk stock down 20+%. United Healthcare off 4.5%. So in this marketplace, you disappoint on earnings, you're going to pay the price in a big way here. We got a lot more earnings coming up this week. We've got some tech companies, Amazon, Microsoft. You're going to in some big tech names, and that'll be important for this marketplace. S&P 500, it's off about 6 points here today. We're going to have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:20 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at lows of the session right now on the S&P 500 index. Stocks declining in this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. S&P lower, little changed as traders review economic data and corporate earnings ahead of the Fed decision tomorrow. 2 o'clock when it all comes down, 2:30, Jay Powell's news conference on Bloomberg Radio. S&P down 9 again. again underscoring low of the day, down 0.1%. The Dow down 179, down 0.4. And we've got NASDAQ lower by 36, drop there of 0.2%. 10-year, 4.34%. The 2-year yield, 3.89%. Gold up 0.4%, 33.27 the ounce. And West Texas Intermediate crude now at 67.51 a barrel, up by 1.2%. Consumer confidence increased in July after declining last month as concerns eased about the outlook for the broader economy and the labor market. Conference Board's gauge of confidence rose 2 points to 97.2. Stephanie Gishard is senior economist at the Conference Board. She was interviewed this morning right here on Bloomberg Intelligence.
It's rebounded, but it's rebounded slightly. And to me, the main message is we have this kind of stabilization in consumer confidence after the roller coaster we saw in the past 9 months.
You can hear more of the conversation with Stephanie Guichard of the Conference Board on the Bloomberg Intelligence podcast. You can download it wherever you get your podcasts. Recapping, S&P now lower by 0.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Isabel Lee, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. And we're streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Live Radio, and that's where you'll find us. I'm looking at the SPX, the S&P 500. About 40% of the companies have reported earnings so far. We got about 5% growth in sales, a little more than 7% growth in earnings. Not bad, a little bit slower than the first quarter, but still pretty solid. Is that enough, though, for this marketplace? Ann Maletti joins us, head of equity investments for Allspring Global Investments. And it looks like the earnings season's coming in okay, but again, at a 22 times earnings multiple for the S&P 500, you know, I guess you got to wonder, is that enough?
It's a great question, Paul. And I think if we would have gone back to January and said, is it enough versus expectations then, we would say no, but expectations have come down a lot since then. So companies, rightly so, brought down expectations a lot and seem to be, for the most part, coming in a little bit better than expectations. So when you look at these valuations, again, on a collective basis, they look high, but we're looking more underneath and finding companies that don't appear that expensive. And that's where there's some areas of attractiveness in the market to us.
You said that the tech sector is still providing a lot of fuel to the market, and AI has been one of the core theses among many of those. But how do you separate real earnings leverage from just really speculative multiple expansion, mainly in tech?
It's a great question. Look, we believe innovation is real, and it has been driving earnings in the tech sector, but it's really been in some concentrated areas. We think that's going to broaden out, not just within technology, but in other industries as well. Certainly, you can't ignore the free cash flow that's come from many of those companies, and that has helped pull the market up. But there's other things that we're looking at. For example, and Paul, I think this is more to your point as well. When I look at the broader S&P, we have 70% of the companies hitting a new 200-day or hitting their new 200-day high. That's, historically a good sign and means that, investors are not ignoring, a lot of the market and not focusing just on a concentrated few. They're starting to see that there is value in other places of the market. And so, again, that's where we're trying to pay attention to. And Isabella, those areas that we believe will produce good long-term free cash flow is the areas of the market we're interested in.
And I know we've talked about in the past small to mid-cap companies as an area where maybe you could find some real opportunities, some real value. How do you think about that part of the market, small to mid-cap?
Yeah, Paul, it's been a tough area for sure. And I think when I look at it, I think that mid-cap space, so kind of the Russell 2500 area, that is kind of a sweet spot here. Typically, these are companies with strong balance sheets, do have good free cash flow, solid management teams, and, usually have better than average growth. And again, those are typically good factors to say that, these companies can outperform and historically have. Those, by definition, are trading at discounts relative to some of their larger cap peers. And so I do think it's a sweet spot right now, especially if we see the trend in interest rates going lower. That's going to be a factor that's more favorable for those companies. And you can't ignore the trend in M&A. I know we see a very big one here today, but the mid-cap space is just ripe for opportunity in M&A as well.
With the markets at an all-time high, I feel like if the S&P, closes higher today, it'll be the longest such stretch since at least 2021. How much more volatility are you expecting, and how are you hedging?
Yeah, it's a great question. I don't think the volatility is over. We had 2 really strong years of 20% plus returns. And, we're in another year that has produced solid returns for investors. It's never, a smooth path. I think we're going to see some bumps along the road, and investors should be prepared for that. I do think some of those bumps can actually lead to a healthier path. So whether it's a pause or a little bit of a pullback, that actually can be healthy for markets overall. And so, again, what's going to cause that? Not sure, but we get news every day that seems to surprise investors. And so, again, when we're looking at equities, it's about risk versus reward. And I think that's, our theme is to stay active in equities, not to focus just on being passive. Think about where you really want to be and where the risk return is better, because there is clearly risk involved in investing at this stage of the market cycle.
And thanks so much for joining us. Always appreciate checking in with you. Anne Milady, she's head of equity investments. We're there at Allspring Global Investments. They're there in Milwaukee, Wisconsin. Let's go to the cruise business, the Charlie Pellet cruising business. Royal Caribbean reported some results. A little bit disappointing. The stock's off 5% here today, but it's up 45% year to date. That business remains so resilient. We check in with Brian Egger. He covers the cruise industry along with the gaming and the hotel businesses as well. Hey, Brian, what did we learn from Royal Caribbean today in the results?
To your point about maybe some disappointment coming out of the quarter, there was a little bit of an implied third quarter profit guidance reduction. But I think as we kind of sensed from the earnings call that ended recently, a lot of that was due to cost shifts in timing and the delayed delivery of a particular ship. So overall, the underlying demand in the business really remains quite strong. And I'm encouraged by the fact that they said there could even be some upside to this year's yield growth guidance if some of the recent strength in close-in bookings continues to accelerate.
Will higher prices for cruise continue, or is demand slowing down? What does the future look like for those companies?
Overall, it's been pretty strong. I mean, the looking ahead to 26, we're pretty much in line with the book position we want to be for this year. We've got a nice trajectory of increase in kind of a book position comparable to prior year levels at higher fares. So the pricing is there, and a lot of it is coming from close-in demand and from onboard and pre-cruise spending. So a lot of people are putting their money down before they take the cruise, and that's where a lot of the spending increases are coming from.
Brian, what's the industry? What's Royal Caribbean and its peers? What are they doing in terms of capacity? Are they still building ships, adding ships to the fleet? What's going on there?
It's still on balance a kind of a mid-single digit, 4 or 5% long-term capacity growth. It's even lower, closer to nil this year for Carnival. So overall, it's comparatively moderate. There is some new hardware coming online, and that very often does help yield growth. But from an historical perspective, it's pretty much been the norm.
How might broader factors or external factors like fuel price volatility or geopolitical tensions really compressing margins for the remainder of 2025? Are they doing some cost hedging, or are they trying to be flexible with operations?
Yeah, there's always a focus not only on cost efficiencies, but fuel efficiencies have increased a lot in recent years, and there is some built-in hedging programs for Royal Caribbean. I think looking at the geopolitical situation, obviously an uncertain world, but they seem to be faring okay. I think there was probably a little bit of for the industry overall, a pullback or a disruption in bookings right after the Liberation Day tariff announcements, but we have not seen any follow-on in any kind of weakness. So I think what we're seeing is overall pretty stable demand, notwithstanding some timing issues that specifically affected Royal Caribbean in the third quarter.
Brian, are there parts of the world that people are cruising more or cruising less? Is that one way to look at it?
I mean, the big cruise market, the largest, is North America and the Caribbean, but it's increasingly a global industry. Arguably, I'd say it's less penetrated in terms of the population penetration in places like Asia. So it's pretty broad-based. I mean, I think we're looking at an industry that is increasingly global, although obviously a big chunk of that is coming from Europe and North America.
The company said that trips for the remainder of this year and 2026 are booked at higher rates than prior years. Can you talk a little bit more about that?
Sure. So I think what we're generally seeing, the feedback from the company is not only in this quarter, but recent quarters, is bookings, booked load factor in line with comparable years at somewhat higher fares. And that's a formula, obviously, for yield improvement. They are expecting to see 3.5% to 4% yield growth in 2025. So that's obviously a nice pace of improvement. I mean, the key thing is whether or not this kind of increase in close-in bookings and onboard spending, if that continues.
Brian, real quick, switching gears on you. On the Strip in Vegas, how's the traffic there these days?
I think the sense is that traffic maybe in Vegas in the summer was a bit slower than it has been in prior summers, and there are some kind of comparison issues there. Overall, I mean, Vegas demand has been fairly resilient, as is true of most subsectors of leisure travel. We'll get more feedback from like MGM, for example, on their earnings call tomorrow night. But I think there was a sense that maybe the summer months, May, June, kind of going into July, maybe a little slower, but we'll get a little bit better sense of that when we hear from MGM. Actually, Caesars tonight, MGM tomorrow.
All right, awesome. Bellagio on the Strip. I got the Sweeney High Roller Suite always waiting for me. Brian Egger, he goes anywhere he wants in Vegas. Senior gaming and lodging analyst, Bloomberg Intelligence, joining us via Zoom. Coming up, George Ferguson, Bloomberg Intelligence, senior aerospace, defense, and airlines analyst. Boeing, JetBlue, they had some earnings out. Let's break it down. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. The stock rally stalling in the run-up to the Fed. The Dow, the S&P, NASDAQ, all declining right now. S&P 500 index trading very close to session lows, down 16 now, retreating from a record 63.73, down by about 0.3%. The Dow down 211 now, down 0.5%, while the NASDAQ Composite Index is down 66 for NASDAQ, a drop there of 0.3%. The Bloomberg Mag 7 Index ahead of earnings from Meta Platforms and Microsoft tomorrow, Apple and Amazon on Thursday. That index down by 0.6%. 10-year 4.35%, with the 2-year currently yielding 3.89%. Gold up $9 the ounce, up 0.3%, and West Texas Intermediate crude up 1.4%, 67.65 a barrel. Union Pacific makes it official. It has agreed to acquire Norfolk Southern in a cash and stock transaction valued at $85 billion, forming a transcontinental rail giant in what stands to be the industry's largest deal ever. Shares of both railroads are lower. Lee Klaskow is a senior logistics analyst with Bloomberg Intelligence.
You know, it does make complete sense. You're going to reduce interchanges. They mentioned on their call this morning that between the two of them, they interchange around 1 million carloads a day. And if they're just able to, if that carload is able to be on the same network, it's not only going to improve network fluidity, it'll actually lower the railroads, their costs.
Bloomberg's Lee Klaskow interviewed right here on Bloomberg Intelligence. Again, both railroads are lower right now. That deal, by the way, on track to close by early 2027. Union Pacific down 3.6%. Norfolk down now by 3.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pelleton, thank you so much. We appreciate that. Isabel Lee, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well, so check us out there. Aerospace, airlines, a lot of earnings going on in that part of the world. Boeing and JetBlue today. Let's check in with George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence, safely ensconced down there in Princeton, New Jersey. Hey, George, let's start with Boeing. I know, you know, for analysts, investors for Boeing, it's all about cash flow and free cash flow and stemming the free cash flow bleed here. How did the company do this quarter?
Yeah, I mean, so the free cash flow is still a little bit negative, not much. Cash from operations positive, a little bit, 200 million, I think it was roughly on 200 negative free cash flow, 200 positive in cash flow, I think roughly. So we're seeing an inflection point here in cash flow. So cash flow had been negative for the last, I think it was 6 quarters before this. And I think that's just a sign of they're getting more aircraft delivered. They're going to, you know, they've got a lot of inventory still. They'll pull off the shelf to build aircraft going forward to pull a bigger proportion of stuff off the shelf than they would during normal times, which should juice that cash flow up, you know, pretty well. So I think it's, you know, the turnaround is still is underway. It looks like it's, you know, well in, you know, in swing in the results we saw and the way, you know, company management commented on the end of the year. And so, you know, I think it was a pretty good results quarter for Boeing. Again, turnaround intact.
How are they addressing quality and safety issues, especially when it comes to the 737 MAX program?
Yeah, I mean, it's, you know, as Kelly Ortberg said, it's a process. I think just the sign of seeing increased deliveries is showing us that the quality improvement at Spirit, you know, has seen success. And they're talking about, you know, they're at 38 737s a month now. Kelly Ortberg says he's going to approach the FAA in a short period of time and work on the 42 737s a month. So again, he must have some level of confidence that his quality and his engineering is good in order to go further. It's not perfect. They've been slowed down a little bit in the certification of 737-10 and -7. They've pushed them into 2026. I think it's okay. It's not a big move. You we'd like to see them come faster because 737-10 is a large competitor to the Airbus A320, which is very successful, and one of the reasons they saw United place a big order with Airbus. But again, I think that you can't expect this stuff to go in a straight line, and the fact that they think 2026 is when they could get certification, it doesn't tell me anything's broke. It just tells me the process is nonlinear, and I think to be expected in aerospace.
All right. Also, JetBlue posted a smaller than expected loss here. What's going on with JetBlue and the airline business these days? Because I know the last quarter, boy, these airline companies are really reticent to give any kind of guidance.
Yeah, I mean, a lot of them have come back with guidance, in a lot of cases lower. The airline business right now is really counting on less capacity in the second half of 2025. And we'll see how that goes. Last time I looked at domestic capacity plans for 3Q, it's kind of about zero growth. I mean, I think they need to cut capacity in the marketplace. If you look at JetBlue's results, load factor fell by, I think it was around 300 basis points, down into the low 80s from mid 80s. And they held fares pretty much flat. Yields were kind of just up a little bit. So that just tells me that there's too much capacity in this market. They just can't fill airplanes at the right price. JetBlue has other problems, like, the geared turbofan keeps them from expanding. That means costs are ballooning on them. But I don't see how they'd want to expand right now. Because, again, what I see is a market that can't fill airplanes at the price that's going to keep them very profitable. And so someone's got to cut. And the question is who? The full service carriers are saying, hey, we got premium to subsidize us. We don't care. The low costs are going to have to. JetBlue will cut in 3Q, but every time they cut, their costs go higher per seat. So they're in a bit of a challenging position.
It does seem like the issues just compound for the companies in this space, from aircraft shortages, delivery delays, pilot shortages, wage inflation, labor negotiation, and so on. Are there differences in how Boeing and JetBlue addressing the issues, or is it really an industry-wide consensus and problem?
Well, I mean, if you talk to Boeing, everybody wants an airplane, right? And they're sold out on the 737 and 787 to the end of the decade. Everybody wants the newest. And I think what needs to happen is, again, the airlines are just putting too much capacity in the marketplace, especially in the U.S., and someone has to cry uncle and say, hey, we can't take the profitability at these levels. Park some airplanes, get them out of the business so they can right-size capacity. And I think nobody wants to do it. You have some competitors that are in a situation where some of them have already declared Chapter 11. It's like Spirit, and then refashioned themselves and got back out in the marketplace. But it's either someone's going to have to go away, or the market's going to have to get negative enough in profitability that people start to park airplanes. As we get into late end of this year, 4Q and 1Q, those are weak quarters for the U.S. airline industry. If something doesn't improve, if you've got a JetBlue that's barely positive in profitability in 2Q, without a change in this market, that's a strong negative. Near the end of the year, people will start to cut capacity and try to boost fares.
So, George, who does that? Is it one of the big three? I mean, JetBlue can't drive capacity in this industry. It's got to be one of the big three, right?
Yeah. Look, I don't think it's the big three are in a game of chicken with the low cost, right? Okay. They think that they've got pole position here and that they just keep capacity, and someone's going to fail on the low cost side because the low cost doesn't have this premium seating. They might be right? Right now, it looks like their profitability is hanging in there. The low-cost carriers are the ones taking it on the chin.
Yep, and we saw Southwest Airlines actually now kind of start charging for bags, and now you can do seat reservations and all this stuff.
Going premium.
Yep, they didn't do before, which was part of their cachet. One could argue their brand, but they're saying, heck, we need the revenue. George, thanks so much for joining us. We appreciate that. George Ferguson, senior aerospace, defense, and airlines analyst. If it flies, he knows what's going on there. I mean, he goes to all these cool air shows and climbs into new planes and stuff like that. And we pay him to do that. Somehow he's working that angle very well. So he's one of the best on Wall Street. We appreciate getting a few minutes of his time here. Looking at the market here, got a little bit of red on the screen here, kind of rolling over just a little bit. The S&P's off 12 points. The Dow's off 190 and the Nasdaq's off 50. So we'll keep an eye on that. It's about 0.25% for the Nasdaq. Yields pulling back. 10-year Treasury's off about 5 basis points. Let's call it 4.35%. Bitcoin for Tom, Upper East Side, 117,500. This is Bloomberg.
to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, Isabel Lee, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube. So head over to youtube.com, search Bloomberg Live Podcast, Bloomberg Live Radio. Either way will get you where you need to go. Red headline crossing the terminal as well. China says it agrees with the U.S. to extend tariff truce. So extensions are good.
Extensions are good. We have the Vice Minister of Commerce, Li Chenggang, telling reporters in Stockholm. I feel like there's been a ton of extensions.
Yes.
But we'll see how the markets are going to react to this. For now, shares across all indexes are down, Paul. Dow Jones is down by 0.4%, S&P and NASDAQ down by nearly 0.2%.
Yeah, looking at the Bloomberg Dollar Index, a little bit of a lift there, up about 0.25%, 1211, spot 01 on the Bloomberg Dollar Index. So, you think about it, deals have been, I guess, agreed upon with, most notably recently, I guess, Japan and then the European Union. And China truce will just extend this truce on the tariffs. Maybe both sides can continue to negotiate.
We also have this headline saying that they will continue close communication. So I guess there's that.
All right, that's good news. Well, talking is always better than not. Let's talk fintech here. I mean, for a lot of people, fintech is PayPal. It's one of the certain things, and we know it's a much bigger sector than that. Diksha Gera, she's a senior fintech and payments analyst for Bloomberg Intelligence, talking about PayPal. Diksha, PayPal, they raised their profit forecast as Venmo revenue jumps 20%. Talk to us about what's happening at PayPal. The stock is trading off about 9% today.
Yes, and that's the interesting bit, right? It's been past couple of quarters, Paul, and they've kind of been able to set this beat and raise cadence with the new management. So today it was an 8% adjusted EPS beat. The stock is still down about 10%. And if you've paid attention, I think the reason that people are citing around this is that the branded transactions were slightly slower sequentially. So that came in at around 5% growth versus 6% in the previous quarter. And what has happened there is that because of the tariff impact, some of the spend on Chinese-backed platforms has been slower. And PayPal's exposure to cross-border e-commerce has exposed that a little bit. The interesting part, though, is that that's still rounding errors. What people have really missed is that PayPal has started firing on all the monetization cylinders. It is basically Venmo revenue growth was up 20%. That has been the big question mark, and we can talk more about that. Their unbranded, they're saying it's bottoming out now, and all the unbranded transaction growth that we were missing out in the first quarter will start accelerating in the second half. And overall, if you see like all the metrics, transaction margin dollars, adjusted margins, operating metrics, all of them have a very decent beat in this quarter.
Let's focus a bit on Venmo. Paul and I were talking about this earlier. We are both users, and Venmo revenue, for example, increased 20% in the quarter. Are they aiming for more of that? Like, how much are they banking on Venmo and its growth? Because among my friends, actually, it is really widely used.
Yes, and see, that's the interesting part, because when this new management came on board, that was the biggest question, like, can they monetize Venmo? And it was one of those most undervalued or underappreciated asset in a way, right? PayPal has done a lot in the last several quarters around Venmo monetization. So the one part was obviously the P2P part was the biggest chunk, right? When you're transferring money to your friends and family, that isn't really the most revenue generating part of Venmo. But what they've done is they have used that strength of Venmo with all the college graduates, with even students, right? And that's like their prized client base that Venmo is really kind of known for. All of that has been extended into money-making avenues like Venmo debit card, like a credit option, buy now, pay later being launched on Venmo. Now, Pay with Venmo has become a very big part of the whole branded transactions push that PayPal is doing. And that habituation is very powerful, right? Like, if you think about that entire young customer base, they can take that and now go to merchants and then sell them that we know this customer base and we can help you do targeted selling. So on the merchant side, they've launched ads You can actually go in and buy products from ads now, Isabel. So all that innovation is what PayPal's kind of targeting and really amping up now to monetize some of the pre-existing PayPal assets.
Electronic payments, how's the market share shake out between, I don't know, Venmo, Zelle, and whoever else is out there?
That's a good point. So globally, digital wallets are actually gaining a lot of traction in terms of the way people are paying. And that includes the broad gamut of wallets, Paul. So you have, in the US, the most popular ones are Venmo, Cash App, and to a certain extent, Zelle. We actually publish monthly app usage statistics for the digital wallets in the US, and Venmo and Cash App tend to win over Zelle in that regard. But globally, if you see, you include Apple Pays and Google Pays of the world. So what PayPal is doing to capture that is they've launched something called as the PayPal World, where they will incorporate all these digital wallets. So say, for example, someone in India who wants to use a UPI-based payment to buy something from a German website can do that using PayPal out now.
Interesting.
So that entire push on digital wallets is getting capitalized by PayPal.
Yep. Diksha, thanks so much. Always appreciate it. Diksha FinTech, Diksha Garrett, Senior FinTech and Payments Analyst for Bloomberg Intelligence. I don't know about you. I use all the electronic stuff, but I also got a big wad of cash in my pocket. You never know when you can walk by a craps game. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Balance of Power with Joe Matthew begins right now. We got a little bit of sell-off in the market. The Dow off 200 points. S&P 500 off 9 points. This is Bloomberg.
Thank you. Actually, the cash, it's...
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
U.S. and Chinese negotiators meet so they can meet again. Welcome to the Tuesday edition as the Treasury Secretary and the U.S. trade rep meet with their Chinese counterparts in Stockholm in the hopes of extending a trade deadline that's set for just weeks from now, next month. Now, we expect to hear from the players when they emerge from this meeting any moment now. And we'll discuss with Bloomberg geo-economist Adam Ferrer. The Senate is set to vote on the minibus this week. We're going to talk about the budgeting process as we watch the clock with Nathan Dean at Bloomberg Intelligence. And we'll have analysis today from our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the duration. Let's check on Wall Street as we wait to hear from the players inside this negotiating session. Charlie Pallett is at World Headquarters in New York. Charlie?
Hi, thank you very much. Joe Matthew did see a slight bounce off the bottom on the China headline. Worth recapping, resetting, and repeating here that China does say it agrees with the U.S. to extend a tariff truce. S&P, though, remains lower, down 10 now, down 0.2%. We've got the Dow down 205, down 0.5%. NASDAQ down 21, a drop there of just about 0.1%. Yes, we got you covered in Stockholm on the latest on those trade headlines, and we'll have them for you here on Balance of Power. The 10-year 4.36%, with the 2-year 3.89%. Gold up $5 the ounce, 33.19, up by about 0.1%. West Texas Intermediate crude oil up 1.5%, 67.71 for a barrel of WTI. The International Monetary Fund says the U.S. or the world economy will keep weakening and remains vulnerable to trade shocks despite showing some resilience to President Trump's tariffs. Commerce Secretary Howard Lutnick says some issues surrounding the U.S.-European Union Trade Pact are still up for discussion, saying, quote, there's plenty of horse trading left to do. Lutnick was on CNBC discussing the deal and the broader trade picture.
We're basically having America sold out from under us by continuing to have these 1.2 trillion globally trade deficit. It's got to end. The president is changing it. So his view is you can onshore to get rid of it, or you can pay a tariff to get rid of it, but let's figure out how to get rid of it.
Commerce Secretary Howard Lutnick interviewed on CNBC. Union Pacific and Norfolk Southern have agreed to an acquisition in a deal valued at $85 billion. Shares of both companies are lower, indicating some skepticism about whether they'll be able to consummate this deal. Right now, we got Union Pacific down 4%, Norfolk Southern lower by 3.4%. Balance of Power continues right now. Back we go to Washington. Fast-moving developments on trade. Once again, your host, here he is, Joe Matthew.
All right, Charlie. Great to have Charlie Pellet with us. Watching Wall Street, we'll get back to Charlie a bit later on this hour. What is about to happen could move the markets. We're already seeing headlines, as you just heard Charlie Pellet mention. One of them has gone red. China says it agrees with the U.S. to extend the tariff truce. This follows a couple of hours of negotiations between Scott Bessent, our Treasury Secretary, Jameson Greer, the USTR, and their Chinese counterparts. We are currently watching a conference room in Stockholm. If you're with us on YouTube right now, there you have it. These reporters have been in this room for some time, waiting for the players to emerge. And when this takes place, we're going to bring this conversation to you live. Remembering the last time we went through this, it was pretty late at night. Scott Bessent, at that point, Howard Lutnick emerged from negotiations with the Chinese, did not even hold a gaggle. It was a statement. They got in the car. Bessent was on his way back to D.C. for previously scheduled testimony. This could include more color. It's unclear exactly on what we're going to have. But we do know that the communications will continue with a series, again, of headlines crossing the terminal here. China and the U.S. agreeing to extend the trade truce, having exchanged views on macroeconomic issues. Both sides aware of the importance to safeguard sound trade ties. As I read the headlines here, the trade talks constructive on major topics. They were described as in-depth and candid. Now, these headlines are coming from the Chinese. We still have a lot more to learn from the Trump administration and certainly the individuals who were in this room. A podium has been set up. You've got four American flags behind the podium for the Treasury Secretary and the USTR, and as we just showed you, a room full of reporters who are waiting for them. This is where we start the game today on the early edition of Balance of Power on Bloomberg Radio, satellite radio channel 121, live on Bloomberg Originals. If you want to watch the program, you can do the same on YouTube by searching Bloomberg Business News Live. Now, again, we set the baseline with Charlie Pellet on the markets as we wait to hear details from this session. We're joined now for a little more color by Adam Ferrer, who's been a real voice of expertise on this for us. He's one of the top geoeconomic analysts in the country, and he's all ours at Bloomberg Economics. Adam, it's great to see you. Welcome back here. What are you going to be looking for beyond a date when these gentlemen emerge?
So I think you've gone over a lot of what our base expectation was when we walked into the room today and when we looked at...
That's a pretty low expectation.
That's right. I mean, the Treasury Secretary laid out before the talks that he felt a extension was on the table. And so what we've heard so far is that they have reached that low bar, as you described. They have agreed to continue talking at a later date. Now, the fact that the Chinese are out with a somewhat more fulsome statement highlighting the importance of trade remaining at an even keel, I think what we're seeing there is an emphasis on some of those core issue areas, right? This issue of how the United States is treating Chinese trade, particularly when it comes to export controls around advanced technology, not only of things like semiconductors and other core issues, but also for advanced industrial goods that are important for China's economy that China simply doesn't produce, like aircraft engines and aircraft parts, which the United States had leveraged as part of that interregnum between the London talks and their deal afterwards to find a way forward and address the critical minerals problem that China put forward.
Interesting. There are a lot of components to this, of course, when we talk about a trade negotiation that is this sensitive. The deadline is August 12th. What would be a meaningful extension that would allow us to bear more fruit, or do we just keep meeting to meet again?
So it will be interesting to see if we get an actual date. Okay. The number that was thrown around before was 90 days yet again, and we've seen multiple 90-day extensions. But I think the bigger question here is to take a step back and try and think about where they're trying to go. Right. It's clear that the United States, particularly as we've seen the rhetoric evolve over the last month, is really looking to solidify some sort of deal in the coming months. And what that looks like is up for debate, but we're starting to land on this idea of something like the Phase 1 trade deal from the first Trump administration, which was built around primarily large purchase agreements by the Chinese and some small regulatory adjustments, particularly on intellectual property and technology transfer. Now, that deal, as many people were remember, ran into the economic disaster that was the pandemic and is considered by many to have failed, or for the Chinese to have failed to live up to that expectation. But we know that Secretary Bessent and Lutnick have talked about further purchase agreements. Now, what's different here, though, are a couple factors. One, this inclusion of the idea of the fentanyl crisis and how China plays into fentanyl, and the question of how the United States is going to respond to the limited actions the Chinese have taken so far, and what they're going to demand to lower the tariff further, or at least improve relations beyond that. And the second is this kind of more aggressive use by the Chinese of their own export controls to threaten key U.S. industries, particularly, as we've already stated, on critical minerals, and how that will limit what the United States is able to do or drag out of the Chinese in any sort of deal. And just the last thing I'll throw out there is that from a timeline perspective, we are increasingly looking at this kind of November-ish timeline when President Xi is expected to travel to South Korea for the APEC Leaders Summit, and President Trump may also travel to South Korea, and that could present an opportunity for a meeting.
Interesting. So there's your timeline here. There's a thought or concern that's been expressed in recent days following the tweaking or loosening of export controls when it comes to NVIDIA, the H20 chip. By the way, NVIDIA ordered 300,000 of them today from Taiwan Semiconductor, so they're preparing for some business with the Chinese. The idea that Taiwan's president can't make a pit stop to gas up here in the U.S. on his way to Central America. Does Donald Trump want a deal too badly?
So I think it's clear that the tone on China has softened, that the president and his cabinet are focused on a deal and are looking to avoid things in the meantime that could derail that. And so the movement on Taiwan, this news that they have potentially asked President Lai not to transit through the United States in the coming weeks, is a big sign of that, right? A particular issue that the Chinese have even claimed that they've reached out to the United States and asked them to address this. Now, it's not unusual for the United States to pressure the Taiwans to not take actions that the United States sees as escalatory, but the timing of this certainly raises questions about how the United States prioritizes Taiwan in its relations more broadly with China, and whether it's willing to actually stand by Taiwan at the detriment of that trade relationship.
If you're just joining us on Bloomberg Radio, we are standing by to hear from the Treasury Secretary and the U.S. Trade Representative following their meeting with Chinese negotiators in a conference room. Reporters have been assembled in Stockholm where these talks are taking place. If they come out soon, we'll, of course, bring this conversation to you. And I'd like to spend a minute talking to you about style, because China is not the EU, and Ursula von der Leyen is not President Xi. And what we saw over the weekend and some of the dissent that we've heard from members of the EU echoes some of the lack of detail that has followed any number of trade framework agreements that has emerged. How does this inform the Chinese side of this negotiation, knowing that at any moment Donald Trump could go on TV and say, hey, we have a deal?
So I think we have actually already seen how that's playing out, right? We had talked earlier about the oddity to some extent of the previous talks that we've seen so far in Geneva and London, with very little details coming out afterwards. And I think that reflects the sensitivity of the discussion and the desire of the Chinese to keep those sensitive conversations internal to the administration in China. And I would point out that we really have not seen major leaks of that information, despite other areas in which we certainly get the president's perspective. But the president, beyond saying broad kind of platitudes about positive relations, has not gone into detail. And I think that speaks to how sensitive and how important they see this.
So this has its own compartment at the White House.
No question. And I think on a daily basis, we see an evolving group of people who are at that top level in the White House, but clearly Secretary Bessent, Secretary Lutnick, and USTR Greer are in that room.
That's fascinating. When you add the idea of transshipping, whether it's Vietnam or other countries we're talking about, the U.S. is going to be going out of its way to enforce transshipping. The idea that China is sort of laundering its exports through other nations, a little bit difficult to police. Maybe you can explain that to us in more detail. But how does that play in Beijing when you're trying to sit down to cut a trade deal and this is happening in the other room?
So I think that's in the background of all of this.
They know this as well as we do.
That's right. And they've said from the start that any deal that a country makes with the United States that undermines China's interests will result in China taking action. Now, they've left that relatively amorphous as to what they're going to do, but I think there's no doubt among the minds of their neighbors that China is willing to take more aggressive action against them and has taken coercive action in the past to get what they need. Now, to the logistics of it, I think you hammer on a key point, which is it is incredibly hard to do this.
Is it possible at all?
It's certainly possible to work with local governments to better define what gets to get the label of made in Vietnam or made in Indonesia. And the Vietnamese have committed to, basically doing audits and looking into this. And certainly that can have some role. But the big outstanding questions are, how much of a given product has to actually have been made or had a value add in that country to equal, from the U.S. definition, a Vietnamese product versus a product that was made by a Chinese company in Vietnam involving a mix of parts. And so I think that's outstanding. And it is unclear if those issues are actually being raised in these discussions with the United States or whether Beijing would prefer to hammer those out directly with their neighbors.
How much compartmentalizing is done on Beijing's side here when we also consider our relationship with Russia right now, its support for Russia in its war against Ukraine, never mind what's happening in the Middle East? Are these separate meetings? These are separate groups? These are walled off from one another, or it's all being talked about in this room?
So from China's perspective, they would like to keep this as walled off as possible. They like to segment their discussions wherever they can and are focused here very squarely on the trade relationship and, have made clear over the years that they do not see a reason why the United States' competitive attitude and, as they perceive it, aggressive actions on export controls make sense given the broader economic relationship. That said, we have heard from the U.S. side this desire to start pushing in elements of that broader geopolitical environment, and that's specifically related to the export of energy from Russia and Iran, which China has benefited greatly from those cheap energy exports, and there's been some comment from the U.S. side that they would raise these issues in these talks today and yesterday. I would be very surprised, though, if we hear anything concrete on that issue.
Interesting. A win today, then, if I'm hearing you right, Adam, would be a 90-day extension. Talks continue in the meantime. Maybe there's a big meeting at the end of that 90 days with a framework for a summit between Trump and Xi. Is that where we are?
I think that is likely what we're going to see. The other part that we talked briefly about before, though, and I think the market will be listening for, are any signs of changes in that export control environment in both directions, particularly when we look at critical minerals and those rare earth magnets that are so essential for production of advanced technology in the United States.
What else can we give? I mean, we've talked about the H20. AMD, I guess, has its own version of a chip that's China-friendly. But, I mean, if Jensen Huang had his way, would we be selling Blackwells in Beijing? That's not going to happen, is it?
So I think Jensen Huang has made his perspective very clear. He sees an environment where trade writ large should be open and that tech ecosystem, exporting the tech ecosystem is the most valuable portion of the U.S. advantage. Now, there are obviously strong national security concerns there. And so, I mean, the H20 transition or flip from the Trump team caught many people by surprise. They saw it as a natural evolution of the restrictions that the Biden administration put in place and an effort to restrict China's growth in AI in a manner that still gave them access to some chips, but not those higher end chips. The fact that that was on the table does raise questions about what else could come. And one of the other places this we could see movement is potentially in semiconductor production equipment. Much of that is restricted right now, and it's possible that there could be some movement to allow some of that to be shipped under the same argument that Secretary Besson and Lutnick have made about this idea of the more we export to China, the slower they can indigenize their own industry to box us out.
Yeah, wow. Adam, the president is getting to the tarmac here in Scotland. Marine One is waiting for him now as he wraps up his journey to Scotland the last couple of days. Of course, we had been talking about trade with the EU at this time yesterday after the deal was struck, the framework, at least, agreement was struck with Ursula von der Leyen. As we wait for the president to board the chopper here, Adam, what do we need to do or what do we need to discuss when it comes to the EU? The French prime minister yesterday referred to this deal as submission. There is apparently a lot of angst among the membership here, and all 27 of these members have to sign off. How's this going to work in the weeks ahead?
So to start with, I think we're confident that the deal will be signed off on from the EU. There are enough, there's enough forces in the EU that really don't want to see escalation here, that see the near and medium term economic damage of escalation as far more damaging and worse for their economic prospects. But that said, I think it is important to not get lost in the positive spin of this, in the sense of, yes, the rate lowered to 15% across the board, and particularly on autos and potentially pharma and semiconductors when those 232 tariff investigations are finished. And all of that is positive when you look at it in comparison to a worse future, right? Of 50% tariffs with 25% on those sectorals. But simultaneously, this is a massive increase in tariffs, right? This is a solidification, as you and I have talked about before, of this tariff wall around the United States. And so there's no doubt that this will have an impact on European exporters and American consumers, who are now going to have to face and figure out how to pay that higher price. And Bloomberg Economics estimates that just alone, based on these new tariff rates, we're going to see a 0.4% contraction in GDP over the midterm.
Boy, there's a lot there. As Donald Trump makes his way onto Air Force One, we just watched him get into the jet. Don Jr. and his children, the president's grandchildren, along for the ride. Don Jr. making his way up to the aircraft as well, as this trip to Scotland is wrapped up here. Lastly, Adam, will there be continued negotiating sessions with the Europeans? Things like wine were left on the side, and there are some members who still want to tweak some of the headline numbers here. How much of this can still move?
A lot of it can.
Okay.
And I think
so this is a very fluid deal.
That's exactly right. And it fits squarely in line with every other deal we've seen, maybe somewhat separate from the UK deal, which did eventually kind of reach a signed document. But the reality is these are frameworks, broad frameworks. And we did see the EU release a document today going into a little more detail, which gave more clarity on kind of at least what they believe the deal represents. But, we had Secretary Lutnick on television earlier today highlighting that he sees more negotiations to be had, that many thorny issues still have to be worked out. And so that presents opportunity for the EU to potentially get a slightly better deal, but also extreme risk, right? And as we get closer to August 1st and or whenever the Trump team wants to escalate again, the additional negotiations present real risk for everyone.
Well, this is quite a conversation to have, and there's still so much that we have to learn, and hopefully we will learn that together before this hour is out, when the secretary and the trade rep emerge. Adam, the deadline on Friday, the August 1st deadline for reciprocal tariffs on other nations, supposedly is fixed. Howard Lutnick says that stays where it is. What country gets hit the hardest who hasn't cut a deal with the U.S. yet? Is it the Penguins or something else that I haven't been thinking of here?
So I'm not too worried about Antarctica right now, but we'll have to wait and see. I think right now what we're really watching out for are other key U.S. trading partners, particularly South Korea. South Korea has been actively involved in negotiations.
It could still happen this week, right?
It could happen this week. We know that their trade negotiator not only came to D.C. last week, but then traveled to Europe to continue conversations with his counterparts, and that they're working on creative solutions to try and reach a lower tariff rate. And I think in their mind, landing somewhere around Japan at that 15% and EU at that 15% rate. But there are extreme risks if they can't address the auto tariff, if they can't get that lower. Simultaneously, we also have the other two exporters in Southeast Asia, Thailand and Malaysia, which have been actively pushing forward on their proposals to the administration. And we increasingly think we'll land somewhere again in that 20%, 19% zone as their neighbors did. And then we also shouldn't forget about Taiwan, right? Obviously, Taiwan's in the news because of this potential action to limit President Lai's movement into the United States for his travel. But at the same time, they're also in a tough tariff negotiation with the United States. The only difference there that I would say is because a huge portion of their output is semiconductors, I think even if they get hit with a semiconductor tariff, the thought is that most people will end up paying that tariff, and so Taiwan itself wouldn't necessarily suffer the ramifications of that. It is.
Adam, thank you so much. No one knows this stuff better than Adam Ferrer, and I can't thank you enough for the analysis. Bloomberg Economics owns senior geoeconomics analyst for the Asia Pacific, but we can clearly go around the world with Adam, and we have today. We'll let you know what we learn when the players emerge, and that could still happen this hour, so stay with us here on Bloomberg. We are watching the markets all the while here because this could be market moving when the headlines break. We know that they have agreed on an extension. After that, we're waiting for details alongside Charlie Pellet. He's got his view on the markets now. Let's update Wall Street from World's headquarters in New York. Charlie, how are we doing?
Thank you very much, Joe Matthew. How are we doing? We are lower across the board right now with the Dow, the S&P, NASDAQ, all in the red as we await the latest trade developments, and we'll have those for you live on Bloomberg. Let's reset here because U.S. and Chinese negotiators have concluded their latest round of trade talks in Stockholm. The key takeaway, an agreement to extend their tariff truce. We did see stocks initially pop on that, but did remain in the red. S&P right now down 12 at 63.76, drop there of 0.2%. The Dow down 184, lower by 0.4%. NASDAQ Composite Index down 50, a drop there of 0.2%. The Bloomberg Mag 7 Index down 0.4%. 4 of those Mag 7 stocks will wind up reporting this week, including Apple, Amazon, Microsoft, and Meta. Microsoft and Meta report tomorrow. 10-year, 4.34%, with a 2-year currently yielding 3.89%. Gold up 0.2%, 33.21 the ounce, and West Texas Intermediate crude up 1.6%, 67.81 for a barrel of WTI. Developing story with a headline right off the Bloomberg Professional Service. Palo Alto Networks said to be near a deal for CyberArk. That, according to the Wall Street Journal. Palo Alto Networks down 3.6%. CyberArk surging now by 14.4%. Earnings news. After earnings, JetBlue Airways up 5.1%. The carrier posted a smaller than expected loss in the second quarter. And among some of the other airlines, they are lower. United Airlines down 1.4%, American down 1%, Delta lower now by 1.3%. Again, trade developments front and center. We'll keep you posted on Balance of Power, and the Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, many thanks. Standing by with Charlie Pellet as we wait to hear from the Treasury Secretary and the USTR. They're in Stockholm, and the meeting is over. That would be the meeting with the Chinese. If you're just joining us, we are waiting for a news conference in Stockholm. This took place, as you might remember, following their most recent sessions with the Chinese, but we'll have a more formal setting here. A conference room has been set aside. The reporters have been in that room for hours waiting for the stakeholders to emerge. When they do, we'll bring it to you live here on Bloomberg, knowing that they have agreed to at least one thing, and that's to keep on meeting. Part of the emphasis going into this session was to get an extension on the August 12th deadline. It appears they have done so. It's unclear what the extension is going to be. Adam Ferris suggesting it's likely to be another 90 days, as we saw last time, but we'll find out together here. They've got a kind of a weird, this tiny table with 2 chairs at it, 2 microphones. Is there a tablecloth on that, James? They're going to bring out dinner? Yeah. Producer James putting in for the Michelin star here in the conference room as we wait. We have a couple things to talk about, by the way. You know, they're going to be voting in the Senate this week as we keep our eyes here on the Senate with just days left before everybody heads home for August recess. And the likelihood, well, I'll let Nathan tell me whether it's likely or not, that we see a vote on a minibus. They're actually trying to get some budget bills worked through the upper chambers, so when lawmakers return in September, they are not starting from scratch. We run out of money September 30, and if you ever listen to this program, you know that they're talking about a shutdown already. Before lawmakers even got home, that was the case because Democrats are feeling burned by the rescissions package that Republicans passed. So let's take a walk through the garden here with Nathan Dean, the senior U.S. policy analyst at Bloomberg Intelligence. One of the last remaining here in a sweltering Washington, D.C. This is the good time to be in D.C., though, right? You kind of get the run of things around here.
You can go to the museums and none of the tourists are here.
Ghost town, exactly. And I know you let the clients know where to find the good food and the drinks along the way. Your phone's been ringing, I'm sure. I get to see this firsthand. I sit in the same row as Nathan, and he's on the phone all day long with clients, people who have a terminal and are trying to make decisions. And there's been so much uncertainty lately that now we add the prospect of a government shutdown to the list. What are you telling them?
Well, we always say to our clients that when it comes to a government shutdown, there really isn't much impact from a market perspective. If you go back and look at even the 30-day shutdown that we had under the first Trump administration, the S&P declined like 5-6% within a couple days, but then subsequently grew even above that level by the time the end of the shutdown has ended. Now, this is going to be a little bit different. So the most important thing for clients to know is, one, if we do get a shutdown, and right now I think rhetoric is high, but we'll see in September right now if we actually have a shutdown or not. A lot of the data that traders use for information isn't going to be there. But again, this is different because we have Russ Vought and the OMB sitting there saying that we need to have a little bit less bipartisanship, and we're going to have this potential rescissions package or even a pocket rescissions package being proposed by the White House. And that's going to make Democrats a little bit on the angrier side. So, I think, again, headline risk is really the story for September. I don't think they're going to come up with a appropriations package. I think you're going to see.
So it's a CR either way.
I think it's going to be a CR no matter what. But, Congress always also loves to kick the can. So if we get up to, say, September 27th, and they say, you know what, let's just kick the can another couple of weeks, we can certainly do it because nothing, stops Congress from saying something bad happens here.
Is it weeks in that world, or are they kicking into the new year so we're not jammed up around Christmas? Because, man, history repeats itself. This is kind of like a comedy routine after a while. We're going to be sitting here around Thanksgiving talking about a shutdown, and then everybody has to stay late to figure it out.
I would anticipate potentially a December shutdown just because they love to do it right up into those holiday period. But again, I would just say is that the rhetoric is high, but the impact is low. Even if you look at large defense contractors. Now, let's take out this idea of impoundment where these council contracts and so forth like that. But even for large defense contractors are usually funded on a 2-year period. And so even if you don't get government funding for a couple weeks, that's not going to impact somebody like Boeing or Raytheon or so forth. The biggest concern here is that what happens if you get a shutdown? And this is one of the reasons why I think the Democrats would welcome a shutdown, but they probably don't want one, because if you get into a shutdown, and we had this discussion back when the Department of Government Efficiency was first starting here in Washington, if you have a government shutdown, then DOGE can certainly come in, and certain individuals can say, look, if we can operate with 85% of the government being deemed non-essential, then why do we even need them in the first place? I think this is one of those things where we get into September, both parties are going to look at the calculus. I don't think they're going to come up with an agreement. And both sides are going to say, can we shut the government down and make this politically advantageous to us? And very rarely that ever works.
This is really smart analysis, because we've had a number of Democrats tell us on and off the air that, hey, look, okay, we might do this, but we cannot shut down the government or allow it to shut down unless we have a plan to reopen it. Because, Nathan, if they don't, we could have a new record here and top the one of the first Trump administration, right?
Absolutely. I mean, that's the plan is, okay, if the Democrats, let's just play the game here, that if we're Democrats and we want to say that this shutdown would be welcome news for us, well, then, the question is, okay, how do we get out of it from the standpoint where we can actually gain something from it? Because the voter perspective is not going to like the idea that if you shut the government down for 2 months, and then ultimately you just come up with a deal that you could have had on September 30th, well, then people aren't going to really like that. So again, it's just one of those things where the strategy has to be formed. And look, the Democrats were meeting last week about this. Senator Schumer, Bloomberg News did some great reporting about what Senator Schumer was doing then. So they've been meeting about this, but also they're going to be gone for August, and then they come back. They're going to have to figure it out. We'll see.
September's going to be a blast. I can't wait. Hey, Nathan, we're getting headlines from Scott Bessent and from Jameson Greer, for that matter. They're going to come out, it looks like, in a minute. We're not sure. We thought they might come out a half an hour ago. And I'm guessing that you're getting calls on this as well, particularly when it comes to trade with China, because this is a mover here. Here's what we're hearing from Scott Bessent. We will see President Trump on the China tariff pause tomorrow. They're talking about a tariff pause with China without suggesting exactly what the timeline will be. Coming out of this session, Scott Bessent says there are some technical details that remain to be determined here on a China tariff pause, but an extension decision will be up to the president in the end. We just saw him get on Air Force One. He might be on the phone with the Treasury Secretary right now. Scott Bessent saying we understand China's agenda much better. Interesting. And we'll have a final call, as I mentioned, when he speaks to the president. But Scott Bessent says he hopes China's 5-year plan would include rebalancing Jameson Greer saying they also discussed sectoral tariffs with China. So this was quite a session here. How does the stock investor work around this? Because it's resulted in big moves here in the Chinese markets as well as some of our own when you deal with the multinationals, whether it's Nike or somebody else doing business in China. Is this going to be investable once again?
So what's investable is clarity and certainty.
Yeah.
And if you get details from this meeting, if Treasury Secretary Scott Bessent comes out there in a few minutes and says, here are the details and here's what the plan for the next 90 days are, the market potentially is going to say, look, we can work with that. Even if it's 10%, 15%, 20%, we at least know. But I will say is that the idea of sectoral tariffs, like pharmaceutical tariffs, that's been hanging over the industry for a couple months now. And Commerce Secretary Howard Lutnick, even this morning, was just saying a couple of weeks from now, you're going to see more pharmaceutical sectoral tariffs.
Right.
So again, that's where the uncertainty goes. And so from the investing perspective, and the way that our analysts at BI look at it is that, look, we just want to know what the rate is for 90 days or for 120 days so we can calculate what we think the outcome is going to be. And if that rate is changing on a daily basis, that's no good. So again, I would say that if this conference comes out and there's clarity for 90 days, market's going to say, great, we can work with that. But again, these sectoral tariffs, that's still out there, and that's still a big question.
This is going to be tough for people to really understand, I think, as soon as this emerges. It'll take some time to settle. 90 days currently, one option for a trade truce extension. That's not a big shocker here. That's Scott Bessent talking. Jameson Greer saying we've seen improvements on magnets for U.S. companies. I don't know where they are right now, James. Do you? They're supposed to be briefing reporters. They're gaggling off camera. So are they not coming out? Do we know? Interesting. So you get a pad and pen before you get the broadcast briefing. We're just learning this in real time here, Nathan. Are these market moving headlines, or is this let me know when you get some news?
I think it's market moving. I think obviously people weren't entirely sure. I mean, a lot of the focus from the market perspective was on the EU. I mean, if you look at the news cycle going into President Trump's trip to Scotland, I mean, there were a lot more people in the markets looking at the U.S.-EU relationship, because I think a lot of people did anticipate that there was going to be an extension for China, certainly after the United States had made their announcement late last week. But I would also say is, look, we may be returning to the Americas fairly soon. The Mexican president just came out just a few minutes ago and said, look, she thinks there potentially could be an announcement this week. We still have ongoing relations or ongoing negotiations with Brazil with President Lula. And so I would say Brazil, agricultural perspective, very important to watch. USMCA, Canada, Mexico. So I think after this press conference, look for the news cycle to come back to the Americas. And I think that's where the traders are going to want, again, that certainty once they got it from the U.S.-China relationship.
Well, every time we get an extension, whether it's reciprocals, we've got Friday for reciprocals. Apparently that will not be extended. Everything else has been extended, including, I guess, reciprocals repeatedly and could be again. This is what the market hates, right? Just tell me what the number is.
That's it. I mean, essentially, they want to know what the number is. And so when the U.S.-EU relationship, or at least the negotiation came out that 15%, huge sigh of relief, I think. I mean, obviously, you know, talking with our clients, because they knew this is something that they could work with. And obviously, you know, I think if you look at the certain trade deals that have happened with Japan and, you know, Indonesia and the Philippines, you know, I think if you were to give the market participants truth serum, they'd say, look, we would prefer if these tariffs weren't there in its at all, but at least we know what we can work with. And so I will just say is that I think the U.S.-China relationship negotiation, you know, just in your conversation with Adam, we're far from the conclusion here. But if we can get a 90-day breather, then at least it sees the markets into the third and fourth quarter.
Spending time with Nathan Dean from Bloomberg Intelligence as we wait for the Secretary of the Treasury and the USTR to emerge from their now off-camera gaggle to what we expect will be a broadcast news briefing at some point here. Somebody needs to bring some food and water into these reporters because this has been going on for hours. We are watching Wall Street, Nathan, as we talk about this potential for a deal with China or an extension to keep talking about when the S&P 500 is barely moving. It's down 15 points right now, but 0.2%. The NASDAQ is off 56 points. And we might get an update here in a moment from Charlie Pellet. But, you know, you do wonder how, I guess, bored traders are getting with the platitudes. because you've got an extension here with China in the mix. It's not really giving the market a lift. Maybe that was mixed in. We've got a deadline on Friday that everybody's kind of stopped talking about. The S&P 500 was at a new high yesterday.
I think the China extension, I think, was already priced in.
Yeah.
And so I think this was just confirmation over what most of the market already anticipated was going to happen. As for Friday, yeah, I don't think any people are thinking about Friday because they think that there's going to be either extensions or deals or anything like that. And so I would just say is that, again, when you think about how do you predict for President Trump's negotiations with tariffs, I would just say is that you have to plan for the worst, but always assume that, there is going to be an extension, because for all the rhetoric that comes out and for every single time, Commerce Secretary Howard Lutnick comes out and says it's going to take place, history suggests otherwise. So are we getting into a situation where the boy cries wolf? Potentially. I mean, but you got to be prepared for it. But again, I think anytime you get some form of clarity, some form of certainty, from the market perspective, you got to take that as a win and say, go forth and say, let's start analyzing our numbers.
The View from Nathan Dean. I didn't ask you when we were talking about the shutdown if you're running odds yet. Are you there?
We're at
later.
40%.
40%. I guess we buried the lead.
So
okay, less than likely.
We'll see in September. But I was higher earlier during the rescissions package fight. I think it's around 40% right now.
Many thanks as ever. Bloomberg Intelligence's senior U.S. policy analyst and a dear friend of the program, Nathan Dean, for you there, taking calls from clients like you, at least when you listen to this program. I'm Joe Matthew in Washington, left wanting by what's happening in Stockholm. At some point, we understand Besson and Greer will hold a news conference, but they're busy talking in a pad and pen gaggle right now. And as we wait for more headlines on this, having agreed to a red headline on the terminal, agreed to an extension, it is presumably 90 days, but we don't know a lot more than that. There's talk about a tariff truce that the president will need to sign off on. That's the way Scott Besson is framing this. And we want to just keep up with things on Wall Street. Charlie Pellet is at World Headquarters in New York and has an update on the Tuesday trade. What's the market making of all this, Charlie?
Right now, lower across the board. Thought we might see some pop there while you guys were talking. Didn't happen. We got the S&P down 17 right now. Very close to session lows. 63.72 where we stand on the S&P 500 index. Lots of moving parts to this market, including earnings, including a Fed decision tomorrow, jobs report on Friday, and a lot of economic data. The S&P, as I mentioned, down 18 now, down 0.3%. The Dow down 202 on the Dow, a decline right now of 0.5%, while NASDAQ down 77, a drop there of 0.4%. The Mag 7 index down 0.6%. 4 out of 7 of the Mag 7 stocks report this week, including Apple and Amazon on Thursday, Microsoft and Meta tomorrow. 10-year ahead of the Fed decision, 2 p.m. Wall Street time tomorrow, 4.34%. The 2-year, 3.88%. Gold up 0.3%, 33.23 the ounce, and West Texas Intermediate crude now up 1.5%, 67.70 for a barrel of West Texas Intermediate crude. Well, Wall Street certainly looking ahead to the Fed decision tomorrow. Veronica Clark is director of Citi Research at Citigroup Global Markets. She was the guest this morning on surveillance.
Obviously for the meeting tomorrow, the decision will probably be, for the most part, just more wait and see. We probably will see some dissents among certain officials who want to be cutting as soon as the meeting tomorrow. I think Powell will still guide to the median official as of June still expects a couple rate cuts this year. There are only 3 more meetings left after this one, so it's not unreasonable to think that those cuts would happen in the fall.
Veronica Clark of Citi Research interviewed this morning on surveillance, keeping an eye on shares of United Parcel Service. They are plunging after earnings. UPS down now by 9.8%. Rival FedEx lower as well, down 2.8%. UPS declined to provide earnings guidance as it struggles to get a handle on volatility in the market. Again, recapping here, S&P down 16, 63.72, drop there of 0.3% as we await a news briefing out of Stockholm. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
And waiting, we are, Charlie. Thank you so much. Great to get the update here on Wall Street, because markets could move when we get further headlines on the negotiating session between the U.S. and China. It has ended, and now we're getting headlines on the terminal from an off-camera gaggle that the players are holding with reporters who traveled to Stockholm for this session. Incidentally, the President of the United States is on his way home now, having wrapped his visit to Scotland Scott Bessent talking about an extension. It does appear, as many expected, and as the markets apparently had priced in, that there's going to be an extension here, a tariff truce, if you will, for another 90 days. The president has yet to sign off on that. Scott Bessent saying that Donald Trump will have the final call on what they are bringing home here from this meeting, and there will be another China meeting, according to Scott Bessent, probably in another 90 days. So I guess we're doing things here in 90-day increments. We'll hear again more from them, and we'll bring you their remarks when they emerge. There is a conference room full of reporters right now in Stockholm. If you're just joining us, they're expecting to hear from these two practitioners, members of the administration, in a moment. A very small table has been set up with a couple of microphones, a white tablecloth backed by 4 American flags. They will be seated when they speak to the room. There you have the live view of the staging that has been set up for Bessent and Greer. And I suspect that they'll have a pretty good back and forth with reporters, because they've been in there for a long time waiting to find out what happened behind closed doors. If in the end the only headline is that they've agreed to meet again, it'll be interesting to see how Wall Street feels about that. As Charlie just told us, we're tipping a little bit lower here, not too much, but the S&P 500 is down fractionally as we wait for news. So far, no surprises. Everybody apparently saw an extension coming here. I'm Joe Matthew in Washington, and thank you for joining us on Balance of Power. It's a little bit different today as we wait for the news to break here from Stockholm, but we do have our panel with us. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are along and keeping tabs on this for us as well. Both, of course, Bloomberg Politics contributors, but Jeannie is also Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Rick is our Republican strategist and partner at Stone Court Capital. Rick, do we call this a win if the truce is simply extended one more time?
Yeah, I think that, certainly the administration is going to call it a win. And their definition of a win is we continue to get magnets and rare earths, and there's a flow of trade, and our sectoral tariffs are still in place, and we reserve the right to continue to prosecute a trade war against China. So what's not to declare victory with? I think they see that as a good policy toward China on trade.
How about you, Jeannie? Do you need a deal to call this a win, or did we know this was going to take a long time, and maybe Donald Trump is starting to catch up with that fact? Scott Bessent says he'll need to sign off on this, but it looks like they just bought themselves another 90 days.
Yeah, absolutely. And to your point, I think this is what everyone expected, and that is certainly good news. Although the bar for news is rather low when you think about the extension is good news. And I was really struck by one of the headlines that just emerged on the Bloomberg, which was that Scott Bessent talking about the Chinese purchasing of oil from Russia, because of course, just yesterday, Donald Trump sat with a pool of reporters and talked about imposing secondary sanctions on Russia. And the Chinese state TV was very clear that they would not allow that to enter into these discussions. And so apparently it entered the discussions. We'll probably hear more from Scott Bessent. And China does not seem pleased, and neither does Bessent. So where does that leave Donald Trump's policy on sanctions and secondary sanctions? And where does that leave the U.S. as it pertains to the Ukraine-Russia war? So there's a lot at stake here, and that was one of the many things that struck me from the little bit we've been hearing so far from the gap.
I'm glad you heard that. 12:36 p.m., the headline crossed the terminal, Rick. Scott Bessent, not pleased with China buying Russian oil. I don't know how much compartmentalizing there is in a session like this. We were talking about that earlier with Adam Ferrer, but does the prospect of secondary sanctions against Russia impact the outcome of talks here with China?
Well, certainly not these talks with China, but as indicated, this is an ongoing process, and it'll become a stumbling block at some point, because there's, imagine zero chance that China is going to do anything other than potentially increase its imports from Russia because of other countries like Iran having more difficulty getting them the crude they need. So they have a voracious appetite for hydrocarbons, and they got to make it up somehow. So the idea that somehow this is going to go over well with them, Right now, it may be as little as a line in a negotiating session saying we're going to come back to you about Russian sanctions. But the thing that's not necessarily in control of the White House is a voracious Senate with 80+ members ready to put together and pass a sanctions bill against Russia that has 500% tariffs on Russian oil in the secondary market. And so at some point in time, this could either be a seminal event for U.S.-China trade, because this is a huge bump in the road, or Donald Trump decides not to sign it. And that's a seminal event for his relationship with the Ukraine.
No agreement on export controls, according to Jameson Greer, among the headlines that we're seeing here. Jeannie, NVIDIA shares are barely moving today as we wait for more information on this. But is that the real point of leverage that the U.S. has?
It's certainly one of the biggest. I think that from my perspective as a political scientist, the biggest issue here is U.S. security. And of course, one of the things that we know the Chinese have been talking about is unfreezing all of the frozen U.S. ability to purchase these technologies. And of course, that should be a non-starter for the U.S. because it really does raise serious questions about our ability to maintain our national security going forward. And so if the Chinese draw a red line there, that is going to be particularly difficult for the United States. And so for me, that's one of the biggest things, but I'm not certain we're going to hear much on that until we hear from President Trump and Xi Jinping directly, because of course that impacts everything about our particular relationship, from trade and the economy to security, as these two superpowers battle it out in all realms.
Secretary Scott Bessent now saying there was no discussion today of a Trump-Xi meeting, which I find fascinating, because this was supposed to be an obvious step along the way, and that doesn't mean they won't talk about it coming up here. Rick, what do you make of the dissemination of information here so far? This is a very strange choreography. First, we got a boatload of headlines from the Chinese. They had the first word on this. That's where the headline came on the extension. Then we're getting now an off-camera, for some reason, gaggle with the secretary and the trade rep, even though they have a room full of reporters waiting for them for what was supposed to be the briefing and would be on camera. Are these decisions being made in real time, or is there some strategy here I'm not picking up on?
Well, there's always a lot of confusion at these kind of mini summits. They're sometimes not well choreographed. And the A-team is obviously in Europe with Donald Trump, really making sure that his trip goes well. And so far, you can point to a lot of success there, both with the outcome and the optics. And so the real question is this something that they did strategically, or they're kind of just fumbling through Stockholm? I mean, keeping all those reporters waiting. Now we know where the Stockholm syndrome came from, right? They're gonna be just happy that they get any news at this stage, And sometimes it's just sloppy. Sometimes reporters get in the hallway, and they're gonna answer the questions. So it's not a good look. It doesn't look disciplined. I'm sure there's some advanced people and press advanced folks who are going to catch heck for this. But at the end of the day, tomorrow this will be old news, and nobody will really care that much about it.
It's interesting, though, at the same time, Jeannie, this could be a market-moving conversation to delay it and leave investors wanting for every headline here. It seems to be a peculiar way to be going about this, no?
It's absolutely peculiar. It is entirely undisciplined. And you juxtapose that to how disciplined the Chinese look coming out of this, and it is not a good picture. And you just mentioned that headline about the fact that there was apparently no discussion of the meeting between Trump and Xi. That's particularly troubling, and probably will be to the markets, because we know that if there's one thing that needs to happen for there to be a deal, it needs to be a meeting. Now, certainly they can set that meeting later, but the fact it wasn't even discussed, if that's the case, is particularly troubling. And I don't think this has been a particularly good end to Donald Trump's trip to Europe. What do we have? We have an EU deal, which is not signed off on which we have very little details, and which major parties are pushing back, like France and Germany. And we have the Chinese saying we'll agree to 90 days, and yet many huge issues left either undiscussed or not publicly available in terms of the information coming out of it. I don't think this is how the Trump administration wants to end his time in Europe, because in reality, you're leaving with just as much confusion as you came into it, if not more. So he'll try on Air Force One, I guess, when he gaggles to say there was a deal with Europe, the European Union, but that's very much not the case. And so I think the optics all around are a bit dismal for this White House today.
I do wonder what the president will have to say if he goes to the back of the airplane, and I suspect he will on his way home here, Rick. But the fact of the matter is Wall Street is not jazzed right now, although we haven't been carving out new lows or anything. And I'll remind everybody, we were at new highs, record highs for the S&P 500 yesterday. The S&P is down 13 points right now, 0.2%. The NASDAQ is down almost 50, again, 0.2%. Does Jeannie have a point about the rollout on the EU deal? Rick, now followed by this, is there an effort to bring transparency here, to talk about things in piecemeal, or will the White House have regret showing us each stage of this sausage making, complete with pushback from members, in this case, member states in the EU?
Yeah, imagine that. People are upset with transparency. We'd rather be in the dark and just get the final deal done 6 months from now. No, look, I mean, I think the reaction in Europe, as Jeannie points out, is a proof point that Donald Trump got a better deal than he thought he was probably going to get when he came into negotiations with the EU. And when you look at the basic structure of the deal, it does look like a pretty good deal for the United States. And every commentary I've seen says that the fact that we have a 15% across the board tariff on 70% of the goods coming out of Europe. We still have tariffs on steel and aluminum and a few open items. That's some pretty good progress in a very short period of time with our largest trading partner now. I don't think Canada used to be, but those days are probably gone. And so, yeah, I don't see what the fuss is about. I mean, like, we're watching government in action. This is an administration that has daily press briefings in the Oval Office. We get to see it as it's happening. I think it's more fascinating than troublesome that we get a peek under the tent from time to time, especially after an administration where, we didn't hear from Joe Biden for months at a time. And, everybody complained about that. Now we have the exact opposite. And people are like, oh, I'd rather be in the dark.
Does Rick have a point here? Jeannie, you can't say that the president isn't making himself available.
I don't think people are complaining about a lack of transparency. I think what the questions are, and I wouldn't say they're complaints, the questions are, give us the details on a deal. And if it is not a deal yet, which for most people is defined as all parties have signed off on it, then be transparent and say that. This is the framework of what was discussed. We're talking to the EU. It's a confederation of more than 25 members. 6 of the 25 or whatever it is are uncomfortable and haven't signed up. So I think it's actually the opposite. It's a lack of transparency. It's this continuous PR effort to say, we've gotten a deal, and yet when you look at the fine print, there is no deal yet. Now, is one coming? Hopefully. And, just look at the case of Japan. They waxed poetical about a deal with Japan, and days later, Japan came back and said, we are not investing $650 billion in the United States. We are going to give a loan of that amount. Well, which is it? So, you know, you can call it transparency to say things that are, you know, trumpeted as a PR move, but that's not transparency. That's trying to sway opinion. So please be transparent, I would say, to the White House, and tell us what is going on would be far better than trying to sell us on something that doesn't exist.
Be interesting to see how much sales pitch comes with the rollout following this meeting as Scott Bessent prepares to call the president. Rick, on Air Force One, they're going to have to lay this out for the president so he can make, I guess, the final call. Maybe that's partly what we're waiting for here on the delay. And they will discuss remaining issues, which he described as, quote, small, quote, mainly had to do with the Chinese delegation, unquote. I'm not sure exactly what that means with now another round of trade talks here in the offing, say 90 days away is what it looks like. A third round here in less than 3 months. Rick, what do you make of that? You're no stranger to making deals in the corporate environment. When you hear about remaining issues, they're small, mainly had to do with the other side. What does that tell you?
Yeah, look, there may be a string of requests that they're asking for that really weren't negotiating items, but you know, specific asks, and that may be specific to a certain trade deal or nothing to do with the trade transaction itself, but things that she would like to see done on his behalf. And that could be a myriad of things. They're a part of every global organization in the world, and as are we. And so we hope that we're having those kinds of conversations. Look, we used to have conversations on this show about the fact that there's no contact at the senior level between China and the United States, either on the military side or on the civilian side. And we would wring our hands about how that is an unhealthy thing to have in a relationship between two superpowers, the sole two superpowers. And now we have a regular schedule of meetings at the highest levels, discussions of a Xi-Trump summit, and transparency between the two relationships that we haven't seen in a long time.
Well, let's hope we can get it from the source here. We've been waiting the better part of an hour, and Scott Bessent and Jamison Greer will likely emerge in the second hour of Balance of Power. Rick and Jeannie will stay with us. Kaylee's on the way in on Bloomberg. Make sure to subscribe to the Balance of Power podcast. Go to Apple, Spotify, wherever you get your podcasts. Subscribe to the show. You can listen anytime at our website. It's Bloomberg.com.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
The U.S. and China agree to meet again. Welcome to the Tuesday edition as the Treasury Secretary and U.S. Trade Rep wrap a meeting with their Chinese counterparts in Stockholm. With news today, a redhead on the terminal of a tariff extension, at least an agreement in principle. President Trump still needs to sign off on it. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, we're waiting for the players here, Bessent and Greer, to emerge in a news conference that could begin at any moment.
Yeah, you wonder what the purpose of the news conference is when they've already shared a lot with reporters in the hallways. As they say, it is President Trump that ultimately is going to have to make a decision as to just how long this trade truce between the world's two largest economies will be extended, knowing that the current truce is set to expire on August 12th. And according to the Treasury Secretary, they're going to continue discussing the terms here. It does not seem yet that anything is necessarily final after 2 days of talks in Stockholm.
Clearly a very fluid situation here, and surprised to see the headline that they did not discuss a Trump-Xi meeting in their session today, which went on for several hours. To that end, there are reporters in a conference room in Stockholm that have been waiting for many more hours to hear this briefing, and I'm sure are packed with questions. We're going to bring you this conversation live, assuming that it begins while we're still on the air here on Bloomberg TV and radio.
And of course, we expect a lot of that to center around questions around magnet exports from China. Of course, that is one of the primary things the U.S. wants, is those rare earths to get to the U.S. Manufacturers of various goods, from fighter jets to semiconductors and electric cars. They want access to that. That has been a sticking point, we understand, over the course of what has now been 3 rounds of negotiations with, as you say, Joe, more talks set to continue, but at least talking is better than not talking, perhaps?
Well, that's true. Look, it's being seen as a win to at least continue this conversation. Wall Street seems pretty underwhelmed by all of this Kaylee, I guess this idea of an extension was baked in. They'd like to see a little more detail.
Well, you mentioned Wall Street. You know who checks that for us? Charlie Pellet up in New York. So let's check in with him now. Hey, Charlie.
Well, hello there. We're all over the numbers. Let's get right to the story. Before we get to the numbers, Treasury Secretary Scott Bessent says the U.S. and China will continue discussing the terms of a tariff truce extension. President Trump will make the final call. We'll have the latest for you coming up right here on Balance of Power. But here's where we stand in terms of equity market response. S&P right now down 7, 63.82 where we stand. A drop right now of 0.1%. Dow Industrials down 140 points on the Dow. A decline right now of 0.3%. NASDAQ down 19, drop there of 0.1%. The NASDAQ 100 index in the green now, up by about 0.1%. Our Mag 7 index does remain lower by 0.3%. 4 out of the 7 of those Mag 7 names will be reporting in the next couple of days. Apple and Amazon on Thursday. Microsoft and Meta Platforms report tomorrow. 10-year at 4.32%. The 2-year 3.87%. Gold is up $9 the ounce. Spot gold up 0.3%, 33.24. West Texas Intermediate crude rallying 1.5%, 67.69. And Bitcoin now with a $117,000 handle, 117,639 on a Bitcoin. Union Pacific is acquiring Norfolk Southern in a cash and stock transaction valued at about $85 billion. Shares of both railroads, however, are trading lower. Union Pacific down right now by 3.5%. Norfolk Southern down by 3.2%. Again, recapping right now, S&P narrowing its loss to just under 0.1%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Taking a look at the market reaction, which maybe isn't much of a reaction at all to the news we're getting out of Stockholm from the Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer as they wrap 2 days of talks with their Chinese counterparts. China, of course, emerging from that meeting, saying an understanding was reached to extend the tariff truce between the two countries, while the U.S. side is still saying at this time, Joe, nothing is final until President Trump signs off on it. It's unclear what kind of extension we could be looking at, though adding another 90 days is an option.
So we figure Scott Bessent's on the phone with the boss on Air Force One right now. They have to obviously bring the terms or some of the framework terms that they've agreed to here to the president. Scott Bessent saying earlier off camera, Kaylee, that there are still some remaining issues, but called them small and coming from the Chinese delegation. Strange they didn't talk about a meeting between the two principals. That was one thing we thought we might get some news on.
Yeah, apparently no such meeting between President Trump and China's Xi Jinping was necessarily discussed. That's after, of course, President Trump pushed back on reports of this idea that he himself is pushing for a summit. I guess we'll have to stay tuned on that one as we still stay tuned to see when this news conference with these two individuals in Stockholm is actually going to begin.
Took the Truth Social this morning to make clear he wasn't asking for an invitation. Laura Davison is with us. She's just jumped out of the newsroom to help us as we wait to hear from Bessent and Greer, of course, our Deputy Washington Bureau Chief here in the nation's capital. Great to see you, Laura. What are you going to be listening for, and when do we expect to hear from them?
One, has Trump signed off on this? You know, this little break we're having, this could be a time for Bessent to go to Trump and try to get some clarity here so they can come out with a more definitive announcement. But also, what are those issues that are still sticking? You know, Greer and Bessent, when they spoke just moments ago, mentioned that magnets are still continuing to be a problem. They also mentioned that they didn't speak about some other things, you know, including like export controls are going to keep on a separate track. TikTok apparently also did not come up. But what is clear is that this may continue to be one of these every 90 days, we get another 90-day extension sort of thing, not unlike the TikTok deal. Just as, you know, as Trump has mentioned, doing trade deals is hard, and especially with China, it's going to be particularly thorny.
Well, and are export controls really separate to this conversation? If we're saying our issue is magnets, that's about China controlling the exports of those, and China wanting us to loosen up on our export restrictions around critical technology. How are these not intertwined?
This is really kind of the trap that Trump has essentially set for himself if he's made everything about trade and used tariffs as the leverage against any problem, whether it be you know, on AI and chips, whether it be about fentanyl. And so then trying to disentangle some of these issues becomes very, very difficult because some of the, you know, the problems that the Chinese have on certain issues are very much intertwined with something that Bessent and Greer say they don't want to talk about.
It's interesting to think that we're compartmentalizing on a level like this when there's clearly so much interplay between the issues that you just mentioned. The White House is going to try to frame this as a win. We've been talking a bit about the rollout here and the sort of lack of choreography. First, we get headlines from the Chinese side. They've got reporters waiting in Stockholm for hours now for a briefing. They end up doing, I guess, a hallway gaggle. Maybe you can tell us with print reporters, and they have yet to emerge to give their side of the story. What's going on with this?
It's unclear. So people should not read too much into the choreography at this moment. But what is clear is that they are not on the same page on messaging, and that you have each side sort of jockeying to get in front of reporters, get in front of cameras before the other side to try to frame the discussion. We've seen this, with other trade announcements where, the U.S. has come out and announced something is true, catching the other side by surprise. This is not unlike, some situations we've seen in the past.
Do we have any reason to expect, Laura, that President Trump would not want to sign off on an extension of this truce? He doesn't want to see tariffs rebound to the extraordinarily high levels that the U.S. and China had placed on each other months ago, does he?
He has very little reason to push back against an extension. The question is, does he want to do that today, or does he want to wait? There's still about 2 weeks left until that August 12th deadline. If he comes and hears the terms from Bessent and Greer and decides that's not enough, he may tell them to go back and say, hey, push for a little bit more. We still have time before that August 12th deadline. And remember, everyone else is right now currently focused on August 1st, this week.
Friday.
All of the other tariff deadlines coming up.
It's a great point that we are reminded of this. If you're just joining us on Bloomberg TV and radio, we welcome you to Balance of Power. We've been waiting for some time now for a news conference with the Treasury Secretary and the U.S. Trade Representative following their third session now with their Chinese counterparts, talking trade in Stockholm. The president is on Air Force One, as we've mentioned, so maybe we're waiting for him to have a conversation with reporters beyond the secretaries. It could take some time. They're on no particular schedule here in Stockholm. But if we cast about another 90 days or so, that's not too far away from the summit in November that was suggested could be a venue for Trump and Xi to meet. Isn't it possible they're talking about this along the side and just didn't make any news on it today?
It's very well could be. We saw Trump kind of push back on this potential summit, saying that, he would go if invited, but hasn't been invited, but maybe he has been invited. Trump wants to get in the room with some of these foreign leaders. We've seen this, really from day one, as in his second term. But I think it's clear that the point of they are at these talks right now, they're just trying to agree on an extension. They're not necessarily at the point of even coming to some sort of bigger, more comprehensive framework.
Yeah, nothing is done until it's done. And that doesn't just apply to reaching some kind of an agreement or extension with China. But as you were alluding to, the Friday deadline, our understanding is Europe is currently racing to get something down on paper to kind of formalize the terms that Ursula von der Leyen and Donald Trump agreed to on a handshake over this weekend. And the Commerce Secretary, Howard Lutnick, in an interview on another network, suggested there's still a lot that needs to be ironed out, even for the deals that they're ready to announce, that they did so eagerly. It's not really all clear that this is finalized.
It is not at all clear this is finalized. In fact, I think we can say it is not finalized, and that we have no paper. We saw this in the Vietnam deal. We saw this with the Japanese deal. That these things sort of, there's an announcement, and then maybe there's some disagreement on what the actual announcement was before they actually get these things on paper. That's the thing that could really start to spook markets as we get towards this August 1 deadline of just people. You have two very different interpretations, and when there's nothing written down, and particularly nothing in a legal language, interpretations can run wild, and every side can see what they want to see.
All right, Laura Davison, our Deputy Washington Bureau Chief, thank you so much for joining us as we still are watching Stockholm here to see when the Treasury Secretary Scott Bessent and USTR Jamieson Greer will emerge. They are expected to partake in a press conference with reporters who, as Joe's mentioned, have been waiting in that room for hours on end for them to arrive. We'll, of course, bring it to you live on Bloomberg TV and radio when it does begin. But in the meantime, we want to add the voice now of Anna Ashton. She's founder of Ashton Analytics, a China expert and a U.S.-China trade expert at that. She's a former China analyst with the Department of Defense. Welcome back to Balance of Power, Anna. It's good to have you. As we understand, the Treasury Secretary, Scott Bessent, has described small issues remaining with China, mainly having to do with the Chinese delegation. Do you have a sense of what the problem here may be?
I think, Kaylee, that the devil is in the details is sort of a theme that's emerging from this series of meetings. Each time we've had rather vague readouts. And I think what Laura pointed out just now about the fact that there's a window here to sort of iron out differences from now until August 12th, that's important because we saw differences get ironed out seemingly after the July meeting in London too. there was, confirmation of what the outcomes were a little while later. And I expect that maybe that's what we'll see here as well.
Well, let's talk about the devil today, because you could describe export controls as the devil. You could describe Russia as the devil, maybe rare earths. Aren't these all supposed to be part of a trade deal? And it looks like in many cases they didn't talk about any of them, including a meeting between Trump and Xi.
Right. I mean, supposedly they didn't talk about any of them. I find it very difficult to believe that export controls didn't come up because, quite recently, Commerce Secretary Lutnick was talking about how there was going to be a continuation of this framework that was established in Geneva and London that included a balanced rollback, quote unquote, with, assurances from the Chinese side that licenses would be approved expeditiously for exports of rare earths and magnets in exchange for lifting of various export controls on the U.S. side. I don't see how they separate that from trade, having had several different cabinet members confirm more than once that these things are part of the negotiations.
Well, and because they're part of the negotiations and because China has such a chokehold on this market in particular, does that mean that when they're all at the table, it's actually China that has the upper hand here, Anna?
Absolutely. I think that it's pretty clear that China does have the upper hand for now. And what would remove that advantage from Beijing? Nothing I can think of in the short term. We can't catch up on supplying ourselves with sufficient heavy and light rare earths or magnets anytime in the near future. And it sort of doesn't matter what kinds of incentives or policies are thrown at that. It's just not a short-term problem. Therefore, China is going to continue to hold this dominant position for a while, and that is significant leverage. I have to assume that is why Russia and Iran, compliance with Russia and Iran sanctions was suddenly part of the talking points on the U.S. side, because, they contradict some of the things that the president said after the bombing of the nuclear sites in Iran. He was pretty clear that he was encouraging China to continue doing business with Iran. But maybe that was, seeking leverage ahead of this round of talks.
Well, it's interesting that there's no agreement on export controls today, as we've discussed, Anna. Would that suggest to you that it is really the one point of leverage that the U.S. does have at this table?
It's an important point of leverage, but only in the sense that, the Trump administration has given Beijing a reason to believe, Joe, that perhaps the export controls that were not negotiable under the Biden administration are negotiable now. They've already kind of ceded ground when it comes to the export controls that they implemented, that the Trump administration itself implemented this spring. Those, they already agreed to lift in exchange for facilitation of rare earth and magnet exports when they met in London. At least that's how they've described it. So now we're talking about export controls that were applied during the Biden administration. Either there's flexibility or there's not. That's going to be a huge sticking point for China. And maybe on the U.S. side, the sticking point is that if they're going to be flexible on that stuff, they need China to be willing to approve licenses for exports of things that could have dual uses to entities that could be part of the military-industrial complex. I have a hard time believing that China will agree to that, though.
Looks like our players have emerged, Kaylee. The Treasury Secretary, Scott Bessent, and Jamison Greer, the U.S. Trade Representative, have just sat down in the briefing room with reporters and are speaking now live. Let's listen on Bloomberg TV and radio.
Brief statement, then take some questions. We had a very fulsome 2 days with the Chinese delegation led by Vice Premier Ho Feng. It was our third meeting. I'm happy to say that London built on Geneva, Stockholm built on London and Geneva. I think we had great momentum going into the meeting thanks to the president's trade deals. I think that the Chinese were surprised by the magnitude of the Japan deal, by the magnitude and the terms of the European deal. So I think that they're never compliant, but I believe that they were in more of a mood for a wide-ranging discussion. The discussion centered on the two economies. We had a very in-depth report on them on the Chinese economy. We gave a very detailed report on the U.S. economy. We talked about the trade deals that we were doing with other countries. We expressed our concern about Chinese overcapacity globally and what that might mean for this year, for the next few years. We expressed our concern for their purchases of sanctioned Iranian oil, which they buy about 90%. We also expressed our regret that we believe that they had sold Russia about $15 billion of dual-use technologies. But the overall tone of the meetings was very constructive, and I will pass it over to Ambassador Greer.
Thank you. We also reiterated, had that kind of a discussion with the Chinese as well.
Of the global trading system. So now here you have the two largest economies in negotiation. And as I've said before, and we reiterated to them, we don't want to decouple. We just need to de-risk with certain strategic industries, whether it's the rare earths, semiconductors, medicines, and we talked about what we could do together to get into balance within the relationships. Ambassador Greer has made the fantastic point that for decades the U.S. trading system sacrificed manufacturing for to be able to sell, whether it was ag or natural resources. And now under President Trump, as you've seen with the Japan deal, with the Europe deal, we are able to do both. We are able to reshore manufacturing and also do substantial purchase agreements of U.S. ag and energy.
Great. All right, let's turn to the room, please. Let's start up front.
Good afternoon. Jamie Keaton, Associated Press. We had Li Changgang speaking to reporters shortly after the end of the talks today, and he mentioned an extension of the pause. Can you give us some details on that, how long that's going to go on for, and how will it work? And if I could just throw in another one, what do you say to lawmakers in the United States and others who are concerned that concessions on export control on items like chips for AI will jeopardize U.S. national security interests?
Well, I'll take the national security question, and then Jameson could talk about the pause. Look, we are very diligent in terms of the national security. Things go through the interagency at the White House, whether it's Treasury, it's NSC, it's Commerce, it's DOD. So that there's nothing that's being exchanged for anything. I think you might be referring to the NVIDIA H20s, which are well down their technology chip stack.
Great. And I would say, I should also say the only export controls we talked about today were Chinese export controls on rare earths. Just U.S. export controls were not something we discussed. With respect to a potential pause, we're going to head back to Washington, D.C., and we're going to talk to the president about whether that's something that he wants to do. It's certainly something that's been under discussion, and so we'll brief the president on the outcome of this, and we'll see if there are any. We have further technical discussions that are happening right now as we speak among the teams, and so the president can make a final call on whether that's something that he wants to do.
Not on our side.
Great. Next question, Jenny.
One for each of you. Secretary Besson, you just said again Secretary Besson, you just said again that the biggest problem in the relationship is China's overcapacity and that you want them to move towards a new consumption-based economy. What's your specific plan for addressing those economic imbalances besides purchases of U.S. goods? And then do you want me to go to Jameson now? Sorry, Ambassador. Okay. And then obviously the Section 232 investigations that the president is set to unveil in the coming weeks on pharmaceuticals and semiconductors would theoretically hit China after as well as everyone else in the world. After your talks today, will those tariffs be imposed on the Chinese, or did you make any commitments to pause them or not target the Chinese specifically with those actions? And then what would you say is the biggest concessions that the Chinese have had to make in these talks so far?
I'll just repeat that China is the most imbalanced economy in modern times. And I think we are going, they're 30% of global manufacturing. They have a 2% current account surplus of global GDP, which we've never seen before, or probably not since the 1870s with the British Empire. And that's not sustainable. So the tariff levels will have quite a bit to do with that. And I think the other thing that we're seeing is that President Trump was very early on talking about the China problem. The U.S. experienced the China shock when China came into the WTO in the early 2000s. But Europe, a lot of the European business model, it was quite a business model, was predicated on cheap Russian energy, a depressed exchange rate because of the Southern European countries dragging down the euro, and then selling goods into China. And now that China has jujitsu'd the model and of COVID, rather than increasing their consumer, they upped their export capacity, and they did it quite a bit up the value chain. So, we'll see over time. But my guess is that over time, that the other economies, developed economies, will start increasing their tariff barriers, and the global South, they just can't absorb all this Chinese production.
I would say also, when you ask about what tools can be used to deal with this, I mean, this is part of the reason why the president implemented his tariff program. Right now, if you look at the numbers, we're still tracking an annual trade deficit with China. But if you extrapolate it out from the numbers we have so far it looks like it's going to be at least $50 billion smaller this year. So that's some progress already. With respect to the Section 232, this came up during discussions. The Chinese asked us about it. What's the plan? What's the timing? We shared what information we could. You've heard President Trump talk about this publicly, which includes discussion of having a situation where you start with a lower tariff, but then you go to a higher tariff at some point to try to bring back manufacturing of pharmaceuticals or semiconductors. These are global actions. They don't target the Chinese. They don't target any particular country. They'll be applied globally. There aren't any exceptions or exemptions for particular countries.
And what's the biggest concession they've made?
That the Chinese have made? Well, I would say they blocked all of their rare earth magnets, and now we're getting them.
Great. Next question, please, Gavin.
Thank you both for being here. I'm just wondering if we can get some clarity on the tariff level that is threatened to happen on April 12th. I know the April 2nd tariffs were 34%. You add that to the fentanyl, 54%. That's where the tariffs are for many goods right now. So what is the overall threat to the Chinese in terms of a tariff level that could happen if there is no extension?
Well, I think you've seen, I've used the word boomerang. So if we boomerang back to the April 2nd level, if they would go to 34. I noticed, as the earlier question said, that the Chinese deputy minister did say that we had agreed on a pause. We have not. Nothing is agreed until we speak with President Trump. He's on Air Force One, I believe, doing a press conference right now. And we will be seeing him in the Oval tomorrow to go over the deal with him, and then he'll decide if the pause continues as is.
And just to be clear, yeah, the president has discretion to change the rate depending on the circumstances that we have, et cetera. So while the snapback rate would be 34%, he of course has discretion under the law to modify that.
Yeah, my question is just the 34% is under the tariff level that's current for many goods. So would that be additive to what we have already? Would it be on top? Okay.
Yes.
So we're talking about the threat is that tariffs kind of in like the 80-85% level?
Yeah, depending on the product. Yeah.
Depending on the product.
Yeah,
okay.
but just kind of to tamp down that rhetoric. The meetings were very constructive. We're just that we haven't given the sign off.
Gotcha.
Great. Thank you. Next question, please. Yes.
Melissa Eddy from the New York Times. Melissa Eddy from the New York Times. Can you tell us, please, did you discuss a potential summit between the Chinese and U.S. the Chinese president and President Trump? And can you give us any timeline on what you're thinking about in terms of that?
No, the only thing we discussed was there was a recent phone call between the two leaders. On that call, President Xi invited President Trump to Beijing, but we didn't discuss that at all. What we discussed was implementing the desire of the two leaders for the trade team and the Treasury team to have trade negotiations with our Chinese counterparts. So our meetings were just to implement the will of the leaders, not to discuss if there would be a meeting.
Can you just give a time? When was that call? Do you have it on there?
I think that was the June call, right?
Yeah, it
was June 4th or 5th.
June 4th or 5th.
Thank you.
Great. Right behind.
Hi, Clara from Jägerfeld, Channel 4 Sweden. You've also met with the Swedish government. What topics did you discuss?
We discussed a wide range of topics. First of all, we want to thank the government for the fantastic venue here. Very, very good to be in Stockholm in July. And we discussed the EU deal with the U.S., of which the Prime Minister, the Finance Minister were very supportive. The Finance Minister and I had met previously during World Bank and IMF Week in D.C. We discussed the importance of getting back to basics with the multilateral development banks. We discussed the Swedish economy and how things are going, how important trade is.
Yeah, we also talked about the huge success in U.S.-EU relations over the past few weeks with the recent NATO summit, where all parties agreed to increase defense spending, and Sweden is a big part of that. And so we talked about Sweden's defense establishment. And then, of course, we also talked about the EU deal and how important that was for both sides to reach that. We also talked about U.S.-Sweden trade. We talked about automobiles made in Sweden. We talked about stainless steel. We talked about ag products like onions and carrots. We learned all about Swedish agricultural production, which is really interesting. So it was a very productive discussion, and we're grateful again for our Swedish hosts for helping us here.
Yeah, just to follow up on that, when I have spoken to experts regarding the EU-US deal, some have said that it feels secure that there is a deal, but that you still can be a little bit unsure if it would change. What do you have to say to that?
Oh no! Right now we have I have text from some of my European counterparts about making sure the details are correct and fully put on paper. So we feel very confident about it, and it's truly a solid path forward for our two countries.
Thank you.
Yep, and I think the other thing that we discussed that's very interesting is the unintended consequence of President Putin's invasion of Ukraine is bringing in Finland and Sweden into NATO. And we discussed the historic reputation of the Swedish military and how good it was to have them at NATO.
Great. All right. Next question. We'll go one more behind. Sir.
It's Haoji from Phoenix City, Hong Kong. I believe you discussed a range of topics with your China counterpart in these 2 days. But compared to Geneva and London, do you think is there any questions or issues are becoming tougher and toughest to negotiate? And as you mentioned that the U.S. is trying to convince China not to keep buying the oil, gas from Russia or Iran, will be the kind of new conditioner for the future round of the talk between U.S. and China. And also, I want to know, since U.S. government has pushed the tariff globally to say push the tariff to a very high peak since 1930, as some newspapers said. But so both of you, do you think it will be concerned by the U.S. people about the potential inflation pressure and also the local economy? Do you believe will it be more or less slow the economy for the U.S.?
Well, there's a lot to unpack there. So I'll work backwards. I was a professor of economic history at Yale, and I can tell you it's my belief that as many people have a misunderstanding that the downturn in the 1930s was caused by an increase in tariffs. It wasn't. The stock market crashed in 1929. There was also a very large tax increase in the U.S. We just did the largest tax cut in history. The U.S. economy is starting to fire on all cylinders right now. We actually, in May, saw the biggest downturn in inflation in 4 years. So the U.S. economy is doing quite well. And I will tell you, rather than the talks getting more difficult, I actually think that they are getting more engaged. There was a in Geneva, very narrow issue with the magnets. In London, the talks went to a wider aperture. And here, we're able to discuss more and more things. This report that we gave each other on the economies, on the outlook. So I would say it's just the opposite. The purpose of meeting frequently is to have personal relationships, have understandings, and show respect and mutual cooperation. I think Jameson, Ambassador Greer, has been dealing with the Chinese much longer than I have.
Yes, I have. No other comments, though.
Great. I'll take the next question. Let's come back up front. Dave Lauder, Reuters. Careful with the boom mic.
Hi, thanks. Secretary, a question about Russian oil. As you know, the president has threatened possible tariffs on countries that continue to buy Russian oil 100%. China is the largest purchaser of that commodity. What was your message to the Chinese about Russian oil? Did you tell them they're on notice, they need to start to pull back?
Well, we described, it's not just the president, what is making its way through the U.S. Senate. And hard to imagine anything could get 80 or 90 bipartisan votes in the U.S. Senate, is a bill that will give the president discretion to apply secondary tariffs on sanctioned Russian oil from, I believe it's from 0 to 500%. I believe he's used 100%. And we've heard from several of our European counterparts, NATO allies, even Canada, well, Canada is in NATO, that they will be following on that. So we would expect most of the Western alliance that has been supporting Ukraine to follow on that. So I think anyone who buys sanctioned Russian oil should be ready for this.
What was their response to that warning?
The Chinese take their sovereignty very seriously. We don't want to impede on their sovereignty, so they'd like to pay 100% tariff. But
Great. We have time for just about one or two more. Ma'am.
Hi, my name is Clara Matsdotter. I'm from Affärsvärlden. I'm just wondering, you've been described as a global macro veteran and you've run a hedge fund. In this moment, where would you put your money if you were still running one?
United States of America.
Only?
That's
Only?
right.
Okay. And could you just give us some insight on your current macro view outside of the U.S. as well?
Well, what we're seeing, the euro's appreciated quite a bit this year, and the currency theory would tell you that when you get a fiscal impulse, you see that, and we've seen a big fiscal impulse coming from Europe, especially from Germany. So, and we're also going to see quite a bit more spending. With China, we are seeing that they are in disinflation. They have a real estate problem. They have a very large current account surplus. As I said, it's about 2% of global GDP. And the Chinese currency is a very difficult currency. It's probably in 3 different equilibria. You have the currency is cheap. You have 1.4 billion people who want to get their money out of China but aren't allowed to. And then you also have the threat of, will the Chinese give you your money back in 1, 2, 3, 4, 5 years if you put it in? And then, I think we are seeing the trade deals are having, contrary to the gloom, doom, and boom pessimism that we saw at the beginning of April, that the trade deals have had little effect on the economy, and that the U.S. economy is accelerating. And this year, the U.S. is going to take in probably a minimum of $300 billion of tariff income, which will bring, that's 1% in terms of the GDP. So I think we could substantially bring down our deficit to GDP.
And also, finally, when you come back and speak to Donald Trump about this tariff pause, how prolonged will it be?
I'm sorry.
If it goes the way that China just told us right before you came here?
I think typically we talked about 90 days.
90 days more?
Yes.
Yes, okay, thank you.
Great. Guys, that's about it. He's going to have to get to his next engagement. So thank you so much for coming, everyone. And if you have any additional questions, please direct them to U.S. Embassy Stockholm, where they can put you in touch with us at the Treasury or U.S. Trade Representative. Thanks a lot. Have a great day.
There you have it. From the source, as promised here on Bloomberg TV and radio, Treasury Secretary Scott Bessent and the U.S. Trade Rep Jamieson Greer speaking with reporters and answering some very smart questions as we try to get a sense of what was discussed in a third round of negotiations between the U.S. and China in Stockholm. This is Balance of Power on Bloomberg TV and radio. Kaylee Lyons here as well in Washington, D.C. There's much we don't know here, Kaylee, and what we do know still needs a sign-off from the President of the United States.
Yeah, the Treasury Secretary going as far as to say he knows that China came out of the meeting saying that there had been an agreement to extend the trade truce beyond August 12th. He said, we have not agreed. Nothing is agreed until we speak with President Trump. But we also learned simultaneously, as President Trump right now is gaggling with reporters aboard Air Force One, that he has spoken to Scott Bessent, who will brief him again in the Oval Office tomorrow. And at that time, he says he will either approve it or not when it comes to an extension with China.
No talk about a summit, at least apparently at the table here. We know the two countries, our two governments have been discussing this idea. A potential venue in November has been floated, but there's no news on a meeting between President Trump and President Xi. Most believe there could be no real trade deal without that happening.
Yeah, it's also interesting to consider whether or not a trade deal can happen without it also factoring in export controls.
Yes,
the U.S. Trade Representative Jamieson Greer said that conversation apparently in Stockholm was really one-sided, that yes, they talked about export controls, but only China's controls of rare earth minerals, not necessarily the export controls the U.S. has put into place on critical technologies.
That was pretty newsy. We were discussing this with Anna Ashton beforehand, knowing that NVIDIA today put in an order for 300,000 of its H20 chips that have just recently been cleared to sell once again in China. But for that to not come up in this session is confounding. Wall Street's been watching all of this, by the way. Shares of NVIDIA, which have been knocking on an all-time high, barely moved during this whole conversation today.
Well, let's see what's happening on Wall Street beyond NVIDIA as they digest all of these headlines emerging from Stockholm and turn to Charlie Pellet up in New York for a look. Hey, Charlie.
Hi, thank you very much, Kaylee and Joe. Right now we are looking at a lower U.S. stock market. The Dow, the S&P, NASDAQ do remain very much in the red, down 12 points on the S&P, retreating from an earlier record right now, down 0.2%, 63.76 where we stand on the S&P. The Dow down 180 184 right now. That is a drop of 0.4%, while the NASDAQ Composite Index down 38, drop there of 0.2%. NASDAQ 100 Index, a little change, down less than 0.1%. Our Mag 7 Index down 0.4%. 4 out of the 7 of the Mag 7 names will be reporting this week. Apple and Amazon on Thursday, Microsoft, Meta Platforms tomorrow. All 4 of those names are trading lower. 10-year at 4.33% ahead of the Fed decision tomorrow. We've got the 2-year 3.87%. Gold, meanwhile, up $12 the ounce, up 0.4%. West Texas Intermediate crude now up 2.5% at $68.39 a barrel, and Bitcoin down 0.2%, 117,850 on Bitcoin. One additional headline to pass along: President Trump giving Russia 10 days to reach an agreement with Ukraine. The president says in 10 days the U.S. will be putting tariffs on Russia. Again, recapping, S&P down 0.2%. Balance of power continues right now. We got you covered on trade. Back we go to Washington, and once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, many thanks. We'll get back to Charlie again closer to the top of the hour here for the latest on markets, which have been listening very closely to the conversation in Stockholm. That's where Scott Bessent and Jamieson Greer, the Treasury Secretary and U.S. Trade Representative, have just finished briefing reporters who waited hours for a readout on their negotiating session with the Chinese. And we want to bring you into that conference room in Stockholm right now. Bloomberg Europe correspondent Oliver Crook was there for the back and forth with Bessent and Greer and joins us now with a live update. Give us a sense of the mood in that room, Oliver. We appreciate your reporting today. It took them a long time to come out, and while Scott Bessent tried to frame this as a productive meeting, there are questions about some of the sticking points that remain.
Absolutely. I think you've got a correct read on the situation after 2 days of discussions that we've had between the Vice Premier of China, Scott Bessent, the U.S. Treasury Secretary, Ambassador Greer on the trade side, trying to hammer out the details to get what we were sort of hoping was a rubber stamp 90-day extension to those trade tariffs that have been put on hold with China that are slated to come back into effect on August the 12th. Very, very high rates of tariff if they do not have an agreement. They were not able to conclude that conversation and come to an agreement in the meetings over the last 2 days. They did make a lot of positive signals about how conversations were going, that they were very productive, that they are now going to go back to Washington, D.C. to consult with the president. And it sounds like this is really going to come down to the president of the United States, whether or not he approves this extension. We do know that the most likely outcome, if there is an extension, is another 90-day extension. A lot of positive noises. Again, there was no mention of a possible summit between Trump and Xi Jinping. It seems that we are pretty far from that in terms of where we are on negotiations. That is not something that appears imminent. And we also heard from Jamieson Greer saying that they never want to talk about magnets again. As far as they're concerned, that issue is settled with the Chinese, and they'd like to see those continue to flow. That has been agreed. But I do think that one of the sort of salient points here, and one of the most important points, was really the reiterating by the U.S. Treasury Secretary about this issue of Russian oil and secondary sanctions, something that it sounds like we just heard again from the President of the United States, that if there is not meaningful efforts from Vladimir Putin to come to a ceasefire in Ukraine, that you could see those secondary sanctions implemented on Russia. That could be anywhere from 100% tariffs on anybody who's buying crude oil from Russia to 500% tariffs on anybody who's buying fossil fuels from Russia. And obviously, China is a very large consumer there. And he was saying that the Chinese, they talked about this, that the Chinese are very sort of concerned with their own sovereignty, and it's up to them if they want to pay 100% tariffs on Russian oil.
Yep, 10 days from now, according to President Trump. Bloomberg's Oliver Crook reporting live for us from Stockholm. Thank you so much. Of course, the latest on the outcome of talks between the U.S. and China, an outcome I think it's fair to say remains uncertain. So on that note, we go back now to Anna Ashton of Ashton Analytics, a China expert who joined us earlier on Bloomberg TV and radio. Anna, now that we've heard from Bessent and Greer about what was and was not discussed today, would you describe this third round of talks as significant forward progress, or is this just stasis?
Gosh, Kaylee, I think my biggest takeaway was that it seems like the U.S. is trying to kind of flip the script. We talked before the press conference about whether or not China had a decisive upper hand because of its monopoly on rare earths and magnets. And I said, yeah, I think they do, because there's more room for them to hold the line and also offer compromises than there is given the political pressures for the U.S. to hold the line or offer compromises on export controls. I think they're trying to make it not about export controls. They're trying to make this a balanced rollback, as Lutnick said, of tariffs in exchange for a continued or increased flow of rare earths and magnets. And then they're also throwing in the threat of secondary sanctions. It seems like that seems like a sound play on the part of the Trump administration in terms of trying to find effective leverage. I think that is effective leverage, given the fact that the level of tariffs that could be imposed in a snapback would be really, really high and certainly would do damage to a Chinese economy that is already kind of, struggling to gain momentum. I thought it was interesting how much Bessent emphasized the success so far of the tariff strategy. It's clear that, the point they're trying to drive home is that they're not backing away from their tariff strategy, and tariffs will continue to loom as a threat if China is not sufficiently cooperative. And of course, 232 tariffs could be part of that.
Scott Bessent seemed a bit miffed that the Chinese told reporters they had an agreement to extend the deadline, reiterating that only Donald Trump could approve that, and the president has not made this clear. What did you think of the body language, the tone? Are these actors getting along or not?
I'm sure it was tense. And I think, the Chinese side has had its opportunities to be frustrated with the way that Bessent and other members of the Trump administration have characterized previous rounds of talk. And perhaps that's why Vice Commerce Minister Lee decided to go ahead and lean into his interpretation of the outcome of this round of talks. I could easily see them, caveating in reply to Bessent that they just meant an agreement in principle. Of course, they just meant an agreement in principle. They both have to go back to their respective leaders for approval of anything they agree to.
Really great to have you with us, Anna Ashton Analytics, and many thanks for being so generous with your time, watching and listening to this conversation for us, so we can bring the best analysis to our viewers and listeners. Kaylee, we want to mention another breaking story right now. As we've alluded to a couple of times, Donald Trump is briefing reporters on Air Force One, or at least was a short time ago, making news not only on trade, but also on geopolitics specific to Russia. Remembering yesterday, he said he might move up the deadline for Russia to reach peace in Ukraine, promising the secondary sanctions that we were just talking about. He's now given it 10 days. Donald Trump says Russia has 10 more days to reach a truce in Ukraine. It is moving oil prices right now. We've seen crude oil move back above $68 a barrel on this headline. And we want to bring in Mara Rudman for more on this, professor at the University of Virginia's Miller Center, former U.S. diplomat, back on Bloomberg TV and radio. Mara, your reaction following President Trump's visit to Scotland this weekend to this more intense rhetoric when it comes to Russia. He said that moving the deadline has not resulted in any progress yet. Will this headline make that different?
John, good to be back with you. I'm not sure that Donald Trump saying it or saying it louder or shortening the number of days is what's going to make the difference. I hope what Donald Trump is learning and seeing is that the United States is much stronger in whatever it says and whatever it moves to do when we have friends and allies with us who are like-minded in approach. And it's worth nurturing and building and spending time and attention with those relationships. And I hope some of what we're seeing from him is a result of that.
Well, but what will the result of that ultimately be, Mara? It's one thing for President Trump's attitude to change. It's entirely another for President Putin's. Do you expect that will happen?
Well, I think President Putin is constantly, not unlike President Trump, calculating where his interests lie and how to achieve them. And so the question of secondary sanctions, of how much pain, frankly, can be inflicted on the Russian economy and the extent to which there's the capacity to keep or limit China from helping or bailing out Russia in the way that they have. All of those things are going to factor into whether we ultimately see changes from Putin. I don't think he is suicidal. He wants to continue to rule, and he wants his country to remain allied with him. But it's not clear how quickly we will see turns because of how deeply entrenched his issues are in going into Ukraine and how rightfully entrenched the Ukrainians are in having the Russians depart and stop their offensive.
We've spent the bulk of our program today, Mara, talking about trade, whether it's with regard to China, the EU, or any other partner that is facing a deadline here coming up next month, whether it be the 1st or the 12th. And a lot of that talk has revolved around the idea of the taco trade, the fact that the markets are still near all-time highs despite the great uncertainty. And I wonder if there's an element of that here. Does Vladimir Putin actually believe that Donald Trump will go through with the threats that he's making?
Yeah, it's a fair question. And there's plenty of reason to see inconsistency in President Trump and his actions. And so both in terms of the economy and in terms of how other world leaders look at and assess the United States, it will be important for President Trump to be able to display and act with some degree of consistency and not, not pivot his positions by sometimes up to 180 degrees overnight. And again, we have too little in the mix now to know whether he's capable of doing that.
Well, as we consider President Trump's shifting positions, we saw a notable break yesterday between him and Israeli Prime Minister Benjamin Netanyahu on another issue, which is the situation with hunger in Gaza. Netanyahu obviously not characterizing it as starvation. President Trump says he begs to differ and thinks the images don't lie. But he also just said aboard Air Force One that he thinks Israel could do a good job with food centers in Gaza. How much do you expect the pressure on Netanyahu and Israel specifically to ramp up from President Trump?
Well, again, I think the question here is one of consistency, because while I appreciate the fact that he acknowledged the very real facts on the ground in terms of the human lives and the suffering that is occurring in Gaza, and was able to acknowledge that while Hamas has a role in that for sure and brought all of this upon the people of Gaza, that Israel's actions are also culpable. He needs to be able to continue with that kind of approach and to present solution sets. And there are some within Israel who also want to see that, who have a different view than Prime Minister Netanyahu. Notable among those who would support some of the solution sets others are bringing forward to the Israeli military, who frankly wanted the original system of food distribution and humanitarian aid to continue and were overruled by the political elements of Prime Minister Netanyahu and those around him.
All right, Mara Rudman, professor at the University of Virginia's Miller Center and former U.S. diplomat, joining us here on Balance of Power. Thank you so much. And President Trump just speaking again on Gaza aboard Air Force One to reporters, saying those kids are starving and that everyone thinks Gaza photos are horrible. But he also is commenting on the other news we're dealing with. Of course, the U.S. and China wrapping a second day of meetings in Stockholm. President Trump saying that while we understand it wasn't discussed at the meeting, he does think that Chinese President Xi Jinping wants to meet, and that will probably happen before the end of the year, Joe.
Having taken to Truth Social earlier to make clear that he was not asking for an invitation, that the Chinese were in fact sending one. Whether that summit happens, we'll let you know as we wait to learn much more about the deal, the framework at least that was struck, and whether President Trump is going to sign off on all of this. Meet us back here at 5 p.m. Eastern Time for the late edition of Balance of Power to seek answers to these questions on Bloomberg.
is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live across Bloomberg platforms. Carol Masser, Tim Stenivek, live here on Bloomberg Business Week Daily. And we've got the Fed kicking off a two-day meeting, and we have stocks kind of cooling, pulling back from that record run that we've seen as of late.
Yeah, the Fed, earnings, economic data, there is a lot for investors to digest. Also, Carol, China and the U.S. agreeing to extend their tariff truce. We're going to be covering all of this in just a moment.
Yeah, a lot of headlines on that just over the last 30 minutes. Also coming up this hour, quite a treat, a double dose of CEOs in the drug space. AstraZeneca's CEO on today's better than expected results. We'll also talk about what is propelling growth at the company. And then we've got a second one, Tim.
Yeah, the CEO of Compass Pathways on the path to FDA approval of the first psychedelic treatment for some of those folks living with depression. So a great program coming up over the next hour right here on Bloomberg.
All right, let's take a look at trading because we've got stocks kind of bouncing along their lows of this session. Let's head on over to Charlie.
Hi, thank you very much. And here's what's going on. Lots of moving parts to this market. We got you covered on Bloomberg Television and Radio. Fast-moving trade developments, economic data, the jobs report later in the week, earnings reports, Fed decision tomorrow. Right now, right to the markets with the S&P down 13, 63.76 where we stand. That is a drop now of 0.2%. Dow Industrials down 209, drop there of 0.5%. NASDAQ down 35, a decline now of 0.2%. Our Mag 7 index now slumping by 0.4%. 4 out of the 7 members of that index will be reporting earnings this week. Apple and Amazon Thursday, Microsoft Meta Platforms tomorrow, and all 4 of those names are trading lower. The 10-year, 4.33%. The 2-year, 3.87% now on the 2-year. Gold up $13 the ounce, up 0.4%. And West Texas Intermediate crude now surging by 3.3%, closing in on $69 a barrel on WTI. Deal news: Union Pacific has agreed to acquire Norfolk Southern in a cash and stock transaction valued at $85 billion, forming a transcontinental rail giant. Shares of both railroads, however, are lower. Union Pacific down now by 3.1%, Norfolk Southern lower by 2.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, U.S. and Chinese negotiators have concluded their latest round of talks, trade talks, of course, that were underway in Stockholm, with an agreement to extend their tariff truce, or so it seems. We have some questions here. U.S. Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer holding a press conference last hour in Stockholm. The Treasury Secretary saying an extension, not a done deal.
If we boomerang back to the April 2nd level, if they would go to 34. I noticed, as the earlier question said, that the Chinese deputy minister did say that we had agreed on a pause. We have not. Nothing is agreed until we speak with President Trump. He's on Air Force One, I believe, doing a press conference right now, and we will be seeing him in the Oval tomorrow to go over the deal with him, and then he'll decide if the pause continues as is.
All right, that, of course, was U.S. Treasury Secretary Scott Bessent earlier in Stockholm. With more on where we are, Bloomberg News correspondent Oliver Crook was in the room where it happened in Stockholm, where that press conference was went underway just about 35 minutes ago. Oliver, pause, no pause. I think we're all still kind of scratching our head to understand exactly what was agreed to.
Yeah, I think we were too a little bit, and that was helpful for the Secretary of the Treasury to cast a little bit more light on that. You know, far be it from Donald Trump to withhold any suspense from us. Basically, the 2 days of negotiations that we had by the Chinese Vice Premier, the U.S. Treasury Secretary, the Ambassador on Trade, Jamieson Greer, ended a couple hours ago. Then they briefed the media, and it ended, it seemed initially, by the Chinese saying that they basically a 90-day pause, the continuation of the truce between the United States and China, that would continue for another period of time. They didn't specify the period of time. Then we started to hear from the Americans with a slightly different story, that basically this is still conditional to Donald Trump's approval. We understand that Scott Bessent did speak with Donald Trump after the conversations before he gave that press briefing, but he's going to give a more complete briefing a little bit tomorrow in the Oval Office in the White House in order to get the final sign-off from Donald Trump, who may, change his mind, may demand something else. But again, the deadline that we're facing here is August the 12th, when these tariff rates will shoot right back up. So for the market, this is really a crucial thing to get over the line.
Interestingly enough, at least the equity market not reacting much to this news. Perhaps it was priced in. Perhaps there was the expectation that there would be some sort of extension here. I want to go to rare earths specifically, Oliver, and what we learned about the way that rare earths, not just today, but really over the last few months, have taken center stage when it comes to these negotiations. What do we know about that?
Well, what I think is interesting is that there were concessions on rare earths. There were concessions in exchange for that on the H20 chips by NVIDIA, by the United States, the allowing of selling them into China. And we should say that, one could interpret this as a sort of act of goodwill on both sides in order to try to make progress. But the reality of the situation is that for each of these economies, they're dependent on the other. There is no alternative for these technologies. This is not just an act of goodwill. This is the leverage that China holds over the United States. It is the leverage that the United States holds over China. And they did manage to make some breakthroughs on that. And again, this is something that was active in the discussions with the delegation from China and the United States today. We heard from Jameson Greer saying that I don't want to talk about magnets basically ever again. As far as they're concerned, the magnets should be flowing. They are flowing now, and that this should be a closed topic, and that they can then put that aside in order to make progress on the many other issues that are large issues between China and the United States. They'd like to basically put an end to it. And as far as they're concerned, they hope it's done.
All right, Oliver, back in June, President Xi of China, we know, invited President Trump to Beijing. Are the two leaders talking at all during these talks, or are they just waiting until, I don't know, the final terms? What's kind of going on behind the scenes here?
Yeah, I mean, our impression is that the last time that they spoke, this came up during the press conference, was in the call that they held in June. We understand that Xi Jinping did invite Donald Trump and the First Lady, Melania Trump, to China at some point. There has been some discussion today. I think there was a Donald Trump truth saying that basically he's not seeking a discussion with President Xi Jinping, but he has been invited. But this is really at the crux of the issue here, right? The Chinese, in the last few decades, have been building out their economy, have been building out their status on the global stage. They don't want to be seen sort of bowing theatrically to the United States on these trade issues. The Europeans have much less of a problem with that. They're being much more pragmatic about these sorts of things. But for the Chinese, this is not just about trade. This is about their status on the global stage. And I'll remind you that in Trump 1, the first Trump administration, these trade negotiations between the Chinese and the United States, they were held in Washington, D.C. These discussions today are being held in Geneva, the United Kingdom, in Stockholm, in neutral sort of third-party places. And we've seen what China's appetite is to escalate this trade war. If they have to, they shot the tariffs up to 125%, which is how we got to this truce. But that is the sort of dynamic going into this. Both leaders want to appear strong and need to exert their leverage on the other.
What are the questions that remain unanswered at this point in terms of the details, the nitty-gritty, and what really needs to be hashed out here?
Yeah, so there are a panoply of different issues. For example, there's the issue of TikTok, right? There is a buyer potentially for TikTok in the United States. So says Donald Trump. The Chinese still need to give a nod to sell that. That is apparently something that did not come up in these conversations. There is the question of fentanyl. Bessent says that he is not pleased with how things have been progressing there. China could still be doing more. I mean, there is the issue of Russia, which increasingly we've seen Donald Trump change his position on Russia and Vladimir Putin. And we had a large discussion apparently between the two delegations today on the question of Russia. And Scott Bessent, again, airing their displeasure at the continued buying of fossil fuels, both from Russia and China, but also that dual-use military technology that they're seeing increasingly on the battlefield in Ukraine. So these were active discussions. And then there's also this question of the secondary sanctions that Trump is now talking about imposing on people who buy crude oil from Russia if Putin does not come to the negotiating table in the next 10 days. This came up in the press conference. And when asked, whether or not the Chinese position had altered, Scott Bessent said basically the Chinese take their sovereignty very seriously. They don't really want to be told what to do. And if they want to pay 100% tariffs as a consequence of buying Russian oils, then they will.
Secretary of the Treasury, Scott Bessent, said, we understand China's agenda much better. What is really the Chinese agenda? What is really the U.S. agenda? Is it just for both to kind of get wins here ultimately?
Well, what's interesting is, again, what we see the dynamic with the European Union and the United States. You have a situation with Japan, the UK, the EU, where they almost want to appear to be giving more to Trump than they are, sort of potentially giving these sort of, big sort of sweeping statements of committing to buying, $750 billion of energy, investment pledges of $600 billion. These are sort of big concessions, but again, there is a lot of room to fudge these sorts of things. With China, you have sort of the opposite dynamic, where the Chinese do not want to appear to be giving more. They want to appear to be giving less. And I think that really is the tone in these discussions. And I think that, again, what this meeting was supposed to do was to kick the can down the road another 90 days. You didn't get that today. I think that everyone is hopeful. And we should say, overall, the tone that we got from this press conference, from the ambassador and from the Treasury Secretary, they were saying that these were very, very constructive discussions. And even if we didn't get a deal today, they sort of were signaling, just maybe why you're seeing modest reaction in the market, that they will get it over the line.
Right, and we know another thing that'll be a focal point is the Treasury Secretary say that they'll meet with the president in the Oval Office tomorrow. All right, going to leave it there. Oliver, thank you so much. Oliver Crook of Bloomberg News out there in Stockholm. In terms of kicking the can down the road, I think about how the Fed is ultimately going to take this into account tomorrow when it makes its decision.
Yeah, that's another big focal point this week for investors. Kicking off its two-day policy meeting today is the Federal Reserve. We'll get that decision tomorrow, the 5th of the year. No change in rates is expected. This is one of our most read stories on the Bloomberg, is about how upper-income Americans are increasingly falling behind on credit card and auto loan payments. It signals an underlying vulnerability in the U.S. economy as the labor market slows. With our preview of tomorrow's decision and our economic roundup, with us is Bloomberg News economics editor Molly Smith. She's in our Washington, D.C. bureau. Molly, a lot of economic data this week. Before we get to this most read story on the Bloomberg about the concern with these upper-income Americans, with the economic data that we got today, the JOLTS, et cetera, anything of note stick out to you?
I mean, it seems like we're really just in this holding pattern right now, Tim, of like, what is the story going on with the U.S. economy right now? Are we in this place where the labor market is pretty resilient and consumer spending is decent but not great, and everything's just kind of humming along, and we can afford to keep interest rates pretty elevated right now because there is no real flashing warning sign in the economy right now? Or are some of these devil in the details really more the primary story of concern right now, which is what hopefully this week is going to illuminate with us when we have the GDP report coming tomorrow, then we have PCE inflation and inflation-adjusted spending Thursday, as well as the jobs report on Friday. So I think all of those things, and especially how Powell tomorrow characterizes the economy, is just really going to help set the tone for the rest of the year, and seeing which of these stories is the prevailing narrative for the economy right now.
Molly, how are you and the team kind of characterizing the economy on this Tuesday, July 29th? How are we seeing it right now?
I think right now that this is still an economy that, I mean, personally of the belief seems like it's more the one that can afford to have interest rates at the level that they're at right now, that there hasn't really been a huge sign of deterioration really anywhere that would be urging for interest rates to be lower right now, that consumer confidence is improving now that, the real shock of the April tariffs has subsided and more trade deals are coming to the forefront. And it seems like the really harsh trade rhetoric is hopefully behind us. And the job market is more or less humming along. I mean, job openings have been pretty steady in the 7.5 million area for really the past year. There hasn't been really any movement one way or another suggesting that labor demand is really changing in any notable way. Of course, we've seen hiring is slowing, but it really is just still this low hiring, low firing environment where there aren't really a lot of layoffs. And yes, you will hear that people who are out of work are having a harder time finding a new job, but otherwise there isn't really a huge crack in the labor market. And that's what's really what people are waiting for to see, especially proponents of lower interest rates.
It's interesting because I feel like the actual government data and then anecdotal data, I think it was a Wall Street Journal story yesterday about Americans putting more into 401ks and then also tapping into their 401ks.
Pulling from 401ks.
At the same time, there's that going on. You have the Atlanta Fed GDP Now index above Bloomberg consensus for the second quarter. We had U.S. consumer confidence rises on the outlook for the economy and job market. It's hard not to feel like there's a fair amount of optimism, and the Fed has to be nervous and worried about inflation kind of rearing its ugly head. Fed policy, Molly, not an exact science. There is a lag effect. So with that in mind, does it make sense for a stronger or what does it make a stronger case for when it comes to Fed policy? As you said earlier, for the Fed to maybe do nothing at this point, because it seems like things are chugging along.
And that's exactly where the majority of the committee stands right now, is in that camp of thinking that we're okay to leave interest rates where they are. We're in a good place to really buy time and observe what's happening, and that we're not needed in this place to really proactively adjust interest rates for, a development in the economy that we're not sure might even happen. So that's really the challenge right now of where you're starting to see some factions emerge of, we have like Governor Christopher Waller and perhaps Governor Michelle Bowman as well, or Vice Chair, for Supervision, Michelle Bowman, that maybe the idea that the labor market is perhaps in worse shape than what the aggregate numbers might suggest, and where, those two could very well be dissenting if the decision is to hold interest rates steady tomorrow. So there is this division in the committee about the labor market, but also really the outlook for inflation and how tariffs will ultimately feed through to the economy. Is it going to be a one-time price shock that, ideology would tell you can otherwise look through and not really have to act on that from a policy perspective? Or is this going to be a more persistent effect through the prices that would suggest you should keep interest rates elevated for longer? And that right now is the division among a lot of people on the Fed board right now as to where inflation is going to end up, and therefore where policy should go.
Okay, the question that everybody I know will have for the Fed chair tomorrow is about the president and the Fed chair in hard hats on Thursday at that tour of the Federal Reserve. What they talked about on that tour, the easing in tone that we heard from the president following that tour, the tension at the beginning of that tour. Is there anything constructive here to be asked or answered tomorrow?
I've actually read a few notes from economists saying that, really, any questions about this would frankly be a waste of time during the press conference, that Powell's been pretty defiant in, preaching for Fed independence, that he's not going to talk about, his job prospects. And of course, the race to replace him, or really the names that are in contention for, again, this is still 10 months away for when his term is up, that is not something that he's going to get into. So I think there's probably better time spent asking in seeing where does he lie in terms of, are we with most of the committee in characterizing the labor market and the economy as a whole as solid and broadly pretty healthy, or are we more taking something from the Christopher Waller argument that the labor market is, quote, on the edge? Because that really has been the biggest break from the committee so far, and it would be really interesting to see where Powell lies compared to the rest of those voices.
And yet, Molly, a question's going to come up. There's going to be something, right, in terms of his tenure, but he will probably dismiss it pretty quickly, right?
That's the expectation, right? So I think that's where some of these economists are, who aren't in the room, who don't get to ask Powell the questions, are maybe making their not so subtle pleas to journalists. Please don't ask these questions that aren't going to get answered, and instead focus on ones that we could actually make constructive decisions about.
All right, Molly, so appreciate it. You're a gem. Molly Smith, Bloomberg News economics editor, typically in New York, out there in our Washington, D.C. News Bureau. On this Tuesday, as we know, the Fed kicking off that two-day meeting, we will get that decision. 24 hours from now, we will know the Fed decision, and we'll be counting down to the Jay Powell press conference and waiting to see what he's asked.
What do you think they're talking about right now?
I don't know.
Inflation.
Yeah, I think, I was thinking about this when we got the headline about U.S.-China trade talks maybe being pushed off again. So it's another piece of uncertainty that if the Fed is saying, we got to wait to see what this deal really amounts to, or are there more complications?
Yeah, not exactly clarity yet.
No, exactly. All right, folks, you are listening and watching Bloomberg Business Week Daily. The pursuit of FDA approval for one psychedelic drug company, Compass Pathways CEO, joining us next on Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Traders are sending stocks lower ahead of the Fed decision tomorrow. Concerns about high valuations overshadowing hopes for an extension of a tariff truce between the U.S. and China. Right now, we are close to session lows on the S&P, down 15, 63.74 where we stand. That is a drop there of just about 0.2%. The Dow down 224 now, down 0.5. NASDAQ lower by 0.2%. Our Mag 7 index down 0.4%. 4 out of the 7 members of that index do report earnings this week. Microsoft and Meta kick things off tomorrow. Apple and Amazon on Thursday. 10-year 4.33%. The 2-year 3.87%. Gold up $15 the ounce, up 0.5%. And West Texas Intermediate crude above $69 a barrel, now $69.09, up by 3.6%. J.P. Morgan Chase is nearing a deal to take over Apple's credit card program. That, according to the Wall Street Journal, if it happens, J.P. Morgan will replace Goldman Sachs as the issuer of Apple's credit card. Right now, we got Apple down by just about 1%. J.P. Morgan Chase down 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, U.S. Health and Human Services Secretary Robert F. Kennedy Jr., he has suggested that psychedelic therapy for depression and trauma has the Trump administration's support. This actually was in a report by the Associated Press earlier this month that the secretary recently talked to members of Congress about, and we're guessing that it may have caught the attention of the team over at the publicly traded small cap company Compass Pathways. We wanted to know more, and let's get to Kabir Nath. He's Chief Executive Officer of Compass Pathways, and he joins us here in studio. Kabir, welcome. Remind our audience about the work you are doing and your synthetic psilocybin experimental drug for treatment-resistant depression. Tell us about where you are, what this drug is, and what it has shown to do so far.
Thanks very much, Carol and Tim, and it's great to join you here. So yes, at Compass Pathways, we're a company in the final stages of developing synthetic psilocybin as a potential treatment for treatment-resistant depression, or what we call patients living with persistent depression. That's a big problem affecting some 3 million people in the US, and it's debilitating. Many of them are unable to work. The majority will have had some sort of suicidal thoughts in the course of their depressive illness. So we're a leading psychedelic company and potentially the closest to regulatory approval.
You've used the word potential twice. You said it's a potential treatment, and you said potentially you're a leading company there when it comes to FDA approval. Is it unproven?
We have generated robust evidence now from 2 studies. The first was published a couple of years ago, and then just last month, we released more data from the first of our final stage studies. So what can I tell you about that? First, safety. We didn't see any unexpected safety signals in this treatment of patients living with persistent depression. And secondly, after just a single treatment, after 6 weeks, we saw a significant reduction in depressive symptoms. And just to emphasize that, because you'll be aware of the typical paradigm of antidepressants, something you take daily. This was a single treatment and with the effect measured after 6 weeks. Now, we already are 2 for 2 in terms of these trials, clinical trials that we've conducted, but we're continuing to see more evidence generated first in one of these late stage trials. And second, we have another study ongoing where we're also looking at the impact potentially of another treatment.
We should point out that about a month ago when that study came out, the stock, your shares tumbled almost 50%, hitting a record low. What I guess I want to understand, so it was below what Wall Street expected. It did meet your goal, from what I understand, your company goal, but Wall Street was very disappointed. Tell us how this works. How does one psilocybin treatment kind of cure depression, persistent depression?
Psilocybin you can think of as, if you like, a key that unlocks a door or a set of doors in the brain. And while those doors are open, that enables the patient to work through some of their fixed negative thinking and potentially have relief from their depressive symptoms. To do that, there is a profound subjective experience. So there is a psychedelic experience that lasts 6 to 8 hours. And as I say, during the course of that, the drug is working in such a way that it unlocks these doors and allows the patient to engage with some of those negative thoughts and potentially, as I say, get relief from those depressive symptoms. The fact is, as I say, we've seen, and what's amazing, that one single treatment can show sustained effects at least 3 to 6 weeks and potentially longer. In our earlier trial, our earlier clinical study that we did, we saw that for many patients that was sustained out to 12 weeks.
What's many? How many? Forgive me, Tim. Like, I'm just curious, how many?
So that was a study of around 230 patients, of whom a significant number were on what we call the active dose of the medication. And what we saw was a quarter of them had, from that single dose, they were actually sustained free of depression out to 12 weeks. And in this population of people who have typically tried multiple treatments and for whom very little is any longer working, that was a remarkable response.
When patients do take this single dose, what is the environment that they're in during that 6 to 8 hours? And are they guided in some way by a therapist of sorts?
It's a calm, comfortable setting. They have the option of eye shades, there's music playing, and there are appropriate safety safeguards in place. Psilocybin is a very inner-directed mechanism. So what actually happens is the patient has this profound influence, but while there is somebody in the room, it's largely silent. There is not directed therapy in the course of that intervention.
How do you run an effective clinical trial for a drug that the experience is such that the person knows they've taken this drug rather than a placebo? Somebody who takes a placebo is not going to have a psychedelic reaction to the placebo.
At Compass, we thought about this before we even started our studies. So our prior big study, the one I referenced with 230 patients, we designed that in such a way that there was the choice of 3 different doses of psilocybin. One was a low dose, a second was an intermediate dose, and in patients who've never had this experience before, that's truly confounding in terms of they cannot tell whether they got a medium dose or a high dose of that drug. This is important because, as you say, otherwise it will be very obvious. But that design was very effective for that earlier stage study we did, and we've replicated that design in one of our late stage studies.
We're talking with Kabir Nath. He's Chief Executive Officer of Compass Pathways here in studio. You keep saying synthetic. What's the difference between synthetic and naturally occurring?
So we are manufacturing a pill to the highest standards of purity, no contamination. We know exactly what is in the pill. This is a manufactured pill that we are treating with.
So that you know exactly in terms of dosage. Is that what I'm saying? So if naturally occurring is different?
Potentially. Okay. It is naturally occurring. Whereas else is synthetic, so we know exactly what's in it. We know the exact pill.
What will it cost?
It's premature to speculate on that at the moment. We're still conducting these final stages of our studies.
But expensive? And would it be something, I mean, if you get FDA approval, is it safe to make the assumption that it would be covered?
The whole premise for founding Compass Pathways was to enable that form of broad access. So the reason that the company has gone through doing these rigorous, robust clinical studies so that we can discuss that with the FDA, potential for regulatory approval, and then, if we're fortunate enough to get there, the chance to negotiate with both commercial insurers and government payers. Let's remind ourselves that these 3 million people that I referred to, they are relying on insurers, commercial insurers, and government payers to actually cover their drugs. I believe we will be able to demonstrate significant value given how different this is from other treatments available today in depression.
Kabir, Carol mentioned that the Associated Press reported earlier this month that RFK Jr. recently talked to members of Congress about psychedelic therapy for depression and trauma. Apart from that, have you seen any real signs of support for the administration for this new class of drugs or type of treatment?
We have had support from the FDA throughout our development process. We have breakthrough designation.
So even before Robert F. Kennedy Jr. took over as HHS?
We have had a motivated and engaged agency. We're excited to see the voices from HHS, from Veterans Affairs today, suggesting that they also see the potential for this class. And we're very happy to work to see how we could potentially accelerate access, while at the same time ensuring that we continue to generate really good, robust, good evidence that these are safe and effective.
Talk to us about timeline, though. I feel like I know Bloomberg's been reporting on this class of drugs and treatments, and I think we've all seen pieces
For years.
Right, for a long time, that for people where other treatments don't seem to be making a change for them. So I don't know, is it another few years? Is it the end of this year? Is it the end of next year? And is it, that the Trump administration could somehow shuttle this through much more quickly?
I think there are clearly people in the current administration who, as I say, see the potential of this, but we want to make sure we do this right as well. So we want to make sure we do that in the right way with the right rigor and so on. We are conducting, as I say, the final stages of studies. We have 2 ongoing, of which the second will wrap up in the second half of next year. The data we released last month, though it hasn't yet been reviewed by the FDA, we have a meeting planned with them where we'll discuss with them, and we'll discuss the potential for any acceleration of a filing and a regulatory process.
Do you also think about other usages, whether it's PTSD and other applications? And I'm just curious what you might be exploring in that world.
Our next priority beyond persistent depression is indeed PTSD. That is something with very high prevalence, some 13 million in the US, for which there are only 2 very old drugs approved. And unfortunately, recently, there have been 2 advisory committees recommending against new drugs in that space. So yes, we see PTSD as a key area. We generated some data last year, and we will be announcing the design of another late-stage trial for PTSD imminently.
I know the US FDA is the gold standard for going through the regulatory process to be viewed by the world as a credible treatment for something. But these days, is it worth going after approval in another country to try to do this on a smaller scale to prove that, yes, it indeed works?
We will be exploring approval in a range of countries. So our studies have been international, US, Canada, Europe as well. We have taken advice over the years from the European regulatory authorities. We're a UK-based company as well, so we've been speaking to the MHRA, the regulatory authority in the UK. So yes, this is a problem, sadly, for patients across the world, and we would look to exploit it where we can.
Kabir, just got about 30, 40 seconds. We're actually going to be talking with the CEO of AstraZeneca right after this. I'm just curious, in terms of big pharma, have you had any preliminary discussions with larger pharmaceutical partners interested in commercialization, co-commercialization, or distribution?
What I know is the big pharma is tracking this space closely, and what's been great is to see the re-entry of some big pharma back into psychiatry over the last couple of years. So I know they watch this space, but we at Compass are determined that we can do this ourselves and are excited about the opportunity to bring this potential new treatment to patients who so clearly need it.
So no strategic alignment that you would consider. You plan on doing this alone?
That's our plan.
Okay, great stuff. Stay in touch. And let us know how things are going. Really appreciate it. Kabir, be well. Kabir Nath, he's Chief Executive Officer of Compass Pathways, joining us right here in studio. As we mentioned, we're going to stay in the pharmaceutical space.
That's right. We've got the CEO of AstraZeneca coming up in just a minute. We're going to talk results, tariffs, growth, and more with the CEO. That's next on Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all trading lower. But the NASDAQ 100 index just turning positive. Little changed, up under 0.1%. S&P down 11, keeping it all in context, down 0.2%. The S&P now at 63.78. The Dow down 208. A drop on the Dow of 0.5%, while the NASDAQ Composite Index is down 24. For NASDAQ, a decline right now of 0.1%. Our Mag 7 index down 0.3%. Four of the Mag 7 members will report this week. We'll be hearing from Microsoft and Meta tomorrow. Apple and Amazon will report on Thursday. 10-year yield 4.33%. The 2-year 3.88%. Gold up $15 the ounce, up 0.5%. And West Texas Intermediate crude oil is now surging by 4.1%. WTI 69.48 a barrel. Boeing managed to almost halt its cash burn in the second quarter, indicating that a turnaround initiated by CEO Kelly Ortberg a year ago is paying off as the company delivers more aircraft. But Boeing shares down now by almost 4%. Elsewhere in the airline industry, JetBlue Airways higher after the carrier posted a smaller than expected loss in the second quarter. JetBlue up by 3.9%. American down 1.1% among other carriers. United down 1.8%. And Delta down now by just about 2.2%. And President Trump says he will give Russia 10 more days from today to reach a truce with Ukraine, formally announcing a new deadline to pressure Vladimir Putin on ending the war. Recapping S&P down 0.2. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, as you know, tariff talks continuing, as do presidential statements about more manufacturing back here in the United States. The pharmaceutical industry among the latest to be targeted by President Trump, who made comments Monday from Scotland.
We'll be announcing on pharmaceuticals sometime in the very near future. We have a very big plan on pharmaceuticals. We want to bring a lot of the pharmaceuticals back to America where, where they should be. We're going to want to be making a lot of them ourselves, all of them in a sense. But you also have a good pharmaceutical business. We'll be dealing with you on pharmaceuticals.
All right, that, of course, was President Trump on Monday from Scotland. We've got a great voice on this and really the overall pharma industry, Big Pharma, a company that reported earnings earlier today. We're talking about AstraZeneca. ADRs of the company, by the way, are rallying more than 4% in today's session. Great to have with us in studio Pascal Soriot. He is AstraZeneca's Chief Executive Officer, also with us, a member of our editorial team here at Bloomberg, knows this company and industry so well, is Bloomberg News health reporter Madison Muller. Pascal, by the way, also former CEO of Genentech. Thank you for joining us. Welcome.
Thank you for having me. It's really a pleasure. Thank you.
It's a pleasure for us. Big space, a space that's certainly garnered the attention of President Trump. I am curious, in terms of the president talking about more manufacturing in the United States, and I know you guys are making some further investments here. Talk to us about how presidential policy is impacting maybe your business.
Yeah, I think first of all, it's a great question, but first of all, it's important to really think about what every country would want to do. Every country would want to make sure they can secure the health of their citizens. It's a question of national security. So nobody should be surprised that the president wants to reshore manufacturing of pharmaceutical products. I personally have seen this happen since several years, and we decided several years ago to increase our manufacturing footprint in the US. So we can actually manufacture medicines for American patients in America. Every country would want to do that. And a big country like America, of course, can afford to do it. Yes.
You said that you made that decision several years ago. How much of the $50 billion pledge was planned before the president threatened these tariffs?
Well, we've been pursuing this strategy of manufacturing in China for China, in the US for the US, since 5-6 years. And quite frankly, COVID actually showed us we were on the right track, because we all saw what happened during COVID. And so we accelerated this movement. And so our $50 billion commitment is a commitment to R&D, but also a commitment to manufacturing. We announced together with the governor of Virginia a multi-billion-dollar investment in manufacturing in Virginia. And the governor of Virginia has been incredibly fast with his team, 33 days to reach an agreement. It's incredible. So we're very happy to be there. We are building a new R&D site in Kendall Square, Cambridge, Massachusetts, with 2,500 scientists that will be working there. And there's more to come. We are just finishing the build of a cell therapy manufacturing site in Rockville, Maryland. We've expanded in California. So it's a sort of a multi-pronged effort across many states across the U.S.
You know, you've said that Virginia obviously has made it easy to make manufacturing investments there, and North Carolina is pretty similar. Are there other states in the U.S. where you're having these types of good conversations that are, you know, incentivizing businesses like yours to invest?
Well, you know, it's hard for me to point at any state that is better than another. Let me just say that working.
We have no problem noting which states are better than others. We're all from different states.
What do you like more, New York or New Jersey?
Let me just say that a company like ours follow the science. So science is key. And so you need to be able to recruit the right scientists, the right engineers. And in Virginia, you can do this because you have some of the best universities. The other part is dealing with partners in the public sector that understand us, that we trust each other, we can move fast. You know, I always tell people in our company, talk about AstraZeneca speed, because there's a lot of competition, we need to move fast. I've learned Virginia speed. The governor has moved so quickly. So this is the kind of thing we want to see, whether it's in America, in a state, or in a country. We want speed, and we want people who understand how we think.
You want speed, you want people to understand how you think, you said you want to follow the science. There's been criticism that Robert F. Kennedy Jr., the Secretary of Health and Human Services, has not necessarily always followed the science with his comments when it comes to medicine, when it comes to drugs, when it comes to vaccines. How do you look at that and his role there?
Well, you know, I'm not here to actually get involved in political discourses. Let me just say that as a company, science is at the heart of everything we do. The reason we have such a large oncology pipeline in particular and beyond is because we focused on science for the last 10, 12 years. And America is where science in our industry is happening. And that's why it's so critical to preserve this biosciences leadership the U.S. has globally. China is also becoming a very big source of innovation in our industry. Europe, unfortunately, is falling behind for a variety of reasons. So innovation is happening here. We need to keep this going. We need to actually continue supporting the leadership, and that's why we invest $50 billion in this country, not only in manufacturing, but also in R&D.
What about China? I'd love for you to kind of explore that a little bit. What are you investing in and building out in China, and what might surprise our audience about the innovation that's happening in China, especially when it comes to pharmaceuticals?
Yeah, I think, great question. I think we need to start with the hypothesis, the assumption that basically the more products or the more innovation exists in the world, the better it is for everybody, for every patient. Because if you're a patient with cancer, the only thing that you care about is to be cured, if you can be cured, right? And so innovation in China has really ramped up very rapidly in the last few years. China has gone from making generics to Me Too's to Me Too Plus, what we call Me Too Plus in our industry, to truly innovate these days, and innovate in new technologies, in cell therapy, in siRNA, in many, many technologies. And so China has become the second engine of innovation, not as big as the US. The US remains the leader in that field, but China is ramping up very quickly.
Is the administration, with some of its, some would say, questionable disruptive policies, there's been a lot of reporting about scientists kind of leaving the United States and going elsewhere. Are you seeing signs of that, whether it's to Europe, to China, to elsewhere? Because of not supporting, you know, academia and academic universities. Some of that seems to be coming back, but
yeah, but you know, in these things, it's always difficult to discern what is anecdotal versus what is systemic. What we have seen in China is really a substantial return of scientists from the US, but also from the UK and elsewhere. But not because of policy, simply because they could see opportunities in China. There is money, there is capital that can be invested. The Chinese are willing to take risks. The government has facilitated the return of these scientists, and they've come back. But I can tell you that a lot of the scientists we work with in China, in biotech companies that we partner with, many of these people are American. They're American Chinese. I mean, they go back and forth, back and forth. They are a bridge between the US and China. But they've gone to China because of the opportunities to create a company, be funded, take risk, and hopefully be successful. And by and large, they've been quite successful. I want to say, though, that the leadership remains with the US, and we need to maintain this, of course. The country needs to maintain this.
There's been some concern, though, that companies like yours, not necessarily Astra, but big pharmaceutical companies are going to China for most of their biotech deals now. What would you say to that, and what would U.S. biotech companies need to do to sort of attract investments from you all?
I mean, the first thing I would say is that if you're a patient, you don't care. What you want is a drug that will help you, right? So